good morning to you all. Very good morning, online students. I hope I am audible and also the screen is visible. Yes, sir. Okay, so we are starting the marathon. Am I audible till last week? Yeah. So we are starting the marathon for taxation. So you all know that you are writing an examination called as CA Inter. In CA Inter, you have two groups, group 1, group 2. In group 1, there is a paper called as paper number 3, and that paper number 3 is taxation. Now, this paper number 3, which is taxation, that is divided into two categories. One is direct taxes, which is for 50 marks. Another one is indirect taxes, which is again for 50 marks. Now, your question paper pattern, you will be knowing. Your question paper pattern is divided into 30% and 70%, meaning 30% of your question paper is MCQ based questions, and balance 70% of your question paper will be descriptive or practical paper. So, in both direct and indirect taxes, you will get 15 marks ka questions, which will be from MCQs, meaning 15 marks MCQs from direct taxes, 15 marks MCQs from indirect taxes, and balance 35 marks descriptive questions will be there. But though they say it is 35, they will give you questions for 45 marks, meaning there will be an extra question which will be given for 10 marks each. So if you see the question paper pattern, the question paper will be divided into two parts. Part 1 will be MCQ, which is 30 marks. Now there will be no separate MCQ questions for question paper for GST and income tax. There will be few set of questions they will ask you, and one single paper will be there for MCQs. There will be totally 4 case study based questions. Okay, in MCQ you will have how many questions? 4 questions which will be case study based questions, and there will be other MCQs. Now each case study which is there, each case study will have 3 questions, and each question will be for 2 marks. So how many case studies will be there? 4 case studies. Each case studies will be for 2 marks, and each case study will be for 6 marks, and each case study will have 3 questions of 2 marks each, and there will be other MCQs. Other MCQs, there will be 2 MCQs for 2 marks and 2 MCQs for 1 mark each. So this is how 15 marks is divided for direct taxes, 15 marks is divided for indirect taxes. Then you have your part B, which will contain your descriptive and practical questions, wherein section A of part B will be income tax and section B of part B will be GST. So income tax and GST. Now there will be 4 questions which they are going to ask under income tax and 4 questions which they are going to ask under GST. Question number 1 is compulsory questions under both GST and income tax. Question number 1 under GST is question number 1 under income tax, and question number 5 under GST is the first question. And out of the remaining 3 questions which you have to answer any 2 questions. Okay, not okay. So first question which is there, question number 1 and question number 5, that will be for 15 marks, and the remaining questions will be for 10 marks each. Any question you have? And as you all know, amendments which are made 6 months before your examination will be applicable to you for your examination. So 6 months before your examination means what? If you are writing your examination in May, the cutoff date for you, ignore the month of exam. May month you ignore, go back 6 months. 4 months of this year, 2 months of last year. So whatever changes were made under income tax law till 30th of October will be applicable to you for your examination. Similarly, if you are writing your examination in September, whatever changes were made till 28th, this year is 28th of February will be applicable to you. And if you're writing your examination in January, then it is 30th of June. Whatever changes were made till 30th of June will be applicable to you for your examination. Normally, income tax, what happens, sir? Income tax changes will happen normally once in a year. Whenever the budget is conducted, at that time, they will make the changes under income tax law. Whereas changes under GST will be happening throughout the year. Throughout the year, they will be making some or the other type of changes under GST law. Okay, not okay? For your examination, what is the most important thing? You should have calculator, meaning that is very important. Okay, and you should of course have revised the provisions. Anyone has any question before we start? Gube, some Gube students are super teaching. I have not even started. I'll get mic, okay? Anyone has any question, you can ask me. Any questions? Any topic which you want me to discuss specifically? Of course, I'll discuss all the topics, but still, any specific topic, sir? This is something which I never understood. Huh? The RTP we should discuss, yeah. See, how this is planned is, marathon will happen for maybe next 4 days or 5 days. Marathon will be there. 6 to 7 hours every day, meaning 8:45 to 4 o'clock is the normal timings for marathon. Then after this, once this is done, what I'll be doing is, I'll be solving questions. So that is, that is, if anyone is interested to come and attend, you can attend. Okay, so I'll be solving questions from direct taxes as well as indirect taxes for the next, after that, maybe for 1 more week. But this will be there only for 3 hours in the morning or 2.5 hours or 2 hours, depending upon my other schedule which is there. Okay, every day morning I'll be doing questions, specifically only questions. So of course I'll be covering all the past exam questions in that, majorly important questions, and I'll be covering the RTP also in that particular piece. So we'll try to cover the RTP in this marathon session only. But if we are not able to cover, then don't worry, video will be uploaded on YouTube. And this also, this whatever we are going to discuss now, this topic also video will be uploaded on YouTube. So since it is marathon, I'm expecting that you have fair idea about this particular subject. You know that there is a subject called as taxation. That thing you should be knowing. You should not know what is there inside taxation. If you know that there is a subject called as taxation, that is sufficient. Now, what is taxer? See, what happens is, we all need money. We all need money. You would have come over here, you would have traveled from a very long distance, etc. And you should be chill, okay? Chill, enjoy. You don't have to worry that exams are there nearby. 1 month, sir, we have for exam, no problem. See, if you have not studied for last 3 months or last 2 months, if you have not studied, then in 1 month you cannot study also. Okay, so you should have that confidence in your life. So I expect you would have studied something. Now, what are we doing, sir? We are just revising and checking if there is any changes, important points which I have to know for my exam. And there are not too many changes. Yes, maybe 2-3 points are there which are important changes. Apart from that, the changes are very less. So we all need money. You have all come over here to attend classes. How did you come, sir? You would have traveled. So for traveling purpose, you would have paid some petrol expenses, or you would have paid some ticket for the bus. If you have come from bus or auto charges, you would have paid. So we all need money for doing various different activities, whatever we do on day-to-day basis. Just like that, government also needs money. Government is taking care of the entire country. So for taking care of the entire country, government needs money. That money which government needs, that money government is collecting from us. And how are they collecting this money? That money government is collecting from us in the form of tax. Okay, so what is taxer? It is one of the important source of revenue to the government. Now, is this tax compulsory or is it voluntary? It is a compulsory payment which we have to make. Now, tax are basically divided into 2 types. One is called as direct taxes, another one is called as indirect taxes. In direct taxes, the incidence and impact is on same person. In indirect taxes, incident and impact is on 2 different person. Meaning what, sir? The person who is earning the income and the person who is paying the tax is same. In case of direct taxes, the burden is on same person. Whereas in case of indirect taxes, the person who is earning the income and the person, in case of indirect taxes, the person who is making the sale and the person who is actually paying the taxes are 2 different person. For example, I sold sarees to you. I sold sarees to you. Now, what will I do, sir? When I sell the saree, I will collect the saree value, plus I'll collect extra 1,000 rupees or whatever is the rate for saree. So I'll collect that extra GST from you. Now, the incidence for paying the tax was on me. Government told that, Dilip, whenever you make a sale of saree, you should pay the tax. Now, the incidence was on me. But is the impact also on me? No, the impact will be on you, because I'm going to collect this GST amount from you and I'm going to pay the GST amount to government. In case of direct tax, what will happen, sir? I am the person who is earning the income. I am only the person who has to pay tax to the government. Whereas in case of indirect taxes, it is two different person. I will make a sale, I will collect the GST from you, and I'll pay it to the government. So what am I doing over here? I'm shifting my burden onto someone in case of indirect taxes. And direct taxes are progressive in nature, whereas indirect taxes are regressive in nature. Sir, what do you mean by this? It is progressive in nature, regressive in nature. Progressive in nature means as and when your income is increasing, the amount of tax which you have to pay will also increase. Whereas regressive in nature means what, sir? It does not matter how much you are earning. It does not matter whether you are a rich person or a poor person. The amount of tax which you have to pay will remain same. Sir, repeat. Progressive in nature means depending upon your income, the tax will be collected from you. Whereas regressive in nature means it does not matter how much your income is, the amount of tax which you have to pay will remain same. Sir, progressive in nature, example, sir. Like for example, a beggar is earning 1 lakh rupees, Mukesh Ambani is earning 5,000 crore rupees. Now, who will pay more taxes? Can I say Mukesh Ambani is the person who is going to pay more taxes? Correct, no? Now, let us say both beggar and Mukesh Ambani, they go and purchase Parle-G biscuit. Now, Parle-G biscuit is of rupees 10 and this includes taxes. MRP rupees 10, that means inclusive of taxes. Let us say it includes tax of rupees 1. Now, if it is including tax of rupees 1, if the beggar is going and purchasing this Parle-G biscuit, how much tax will he have to pay? 1 rupee. And if Mukesh Ambani is going and purchasing this Parle-G biscuit, how much tax he has to pay? 1 rupee. So it does not matter who you are. The amount of tax which you have to pay will remain same. Are you okay, not okay? Then the Constitution of India is the mother law. In India, if you want to make any type of law, you should take permission. And who will give that permission? The permission will be given by Constitution of India. The Constitution of India will give the permission. So what is the Constitution talking about? Taxation. We will see that. What is the Constitution talking about? Taxation. Now there is an article called as Article 265 in our Constitution. If we are talking about what's the Constitution of India. So there is an article called as Article 265, which says no tax can be levied or collected unless there is an authority of law. Meaning, if you want to levy any tax, if you want to collect any tax, first you need to take what, sir? Permission. You should have the authority to levy or collect such taxes. And who will give that authority? Constitution will give that authority. There is an article called as Article 245, which says the central government has the power to make law for whole or any part of India, and the state government has the power to make law for whole or any part of that particular state. So if I want to make law for India, whether entire India or part of India, who has the power to make that law? Central government, also called as the parliament. And if I want to make law for whole or any part of that particular state, then who has the power to make such kind of law, sir? State government has the power to make such kind of law. Now there is an article called as Article 246. Article 246 has a schedule called as Schedule number 7. Now this Schedule number 7 has 3 lists in it. This Schedule number 7 has how many lists? 3 lists: union list, state list, concurrent list. Now what happens is this schedule number 7 has given 3 lists, and in each of the lists they have given different types of activities which can be undertaken by respective governments. Sir, I did not understand. Meaning union list will contain different items with respect to which only the central government can make the law. Similarly, state list will contain various different things with respect to which only the state government can make the law. Union list will contain various different things with respect to which only the concurrent list, which will contain various different things with respect to which both central government and state government can jointly make the law. Now in our union list, there is an entry called as entry number 82. In union list there is an entry called as entry number 82, which talks about income tax. What is that entry number 82 telling? Entry number 82 says that the central government has the power to collect taxes on income excluding agricultural income. Who has the power to collect taxes on income? The central government has the power to collect taxes on income except which incomes are agricultural income. So that means on agricultural income we cannot collect taxes, sir. On agricultural income, income tax is not collected by central government. See, normally whatever income tax we are paying, no, that entire income tax is collected by whom? Central government. But on agricultural income, central government does not have any authority to collect taxes. State list is there. In state list, we have an entry called as entry number 46. Entry number 46 of state list gives the power to the state government to collect taxes on agricultural income. Who is giving the power to state government? Entry number 46 is giving the power to the state government to collect taxes on agricultural income. So this may be asked in MCQ, okay, because they had asked once, which is the entry which gives the power. Sir, does this entry talk only about these two things? No. See, if I show you the schedule number 7 of Indian Constitution, see Ministry of External Affairs, schedule number 7. If you see this, what are they telling? 7th schedule covered under Article 246, which is talking about first is list 1. List 1 gives you list of different things with respect to which who can make the law? Central government can make the law. Now, for example, Defense of India, Naval, Military, Air Force, etc. Who can make law with respect to Defense of India? Central government has the power. So, if you come in this list, if you see entry number 82, what is entry number 82 telling? Taxes on income other than agricultural income. So, central government has the power to collect taxes on income, except which incomes are agricultural income. And it also, like for example, entry number 83 says custom duty can be collected by central government, etc. By the way, those who don't have this material, don't worry, I'll share the material to you. If someone, I mean, if there is a group created for this. No group created. Okay, if there is a group created, you can share the material over there. And those who are watching online, or whenever the video will be uploaded on YouTube, we will make sure that the material, this material which we are referring, that is also uploaded. Sources of income tax law. Now, please note, we are not studying Income Tax Act. We are not studying only Income Tax Act. If you see our institute material, they say income tax law. Paper number 3A is income tax law. So when I say income tax law, sir, what is that thing which I am going to study over here, sir? You have to study Income Tax Act. You have to study income tax rules. You have to study Finance Act. You have to study notifications and circulars. You have to study legal decisions or case laws. So these are the different things which you have to study. Then it is said that you are studying what? Income tax law. Now, Income Tax Act gives you the main provisions of income tax law. It gives you the main provisions. Main provisions means what am I supposed to do? Who will tell you? Income Tax Act will tell you. Income tax rules is supporting to the main law. Income tax rules are supporting to the main provisions of the law, meaning what am I supposed to do? Income Tax Act will tell. How am I supposed to do that? Rules will tell. I am supposed to do something. Income Tax Act will tell. Meaning you are supposed to file your income tax return by this particular date. Law is there. Now, how should I file that income tax return? Which form should I use for filing income tax return? Who will tell? Rules will tell. Rules will tell. Then Finance Act. Finance Act, every year what happens? The government, the central government conduct something called as budget. Normally it is on 1st of February. So every year on 1st of February, a budget will be presented in the parliament. By whom, sir? The Finance Minister of India is going to present the budget. So the budget which is presented by the Finance Minister of India, that budget will talk about what are the changes we are proposing to make under direct taxes and indirect taxes. Now, basically in the budget, they present something called as finance bill. In the budget, they are presenting something called as what, sir? Finance bill. Now, this budget, once it is approved by the parliament, upper house, lower house of parliament, it will go to the president of India. Once the president of India signs that particular thing, it will become Finance Act. So every year budget will come. So every year Finance Act also will be there. For your examination means what, sir? Those who are writing your examination in May 26, September 26 and January 27, for your examination, Finance Act 2025 is applicable. Okay. This budget which came recently, is that applicable to your examination? No. Irrespective of whether you are writing in May 26, September 26 and Jan 27, the budget which came in the year 2026 will not be applicable to you guys. This will be applicable to those who are writing in May 27 and onwards exam. Is this point clear? Notifications and circulars. Government wants to clarify something. So if government wants to clarify something, what will government do? They will give a notification. They will issue a notification. So there is a difference between notification and circular. When a government gives notification, that means that point which government is talking about is applicable for everyone. If government is giving a notification, that means it is applicable to everyone. If government issues circular, that means it is just for circulation among few group of people. Sir, repeat, sir. If we want to say that today being Good Friday, there will be no class at all, or this Sunday there will be no class. We have branches at 3 different places and we are offering different courses for everyone. There is no class at all. This, if I want to intimate them, how will I intimate, sir? By way of a notification. But if I want to say something specifically only to you guys, circular I will give. Then legal decisions and case laws. Legal decisions and case laws means what, sir? Sometimes what happens is I am not happy. I am not happy with what? The provision of the law. Meaning, for example, I would have claimed deduction of any expenses, but government says, or the income tax department says, no, that expenses is not allowed as deduction. Now there will be a fight between me and that person. There will be a fight between me and that person. Who is going to win the fight? That will be decided by court. Let us say, for example, while coming today to the classroom, a police officer caught me. A police officer caught me and he said, sir, you are not wearing helmet, therefore please pay me the penalty, that whatever fine he is there. And he told that 1,000 rupees is fine. I said, sir, 1,000 rupees is too much, sir. Morning, only 1,000 rupees you are taking. Sir, problem will happen in life. So he said, okay, do one thing, give me 500 rupees, go. So I paid him 500 rupees. Okay, I paid him 500 rupees. Now this is a bribe. This is not a, he did not give any challan to me. So whether this bribe is treated as income or not. What do you say? Is this bribe treated as income or not? Now please note, some people say yes. How many of you say yes? How many of you say no? See, we have mixed people. Some people say no, sir, bribe is not an income. Some people say yes, sir, it is an income. So don't you think fight will happen among you both? So when fight happens between both of you, meaning fight will happen between income tax officer. Income tax officer will say it is an income. It does not matter how you are earning the money, but it is an income. But the police officer says no. How is it an income? I'm not getting through any proper mode, etc. So fight will be there. Who will decide? Court will decide. So once court decides, we get case laws or legal decisions. This is not applicable for our intermediate level. This will be applicable from final level. So majorly we will see it in final level only. But in our income tax law, there is one chapter wherein one case law is there that is important in our intermediate level. That we will see later. Now, what is an income, sir? Simple meaning of income is inflow of money. Income means what, sir? Inflow of money. Meaning income means receipts, but all receipts are not treated as income. So if you are receiving something, if there is any inflow of money, that means it is an income. But whatever type of receipts you have, will all those things be considered as income? Answer is no. Receipts are divided into two categories: capital receipts and revenue receipts. Revenue receipts are something which you receive on regular basis. Capital receipts are something which you receive once in 2 years, 1 year, etc. So revenue receipts, because I receive it on regular basis, normally revenue receipts will be treated as income unless they are specifically excluded. Unless they are specifically excluded, normally revenue receipts will be treated as income. Whereas capital receipts are not treated as income unless they are specifically included. Meaning normally I will not treat capital receipts as my income unless lawmaker specifically includes it. For example, we have a chapter called as income from capital gain. So wherein that is a capital receipts. I sell my house. That is a capital receipt. The rental income from house is revenue receipts. So revenue receipts always has an income, but capital receipts only in some cases it will be treated as income. Then we have something called as source of income and heads of income. This though you will be knowing, source of income is from where the income is coming. Whatever income I am earning from whichever type of source I am earning that income will be divided into different heads. Okay, like we have 5 heads of income under income tax law. income from salary, income from house property, income from business or profession, income from capital gain, and income from other sources. Now, what is the major work which we have to do under income tax law? Under entire income tax law, two things we do. What are those two things, sir? We compute total income of a person and we compute the tax liability on that total income. So that is our major job. What is our major job, sir? Computation of total income and computing tax on total income. Now, for computation of total income, you will have to first learn how to compute the income under 5 heads. You'll have to respectively learn how to compute the income under salary, income under house property, business or profession, capital gain, income from other sources, and that will give you gross total income. From that, you are supposed to subtract deductions. That will give you your total income. Now, Section 4 of Income Tax Act is the charging section of income tax. Section 4 says income tax is charged for every assessment year on every person on the total income earned by such person in the previous year at the rate prescribed in Finance Act. So you have to pay income tax in assessment year. Who has to pay, sir? Every person has to pay income tax in assessment year. On what should I pay income tax? On the total income earned by me. Total income earned by me when, sir? The total income which is earned by you in the previous year. Sir, at what rate, sir? At the rate notified in Finance Act. Now, please note, we have financial year. Please note, from next year onwards, basically it has started from 1st of April 2026, new income tax is applicable. So you don't have to break your head with respect to that. Okay. Till those people who are writing examination till January 27, you don't have to break your head. Anything with respect to new Income Tax Act 2025, you don't have to worry at all. Okay, that you study once you join your articleship, that time you study. You don't have to study for your examination. Now, financial year is there. Financial year is there. Financial year 1/4. So financial year is starting from 1st of April, ending on 31st of March. Now, this financial year under income tax law is divided into two categories. One is called as previous year, another one is called as assessment year. Sir, what is previous year? What is assessment year? Previous year is the year in which income is earned, and assessment year is the year in which tax is paid. Previous year is what, sir? Previous year is that year in which the income is earned, and assessment year is that year in which you have to pay the taxes. Now, the previous year for your examination meaning May 26, September 26, and Jan 27. For you guys, the previous year will be previous year 25-26. And for you guys, the assessment year will be assessment year 26-27. If anyone has written their examination in any of the previous attempt, you would have taken a different previous year, correct? So for you guys who are writing from May 26 till Jan 27 exam, what is the previous year applicable to you? Previous year 25-26, assessment year 26-27, assessment year 26-27. See, normally the previous year will be period of 12 months. Normally it will be a period of 12 months. However, in two situations, it can be a period less than 12 months also. Only in how many situations, sir? Only in two cases, it can be a period less than 12 months. Sir, which are those two situations where the previous year can be a period less than 12 months? Those two situations where the previous year can be a period less than 12 months is when a new business or profession is set up in the middle of the year. When a new business or profession is set up, when a new business or profession is set up in the middle of the year, in between the year, a new business has started, or where a new source of income is generated in the middle of the year. Let us say you qualified your CA Inter examination in this attempt, and then you joined articleship. That means a new source of income is coming to you. Now, for that income, the previous year will start from that particular date when you start earning that particular income. Okay. Now, I hope you know how to read section. Do you know how to read section? So, how do I read this, sir? Section 7, subsection 1, clause A, subclause 2. But under income tax law, there are two sections. One is section 2 and section 10. We don't read it like that. Section 2, along with section 2, if I have something, section 2, let us say 31 it is. So, section 2, clause 31, and section 10, 1. Section 10, clause 1. Please note. Normally, how do I read? section, subsection, clause, subclause. But under income tax law, there are two sections, which is section 2 and section 10. How do I read that, sir? Section and clause. Section and clause. Now, who has to pay income tax? Person has to pay income tax. Sir, what do you mean by a person? Person includes inclusive definition. Inclusive definition means what? You have some common sense. As per you, tell me, am I a person? Correct? Am I a person? Yes, sir. So, as per your common understanding, what do you think is a person? That is already a person. So, apart from that, person will include individual, HUF, firm, company, AOP, BOI, AGP. Individual means you and me. Natural person, human being. HUF means what, sir? Hindu undivided family. Once after marriage, there is a Hindu law. There is Hindu law in India which says after marriage, uh, I can once I have a family of my own, I can make a separate entity for my family. That entity is called as HUF. And in this entity, the head of that family will be taken as Karta. All the other peoples in the family will be taken as members of the HUF. Now, those members who can ask for partition of HUF, those members who can ask for partition of HUF will be called as co-parceners. Then, now in India, we have two types of Hindu law. One is called as Dayabhaga School of Hindu Law, Mitakshara School of Hindu Law. Now, Dayabhaga School of Hindu Law gives the right upon death, meaning the person dies, then only that person ka property can be divided between the children's. Whereas Mitakshara School of Hindu Law, which is followed in the whole of India except the state of Jammu and Kashmir, they follow a concept called as right upon birth, which says what, sir? Once a person is born, as soon as a person is born, he can ask for share in their parental property. Then we have firm. Firm means partnership firm, whether registered or not registered, it does not matter. And which includes limited liability partnership. Company means a body corporate, which can be private limited company, public company, one-person company, or it can be domestic company, foreign company, any type of company. Everything is covered over here. AOP or BOI, association of person or body of individual, or local authority. It can be BBMP, any type of local authority. Here we have BBMP in Chennai, they have Greater Chennai Corporation, etc. And AJP. AJP is artificial juridical person or artificial judicial person, like the university. You see over here we have Christ deemed to be university, Bangalore University. They are all artificial judicial person or deities. We have Lord Venkateshwara. He's earning too much money. Everyone goes over there. He'll put some or the other money in the hundi over there. So he will also be treated as person. And sir, Lord Venkateshwara also has to pay income tax. Yes, they also have to pay income tax. Then assessee. Assessee, section 2 clause 7. Assessee means what, sir? Assessee means any person who is liable to pay tax or any other sum under this act. So if you are a person who is liable to pay tax or any other amount, if you are a person who is liable to pay tax or any other amount under this act means income tax act. If you are liable to pay tax or if you are liable to pay interest, penalty, late fees, etc. If you are liable to pay tax or any other sum under this act, you will be called as assessee, and assessee will include representative assessee, deemed assessee, and assessee in default. So representative assessee means what, sir? Sometimes what happens is, like for example, I have a daughter, she is 6 years old. Now my daughter is 6 years old, but my daughter makes reels on Instagram, YouTube, she is making reels, and she has around 2 million followers. Now, because she has 2 million followers, lot of companies are there, toy companies are there. They come and for their brand promotion, etc., from which she is making around 20 lakh rupees every month. Now, she is earning 20 lakh rupees, but can she file her income tax return by herself? She cannot file because she is just 6 years old. So, I will be treated as her representative assessee. Deemed assessee, you are not an assessee, but they are going to assume that you are an assessee. Sometimes what happens is, based on your Instagram profile and all, you are posting photos with gold chain, standing in front of defender and telling rich life, you poor people get lost. Something you are posting, and this is seen by Nirmala Sitharaman. She sees this and she sent a note. She sends a notice to you. Tell me, from where did you get this money to buy the car? From where did you get the money to buy this gold chain, etc.? Now, are you a person who is liable to pay tax or any other sum? No, but still you received a notice. Now, because you received a notice, you are supposed to reply to that notice. So you will be called as deemed assessee. And assessee in default. Assessee in default means what, sir? Assessee in default. Assessee in default means you are supposed to follow some provision of the law. You are supposed to do something, but you have not done that thing. Then you will be called as assessee in default. Now, the tax rate applicable for your examination. Now, I hope you know that there is two regimes which we have. One is called as optional tax regime. One is called as default tax regime. Under optional tax regime, there is no change. There is no change. Whatever you studied previously, there is no change in this. There is a change in tax rate for default tax regime. Under default tax regime, whatever tax rates are there, those are changed. So tax rates for previous year 25-26 and assessment year 26-27. So general tax rates are slab rates. So Finance Act, so general tax rates or slab rates, and we have special tax rates. General tax rates or slab rates are given in Finance Act, and these are applicable to all types of income except some special income. And special tax rates which are there, they are given in Income Tax Act, and they will be applicable to some special types of income only, which are listed over here. Now please see. General tax rates are given in Finance Act, and special tax rates are given in Income Tax Act. Now, Income Tax Act is not something which they make every year, but Finance Act is something which is coming every year. So, Income Tax Act, whatever is there in Income Tax Act, meaning this special tax rate, the chances of their changing is very less. But whatever is there under Finance Act, this general tax rates, that may change. That may change, like it has changed in case of default regime. Okay. Special tax rates are applicable for special income like long-term cap gain under section 112, 112A, short-term cap gain under section 111A, casual income, online money games, and undisclosed income. On these incomes, what is applicable, sir? Special tax rates are applicable. And any income other than this, salary income, house property income, business or profession income, short-term cap gain under section 111, and income from other sources, on all these incomes, what is applicable, sir? Slab rates are applicable. Now, the slab rates for your examination or the general tax rates for your examination is, if you are following optional tax regime, for you it is, if you are an individual HUF, AOP, BOI, artificial judicial person, then for you up to 2.5 lakhs, no tax, 2.5 to 5, 5%, 5 to 10, 20%, and more than 10, 30%. Meaning, if you are an individual, who is an individual, sir? That individual whose age is less than 60 years. Or meaning resident individual whose age is less than 60 years, or if you are a non-resident person, irrespective of your age. And if you are a non-resident person, it does not matter what is your age, irrespective of your age, up to 2,50,000, you have to pay no tax. If your income is more than 2.5 lakhs up to 5 lakhs, you have to pay 5%. 5 lakhs to 10 lakhs, 20%, and more than 10 lakhs, 30% is what you have to pay. Then, if you are a senior citizen, who is a senior citizen? Senior citizen means a resident individual whose age is 60 years or more. For them, up to 3 lakhs, they don't have to pay the taxes. After 3 lakhs, it is same. 3 lakhs to 5 lakhs, 5%, 5 lakhs to 10 lakhs, 20%, more than 10 lakhs, 30%. And if you are a super senior citizen means what? Super senior citizen means a resident individual aged 80 years or more. Up to 5 lakhs, you don't have to pay any taxes. 5 lakhs to 10 lakhs, 20%, and more than 10 lakhs, 30%. Then, apart from paying this tax, see, there is one limit up to which you don't have to pay any taxes. 2.5 lakhs, 3 lakhs, and 5 lakhs. That is called as basic exemption limit. If your income is up to that limit, you don't have to pay any taxes. Then you have to pay something called as surcharge. Surcharge is what, sir? Surcharge is an extra tax. Surcharge is what, sir? It is a tax on tax. It is an extra tax which you have to pay. When should I pay surcharge, sir? You have to pay surcharge if your total income is more than 50 lakh rupees. When will I have to pay surcharge? If your total income is more than 50 lakh rupees. So if your total income is more than 50 lakhs up to 1 crore, you have to pay a surcharge of 10% of tax. If your total income is more than 50 lakhs, more than 1 crore up to 2 crores, 15% of tax. If your total income is more than 2 crores up to 5 crores, 25% of tax. And if your total income is more than 5 crores, 37% of tax is the surcharge which you have to pay. Apart from paying surcharge, you also have to pay something called as health and education cess. That is a compulsory amount which you have to pay, irrespective of how much is your total income. You have to pay something called as health and education cess. Sir, how much is health and education cess which I have to pay? 4% of tax. 4% of tax means what, sir? 4% of tax including surcharge. Do you understand this? Shall we compute tax for one of the income? Just to check whether you know how to do the computation. Let us say Dilip, aged 33 years. I have a total income of 2 crore 45 lakhs 37,200 rupees. Compute my tax. Optional regime, yeah. Default regime we have not discussed. Optional regime. Default regime we have not discussed yet. One answer we have received. $93 lakhs 25,758. Now please see. How do I compute the tax? Total income, tax amount. See, up to 2.5 lakhs, I don't have to pay anything. Then from 2.5 lakhs to 5 lakhs, how much is the amount? 12 lakh 50,000 into 5%, which is 12,500. From 5 lakhs to 10 lakhs, on 5 lakhs, I have to pay 20%, which is 1 lakh rupees. More than 10 lakhs, which is how much, sir? 2 crore 35 lakhs 37,200. I have to pay 30%. Compulsory this calculation you should show. You know how to calculate, but examiner does not know that you know how to calculate. So you have to tell them you know. So you should show this calculation. How much, sir? 70 lakhs 61,160. So my total tax comes to 71,73,660. To this I will add surcharge. How much is the surcharge? Because my total income is more than 2 crores. So please see, to check surcharge, I will not see the tax amount. To check surcharge, I will see the total income. Because my total income is more than 2 crores, I'll pay a surcharge of 25%. So 25% of what? 71 lakhs 73,660 into 25%. How much? 17 lakhs 93,415. So total comes to 89 lakhs 67,075. And to this I will add health and education cess. This is compulsory. Irrespective of whether you have surcharge or not, health and education cess will compulsorily will come if there is a tax. How much, sir? 3,58,683. So my net tax liability comes to 93 lakhs 25,758. We should not close over here. What I should do in life? Round off to the nearest multiple of 10. Who says section 288 B says that tax should be rounded off to the nearest multiple of 10. So 93, 25, 758 will become 760 rupees. Okay, not okay. Is this clear, everyone? Calculation you understood? Now please see. One more. They have given a clarification. What is the clarification talking about, sir? Let us say I am born on 1st of April 1966. So in the previous year 25-26 will end on 31st of March 2026. Correct? No. So in the previous year 25-26, whether 2.5 lakhs limit will be applicable to me or 3 lakh limits will be applicable to me. I was a person who is born on 1st of April 1966. Which is the limit which will be applicable to me? 3 lakh rupees or 2.5 lakhs, for which they have given a clarification. See, on 1st of April 2026, you will be celebrating your 60th birthday. On 1st of April 2026, I will be celebrating my 60th birthday. Now, because I will be celebrating my 60th birthday on 1st of April 2026, lawmaker says that means you have completed 60 years on 31st of March 2026. Because you have completed 60 years, you are celebrating your 60th birthday. Okay. So if a person is born on 1st of April 1966, he completes 60 years on 31st of March 26, and therefore he will be treated as senior citizen for the previous year 25-26, and the limit of senior citizen will be applicable to him. Similar is the case for a person born on 1/4/1946. Then we have rebate. Under optional tax regime, we have a rebate if your total income is up to 5 lakh rupees. Rebate is given under section 87A. What is it telling? If you are a resident individual and if your total income is up to 5 lakh rupees, then you will get a rebate under section 87A. How much is the rebate amount, sir? Rebate will be the tax amount or the limit of 12,500, whichever is less. Please note, condition is for getting a rebate. Condition number 1, you should be a resident individual. You should have a total income up to 5 lakhs, not more than 5 lakhs. Even 1 rupee more than 5 lakhs, rebate will not be given to you. And what, sir? The rebate amount will be tax amount or 12,500, whichever is less. Now, this rebate is given before surcharge and cess. Meaning, first you find the normal tax, give rebate, then surcharge cess will be applicable. Is this clear? Next, we have a beautiful concept called as marginal relief. Now, what is this marginal relief concept talking about? See, sometimes what happens is your income will be slightly more than the surcharge limit. Okay. So, whenever in the question, how much slight more, sir, that you ignore. Whenever you have a concept of surcharge coming, okay, whenever you are solving a question and if surcharge is coming, check your question. Check your question carefully. How much is your total income and what is the limit of surcharge coming? So, check. Let us say the income which they have given is 2 crores 1 lakh. Now, when the income is given, the question is 2 crores 1 lakh, that means surcharge of 25% is going to come. They gave an income of 1 crore 2 lakhs. That means surcharge of 15% is coming. They gave an income of 51 lakhs. That means surcharge of 10% is going to come. So whenever there is a surcharge coming, in the question, whichever they have given based on the total income, if you feel that surcharge is applicable, always check for marginal relief. Always check. Always check for margin relief. Normally, margin relief is equal to be checked whenever it is slightly more than surcharge limit. But sir, what is that slight more? That slight more will change for every limit, 50 lakhs, 1 crore, 2 crores, 5 crores, 10 crores, etc. There are different limits for paying surcharge. So best thing is what, sir? In the question, whenever surcharge is coming, always check for margin relief, because they are not going to ask you 10 questions on computation or income. Tax on total income. Okay, there will be one question only, and one maybe they may ask you in MCQ. So whenever there is a surcharge coming, always check for marginal relief. Now, marginal relief is applicable only when the taxpayer has a total income slightly or marginally more than the income on which surcharge is applicable. For example, on 50 lakhs, no surcharge is there, but on 51 lakhs, surcharge is there. So can I say my income is slightly more than 50 lakhs, because of which surcharge of 10% is coming? Now check for marginal relief. Same to same case, when my income is 1 crore, when my income is 1.01 crores or 1.02 crores, now the surcharge is changing from 10% to 15%. Meaning, if my income would have been only 1 crore, I would have paid surcharge of 10%. Now, because there is a slight increase in income, I am paying higher surcharge. My surcharge amount is increasing by 5%, because of which my tax amount may increase. So always check for margin relief in such situation. Now, margin relief, the concept of margin relief is applicable whenever your income is slightly more than surcharge limit, and this is applicable to all types of persons, whether you are individual HUF, OPB, or a company, etc. It is applicable to all types of person if their total income is slightly more than the surcharge limit. If your total income is slightly more or marginally more than the surcharge limit of 50 lakhs, 1 crore, 2 crores, 5 crores, or 10 crores. Now, sir, what is this? How is this margin relief calculated, sir? Very simple. Very simple. First, compute the tax on whatever total income they have given. Compute the tax before cess. Before calculating the health and education cess, compute the tax. So compute the tax on whatever income they have given you. Okay. Before cess, compute the tax on whatever income they have given you. Now, let us say the total income given to me in the question is 50 lakh 10,000. So 50 lakh 10,000, compute the tax up to surcharge, meaning compute the tax, add surcharge to it. Now, what is the immediate previous limit of surcharge? In the present case, because it is 50 lakhs, 50 lakh 10,000, the immediate previous limit for levying surcharge is what? 50 lakhs. Meaning on 50 lakhs, there is no surcharge. Now, because it is more than 50 lakhs, higher limit is coming. If this income was 1 crore, 1 lakhs, I would have compared with 1 crore. If this income was 5 crores, 10 lakhs, I would have compared with 5 crores. Meaning, you check the immediate previous surcharge limit. Whatever amount they have given in the question, immediate previous surcharge limit, you take that, and first compute the tax on whatever income they have given to you. Okay, whatever income they have given to you, compute the tax up to surcharge level. Then compute the tax up to the surcharge limit for the immediate previous surcharge limit. Okay, up to surcharge, you compute the tax. Now see what is the difference in tax amount. The difference in tax, and then see what is the difference in income amount. The difference in tax and difference in income, take that amount. Okay, if the difference in tax is more than difference in income, then the difference between tax and income is surcharge. Surcharge, repeat. Sorry, margin relief. The difference between this increase in tax and increase in income will be taken as marginal relief. Better let me explain this concept to you with a question. I'll explain this small concept with a question, because it is an important concept which they may ask in your examination. Let us say I have a total income of 2 crore 2 lakh 55,000. Now, can I say because my total income is 2 crore 2 lakh 55,000, margin relief will come? Sorry, surcharge will come. Surcharge will come. We should check whether margin relief is going to come or not, but surcharge so definitely is going to come. Now, I should compute the tax on this total income. So what is the tax on total income, sir? my tax on total income of 2 crores 2,55,000. Can I directly write up to 10 lakhs? It is 1,12,500. And more than 10 lakhs, it is 1 crore 92 lakhs 55,000 into how much percent, sir? 30%, which will give me how much? 57 lakhs 76,500 rupees. The total of this will come to 58 lakhs 89,000 rupees. Now to this I should add surcharge. Now because my income is more than 2 crores, surcharge of 15% is going to come. So 15% of what? Sorry, 25% is going to come. Because my income is more than 2 crores, my surcharge of 25% is going to come. So 25% of 58 lakhs 58 lakh 89,000 is how much? 14 lakh 72,250 rupees. The total of this will be 73 lakhs 61,250 rupees. Now I should calculate the tax till here. I should calculate the tax till what limit, sir? Till the surcharge limit. I should calculate the tax till surcharge limit. Now I should see what will be the tax if my income was only 2 crores. What will be my tax if my income was only how much, sir? 2 crores. Hey, please, do you understand why 2 crores? Whatever income they have given you, immediate previous limit of surcharge. Whatever income they have given you, immediate previous limit of surcharge. What is the income given by them? 2 crores, 2,55,000. Immediate previous limit is how much? 2 crores. Immediate previous limit is how much? 2 crores. So how much will be your tax on 2 crore rupees, sir? So tax on 2 crores. Same thing you should do. Up to 10 lakhs, it will be same. 1,12,000. And more than 10 lakhs, it is 1.9 crores into 30%, which is 57 lakhs. So total is 58 lakhs 12,500. Add surcharge. Now income is more than 1 crore, therefore 15% surcharge is applicable. 8 lakhs 71,875. The total of this will be 66 lakhs 84,375. 66 lakhs 85,375. I just have to do this calculation. Calculate tax on whatever total income they have given up to the surcharge, and then calculate tax on immediate previous surcharge limit. Now, what is margin relief, sir? Margin relief is very simple. What is my increase in tax? How much is my increase in tax? Sir, what do you mean by increase in tax, sir? The difference between tax on total income and difference between whatever tax up to 2 crore rupees you have found. So difference between this is how much, sir? 6,76,875. From this subtract the difference in income. Increase in income. Sir, how will I come to the difference in income, sir? Very simple. You found the amount on 2 crores and the income given to you is 2 crore 2,55,000. So difference is how much? 2,55,000. So this is how much, sir? 2,55,000. Now the difference between this is how much? Marginal relief of 4,21,875. Yeah, how many of you understood margin relief? Everyone understood? No, no problem in margin relief. So this is margin relief. This is margin relief. Now this I should subtract before calculating health and education cess. I should subtract marginal relief as per working note number 1, which is 4,21,875. So the difference is 69, 39, 375. Add health and education cess of 4%, which is 2 crore 2,77,575. So your net tax liability comes to 72 lakhs 16,950 rupees. Now in examination, they may only ask you to find marginal if. Normally, if they ask that kind of question, it will be an MCQ question. Is this clear, everyone? Now comes our default regime. This is little important. Okay, why? Because there are two changes in default regime. One is with respect to tax rate and one is with respect to rebate provision. Okay, so these two changes are there in this particular topic. And I expect that they may ask a question on rebate at least, because rebate is something which is different. Section 115 BAC talks about default tax regime. Now you have two methods of computing tax of a person. One is under default regime or under optional regime. Sir, the question which I have is, which regime should I follow? In examination, which regime should I follow, sir? Default regime or optional regime? Whichever you are telling, whichever gives you low tax. How will you come to know about that? That means you have to do under both the regime. If they ask you to find only the tax amount, and if you're finding under both the regime, don't you think too much time it will consume? I understand your point when the question says, when the examination question says, find the tax liability, find the minimum tax liability. If they say that, we understand that I should do under both the regimes and take whichever is less. Or if the question is specifically telling, find the tax amount under both the regime, then also if I do both the regimes, then it makes sense. But if the question says, please compute the tax, and they are not mentioning whether it is default regime or optional regime, what should I follow? Then you should follow what regime, sir? Default regime. So because why, sir? The name itself says it is by default this thing only. When you purchase a new phone, it will have something, some default settings will there. Correct? No, you can change your wallpaper later. Correct? No. So default means what, sir? By default, this is what you are supposed to do. Okay. So to whom is this 115 BAC applicable? This section is applicable to individual HUF, AOP, BOI, AJP. This section is applicable to whom, sir? Individual HUF, AOP, BOI, AJP. That means this section is applicable to slab rate assessees. Those people to whom slab rate is applicable to them, this section is applicable. 115 BAC is applicable to both resident and to non-resident. So it does not make any discrimination between whether you are, sir, how come 6785? 6785, 6785, 6785. Extra tax, Sundri. You take this amount, 73 lakhs, 61,250, and take over here 66 lakhs, 84,000. The difference of this is this amount. Now, default tax regime does not make any difference, does not discriminate between whether you are a resident or a non-resident. It does not discriminate whether you are senior citizen, super senior citizen. It does not have any difference. For everyone, the tax rate is same. What is the tax rate, sir? The tax rate under 115 BSc, okay, is for the previous year 25-26 up to 4 lakh rupees, no tax. 4 lakhs to 8 lakhs, 5%. 8 lakhs to 12 lakhs, 10%. 12 lakhs to 16 lakhs, 15%. 16 lakhs to 20 lakhs, 20%. 20 lakhs to 24 lakhs, 25%. And more than 24 lakhs, 30%. Meaning what, sir? Very simple. Very simple. It is not like before. Here, now they have made it very simple and very easy. Just remember the first case. First case is what? Up to 4 lakhs, you don't have to pay tax. Up to 4 lakhs, you don't have to pay tax. And after that, income is increasing by 4 lakhs. Tax is increasing by 5%. So up to 4 lakhs, zero tax, plus 5% you will take. So 4 lakhs to 8 lakhs. So here you will add 4 lakhs. Here you will add 5. So up to 4 lakhs, no tax. 4 lakhs to 8 lakhs, 5%. 8 lakhs to 12 lakhs, 10%. 12 to 16, 15%. 16 to 20, 20%. 20 to 24, 25%. More than 24, 30%. Meaning here we have rates. See, under optional regime, it is 5, 20, 30. But here we have rate 5, 10, 15, 20, 25, 30. So if it is more than 24 lakhs, then only what will come? 30% will come. If it is more than 24 lakhs, then only the 30% limit is going to come. So tax rates under 115 BSC for previous year 25-26 up to 4 lakhs, you don't have to pay anything. 4 lakhs to 8 lakhs, 5%. 8 lakhs to 12 lakhs, 10%. 12 to 16, 25%. 16 to 20, 20%. 20 to 24, 25%. And more than 24, 30% is the rate. Surcharge is also applicable for default tax regime. Surcharge is applicable only when the total income is more than 50 lakhs. How much is the surcharge, sir? If your total income is more than 50 lakhs and up to 1 crore, 10% of tax. If your total income is more than 1 crore up to 2 crores, then 15% of tax. If your total income is more than 2 crores, then it is 25% of tax. Meaning surcharge limit is basically same. Surcharge limit is same. Only thing over here is you don't have 37% limit of surcharge. Under default regime, see, normally we have that, no, if the income is more than 5 crores, 37% is applicable. That is not there under default tax regime. Health and education says, as usual, normally it will apply. Then you have a rebate under section 87A. When will I get the rebate, sir? Rebate under section 87A. You will get the rebate under section 87A if your total income is up to, if you are a resident individual, and if your total income is up to 12 lakh rupees. If you are a resident individual and your total income is up to how much, sir? 12 lakh rupees. Rebate will be tax amount or limit of 60,000, whichever is less. Rebate will be given to a resident individual if your total income is up to 12 lakhs. How much is the rebate? Tax amount or 60,000 rupees, whichever is less. Now let us say, sir, let us calculate the rebate for one question, sir. Example. Let us say my total income is 11 lakh 50,000. So up to 4 lakhs, no tax. 4 lakhs to 8 lakhs. On 4 lakhs, I'll have to pay how much? 5%, which is 20,000. 8 lakhs to how much will I take? 11 lakh 50,000. 3 lakh 50,000 into 10%, which is 35,000. Total is 55,000. Add less rebate. Why is the rebate you are subtracting? Because I am an individual and my total income is a resident individual. I am an and my total income is not exceeding 12 lakh rupees. So rebate will be tax amount of 55,000 or limit of 60,000, whichever is less. How much, sir? 55,000. So here the net tax which you have to pay is 0. Net tax which you have to pay is how much, sir? 0. Very simple. What is important is, this is clear. What is important is these people, which people, sir? Default tax regime assessee, they get rebate even if the income is more than 12 lakhs. Normally, you will get rebate only when the income is up to 12 lakh rupees. But if their income is more than 12 lakh, even in such cases, they will get a rebate. Please note, that is not applicable for optional regime. For optional regime person, no, if the income is more than 5 lakhs, if the income is more than 5 lakh, it does not matter how much more it is. They will have to compulsorily pay the tax. But under default regime, they are giving an extra benefit to you. Under default regime, they are giving an extra benefit to you. You get a rebate under section 87A. When will I get, sir? Where the total income is slightly more than 12 lakhs. When will I get this benefit? Where your total income is slightly more than 12 lakh rupees. Slightly more than 12 lakhs, then you will get this rebate. When your total income is slightly more than 12 lakhs, you get this rebate. Rebate under section 87A. So how do I calculate this rebate? Very simple, very easy calculation. You don't have to break head at all. Whatever income they have given, calculate tax on that total income. Calculate what? tax on the total income which is given by them to you in the question. So calculate the tax on total income. Now see what is the difference between total income and 12 lakhs. First calculate the tax on total income. Okay, just the base tax before cess. Calculate the tax on total income. Then see what's the difference between the total income and 12 lakh rupees. What is the difference between that? So difference between step number 1 and step number 2 is your rebate. Difference between step number 1 and step number 2 is your rebate. Sir. No, sir. Repeat, sir. Repeat, sir. Let us say in the question examination, they have given a question. My total income is 12,25,000. I'm a resident individual. My total income is 12,25,000. Now, can I say because my total income is 12,25,000, it is more than 12 lakhs? If it is more than 12 lakhs, I should normally not get a rebate. But because I am opting for default tax regime, I will get that rebate. What is that rebate amount, sir? What is that rebate amount? Very simple. Calculate the tax on total income. So what is tax on total income of 12,25,000? Tax on 12,25,000. Up to 4 lakhs, no tax. 4 lakhs to 8 lakhs, 20,000. 8 lakhs to 12 lakhs, 40,000. 12 lakhs to 12 lakh 25,000. On 25,000, I pay how much? 15%. 3,750 rupees. So the total of this is 63,750. Now this is my step number 1. What is my step number 1 answer? Tax on total income is 63,75,000. Correct? No. Now second step is what's the difference between total income and 12 lakhs? What is my total income? 12 lakh 25,000 minus 12 lakhs. How much, sir? 25,000. So the difference between this you should take. What is the difference? 38,750. 38,750. So this is our rebate. 38 rebate under section 87A. 38,750. Difference is 25,000. Difference is how much, sir? 25,000. On this add health and education cess of how much? 4%. So net tax liability is 26,000. Net tax liability is how much, sir? 26,000 rupees. Now this extra benefit which they are giving, no, this will be given till the total income of, till your total income is how much, sir? 12 lakh 70,585. This extra benefit they'll give you till your total income is how much? 12 lakh 70,585. 12 lakh 70,585. So till this amount, if your income is till this amount, you will get the rebate. Please see, if you are able to understand this rebate concept, this extra benefit concept, the concept is very simple. The concept is very simple. 12 lakh is my income. Hello, Inge students. My income is how much? 12 lakh rupees is my income. And rebate is applicable only. So 12 lakh 25,000 is my income. Rebate is applicable only till 12 lakhs. Now, if you see the difference is how much? 25,000. And this 25,000 is only the tax which you are paying. Hello. 25,000 is only the tax which you are paying. Are you understanding? The 25,000 is only the tax which you are paying plus add surcharge. Meaning what, sir? If your income is still 12 lakh 70,585, you will get a rebate. And how much rebate will you get? Will get a rebate of same 70,585. You understand? Now tax rates for company. You understood which is the amendment? Tax rate change is there under default tax regime. Tax rates for companies for the previous year 25-26 or assessment year 26-27. Sir, we will get any break in marathon class? Yes, yes, you will get a break. I'll give break. Very soon you are asking. Break, I'll give at 4 o'clock. Tax rates for company. Company, you know, company is there in life. Yeah. So company can be of two types. One is called as domestic company, another is called as foreign company. For domestic company, tax rate is what, sir? 30%, and for foreign company, tax rate is 35%. Very simple. Domestic company 30%, foreign company 35%. See, normally company related question they will not ask you, but in MCQ they may ask. Only in MCQ. Apart from that, there is no much relevance. If for domestic company, what is the tax rate? 30%, and for foreign company, what is the tax rate? 35%. Note, if the turnover or gross receipts of the domestic company for the previous year 23-24, if the turnover or gross receipt of the domestic company for the previous year 23-24 is up to 400 crores. If the turnover is up to 400 crores, then in this year, which year? For the year 25-26, the tax rate for that company will be taken as 25%. Sir, Purile sir, please repeat, sir. Please repeat. If the turnover of or gross receipts. So if you're involved in supply of services, then for you, the income will which you receive is called as receipts instead of turnover. Turnover is nothing but sales. If your turnover, they are not talking about your income amount, they are talking about your turnover, sales amount. If your turnover or gross receipts is up to 400 crores, up to 400 crores means 400 crores or less than 400 crores in the previous year 23-24. If your turnover or gross receipt is up to 400 crores, then the tax rate will be 25%. The tax rate for this year instead of 30%, the tax rate will be taken as 25%. Okay. What is important is the company should be in existence in the year 23-24, and in that year the company's turnover should be less than 400 crores. Meaning, if the question says the company started its operation in 25-26, but they have no information about that year ka turnover, etc., because the company started in this year, that means he did not have the year 23-24. Therefore, for them, what is the rate I am going to apply? 30%. Only when the company was there in the year 23-24, and if they give the information of turnover of 23-24, take it as 25%. If the question does not give any information about the turnover of 23-24, take what's 30%. Then surcharge is also, yeah, I mean 200 crore is less than 400 crores. Surcharge, Kavin, surcharge if the total income is more than 1 crore up to 10 crore. If the total income is more than 1 crore up to 10 crore, surcharge of 7% is applicable for domestic company and 2% surcharge is applicable for foreign company. If your total income is more than 10 crores, surcharge of 12% is applicable for domestic company and 5% is applicable for foreign company. You okay, not okay? Surcharge if the total income is more than 1 crore up to 10 crore, domestic company 7%, foreign company 2%. Total income is more than 10 crores, 12%, 5%. Health and education cess as it is will be applicable, and concept of marginal relief is applicable to them also. Yes, sir. So if it falls under the category of domestic company, then 30% and 25%. If foreign company means that company only, no, which is doing business in India. So 35%. 35%. Unless until it falls category under domestic company. Tax rates for partnership firm, LLP and local authority. For them, very beautiful, very simple. Tax rate is what? Flat 30%. Flat 30% meaning even 1 rupee income you are earning, 30% you have to pay tax. And they'll have to pay surcharge. Surcharge if the total income is more than 1 crore, surcharge is 12% on tax. They have to pay something called as health and education cess equal to 4% on tax including surcharge. Margin relief is applicable to them. Okay, normal tax rate is how much, sir? 30%. Surcharge applicable if total income is more than 1 crore. How much is surcharge? 12%. Margin relief is also applicable. How much, sir? Whatever that margin relief is there. Health and education says will apply as it is. The tax rates for cooperative societies. If you are a cooperative society, for you the tax rate will be if your total income is up to 10,000, 10%, 10,000 to 20,000, 20%, more than 20,000, 30%. Surcharge will be applicable if the total income is more than 1 crore up to 10 crores, 7% of tax. Total income is more than 10 crores, 12% of tax. Health and education cess shall apply as it is, which is equal to 4% of tax, including surcharge. Margin relief also will be applicable. Now, special tax rates. Special tax rates. There is no change as such in special tax rates. Whatever you would have studied for the previous attempt, that is only there. Special tax rates. Special tax rates for previous year 25-26. Special tax rates are given in Income Tax Act. So what are those special types of income, sir? Long-term capital gain under section 112. If it is a long-term capital gain under section 112, I hope you know that capital gain which is there can be of two types. One is long-term capital gain, one is short-term capital gain. Long-term capital gain is taxable under 112A. Short-term capital gain is taxable under 111 and 111A. So 112 tax rate is 12.5%. 112A also tax rate is 12.5%. But for gain in excess of 1,25,000. 111 tax rate is slab rate. 111A tax rate is flat 20%. So this is the tax rate for capital gain. So long-term capital gain under section 112, 12.5%. Long-term capital gain under section 112A, 12.5% for gain in excess of 1,25,000. Short-term capital gain 111A, 20%. Casual income. Casual income means winning from lottery, betting, gambling, horse race, TV shows, etc. Any type of race, horse race or car race, bike race. 115 BB it is taxable, rate is 30%. 115 BBJ online money games, tax rate is how much, sir? 30%. 115 BBE undisclosed income or deemed income, black money basically, 60% is the tax rate. Now for capital gain, we will see in detail in the chapter income from capital gain. We will see in detail what capital gain talks about. Now 111A and 112A, there are only three items covered over it. 111A and 112A, only three assets are covered. For these three assets, I will apply 111A and 112A. Apart from that, if it is a long-term cap gain, 112, short-term cap gain, 111. I will apply 111A and 112A only for three categories of assets. Sir, which are these three categories of assets for which you are going to apply 111A and 112A? Listed equity shares. Listed equity shares means what, sir? Those equity shares on which security transaction tax has been paid at the time of purchase as well as sale. See, whenever you are purchasing shares online, meaning demat account, etc., you have to pay something called as security transaction tax. Those shares are basically called as listed equity shares. Or equity oriented mutual fund. Mutual fund, which type of mutual fund? Equity oriented mutual fund. For that, if it is a short term, on that you should have paid security transaction tax at the time of sale. Unit trust, business trust of India or unit trust of India. So the name is changed now to what, sir? Unit trust of India, but it is same. Business trust of India or unit trust of India, both means same. Units of unit trust of India or business trust of India. So for these three assets, If it is long-term capital gain, 12.5% for gain in excess of 1 lakh. And if it is short-term capital gain, tax rate is 20%. Okay, students. Now, special tax rates which we have just now seen, that is applicable for all types of assessee irrespective of what you are. Okay, the special tax rates are same for everyone. Above special tax rates are applicable for individual, whether he is opting for optional or default regime, partnership firm, LLP, OP, BOI, company, local authority, etc. For everyone it is same. Let us do one question on special tax regime to check whether we can compute. See, basically your main examination, the question which you get, no, in that the total income which they are going to give you will have the income taxable at special rates as well as the income taxable at slab rate. Okay, that type of question only will come. So let us say Dilip has following income. What income Dilip has? Dilip has business income of rupees 30 lakhs. I have income from salary of 10 lakhs. I have long-term capital gain under section 112. 6 lakhs. Long-term capital gain under section 112 A 6 lakhs 25,000, and I have lottery income of 15 lakhs. Compute once. I'll give you 1 minute. Compute under optional regime, sir. Whatever regime you are finding under default. Okay, compute under default regime. One answer I have received. How much, sir? 70. 1422 200. 10 lakh 500. Variety answer I'm getting. 15 lakhs. Maza is there. Shall I calculate now? I'll do. Variety answers you are giving. Now please see. First identify the income which they have given in life. Whether that income is taxable at slab rate or you should check whether it is taxable at special rates. Okay. Now can I say first is slab rate, special, special. Now, how should I do the computation, sir? Best way, and that is the way which you should follow also. Compute the tax on special income first. First compute the tax on special income. Okay. So how will I do, sir? Computation of tax on total income. Hey, how many of you have studied this computation part? Now before this, before me taking, you have studied, but still you are finding difficulty in doing it. And some people now, some people are finding difficult. Please note. By the way, whoever gave the answer, don't assume that your answer is right. That means if your answer is wrong, that means you are finding difficulty. Why? Maybe because you would have not practiced. Or my practice would have been, I would have just read that question. And when I'm reading, I'm feeling that I am doing it in my mind, but you are not doing. Maja is there. Particulars, income, and tax amount. Long-term capital gain under section 112. So how much is the income? 6 lakhs. Tax will be how much? 6 lakhs into 12.5%. How much? 75,000. Long-term capital gain under section 112A. How much? 6,25,000. 6,25,000 minus 1,25,000 into how much? 62,500. Lottery income is 15 threes are 15 lakhs into 30%, 4 lakh. Apart from that, whatever is left over, can I call it as balance total income? Hello. Apart from this, whatever is left over, can I call it as balance total income? How much is my balance total income? 40 lakh rupees. How much is my balance total income? 40 lakh rupees. Which regime have you followed? Default regime. So tax on 40 lakhs at slab rate under default tax regime. Now under default tax regime, if your income is up to 24 lakhs, the tax will be 3 lakh rupees. And more than 24 lakhs is how much, sir? 16 lakhs into 30%, which is 4 lakh 80,000. So I'll take this tax amount over here, 4 lakh. Yeah, 7 lakh 80,000 only I have written. See carefully. Total is how much? 13 lakh 67,500. A is my total income. How much is my total income, by the way? The total of this is 67 lakhs. So can I say it is more than 50 lakhs? Therefore, add surcharge of 10% of tax. Total 15 lakhs. Add health and education cess of 4%. 61. My net tax liabilities. Yeah, how many of you didn't get this answer? What is your answer, sir, under optional regime? Wrong answer. Hey, did you understand your mistake? I expect you to make that mistake in exam. Is this done? What about rebate? Hey, why will rebate come? Problem is there in life. Yeah. Whenever you are riding the bike, should wear the helmet also. I understand. Hey, please see, rebate will come only when total income is up to 12 lakh rupees. Here my total income is 67 lakhs, 25,000. No, sir, my question was not about rebate. Margin leaf. Margin leaf is when it is slightly more than 50 lakhs. 50 lakhs, 50 lakh, 51,000, 52, sorry, 51 lakh, 52 lakhs. Till that, you check. It's too much. That's what I'm telling you. You will not get to know. You have to calculate for every question. So it should be slightly more. Now that will differ. That will differ. See, for 50 lakhs, maybe the 2 lakh is the limit. Okay. 52 lakhs or 2 lakh 50,000. But for 1 crore, that limit will increase now. And for 10 crores, it will be even more. So for 10 crore, it may be 10 crore 20 lakhs, 10 crore 25 lakhs. So it will differ. So better do it. Normally take roughly around 2 to 2.5%. If 2 to 2.5% difference is there, better check for marginal relief. Now, some important points. Some important points in this chapter. This chapter is done. Once we discuss, no, we have agriculture income also. But yeah, if your total income and tax amount, please see, important point. What are the important points? The total income and the tax amount should be rounded off to the nearest multiple of 10. It should be rounded off to the nearest multiple of 10. So if it is section 288A, says the total income should be rounded off to the nearest multiple of 10. Section 288B says your tax amount should be rounded off to the nearest multiple of 10. Sir, nearest multiple means which near, sir? So if the last digit, let us say it is 14 lakh 57 56,748. Last digit is 8, round it off to the next multiple of 10. Last digit is 2, round it off to the previous multiple of 10. How will I come to know? If the last digit is up to 4 means 1, 2, 3, 4. Get down the, yeah, up to 4. Then I will round it off to the what, sir? Previous multiple of 10. Previous multiple of 10 means previous multiple of 10. If it is 5 or more, I will round it off to the next multiple of 10. Next multiple of 10 means next multiple of 10. Yeah. On undisclosed income, or on deemed income, tax rate is 60%. Tax rate is 60%. Further, surcharge of 25% and health and education cess of 4% shall always apply to them. Meaning, even if the income is just 1 lakh rupees, you will have to calculate surcharge and health and education cess. They will always apply. Tax rate is what, sir? 60%. Add on the 60%, I'll add 25%. On this total, I will add 14%. So total amount will be how much, sir? 78% is the effective rate of tax for what, sir? Undisclosed income. Last attempt. Last attempt means your last examination. An MCQ question was asked for 2 marks. A 2 marks MCQ Google question they had asked. They have given a question telling this person's income is 5 lakh rupees. Compute his tax. What tax? Compute his. This person has earned income by way of undisclosed income he has, and the income is 5 lakh rupees. Compute his tax. How much is tax? So 50 lakhs into 78%, which is 3,90,000. Please note, you literally don't have to add this. If you add this, total will be wrong. 60 plus 25 plus 4 Allah. How do I levy, sir? Let us say my income is 1,000, 60% on this. Then on that, I will levy 25%. And on this entire amount, I will levy 4%. So basically, take 60%. 25% of 60% is 15%. How much is the total? 75%. 4% of 75% is 3%. So total is 78%. Okay. Now, here is one important amendment which you'll have to make in your book also. You will have to make that changes, whichever material you are having. What is that change, sir? Rebate under section 87A, rebate under section 87A is not available against following income. If you are a person who is following optional regime, then you cannot take rebate under which income, sir? 112A. Rebate under section 87A is not available against which income? 112A for optional regime, meaning long-term capital gain under section 112A. And if you are a person who is following default regime, very important change, you cannot claim rebate against any income. You cannot claim rebate against which income, sir? Any type of income. If in your materials also, I think you'll have to make the changes. Okay. If you are following optional regime, rebate is not available against long-term capital gain under section 112A. And if you are following default regime, rebate is not available against any type of special income. Rebate is not available against any type of special income. Make these changes in your material. This is important. What do you mean by rebate is not available against this income? Meaning, if in your total income you have this income, which income? If you're following optional regime, and if you have which income? 112A. On that 112A income, you cannot claim any rebate. If you are following default regime, and if in your total income you have any type of special income, you cannot claim a rebate on that special income. You okay? We'll do a question on this point. Before that, we'll see the next point also. Normally, basic exemption limit should be adjusted against the income taxable slab rate. You know what is basic exemption limit? Up to some amount, you don't have to pay any tax. 2.5 lakhs, 3 lakhs, 5 lakhs, 4 lakhs. Up to this amount, you don't have to pay any tax. So this basic exemption limit should be adjusted against the income taxable at what rate? Slab rate. The basic exemption limit should be adjusted against that income which is taxable at slab rate. However, if the basic exemption limit is not fully adjusted or utilized against the income taxable at slab rate, then such unadjusted basic exemption limit can be adjusted with income taxable at special rates, except against casual income or undisclosed income. Except against which income, sir? Casual income or undisclosed income. Sir, repeat. Normally, basic exemption limit should be adjusted with whom, sir? Slab rate income, meaning you should adjust with salary, income from house property, etc. Whatever income is taxable at slab rate, against them you should adjust. But if you don't have any slab rate income at all, let us say this year I made only short-term capital gain of 4 lakh rupees. Now what will I do, sir? Because you have made only short-term capital gain of 4 lakh rupees, this basic exemption limit of 2.5 lakhs, you can adjust against this income. No problem, you can adjust against this income. If you don't have any slab rate income, then you can adjust with the special income. You can adjust with any of the special income except casual income and undisclosed income. And the best way of adjusting that excess amount of basic exemption limit is first adjust with that income which has a higher tax rate, then adjust with that income which has a lower tax rate. Now let us do a question covering point number 3 and point number 4. Particulars rupees, this is my income, you have to compute the tax on my income. My salary income is 2 lakh 40,000. My income from house properties 90,000. My short-term capital gain under section 111 A is 1 lakh. Long-term capital gain under section 112 1,50,000. And TV show winning is 3 lakh. So compute tax under default regime. Fast. Compute tax under what regime, sir? Default regime. One answer I have received. 1,27,660. See, for calculation of total income, you should include all types of income, Sundri. Aparna, you should include special income also. But while doing rebate, you please exclude those taxes. We will see in this question. Please exclude those taxes on which what is applicable? Rebate is applicable. 1 lakh 28,750. 1,16,750.
Sir, 1,17,000 something.
1,17,000. Variety answers I am receiving. 1 lakh 30 900. Maja is there. 1,19,340. Online students, I am waiting for your answers. 56,940. Wow, Maja is there. 71 700. 500. Okay. Now please see. How much is A? First identify what income is taxable where. Can I say this is slab? Slab, special, special, special. How much is my slab rate income? 3 lakh. I am following which regime? Default tax regime. I have benefit till 4 lakhs. Up to 4 lakhs, I don't have to pay any taxes. Correct, not correct, students? So now for this special income is taxable at what rate? 20%. This special income is taxable at 12.5%, and this is taxable at 30%. Please note, my basic exemption limit is 4 lakh rupees. Under default regime, my basic exemption limit is how much? 4 lakh rupees. This I should adjust with whom? Slab rate people. And how much slab rate people want? They want only 3 lakh 30,000. Correct? They want only 3 lakh 30,000. Meaning balance how much? 70,000 is left over. I can give it to special people. How much will I give it to special people, sir? I'll give it to whom shall I give? See, on TV show, though, I can never give. TV people, though, I can never give. I can give only to, I mean, the other two income which is there, short term capital gain or long term capital gain. Whom shall I give? Can I say giving it to short term capital gain is more beneficial? Why, sir? Because the tax rate of short term capital gain is 20%. If I give it to them, I will get net benefit of 20% on this. So, whom shall I give it, sir? Short term capital gain. Did you understand this point? Bifurcation you understood? Give it to that person who is charging more interest from you or more tax from you. Now let us calculate the tax. Particulars, income tax amount. Short term capital gain 111A, 1 lakh, but I'll pay tax only on 30,000, which is 20%. Long term capital gain 112, 1,50,000 into 12.5% is 18,750. And from TV show I have made 3 lakh, 3 threes are, and on balance total income, how much? 3,30,000, no tax. What is that total? Now how much is my total income? 8,80,000. Hello. So can I say rebate also will come? Less rebate is how much? 87A. How much is the rebate I should take? Rebate I should take tax amount. How much tax amount I should take? I should take 114,750 minus. I should take 114,750 minus tax on special income. Minus tax on special income. Minus tax on special income. Sir, what are you trying to say? A rebate is not available against income taxable at special rates. Just now you wrote something right. Rebate is not taxable under default tax regime. Rebate is not available against the income which is taxable at special rates. Hello. So I'll subtract the tax on special income. Can I say this actually tax on special income is the same amount which you have written over here? How much, sir? How many of you understood this? Didn't understand this? C, 1 minute, no problem. B, or there is a limit. How much is the limit? 60,000 rupees. Whichever is less. Who is less? 0. So subtract 0 from this, we'll get 1,14,750. Add health and education cess of 4%, which is net tax liability is how much, sir? 119,300. See it carefully. Check if you have any questions. Rebate is not available against income tax but special rate. Rebate is not available against income taxable at special rates. So I will take the tax in this. On this amount only rebate is available, but this amount is 0 because what is the total tax on special income? You take that 1,14,750, subtract it from this amount. I'll do one more question. Yes, sir. Change. In book, we have taken something else in life. Change it. Don't see book and answer. Hey, everyone understood? Huh? Hey, simply you are telling yes. Tell simply yes. I'll do one more question. If total income is more than 12 lakhs, rebate only will not come. I'll do one more question. That time you check. Now, basically, here we have discussed both the concept rebate and that one more concept which we saw, basic exemption limit. I'll do a question only on rebate. You'll understand it better. Correct. Yeah, but in this case, my income is not crossing at all, right? Correct. Yeah, so special income is there, that tax will be reduced. For that, 1 minute you wait. I'll do one question. After that, you'll come to just 1 minute you wait. So, because if I say you'll not understand. But this, if you have copied, then I'll move forward. This you have all understood. Now, whatever questions you have in your life, I'm taking them. Please see. Let us say I'll do two questions. One question under optional regime, one question under default regime. First, you just see, instead of writing, you just see. Now, my income, we will do question only on rebate. My salary is 2 lakhs. My income from house property is 1 lakh. And my long-term capital gain 112A is 1,90,000. Okay. Now you are supposed to compute tax under optional tax regime. Now, what is my tax under optional tax regime? Now, this is taxable at special rates. These are taxable at slab rate. And this is a income optional tax regime I am asking you to compute. So, this is taxable at 112A. We know that on this income, we cannot claim rebate. So, how will I compute the tax? First, particulars tax amount. So, first we compute the tax on special income. So, long-term capital gain under section 112A, how much, sir? 1,90,000 minus 1,25,000 into 12.5%, which comes to 8,125, and balance total income. How much is balance total income? 3 lakhs. Can I say up to 2.5 lakhs no tax? On the balance amount, I'll have to pay 5%. 1 second, Sundari. How much is 5% of this? 2,500. So total of this is 10,625. Till here you have understood something we are doing, but now what is my total income, students? 4,90,000 is my total income. Because my total income is not more than 5 lakhs, it is up to 5 lakhs, I will get a rebate. I'll get a rebate. So less rebate under section 87A. How much rebate will I get? Tax amount. How much is tax amount? I will not take 10,625. What will I take as tax amount, sir? 10,625. From this, subtract tax on long-term capital gain under section 112A. Because optional regime says I will not give you rebate under the tax on the I will not give you rebate on the income taxable under section 112A. Did you understand this? So I'll subtract that amount. How much? 8125. So what is the tax amount which I am going to take for comparison purpose? 2,500. Hey, this is important. Have you understood this? Why I got 2,500? I am not taking entire tax amount because I will not get rebate on this amount. So though my total tax is 10,625, because I am not getting rebate on this amount, I subtract that. Only on balance amount I will compute. Then B. B is what, sir? Limit. How much is the limit? 12,500. Whoever is less. Who is less? 2,500 is the rebate which I'm going to get. Balance is how much, sir? 8,125. Add health and education cess of 4%, 325. So my net tax liability is 8,450. A puri, not puri. Clear, not clear. Now ask your questions. Yes, Sundari. No. They have given income from salary. They have given income from house property. You should not reduce. Yeah, please note. Her question is, sir, in some questions they give rent received. In some questions they give rent received. In some questions they give only salary. They give rent received is 1 lakh rupees. In those questions, when you would have practiced, in those questions, when they give that rent received is 1 lakh rupees, you would have seen they would have taken 1 lakh minus standard deduction of 30% and only 70,000 rupees they would have taken as income from house property. Similarly, in some question you would have seen salary they have given, let us say they have given salary of 7,500 per month. So for my computation purpose, should I take 7,500 into 12? How much? 90,000 rupees for my computation purpose? No. Now, when they give rent received, that means it is not the computed income from house property. You should compute the income from house property. When you are finding the total income, you take the final figure computed amount. So what is my computed income, sir? After subtracting standard deduction. Instead of this, if they would have given income from house property is 1 lakh, I will directly take 1 lakh without subtracting standard deduction of 30%. Similarly, salary they have given 7,500 per month. Now, should I take 90,000 for my computation? No. This is my gross salary. From this, depending upon what you follow, subtract 75,000 or 50,000. Your income from salary will be how much? 15,000 rupees, or your salary, also called as salary computed. Also called as salary computed. Income from salary, net salary or salary computed is 15,000. Now the question, now here our question is, sir, you have given only salary, sir. So what should I assume is income from salary, or it is salary computed. Income from salary, salary computed, net salary meaning it is final amount. Income from house property or house property income bracket computed they have given. That means it is final amount. Did you understand this? This is clear. Now we will do one more question under default tax regime. You had one question. Let us say my income from house property is 8 lakhs. My income from house property is 8 lakhs. My long-term capital gain under section 112 is 2,50,000. My long-term capital gain under section 112A is 3 lakh. 3 lakh if I take, three lakh 30,000 rupees. Okay, 3 lakh 30,000 rupees. Now the question is compute tax under default tax regime. Compute and tell me what is the tax. Even I don't know the answer. Compute and tell me what is the tax under default tax regime. Sir, can you show question number 1? Write this question. I will just show question number 1. 59,150. No idea. We'll have to check. Question number 1, you are referring to this question. You are referring to previous question. It is here. Now, what is my tax on long-term capital gain? 112. 2.5 lakhs into 12.5%. Evlo students? 31,250. Long-term capital gain 112A. 25,000. Illa. 3 lakh 30,000 minus 1 lakh 25,000 into 12.5%. Evlo? 25,625. Then my tax on balance total income. 8 lakh minus 4 lakhs into 5%, which is total is how much? 70? 875. Now, what is my total income, students? What is my total income? Oh, total income is 13. Then this question won't work. We'll have to do one more question. We'll take one more question. Anyways, I'll tell the answer for this. Will I get a rebate? There will be no rebate under section 87A 76875 at health and education cess of 4%, which is 79. Allah, what is this amount? 7? 79? You have got this answer? Now, in this question, one small change you make. Take this income as 2 lakhs. Take this income as 2 lakhs. Now the income will come to, yeah, compute. Because that rebate concept will not come in that question. So therefore, we are changing the question again. 42. Now please see. Can I say this will remain same? How much is this? 31,250. This will change. How much will this amount be? 2 lakh minus 1,25,000 into 12.5%. Evado? And this will be same. So total is 60,625. Now I'm taking over here 60,625 less rebate under section 87A. You will get a rebate under section 87A even if the income is slightly more than 12 lakhs. How much will be the rebate? First, tax on total income. Tax on total income is how much? 60,625. 60,625. Subtract what, sir? Extra income. How much extra income is there? 50,000 is the extra income. How much, sir? 50,000 rupees. So what is the difference of this? What is the difference of this? Huh? Now please see. 10,625. I will claim this entire 10,625 as rebate. Meaning what, sir? Rebate is not available against which income? Special income. Rebate is not available against special income. Correct? No, rebate is not available against special income. Now, if this rebate amount would have been more than 20,000, if this rebate amount would have been more than 20,000, I would have taken rebate only equal to 20,000. Now, how much is the rebate amount? 10,625, which is within the limit of 20,000. So, how much rebate I'll take? 10,625. Difference is 50,000 rupees at health and education cess of 4,000, 2,000 rupees, 52,000. Is this clear? Sir, your point is clear, sir. You are asked question. So rebate will be given only for normal income or slab rate income under default tax regime. 50,000, how did I get? So I got rebate, no. This rebate I subtracted. Rebate was subtracted by me. How did I get this 50,000 if you're asking? That is the difference between my total income and 12 lakhs. The difference between total income and 12 lakhs is 50,000. So from my total tax, I'm subtracting that 50,000. I'll get. Oh shit! Tomorrow we have class. This done. Now, and one last note of this topic, and this topic is done. The maximum amount of surcharge on below income is restricted to 15%. So they have given some income. Which incomes, sir? 4 incomes they have given. On these 4 incomes, the maximum amount of surcharge which you can levy is how much, sir? 15%. On which income? Long-term cap gain under section 112, long-term cap gain under section 112A, short-term cap gain under section 111A, and on dividend income. On this income, maximum surcharge which they can levy from you is how much? 15%. On this income, maximum surcharge which they can levy is how much, sir? 15%. Hey, please note, this is very important. You will make mistake in life. On long-term capital gain 112, long-term cap gain 112A, short-term cap gain 111A, and on dividend income, the maximum amount of surcharge is 15%. Okay, not okay? Now please see, normally we see the total income to check the surcharge, correct? If the total income is more than 50 lakhs, surcharge will come. If the total income is more than 50 lakhs, 10%. If it is more than 1 crore, 15% surcharge will come. Correct? No. Now, whenever your total income has these incomes also, then problem will happen. You should segregate your income. Like for example, whenever your total income has these incomes, let us call this income as GUBE income. For the time being, to understand this provision in a better manner, we'll call these four incomes as what income? GUBE income. Now, this is my GUBE income, this is my other income. Combined together, I will get my total income. GUBE is 25 lakhs, other income is 20 lakhs. So total income is 45 lakhs. No surcharge will come. Why sir total income is not crossing 50 lakhs? GUBE income is 45 lakhs. Other income is 35 lakhs. Total is how much? 80 lakhs. Can I say total income is more than 50 lakhs? Therefore, surcharge will come. How much surcharge will come? 10%. So on GUBE as well as non-GUBE, total income will be 10%. 65 and 85, 1,50,000. So because it is 1,50,000, that means it is more than more than 1 crore. If it is more than 1 crore, how much surcharge will come? 15%. So on GUBE, 15%. Other than GUBE also, it will be 15%. Now, my GUBE income is 2.1 crore and other than GUBE is 2.9 crore. Total income is how much? 5 crores. 5 crores means what is the surcharge coming? More than 2 crores, that means 25%. But on GUBE, maximum surcharge I can levy is only 15%. Correct? No. Though surcharge of 25% is coming, on GUBE income I can levy maximum surcharge of 15% and on the balance income I levy 25%. Now please see. My GUBE income is 70 lakhs. Other income is 2.1 crore. So total income is 2.8 crores. Meaning 2.8 crores means what surcharge is coming? 25%. On GUBE I can levy maximum 15%. And on non-GUBE I can levy how much, sir? Because why sir 25%? Because 25% surcharge is coming and GUBE income by itself is crossing the limit of other income by itself is crossing the limit of 2 crores. Now the answer will change in the next case. My GUBE income is 2.5 crores and my other income is 80 lakhs. So my total income is 3.3 crores. Can I say my income is more than 2 crores? Therefore, 25% surcharge should come. On GUBE income, my surcharge will be restricted to 15%, even if it is more than 2 crores. On other income also, my surcharge will be 15%. Sir, how, sir? 25% surcharge should come, no, sir, on other income. Sir, because my total income is 3.3 crores, 25% surcharge should come on other income, no, sir. Yes, 25% should come, but 25% will come only when other income by itself is crossing 2 crore ka limit. Only when other income by itself is crossing 2 crore ka limit. If it is not crossing 2 crore ka limit by itself, then I will levy normal 15%. Up to 15% there is no problem. Only when 25% is coming, please note, up to 15% there is no problem. Only when 25% surcharge limit is coming or 37% surcharge limit is coming, check whether that other income by itself is crossing that limit of 25% or 37%. Puriya, I think you have not understood. My GUBE income is 4 crores, other income is 3 crores. So total income is, tell me how much is the surcharge which I am going to levy on. So 7 crores, that means surcharge of 37% is coming in my life. How much is the surcharge which I am going to levy on GUBE? On GUBE, maximum I can levy is 15%. What about non-GUBE? 25% or 37%? 25%. Sir, why is that 25%? Because I will levy, see, normally 37% should come for this, but I will levy 37% only when by itself this is crossing 37%. Okay, only when by itself it crosses that limit of 37%, then only I will levy that surcharge limit. Hey, did you understand? Now, I feel you have not understood. 5 crores, 1.5 crores. This is GoBay income, this is other income. Total income is how much? 6.5 crores. So what is the surcharge of which is going to come? What is the surcharge? Can I say 37% surcharge is going to come? On GoBay income, how much surcharge can I levy? 15% maximum. On other income, how much will I levy? On other income, how much will I levy? 37%. Anyone says 37%? No, sir. Anyone says 25%? How much will I levy, sir? 15%. Why? Because by itself it is not crossing 2 crores or 5 crores. Yeah, I feel you have still not understood. Tell me the answer for next question. Then only I'll feel whether you have understood or not. GoBay income, other income, total income. That means 37% is coming because total income is more than 5 crores. On GoBay, I can levy only. What about other income? Other income is how much? Other income is how much? I told you didn't understand. 15%. Sir, why sir 15%? Other income I will not see by itself unless until higher limit is coming. Up to 15% it is same. Up to 15% no problem is there. Hello, up to 15% there is no problem when the other income by itself does not crosses 2 crore or 5 crore. Till then I will levy how much on other income? 15%. If the total income is more than 2 crores, 25% is coming. If it is more than 5 crores, 37% is coming. Only when that higher limit of, only when the higher limit means more than 15% surcharge is coming, that time I should check whether by itself it is crossing the limit of the 25% or 37%. Hey, did you understand? I still feel you have not understood. Hey, can I check my feeling once? GoBay income, other income. Total is how much? So how much is the surcharge? 25%. On GoBay I can levy maximum. What is the surcharge on other income? 15% or no surcharge? How many of you say no surcharge? How many of you say no surcharge? How much will be levied, sir? 15%. Why 15%? Because this fellow by itself is not crossing the limit of 25%. Hello, sir, but it is not crossing 50 lakh also, no, sir. Yeah, we are not going to touch them unless the higher limit is coming. Okay, till 15% it is same. Only when the total income is crossing 2 crores, I'm going to see individual limits. Hello. Okay, yeah. That is all about this topic called as tax rates. Next is agriculture income, which we'll see after a short break. But before we go for a break, anyone has any question, you can ask me. Anyone has any question? Yes, sir. Please ask me, sir. See, sir, individually, I will not see only when the surcharge of more than 15% is coming. I will check whether it is individually crossing that 25% or 37%. Who? This GoBay income. Individually, when will it cross? Individual limit should not be seen up to 15%. Up to 15%, I will levy 15% only or 10% as may be applicable. But once that 37% or 37% or 25% is coming, at that time I will check whether by itself other income is crossing that limit of 25% or 37%. If by itself it is not crossing that limit, on other income also I levy 15%. Okay, we'll meet after how many minutes? How many minutes break? 1 hour. Then lunch break will not need. 15 minutes break? 15 minutes. Okay, welcome back, students. Welcome back, online students. I hope I'm audible and also the screen is visible. Yes, sir. So the next topic for discussion is agricultural income. Agricultural income, we have a section called a section number 10. Section number 10 talks about Exempt income. Section 10 talks about what, sir? Exempt income. So chapter wise, we will see what are the different types of income which is exempt. But one of the income which is exempt is an agricultural income. Section 10 clause 1 says agricultural income is exempt from payment of tax if such agricultural income is from an agricultural land in India. So if you have any agricultural income and if that agricultural income is earned by you from an agricultural land located in India, then that agricultural income will be exempt. Okay, now what is India? Now India means the territory of India. Territory of India means the land region of India. It includes its territorial waters. Territorial waters means from the land region up to 12 nautical miles, the area is called as territorial waters. Seabed and subsoil underlying territory and territorial waters. The area below the surface of the sea which you see, that is called as seabed subsoil underlying the territory and territorial waters. And it includes continental shelf. From the baseline up to 24 nautical miles, the area is called as continental shelves, and as well as exclusive economic zone. From the baseline up to 200 nautical miles, the area is called as exclusive economic zone. And it also includes the airspace above its territory and territorial waters. So what is India? Land region of India, from land region up to 12 nautical miles and extends up to 200 nautical miles. And also the airspace above its territory and territorial waters will be treated as India. Now, this agricultural income will be exempt if that income is earned from anywhere, it does not matter where. Agricultural income means any rent or revenue derived from an agricultural land in India and which is used for agricultural purpose. The agricultural income means what, sir? Any rent or revenue derived from agricultural land in India which is used for agricultural purpose. Any rent or revenue derived from an agricultural land in India which is used for agricultural purpose. Now I have an agricultural land. I have given this land to you on rent. I am earning 1 lakh rupees rental income. You are using it for agricultural purpose. So whatever rental income I got, that is exempt. But if I give that my agricultural land is there, if I give this agricultural land for movie shooting purpose, now will it be exempt, sir? Answer is no. Any rent or revenue derived from an agricultural land located in India which is used for agricultural purpose. I have an agricultural land. I am not giving it on rent to anyone. I am myself growing the crops on this and I am selling those crops. Now the income which I am going to get, that is an agricultural income. Income from agricultural operations. Income from what, sir? Agricultural operations. Income from agricultural operations. What is an agricultural operation? See, basically, the Income Tax Act has not defined what is agricultural operation. So we have to go refer to a judgment given by Supreme Court. Supreme Court in Raja Binoy Kumar Sahas Roy case has told agricultural operations can be divided into two categories. The agricultural operation can be divided into two categories. One is called as basic operation. Another one is subsequent operation. Basic operation means what, sir? Whatever work you are doing up to the stage of germination of seed. Whatever work you are doing up to the stage of germination of seed. Any process up to the stage of germination of seed is called as basic operation. Anything after that is subsequent operation. Sir, example, sir, germination means you see sprouts, sprouts are there in life. So you put some seed in water and you keep it for 1-2 days, it will break, someone will come out from there, correct? No, that is sprouting. Now that process is called as germination. So up to the stage where seed breaks and that small plant kind of structure is coming out from the ground, up to that stage is called as basic operation. Anything after that is subsequent operation. Okay, so you prepare the soil, you sow the seeds, and that germination is happening. Up to that stage, it is germination. After that, you are irrigation work you are doing, meaning pouring water, that also will be taken into consideration. But you are adding pesticides, etc., manure and all you are adding, that will come in subsequent. Cutting activities happening, that will come under subsequent operation. So anything up to basic operation, meaning anything up to the stage of germination of seed is basic, and after that it is subsequent operation. Now what the lawmaker says, the Supreme Court told, if you are a person who is involved in only basic operation, if you are a person who is involved in only basic operation, that means your operations are agricultural operations, and therefore it will be exempt. If you are doing a work only up to the stage of germination of seed, meaning if you are doing only basic operation, your operations will be taken as agricultural operation, therefore it will be exempt. If you are doing anything, if you are doing only subsequent operation, then it is not an agricultural operation, therefore your income is not exempt. But if you are a person who is doing both basic and subsequent operation, meaning from the first stage until the last stage of agricultural work, that work is done by me only, your income will be agricultural income and it will be exempt. Okay. So what are they telling? Income from agricultural operations. See, many times what will happen is, I have tea plantation, coffee plantation. I have tea plantation, coffee plantation. Now in tea plantation, I don't have to grow that particular tree, crop, etc. every year. The tree will be there. Leaves only I pluck. Every year I have to water. Leaves will come. I pluck the leaves. So that plucking of leaves from that tea plantation which we have, that is coming under agricultural operation. But if I am hiring someone only to pluck leaves, is that exempt, sir? No. Why? Because it is subsequent operation. So if you are doing both, exempt. If you are doing only basic, exempt. Only subsequent, not exempt. Income from farmhouse or a dwelling unit situated on agricultural land which is located at rural area. So if you have a dwelling unit or a farmhouse which is located in on an agricultural land, and its agricultural land is located in rural area, then it will be exempt. Hey, what is this? What does this mean, sir? Income from farmhouse or a dwelling unit situated on agricultural land which is located in rural area. Now, please see. What do you mean by rural area? Rural area means an area which is not an urban area. Meaning the income tax law has given the definition of urban area. What is an urban area? Urban area means any area whose population is 10,000 or more. Any area whose population is 10,000 or more, that area will be taken as urban area. Now, they further say, if you are staying in an area whose population is more than 10,000 or equal to 10,000, that means, of course, you are in urban area. But if you are staying in an area whose population is more than 10,000 up to 1 lakh, your area to definitely is urban area. From your area up to 2 kilometers area is also an urban area. If you are staying in an area whose population is more than 1 lakh up to 10 lakhs, then of course you are staying in urban area. From your area up to 6-kilometer area is also an urban area. If you are staying in an area whose population is more than 10 lakhs, of course your area is urban area. From your area up to 8 kilometers area is also an urban area. Now, how should I measure this distance, sir? This distance should be measured by you aerially. How should I measure this distance? Aerially, you should measure the distance as the bird flies. Meaning in one straight line, aerially you should measure the distance. Now, under agriculture income, this is very important because most of the time the question will be with respect to composite income. What happens is, if a person grows the crops, and whatever crops are grown by him, if he sells those crops, his income will be agricultural income. I am only growing and selling the crops grown by me. My income is agriculture income. I am growing the crops which are grown by me. Sorry, you are growing the crops. I am buying the crops from you, which are grown by you, and selling it to someone. Now my income will be, now the income which I am going to get is not an agriculture income. Why? Because I am buying and selling. I am trader of that particular crop. But what if I myself grow a crop? On the grown crops, I apply some process, and that process product is sold by me. Now the income which I get, that income will be called as composite income. For example, potato is there. Potato is grown by me. Whatever potatoes are grown by me, I sell those potatoes. Entire income is agriculture income. Potato is there. Potatoes are grown by me. Now whatever potatoes are grown by me, I am applying some process. I am cutting them into slices, then putting into hot oil, frying them, and making them into what, sir? Potato French fries. Yeah. Potato chips are French fries. Now what is happening, sir? This is a processed product, correct? So this potato which was required for making potato chips were grown by me only. The potato which was required for making potato chips was grown by me only. Now this potato chips I am selling. The money which I am going to receive will be for sale of potato chips. Now because the income which the money which I have received is from sale of potato chips, and the potato which was used for making these potato chips was mine only, my income will be divided between business income and agriculture income. Sir, how much will be business income? How much will be agriculture income, sir? That rule number 7 tells us. Who will give the answer to that question? Rule number 7 will give you answer for this question. Problem is, Gube, first of all, you should concentrate on the class. Will you give a break for lunch also, sir? No, I will not give. What will you do? Gube, online students, you should not worry only. You are feeling hungry? Watch me. Wherever you are sitting, Tarkuri. Yeah. Agricultural income. Composite income means what, sir? Composite income means jote yali income. Jote, same the income. So I have agricultural produce. Agricultural produce means what, sir? Potato. We will take example of potato. Now I can sell the potatoes in raw form, or I can sell the potatoes after some process. Selling potatoes in raw form means what, sir? I am cultivating potato. Potato is there. When I cultivate potato, as soon as I extract potatoes, mud will be there. Correct? Too much mud will be there on that potato. So as it is, I am selling it to someone. Meaning I am selling it in raw form without applying any process on those potato. Entire income will be agricultural income, and therefore it is exempt. I sell after some process. Now check whether that process which is applied by you, was it a mandatory process to sell that agriculture produce, or was it not a mandatory process? Meaning, let us say potato I extracted. As soon as I extract, full mud will be attached to potato. The chances of me selling those potatoes are too low. Those potatoes, meaning people may not purchase it. So what do I do, sir? I wash those potatoes properly and I sell the washed potatoes. Now, can I say the process which is applied by me on that agriculture produce was a mandatory process? Hello. Can I say the process applied by me to sell this agriculture produce was a mandatory process? If the process applied by me was a mandatory process, the entire income will be agricultural income. If it is an agricultural income, that means it is fully exempt. If it is an agriculture income, that means it is fully exempt. Now, the process applied by you is not a mandatory process. What a process is applied by you, it is not a mandatory process. If the process applied by you is not a mandatory process, if the process applied by you is not a mandatory process, your income will be divided into two categories. One is agriculture income and business income, meaning potatoes are there. I am washing the potatoes, cutting those potatoes, frying those potatoes, and converting them into potato chips, and I'm selling potato chips. Now in this case, the income which I'm going to get will be divided into agricultural income and business income. Sir, how much will be agricultural income? Tell me, these potatoes, did I sell it? No, I have used it for making potato chips. But if I would have sold these potatoes, I would have got some money. Hello, if I would have sold these potatoes, I would have got some money. How much is that money? What they are telling, take fair market value of agricultural produce which is used for further process. Take the market value of that agricultural produce which is used by you for further processing. From that, subtract cost of cultivation. Take what? Take the market value of agricultural produce which is used for further processing. From that, subtract the cost of cultivation. For making this potato, I would have incurred some expenses. Subtracted. You will get your agricultural income, and that agriculture income is exempt. Now, how much is my business income or non-agriculture income, sir? What is the final product sold by you? Potato chips. How much is the money received by you by selling potato chips? Take what, sir? Sale value of processed product. Take what? Take the sale value of processed product. From the sale value of processed product, subtract cost of processing. Subtract the cost of processing, meaning that cutting cost, frying cost, etc. Subtract the cost of processing. Subtract fair market value of agriculture produce used for further processing. That will give you your non-agricultural income. A. Why, sir, I'm taking fair market value of agriculture produce? Because if these potatoes were not cultivated by you, you would have purchased from market, no? If you would have purchased from market, you would have paid some money, right? How much money is that? Which is equal to this amount. That will be taken as your cost, and the difference amount will be taken as non-agricultural income. Hey, did you understand this? Hello. But there are three businesses. Tea, coffee, and rubber. In case of these three businesses, which business? Tea business, coffee business, and rubber business. They are telling, I will only tell you how much is agriculture income and how much is business income. Condition is you should be involved in growing and manufacturing tea, growing and manufacturing coffee, growing and manufacturing rubber. Meaning the tea leaves should be grown by you. Using the tea leaves which is grown by you, you are making tea powder. Using the coffee beans grown by you are making coffee powder. Using the rubber, whatever that grown by you are making rubber. So what is important? Growing and manufacturing. If you are growing and manufacturing tea, then 60% of your income is agriculture income, 40% of your income is business income. Here they are telling, don't break your head. You are growing and manufacturing tea, right? Yes, I'm growing and manufacturing tea. How much did you earn by growing and manufacturing tea? Sir, I sold that entire the tea I sold for how much, sir? 1 lakh rupees. Okay, no problem. 60% of that is 60,000 is 40,000 is business income. I am growing and manufacturing coffee. If I'm growing and manufacturing coffee, coffee is grown and cured by me. If I'm growing and manufacturing coffee which is grown and cured by me, 75% is agricultural income, 25% is business income. Now in coffee, I can grow. Once I grow, I can cure it. Cure it means remove the upper layer of coffee beans and sell it. Or many people, what they do, they grow it, they cure it, they roast it, they ground it, meaning they are applying too many process on that. So in such cases, 60% of your income will be agriculture income, 40% will be business income. And if you're growing and manufacturing rubber, 65, 35. 65% will be agriculture income, 35% will be business income. You okay? Yeah? Hello. Tell me the answer for this question. Don't see enter, do enter. Yawning is very important in life. No problem, you can yawn. This is an exam question asked in last year, January. So the question only not visible, sir. You are only visible. Yeah, what to do? Not able to move myself. Google. Okay, we'll see. One more answer I have received. Okay. Now, Mr. Anant, inge past tense. Mr. Anant is a traditional farmer who was inherited with 35 acres of rural agricultural land, which was around 20 kilometers from the nearest town. He is cultivating in 15 acres. So 35 acres is the total land. 15 acres he is cultivating paddy, which is directly taken by rice traders. So what is this point telling? Can I say from paddy, whatever income I am going to get, that will be directly agriculture income? Why? Because it is completely taken by rice traders. Then another 10 acres of land is used for growing sugar cane, and as per practice, sugar cane is purchased by sugar mills nearby the village, for which the payment is received in RTGS. Can I say sugar cane also, because it is purchased by sugar mills, the entire income will be agriculture income. Remaining area is cultivated for mulberry leaves. Part of mulberry leaves are used for being fed to silkworm and for obtaining silk cocoon and selling the silk cocoon in the market. So what are they telling? Remaining area I'm making mulberry leaves. In that mulberry leaves, some portion of the mulberry leaves I'm giving to silk worm to make silk cocoon. That means, can I say the balance area which is there, that is sold as it is? Hello. So during the financial year 23-24, Mr. Anand got a net income of 4 lakh from sale of paddy and net income of 3,50,000 from sale of sugar cane and 75,000 by selling mulberry leaves alone. Can I say balance he got 75,000 by selling mulberry leaves alone? That means what, sir? That is also agricultural income. How much? 75,000. This is point over here. 75,000. He carried out mulberry silkworm production using his mulberry leaves worth 50,000 and selling the silk cocoon by spending 20,000. He got 75,000. A business income is very simple. How much he earned, sir? 3,75,000. For this, he incurred an expenses of 2 lakh and mulberry leaves used for this is how much? 50,000. So 1 lakh 25,000 is my business income, and here my mulberry leaves used for business purpose is how much? 50,000. This also will come, right? How much, sir? 8,75,000 and 1,25,000. Did you understand this question? Hello, everyone. Now there is a small concept in this topic called as concept of partial integration. What is the concept of partial integration, sir? Concept of partial integration. Now write down over here. Write down over here. This is not applicable for default regime. Okay, this is not applicable for default regime. Concept of partial integration is not applicable for default regime. Partial integration is applicable to an individual HUF, AOP, BOI, AJP if their agricultural income is more than 5,000 and if their non-agricultural income is more than basic exemption limit. A concept of partial integration is applicable to slab rate people. To whom, sir? Individual HUF, AOP, BOI, AJP. To slab rate people, concept of partial integration is applicable. When, if their agricultural income is more than 5,000, when, sir? If their agricultural income is more than 5,000 and if their non-agricultural income is more than basic exemption limit. Agricultural income should be more than 5,000. Non-agricultural income should be more than basic exemption limit, meaning 2.5 lakhs or 3 lakhs or 5 lakhs, depending upon who you are. Non-agricultural income means salary, house property income, whatever type of income you are getting, business income. Now, whenever this partial integration is applicable to you, first of all, partial integration will be applicable only if all these conditions are satisfied. Even if one condition is not satisfied, this concept is not applicable. Now, whenever the concept of partial integration is applicable to you, you have to compute tax in a different manner. The tax which you have to pay will be a different amount. Step number one, compute the tax on total income. Total income means agricultural income and non-agricultural income. Please note, on agricultural income, tax is not applicable, but still they are telling compute the tax on agricultural income and non-agricultural income. Step 2, compute the tax on agricultural income plus basic exemption limit. Step number 1, compute tax on agricultural income and non-agricultural income. Step 2, compute tax on agricultural income and basic exemption limit. Basic exemption limit, because why, sir? Up to that amount you don't have to pay tax, and on agriculture income also you don't have to pay any tax. Now they are telling, compute the tax before cess. Compute tax before cess. Compute tax on agriculture income plus non-agriculture income, agriculture income plus basic exemption limit. Now the difference between step number 1 and step number 2 is the tax which you have to pay. Add cess on that particular income, that will give you the tax. Very small concept, very easy concept. Okay, yeah, very small and easy concept. Concept of partial integration. Concept of partial integration. Now see over here. My income from salary computed is 15,80,000. My income from house property is 2,50,000. Agricultural income from land in Jaipur is 4,80,000. Expenses for agricultural income difference is how much, sir? How much? 3,10,000. Now compute the tax liability if his age is 45 years. Compute the tax liability if his age is 45 years. Compute. Can I say his agricultural income is 3,10,000, non-agricultural income is 18,30,000? That means agricultural income is more than 5,000, non-agricultural income is more than basic exemption limit. Compute his tax liability. Yeah, first case only, one case only is better. 4 lakh, 4,47,200. Okay. First, I'll have to compute tax on agricultural income plus non-agricultural income, which is 3,10,000 plus 18,30,000. Total is how much? 21 lakhs 40,000. So I should compute on optional regime. Can I say up to 2.5? I'll directly write up to 10 lakhs. It is 1,12,500, and more than 10 lakhs it is 11,40,000 into 30%. 11,40,000 into 30% is 3,42,000. Total is 4,45,4500. Now tax on agricultural income and basic exemption limit 3,10,000 plus 2.5 lakhs, which is 5,60,000. So here up to 5 lakhs it is 12,500, and more than 5 lakhs it is 6 2s are 12,000, 24,500. Now the tax which I have to pay is 4,54,500 minus 24,500, which will give me 4,20,000. 30,000 only I have done. Add 4% health and education cess, 17,200. So total tax is 4,47,200. 4,47,200. Okay. Hello. Is this clear, everyone? Whatever answer is there in this, you just scratch it off. $4,47,200. A done na. Hello. Next topic for our discussion is what's the residential status. Residential status. A person can either be resident or he can be non-resident. Hey, why are we studying this chapter? The main reason why we study residential status is to check whether you have to pay tax in India or not. If you are a resident person, you will have to pay tax in India on Indian income as well as on foreign income. But if you are not a resident of India, you will have to pay tax in India only on Indian income. Okay, do you understand why we are studying this chapter? Because if you are a resident, you have to pay tax in India whether it is on Indian income or foreign income. A non-resident will have to pay tax only on Indian income. Now, residential status and citizenship, they both are not same. Many people get confused in life, but residential status and scope of total income, are they both same, sir? No, they both are not same. Residential status is residential status and citizenship is citizenship. Yeah. Now, section 6 is the section which talks about residential status. 6.1 talks about individual, HU of 6.2, 6.3 company, 6.4 others. Important section number, section 6 subsection 1. All this time we have discussed many sections. None of the section I told you is important. One section which you have to remember, first section which you have to remember, section 6 subsection 1. Sir, should I remember section number, sir? Answer is normally no. They are not going to test you on section number because you are learning tax subject for the first time in your life. So first learn concept, then learn section. Meaning as soon as you go to school in your life for the first time, they'll not directly teach you, right? I mean, they'll not directly tell you to write A. In school, they'll first teach you some straight line, sleeping line, standing line, slanting line, then A they'll teach you. Something like this they do. Gubism they do. Okay. So just like that, you are learning this subject for the first time in life. Correct? So they will not test you with respect to section number, but there are some sections, if you know, it is good only. The weightage of those sections are more in exam. Section 6 subsection 1 is that kind of section. So section 6 subsection 1 gives the basic condition for an individual to become resident or not. Now an individual, if he satisfies the condition given in section 6 subsection 1, he will be resident. And if he does not satisfy that condition, then he is a non-resident person. Very simple. If an individual satisfies the condition given in section 6.1, he is a resident. If he does not satisfy the condition given in 6.1, he is a non-resident. Once he becomes a resident, once an individual is a resident, now I'll check for additional condition which is given in section 6 subsection 6. If he satisfies additional condition, then that individual will be called as resident and ordinary resident. If he does not satisfy additional condition, he is a resident but not an ordinary resident. Do you understand this? Do you understand this? An individual, if he satisfies the basic condition, he is resident. Does not satisfy basic condition, non-resident. If he satisfies, once he satisfies basic condition, we should check for additional condition. You satisfy additional condition, resident and ordinary resident, or resident and not ordinary resident. Now please note, many people do mistake in life, and you may also be one among them. In examination, they'll ask you what is the residential, they'll give some question and they'll tell you what is the residential status of this particular individual. Okay. Now, many people, they do mistake telling whether he is resident or non-resident. Your answer will be wrong. When they ask you, I mean, if it is non-resident, then your answer is right. But if it is a resident, you should specifically tell whether he is resident and ordinary resident or resident but not ordinary resident. This is very compulsory. You should tell them specifically whether he is resident and ordinary resident or resident but not ordinary resident. Okay, shall we see the condition now? You should be knowing. Tell me what is the basic condition telling? Residential status for individual. Basic condition says an individual will be called as resident if he satisfies any one of the basic condition. What is the basic condition? His stay in India should be for 182 days or more in the previous year. His stay in India should be for 182 days or more in the previous year, or his stay in India should be for 60 days or more in the previous year and 365 days or more in 4 preceding previous years. An individual will be said to be a resident if he satisfies any one of the basic condition. What is this basic condition? His stay in India. His stay in India should be for 182 days or more in the previous year, or his stay in India should be for 60 days or more in the previous year and 365 days or more in 4 preceding previous years. 365 days or more in 4 preceding previous year. What is the previous year for your examination? 25-26. So either stay for 182 days or more in 25-26. Condition number 1, either stay in the year 25-26, stay for 182 days or more, or in the year 25-26, stay for 60 days or more, and all the years before that, 4 years before that, you should have stayed at least for 365 days. 365 days or more. You okay, not okay? 60 plus 365 or 182 days condition. Your stay in India should be for this many period. And I hope you know what is India. Do you know what is India? Yes, India. Just now we saw somewhere. Now, sir, the date when I come to India and date when I go out of India, should that date also be included while calculating number of days? Yes. The date of coming to India and the date of leaving India shall be included while calculating number of days stay in India. The stay need not be at one place in India, meaning you can stay anywhere in India. It need not be at one particular state, meaning you can stay in Karnataka, wherever your dot is taking, you can, you can stay wherever you want to stay. Stay need not be continuous. Stay need not be continuous means state need not be continuous, meaning I came to India, then I left. I came again, I left. I came again, I left. So state need not be continuous. Do you know how to calculate number of days? Are you sure? Can you calculate and tell me without seeing what is the number of days I have stayed in the previous year 25, 26? Because many people will make mistake in this only in life. Calculate and tell me how many days I have stayed in India. 183, one answer I have received. One 183, one more answer I have received. Now this is the date when I come and I leave. I again come, again leave, again come, again leave, again. Now they are asking you what is the number of days. I mean, what is the residential status for previous year 25, 26? So I have come on first of. So previous year 25, 26 means I should see from which date? From 1st April 25 till 31st of March 26. Now, though I have come on 14th of February, I will not take that date because previous year 25, 26 starts from 1st of April 25. So from 1st of April 25, I will calculate till 16th of September 25. How many days? 16th of July. How many days? Sir, how do I know, sir? You only tell. Are April meant 30 days, then 31, then June, July. So how many days? 107 days. Then 13th December to 21st of January. Now please see, many people what they'll do, in December we have 31 days, correct? You will subtract 13 days, correct? No. Now if you do like this, there will be a problem. There will be a problem. What is the problem? See, 31 minus 13 is correct. But one problem is you are subtracting even the date when he came. Hey, don't you know that we have to include the date of coming to India and date of leaving India? So if you're doing like this, add 1. Okay, you add 1. So how much will I get now? 19 days of December plus 26 days of January. How many days? 45 days. Similarly, here it is 11 plus 18, which is 19 days. And here it is 2 days. What is the total? 183 days. Hey, okay. Hey, how many of you made mistake? You understood your mistake. That is important. So once he satisfies the basic condition, I should go check for additional condition. Because only when you satisfy additional condition, you will be called as resident and ordinary resident, or else you will be resident, but not an ordinary resident. Section 6.6 additional condition. Resident for a period of 2 or more previous year in 10 preceding previous year. Meaning additional condition says you should satisfy both the additional condition. Additional condition says, additional condition number 1 says you should be resident for a period of 2 or more years out of 10 preceding previous years. You should be resident for 2 or more years out of 10 preceding previous years, and your stay in India should be for 730 days or more in 7 preceding previous year. You should be resident for 2 or more years in 10 preceding previous year. You should be resident for 2 or more years in 10 preceding previous years, and your stay in India should be for 730 days or more in 7 preceding previous years. Sir, repeat. Your stay in India should be for No, your stay in India should be for 730 days or more in 7 preceding previous year, and you should be resident for 2 or more years out of last 10 years. Please note, I should be resident for at least 2 years. When will I be a resident if I satisfy 6(1) condition? Any of the 6(1) condition, if I am satisfying, I am a resident. So apart from being resident for at least 2 years out of last 10 years, I should also have stayed in India for how many days, sir? 730 days or more. In last 7 years, I should have stayed in India for 730 days or more. Okay. Now please see. Yes, sir. Yeah. No, you can change the language also. Essence should be same. No, 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 no. Please note. Exact word not possible. Please see. The first out of topic I'm discussing 2 minutes. Normally, I don't do during marathon classes. The first person whom I liked in my life, she was from Tamil Nadu. Okay. So that person did not know Kannada, that person did not know Hindi, that person did not know English. But I had to propose that person. I said, something I said, but she understood my feeling because Rose was there in my hand. She understood my feeling. Correct? No. So what is important? Feeling is important or wordings are important? Yeah. So meaning the provision which is there, you have to learn the provision, but you can write it in your own language because you cannot replicate that. Okay, you cannot replicate. Even institute material, if you see GST specifically, if you see GST, they have written the law. Once they'll write the law section, they'll write, then they'll explain the section. Correct? No, something like this. Have you seen how they have? I mean, the GST material is prepared. First, they'll write the bare act, the bare provision. Then they will explain that provision again. They'll break that provision and explain that provision again. Correct? No. So you can do the same thing. So additional condition, you should be resident for at least 2 years. Now, please note, at least 2 years. I'm using the word at least 2 years. At least 2 years is nothing but 2 or more years out of last 10 years. So, for example, first, my previous year is 25-26. My previous year is 25-26. So, in the previous year 25-26, I should satisfy the basic condition. Only then I will see for additional condition. Additional condition number 1 says out of last 10 years, I should be resident for at least 2 years. And additional condition number 2 says out of last 7 years, I should have stayed in India for 730 days or more. Hello. Now tell me the answer for this question. Am I a resident? Very small question I'm asking, but still. X came to India for the first time. For the first time, he came to India on July 24, 2021. From July 24, 21 till December 25, 2022, he was in India only. Again, he came to India on August 5th, 2025 for employment purpose, and he left India on 25th of November, meaning before he had come in 2021 July month and he left in 2022 December month before. But in the current year, when did he come? He came on 5th of August and he left on 25th of November. So current year, how many days he has stayed in India? 3 days he has stayed in India in the current year. Now, if I see, can I say he is not satisfying the first basic condition? So I should see for the second basic condition. Second basic condition says what, sir? 60 plus 365. Can I say 60 days condition to you are satisfied? Now, in the last 4 years, he should have stayed for 365 days. So let us see how many days he has stayed. See, in the current year, 25-26, he has stayed for how many days? 113 days. In the last 4 years means from this year go back 4 years. 24-25, 23-24, 22-23, and 21-22. So last year, 24-25, he did not stay at all. 23-24 also, he did not stay. He came on which year, sir? 21-22. So in 21-22, I will calculate from the date when he came to India. That is from 24th of July, and I'll take till 31st of March of that year end. So he has stayed for 251 days, and from 1st of April 22 till the date he left, 25th of December 22, which is 269 days. Total is 520 days. He has stayed for how many days, sir? 520 days. So can I see he has satisfied 60 plus 365 days condition? Therefore, he is a resident. Hello. He has satisfied 60 plus 365. Therefore, he is resident. Hey, did you understand this calculation? But has he satisfied any of the additional condition? Additional condition has he satisfied? Additional condition number 1 he has satisfied. He is resident for at least 2 years. Why, sir? Because 182 days that condition is satisfied. But he should have stayed for 30 days or more than that. That he has not satisfied. So what is the answer, sir? He is a resident, but he is not an ordinary resident, and it does not matter whether you are Indian citizen or foreign citizen. Now, this is again important. Okay, many times what will happen is we will feel that we know the answer, but we may make mistake in life. Okay, many times it will happen. We will feel that we know the answer, but we will make mistake in life. Following is an exception to second basic condition. What do you mean by this? In the following case, I will not check second basic condition. What is the second basic condition? 60 plus 365. Meaning in the below cases, I will always see only 182 days condition. In which case, sir, if you are an Indian citizen who leaves India during the previous year, if you are an Indian citizen who is leaving India means going out of India during the previous year. If you are an this leaves, yeah. If you are an Indian citizen who leaves India during the previous year, why am I going out of India? For employment purpose. I have got employment outside India, so I'm leaving India for employment outside India, or as a crew member of Indian ship, or as what, sir? As a crew member of Indian ship. Okay, you're leaving India. Why are you leaving India? Because you got employment opportunity outside India, or as a crew member of Indian ship. For both the cases, I will see which condition, 182 days condition, to check whether you are resident or not. Or you are an Indian citizen. Please note the word Indian citizen is very important. Or you are an Indian citizen, or you are a person of Indian origin. Person of Indian origin means what? Either you or your parents or your grandparents are born in undivided India. If you are an Indian citizen or a person of Indian origin who is coming to India for a visit during the previous year, in such cases, I will check your total income. Now, before checking total income, if you are an Indian citizen or a person of Indian origin who is coming to India for a visit, for you also I will check how much? 180 days condition, as simple as that. But for him, there is one extra condition which is there, that is based on your total income. Now, if you are an Indian citizen or a person of Indian origin who is coming to India, and if your total income is less than 15 lakhs or equal to 15 lakhs, then you will be called as resident if you satisfy 180 days condition. But if your total income is more than 15 lakhs, then you have two conditions. Either you satisfy 182 days condition. If you satisfy 182 days condition, you will be resident, or you remember 60 plus 365. So here they have 120 days plus 365 days condition. So if you are an Indian citizen or a person of Indian origin who is coming to India for a visit, I will check. What's your income. If your total income is more than 15 lakhs, then you should stay in India for 182 days or more in the previous year to be resident, or you should stay in India for 182 days or more in the previous year and 365 days or more in 4 preceding previous years. Then you will be called as resident. And if you are an individual who is a crew member of Indian ship, the date mentioned by you in continuous discharge certificate as the date of joining the ship and the date of signing of the ship shall be excluded while calculating number of days stay in India. If you are a person who is a crew member of Indian ship, the date which you are entering in the continuous discharge certificate as the date of joining the ship and the date which you are entering as date of signing off. Those two dates, including the period in between that, should be excluded while calculating number of days stay in India. Just tell me the answer. You don't have to solve it. Just roughly see and tell me the answer. What will be the answer for this? Question says, Bretley is an Australian cricket player who visits India for 100 days in every financial year. In every year, he is visiting for how many days? 100 days. This was his practice from last 10 financial years. From last 10 years, he is doing this only. Find out his residential status for the previous assessment year 26-27. Now, please see what is happening. What is happening? Bretley is during the previous year he came for 100 days, and apart from that also for last 10 years he's coming every year for how many days? 100 days. So can I say current year? Of course he has not satisfied 180 days condition, so I should check for 60 plus 365 days condition. Can I say the current year he has satisfied the condition of 60, and in last 4 years he has stayed for how many days? 400 days. Hello. Hey, can I say he satisfied the second basic condition? A, he satisfied the second basic condition. If you are satisfying the second basic condition, that means you are a resident. A, if you have satisfied the second basic condition, that means you are a resident. Now, because you have satisfied the basic condition, one of the basic condition, you are a resident. Now, I should check for additional condition. Hello. Now, you should check for additional condition. Additional condition is given in 6.6. What is additional condition telling? Out of last 10 years, at least for 2 years, you should be resident. Now, if I see out of last 10 years, am I resident for at least 2 years? Can I say yes? Because let us say, if I say check for this year, can I say 100 plus 400? That means I'm satisfying second basic condition over here. Here also 100 plus 400, 100 plus 400, 100 plus 400, 100 plus 400, 100 plus 400. Meaning I'm satisfying for how many years? 1, 2, 3, 4, 5, 6. For almost 6 years in last 10 years, I was a resident. Second condition under additional condition says I should have stayed for 730 days or more in 7 preceding previous year. Now, if I see 7 years, how many days I have stayed? 7. Can I say I'm not satisfied the second additional condition? So, can I say I am resident but not an ordinary resident? Hello. So, Bretley has not satisfying the additional condition. Therefore, Bretley is resident but not an ordinary resident. Now, this you understood. Now, tell me, what if, would your answer change if the above facts relate to Srinath, an Indian citizen who resides in Australia and represent Australian cricket team? Will your answer be different if it is Srinath, who is an Indian citizen who is representing Australian cricket team and he resides there only, he stays also there only? Will your answer be same or different? What will be, how many of you say, sir, answer will be same? Same, answer will be same. How many of you say answer will be different? Okay, what would be my answer? How many of you say your answer will be, sir, he is resident and ordinary resident? No one. Resident but not ordinary resident, which is same answer. How many of you say no, sir, he is non-resident, sir? What do others say? Sir, I'll ignore this question in exam, sir. A. What will your answer be, sir? Your answer will be what, sir? He is non-resident. Why, sir? Please note. I told no. Wordings are very important in life. Wordings are very important. What is the wordings important, sir? He's an Indian citizen. If you are an Indian citizen and if you are coming to India for a visit, problem is there in life. If you are an Indian citizen and if you are coming to India for a visit, then for you 60 plus 365 Gugaism will not apply at all. For you, what will apply, sir? 182 days condition is applicable. Now, this Gube has never come to India for 182 days. Therefore, for him, he will be not a resident. But the next question says, would your answer be, what would your answer be if you visited India for 120 days instead of 100 days for all the years? Now, what will be your answer? Now, sir, because they have given 120 days, somewhere my brain is telling, Dilip, they have not given information about total income, but give the answer to them citing the total income. Now, what will be the answer, sir? If the total income is less than 15 lakhs or equal to 15 lakhs, he is non-resident. If the total income is more than 15 lakhs, then he is resident and ordinary resident. Why, sir? If it is more than 15 lakhs, then I can take 120 plus 365 days condition. Hey, do you understand this, students? No problem. Sometimes it happens. You may not understand many things in life. Yeah. Yes, sir. Same. If I apply the for this question, yes. If I apply, his question is, sir, if I apply that 182 days condition for this question, the answer will be non-resident. No, sir. Yes, the answer will change. Why the answer will change? Because if you are an Indian citizen coming to India for a visit, that means for you it will be what, sir? 182 days condition. Now we have one more concept, small concept called as deemed resident. Deemed resident means you are not a resident at all, but I'm going to assume that you are a resident. A deemed resident means what, sir? Are you a resident? No, but I'm going to make an assumption that you are a resident, deemed resident of India. When will I assume that, sir? If you are an individual who is an Indian citizen who lives outside India, if you are an individual who is an Indian citizen who is living outside India, who is living means who is staying outside India and who comes to India for a visit during the previous year. You are staying outside India and you are coming to India. Why are you coming to India? For a visit. 1 day, 2 day, it does not matter. And your total income from Indian sources is more than 15 lakh rupees. And he is not a resident of any other country, then he will be deemed as resident of India. Meaning basically, if you are not a resident of any country, then go away, you are a resident of India. If you are not a resident of any country, then I am going to assume that you are a resident of India. Then residential status for HUF. For HUF, I should see control and management of HUF. Please note, I am not talking about residential status for Karta. Karta is an individual, 6(1) will apply. We are talking about residential status for HUF. For HUF, I should see the control and management. If control and management of HUF is wholly or partially in India, then you are a resident. If it is wholly outside India, then you are a non-resident. If control and management wholly or partially, fully in India or even little bit it is in India, it does not matter whether it is 5%, 10%, 20%, even partially, little bit it is in India, HUF is a resident of India. If it is fully outside India, HUF is non-resident. Now, once an HUF becomes resident, see, I'm not checking anything with respect to Karta, but once an HUF becomes resident, now we need to check for additional condition which is given under section 6.6. Once an HUF becomes resident, I should check for additional condition given in section 6.6. This additional condition I'll check for Karta. Now, Karta may satisfy the additional condition or the Karta may not satisfy the additional condition. If Karta satisfies the additional condition, he is resident and ordinary resident. If he does not satisfy the additional condition, he is resident but not ordinary resident. Okay, not okay. Meaning, please note, we are talking about HUF. HUF satisfies the condition given in 6.2, it is resident. If it does not satisfy, then it is not a resident. Once HUF satisfies the condition given in 6.2, I should call Karta and check whether Karta satisfies additional condition. If Karta satisfies additional condition, HUF will be taken as resident and ordinary resident, or else HUF will be taken as resident but not ordinary resident. You okay? Hello. Now, for residential status of company, Indian company or a domestic company is always a resident of India, and for other companies, we should see poem of the company. Place of effective management. Place of effective management means the place where all the key managerial decisions are taken. If the place of effective management is in India, it is a resident. If it is outside India, it is non-resident. Then 6.4 for others, I should see control and management. If it is wholly or partially in India, resident. Wholly outside India, it is a non-resident person. Now, the main reason why we study this chapter is to determine what is the scope of total income. To determine what is the scope of total income. Scope of total income means what, sir? Whether you have to pay tax in India for that particular income or not. So, basically, if the income is an Indian income, what is an Indian income? We will learn that. If the income is an Indian income, irrespective of who you are, you have to pay tax in India. If it is an Indian income, whether you are resident and ordinary resident, resident but not ordinary resident, or a non-resident, everyone has to pay tax in India. For which income, sir? Indian income. But if it is a foreign income, if it is a foreign income, only resident and ordinary resident has to pay tax in India. On Indian income, who has to pay tax in India? Everyone has to pay tax in India, whether you are resident, non-resident, does not matter. But if it is a foreign income, who has to pay tax in India? Only resident and ordinary resident has to pay tax in India. Okay, not okay. There is one foreign income. There is one foreign income on which even resident but not ordinary resident will have to pay tax. Which is that income, sir? Income from business controlled from India or profession set up in India. Let us say there is a business which I have in London. Okay, I have a sari shop in London. Now sales are happening over there. Saris are getting sold over there. Money is also received in London only. Sale is happening over there. Money is also received over there only. But I am controlling that business from India. I am controlling that business from India. Now, basically, it is a foreign income. Basically, it is a foreign income. Why? Sale is happening there and money is also received over there only. Everything is done there only. But I am controlling this business from India. Now, lawmaker says, though it is a foreign income, it is taxable for resident and ordinary resident as well as resident, but not ordinary resident. Now, Indian income. What is an Indian income, sir? Please see. Indian income, everyone has to pay tax in India. Foreign income, only resident and ordinary resident. But one foreign income, even resident but not a resident is resident, has to pay tax in India. Which is that one foreign income, sir? Income from business controlled from India or profession set up in India. Now, let us understand what is Indian income, because foreign income means any income other than Indian income. Sir, what is an Indian income? Income received in India. It does not matter where it is getting generated. Have you received that income in India? I sold the sari to you. Okay, you came to Priya Saris in Bangalore. I sold the sari to you. You gave the money to me. This is an income received in India. I sold the sari to you in London, but that money you gave it to me when you came to India. Where did I sell the sari? London. But where did you give the money to me? When you came to India. Correct? No, sale happened over there. But the money was received in India. It is an Indian income. Why? Income. Let us say you went outside India and you took some services from a non-resident over there. You took some services. Now you have taken the services for After taking that services, you told that person, I don't have money, come with me to India, I'll pay you the money. So you brought that person to India and you paid the money to that person in India. Those services were taken over there because the money was paid here. It is an Indian income. Income deemed to be received in India. So there are four incomes. It does not matter where you are actually receiving it, but I'm going to assume that it is received in India. Which are these incomes, sir? Employer's contribution to recognized provident fund more than 12%. Because more than 12%, if employer contributes, can I say it is taxable? Hello. So employer's contribution more than 12%, it does not matter where you are receiving, it is always deemed to be received in India. Interest credited to employee provident fund account, employees recognized provident fund account beyond 9.5%. Again, this also interest amount more than 9.5%, can I say it is taxable? Therefore, it is taxable as what, sir? It does not matter where you are receiving, it will be deemed as Indian income received in India. Transfer of money from unrecognized provident fund to recognized provident fund, that is also deemed to be received in India. Employer's contribution to 80CCD pension fund or pension scheme. These contributions which is made by employer or whatever interest is there on that, those will be treated as deemed to be received in India. What else is Indian income? Indian income means income accrue or arise in India. Income which is getting generated from India. Income which is getting generated from India. I have a house in India. I give that house on rent to someone. Can I say that income is getting generated over here only? Now that rent I may receive in India, I may receive that rent outside India, I may receive anyway, it does not matter. That is an income accruing or arising in India. Income deemed to accrue or arise in India. Now these are those incomes which are actually not getting generated in India, but I'm going to assume that these incomes are getting generated in India. These incomes are getting accrued or arise in India. Income from business connection in India or salary payable by government of India to an Indian citizen for services rendered outside India. Dhurinder is there. He is giving services to government of India. Is there somewhere outside India? A government of India is giving salary to him. He is there somewhere outside, right? Now he is there somewhere outside. Is he a resident of India? No. Ignore. Indian embassy is there outside India. Those groups are working over there only. Are they coming to India? Sometimes they may come to visit their family members, but they are all not a resident of India. But still, government of India is paying salary to them. Correct? No. For them, whatever income they are receiving, that income will be treated as Indian income. Though that salary is received outside India, it is treated as, it is assumed to be accrue or arise in India. Dividend from Indian company or any non-resident is receiving interest, royalty, fee for technical from services from Indian government or any resident person in India or a non-resident having business profession in India, or sale of capital asset in India, or gift of any assets like DJ Passo BV we have to any non-resident person as per section 56 to 10. Now, what is important is global income. Global income is taxable for resident and ordinary resident. Past untaxed income brought to India during the current year is not taxable. If there is any income of any previous year, now if you bring that income to India, now will it be taxable in India, sir? Lawmaker says no. Past untaxed income brought to India in the current year will not be taxable in India. Okay. Hello. Tell me the answer for this question. I have given the answer here only. If for ICU students, I think they have given this material, correct? One material is there wherein questions are there, question compilation of. So here questions are taken from your institute material. Okay. Here questions are taken from institute material, questions are taken from your previous examination. And yeah, only these things too. In institute material, you have illustrations and you have some extra questions, practice questions which they have given. So everything is taken. Like, see, if you see illustration over here, that is an illustration. Illustration 3. Now, after this, which chapter is this? Basic concept. Now, test your knowledge in your institute material. A. After the chapter is over, they have given something to test your knowledge. Correct? No. That is the test your knowledge. And after that, I have given okay, in first chapter, we don't have that point. Residential status and scope of total income. Now here also there will be same three things. First illustrations are there, 8, illustration number 8, etc. Then you have your test your knowledge. And after testing your knowledge, you will get what, sir? Category number 3, which is category number 3 is also included over here only. Some heading I would have written somewhere in between. I have not highlighted that. Anyways, this will contain your previous exam questions also. So tell me the answer for this question. Now you tell me, Gubes. All the, I mean, other questions which you told, answers were already there in your book. Some Gubes, not everyone. Everyone is a nice person. If you don't have this material, just send me a message. I will share that material. You send it to your groups also, whichever group you have in life. And I think IDT at least I have shared you guys, no? Yeah, question bank. This is also question bank only. Tell me. Last one, 12,000 rupees. Done? मजा इसलिए okay. Please see what is the question telling. Reading question is very important. All these questions will come in examination for 5 marks, 6 marks. Compulsory one question will come from residential status. Compulsory. From the following particulars, furnished by Mr. Ashutosh, aged 65 years, pertaining to the year ended 31st of March 26, compute the total income for assessment year 26-27, assuming that he has exercised the option of shifting out of default tax regime, meaning he is opting for what, sir? Optional tax regime. What is your answer if he is resident and odd resident, and if he is a non-resident person? Cap gain from sale of land in Jaipur to Mr. Ramesh, a non-resident outside India. The consideration also received outside India. It does not matter. Is it? See, please note. What is the best thing to do in life? First, identify whether it is Indian income or foreign income. Okay. So first, you will do that identification. Then we will do the taxability. Indian income. Second, rent from property in Delhi. I don't care anything else. Can I say Indian income? Agriculture income from land in Nepal, received in Nepal. Can I say foreign income? Interest on saving bank account in UCO Bank, Indian income. Income earned from business in London, which is controlled from Delhi, Indian income or foreign income? A foreign income. I gave this example only. I told now I have sari business in London, sales are made there, business, the money is received there, but I'm controlling. Sales are happening there. I'm controlling. Hey, I'm telling, hey, go away, don't sell this sari. I'm telling that fellow, or sell this sarees. I'm just telling that, yeah. But can I say 35,000 is an Indian income? Hello. Gift received from daughter. A daughter is daughter, not taxable. A gift is also income only, but daughter is daughter. Past foreign taxed income brought to India. Can I say past income will not be taxable in this year? Fee for a past income is the income earned by me 5-6 years ago, 2 years ago, 3 years ago. That has no relevance in this year. Fee for technical services rendered to S Limited, a foreign company, for business outside India and received also outside India. The business is happening outside India and it is received also outside India. Can I say it is foreign income? Now we know what is Indian income, what is foreign income. Correct? Now we'll see how much is taxable. If you are resident and ordinary resident, and if you are not a resident person. So first case, because it is Indian income, can I say taxable for both of you? Hello. Second case, it is an rent from property in Delhi. That means this is not income from house property. So I'll subtract 30% standard deduction. So how much will be taxable? 1,20,000 minus 30%. 84, 84,000 taxable for both because it is an Indian income. Agricultural income from land situated in Nepal, foreign income taxable only for ROR. Interest from saving bank account deposit in UCO Bank, Indian income. Income earned from business in London, controlled from Delhi, 60,000 and 35,000. Sir, why sir 35,000? Because 35,000 was received in India. Gift from daughter, not taxable. Past untaxed profit, not taxable. This fee for technical services, taxable only for resident. What is the answer? 3,70,000 and the total of this is 2,87,000. Hey, okay, yeah. Yeah, but we don't know what is deduction. Hey, they have asked us total income. She is telling. Where is that question in life? Compute the total income. So total income means I should subtract deductions also. Do you know deductions? What deduction will I get in this question? What deduction will I get, sir? Hey, can I say I'll get deduction of interest on saving bank account? Hello. How much interest will I get as deduction? Now this Gube's age is 65 years. That means he's a senior citizen. If you're a senior citizen, 80 TT B is applicable to you. Correct? No. What is the limit for you? Normally the limit is 10,000 80 TT A, but 80 TT B limit is. Now please see. Small thing in life. Of course, everyone would have done given deduction, but how much would you have deducted, sir? 10,000 only. How much you would have deducted? Only 10,000. But because he's a senior citizen, how much deduction will you get? 50,000 deduction you will get. So in the present case, now please note, after that also you will make mistake in life. Till here, no problem. Till here you understood everyone. Till here, if you do, how much marks will you get? 6 marks question, 4 marks will get. How many entries are there? 7 entries are there. If it is 5 marks question, 3.5 marks will get. Okay, yeah. Now I should subtract deduction for which 1 mark you will get. So how much will I subtract over here? 18,000. Therefore, total income is how much? 3,61,000. For non-resident, how much will I subtract? For non-resident, I'll subtract 10,000. Why? For non-resident, you should take, it does not matter how much your age is, your income is taxable at, you are treated as a normal individual only, meaning the age does not matter for non-resident. So how much is taxable, sir? Huh? Okay, yeah. If for non-resident, your age does not matter. Non-resident age does not matter. Age matters only for resident. Is it clear, everyone? Did you understand? Income tax problem is there in life. What is the problem in income tax? Linkage is too much. If you don't know how to link properly, better don't attend income tax first. No, genuinely. Hey, by the way, that is something which I normally say in every class. Income tax is not something which you should attend first, even if you know everything in income tax. I'll show you the question paper, past 2 question paper or 3 question paper, how many ever question paper you say, we will see after the marathon is done. You say loudly, sir. Yeah. We'll see question paper. Once the marathon is completed, we'll see question paper. And then you decide whether I should start with income tax or GST. Okay. Anyways, any question you have? Shall we take a break? What time shall we meet? I mean, a marathon happened before this class also. How many minutes break they gave? 1 hour lunch break. PG, where is PG? 12 kilometers away. And before that, how many minutes break they give? 15 minutes break. After lunch break, again one break you want? 1 BD. No difference at all. Sir, why 18,000 deducted? Why 18,000 deducted? Because 80 TTB. 80 TTB is applicable for resident senior citizen. And here 80 TTA is applicable for non-resident person. Deductions. Yeah, yeah. No, no. That is royalty only for books or royalty for. Okay. Let us meet after a short break. We'll meet at 1:45. 2 o'clock. Huh? We'll meet at 2 o'clock. Welcome back, students. Welcome back, online students. I hope I'm audible. And also the screen is visible. ICU students have to mark attendance. Have you marked attendance, ICU students? It is showing invalid. Huh? Check once. TV, that too you should on know. Call if someone is there over there. Ignore. This too you will have to on. Remote you press on button. So you should do something in life. Input. Output. Okay, let us continue our discussion. The next topic for discussion is what, sir? The next topic for discussion is income from salary. We'll start with heads of income. The first head of income which we have is what, sir? Income from salary. The first head of income is income from salary. We'll start from salary. Okay, we'll go in that flow. Attendance for ICU. Mark whatever you want to mark. See if it is working. If it is not working, enjoy. Throw your phone in dustbin. Please come, Sundari. We are waiting for you only. We wanted to start, but we thought, oh, two Sundaris are there. One Sundara is there. Okay. Income from salary. Income from salary. Nice chapter. Important chapter. Not coming. Ignore. Some people it is coming, some people it is not coming. Yeah, what happened? Income from salary. The first head of income which we have is income from salary. Important head. Compulsory question will come for how many marks? 6 to 8 marks. One place there is one change which you will have to see. Apart from that, there is no change in this chapter. Only one place there is a small change in this chapter. Okay, what is the name of this chapter, sir? Income from salary. So only 3 sections are there, but none of these sections are important. Section 16, 17 and 18. Section 15, 16, 15, 16 and 17. Section 15 talks about charging section. Section 16 is deduction, which is important section. Section 17 is the meaning of salary. What do you mean by salary? Now, what is most important thing in this chapter is relationship. There should be two people. They should be in relationship. What type of relationships are? Employer-employee relationship, and the payment should be made in the capacity of employer. Okay, the payment which you are making, the payment also should be made in the capacity of employer. Now, principal and agent relationship is just like employer-employee relationship, but they are not same. Principal and agent relationship, commission is paid, which is taxable under other sources, whereas employer-employee relationship, salary is paid, which is taxable under income from salary. Now, salary which is there, the salary which is there, if it is given by a sole proprietorship concern is giving salary to whom, sir? Proprietor of that business. Whatever salary they are paying, who? Sole proprietorship concern, whatever salary they are paying to their proprietor, it is not taxable under the head salary. Whatever salary is paid by sole proprietary concern to the sole proprietor is not taxable under the head salary. Salary paid by partnership firm to partners. If the partnership firm is paying any salary to partners, then that salary is also not taxable under the head salary. It is taxable under the head income from business or profession. A partnership firm pays salary to its partner. Lawmaker says partner is part owner of the business. You should be interested in profits of the company and not the remuneration or salary from the company. Therefore, whatever income you receive, that will be taxable under business or profession. Company pays salary to directors of the company. Now, these directors are of two types. One is employee director, another one is non-employee director. If you are an employee director, then whatever salary is paid by the company to you will be taxable under income from salary. But if you are not an employee director, then you get something called as sitting fees. Whatever sitting fees you get from the company, that will be taxable under the head income from other sources. If you are an MLA, MP, MLC, etc., you are not an employee. If you are an MLA, MP, you are not an employee. Therefore, what you get is not a salary. Because you don't get a salary, whatever income you receive is not taxable under salary. It is taxable under income from other sources. Then, judge of Supreme Court, High Court, they are treated as employees of the. They are treated as employees. They are treated as employees of the government. They are treated as government employee. Whatever income they receive, they say whatever. Please note, judge of Supreme Court, High Court, they are employee, government employee. But still, the money which is received by them is not covered under salary because master servant relationship is not there. They don't give order based on anybody's direction. Okay, they will give the order by seeing the cases individually. Now we have something called as contract of service and contract for service. Contract of service is an employment contract. Okay, the contract which you enter with your employee is called as contract of service, and contract for service is a service contract. Service contract means what, sir? Contract of service is a service contract. Service contract means, let us say, I have entered into a contract for giving services to you people. Correct? No, I'm taking this class. I have entered into a contract for giving services to you guys. So this is contract of service. Contract for service, because it is an employment contract, it is covered under salary. Contract for service is not an employment contract, therefore it is not covered under salary. Now the charging section, section 15, charging section says salary is taxable on due basis or on receipt basis, whichever is earlier. So whether you have actually received it or not, it does not matter. If the salary is due to you, so many times what happens, let us say March month ka salary, I am supposed to receive March. I have worked for the month of March, but I received the salary after 4 months. Meaning, let us say for the month of March 26, I have worked in the company, and as per the company, I should receive a salary of 50,000. But the company paid me the money in the month of July 26. Now the question is whether it will be taxable in the previous year 25-26 or whether it will be taxable in the year 26-27. Lawmaker says it will be taxable in the year 25-26. Did you understand? Why, sir? Because it was due for the month of March. So salary is taxable on due basis or on receipt basis, whichever is earlier. Similarly, in the month of March, I'm taking salary for April, May, and June. 3 months salary I'm taking now only in advance. Lawmaker says it will be taxable on due basis or on receipt basis, whichever is earlier. Okay. Hello. Salary can be in cash or it can be in kind. Salary can be in cash or salary can be in kind, meaning salary can be in monetary terms or they can give you salary in the form of perquisites, like car they are giving, house they are giving, etc. Now, last exam, January examination. January examination, one small point they had given with respect to this point. Okay, where majorly people would have done mistake because it is just one small point. What is this point telling? Salary forgone is also taxable. Salary forgone is also taxable except in case of central government or state government. So if you forgo your salary means I tell my company that I don't want my salary, meaning I have worked in that particular month, but still I am telling them that I don't want the salary, that is salary forgone by you. So salary forgone, lawmaker says, if there is a salary which is forgone by you, that salary which is forgone by you is also taxable. It is you are the gobe who did not take the salary. You decided not to take the salary. So lawmakers are telling that is your problem. I want the tax on that amount. But if the salary is forgone in case of central government and state government, if you give that salary, you are forgoing the salary and you ask the company to give that salary to central government or state government, now it will become taxable. Salary forgone to whom, sir? Central government or state government will be taxable. Yeah. One example which I give in class. What example I give, sir? Let us say you are from Wayanad. Last year, what happened in Wayanad? There was a flood. Okay, there was a flood in Wayanad. Now, because there was a flood in Wayanad, Priya Saris paid 10 crore rupees to Kerala government for flood relief, whatever amount. Now, you saw me doing this particular act. You were so happy that you told, sir, I don't want salary for this month, sir. I asked why, what happened? No, sir, you are helping my state. Therefore, I also don't want salary. So your 10 lakh rupees salary, you worked for that month, but you did not take any salary. You forgo that salary. Lawmaker says salary forgone is also taxable unless until it is forgone for central government or state government. Now, components of salary. So in this chapter, if you know about all these things, once you know about all these things, that means you are ready with this chapter. This chapter is done. Components of salary. Format for computation of salary, or also called as component of salary. So you have different components of salary. What happens in case of this components? First component of salary is basic pay. Then dearness allowances, bonus, commission, advance salary, arrears of salary. Then you have different types of retirement benefits like gratuity, pension, leave salary, retrenchment compensation, VRS compensation. Then you have allowances, provident fund, superannuation fund, ATCCD pension fund, perquisites. Then that will give you your gross salary. From that you subtract deductions. Section 16.1 capital, section 16.1A, 16.1.2 and section 16.1A, 16.2 and 16.3. Important section. Meaning you should know the section number. 16.1A talks about standard deduction. At least standard deduction to definitely you should know. And if you know standard deduction, other two is by default known only. No? 16.2 and 16.3. 16.2 is entertainment allowance and 16.3 is professional tax. That will give you your net salary, also called as taxable salary, also called as income from salary, also called as salary computed. So if they have given you this amount, that means you don't have to do anything else. This straight away you can take for computation of your income. But if they give you only the word salary, or if they give you salary per month, or if they give you a gross salary, then you should compulsorily subtract deductions because that is not subtracted. Now, one by one, we will see the components of salary. The first component of salary is your basic pay. What is basic pay, sir? See, when you join a company tomorrow, they will fix your salary. They will say that your salary is rupees 1 lakh per month. Now, this 1 lakh will have a basic pay or basic pay base component of salary will be around 30,000. Apart from that, it will have HRA. Apart from that, it will have dearness allowances. It will have telephone allowances. It will have daily allowances. It will have different type of allowances, meaning salary will have different components in it. The base component of salary is called as basic pay, meaning this is the minimum amount of salary which the company is going to give you. That is the base amount of salary. Basic pay, it is your base salary, and it is a taxable component of salary, and it is fully taxable. So when in the question, no, they will give you different points in the question. So if you get basic pay, that means that will definitely form part of your salary. And how much is taxable, sir? Fully taxable. Now, while calculating salary, no, what is most important thing which you should keep in mind? While calculating salary, the most important thing which you have to keep in mind is you should make sure that you see these dates properly. Date of joining, date of retirement, date of increment in the salary, date of resignation. All these dates are very, very, very important. Why, sir? See, they will tell you to compute the salary for previous year 25-26, and the person has joined from 1st of June 2025. That means, though they have asked you to find the salary for 25-26, you should not take salary for 12 months. No, 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 no. I have joined from 1st of June. So I'll take salary from which period? I'll take salary from which period, sir? 1st June till 31st of March. You okay? From 1st of June till 31st of March, I'm going to take the salary. So date of joining is important. If I'm leaving the company in between, that date is important. And if in between they have increased the salary or you have resigned from the job. Sometimes in the question, they will give you salary under grade pay basis or grade scale pay basis. What is this grade pay basis, sir? For example, they give you the salary as 20,000 dash 2,000 dash 30,000. What does it mean? When you joined the company, your salary was 20,000. For every year you complete in the company, your salary will be increased by 2,000. Every year you complete, your salary will be increased by 2,000 till your salary becomes 30,000. So once your salary is 30,000, no more increment is there. This is called as grade scale pay or grade pay. Hey, did you understand this? Hey, did you understand this? Let us say I joined a company. I'll not give this example. You'll tell copy and tell me the answer. Go base here. Let us say I joined a company on 1st of September 2023. At that time, my salary was 20,000. Okay. And I have joined the company on this date. And at that time, they told me my salary will be 20,000 dash 5,000 dash 30,000 dash 7,500 dash 60,000. Okay, they have given my salary into grade scale pay. Okay, what they have given, sir? My salary when I joined the company. Okay, this is the grade scale pay. When I joined the company, my salary is how much? 20,000. And for every year I complete in the company, my salary will be increased by 5,000 till 30,000. Once it touches 30,000, then increment will be 7,500 till the salary becomes 60,000. Now my question to you is, what is my salary for previous year 25-26? For the year 25-26, what is my salary? La 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 na 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 na. Aha, ಒಂಥರ ಒಂಥರ ಹೇಳಲಂತರ ಅಂತರ. Full year. Previous year 25-26 means full year salary should have. What you're telling is 1 month salary. I want the salary for full year. Previous year 25-26, which starts from 1st April 25, ends on 31st of March 26. Hey, please note, this 20,000 is per month. 5,000 increment will be per annum. Okay. One answer I have received 3,60,000. 2,21,000. 3,60,000, 2,25,000. Three lakh 35,000. Okay. Now, what does this mean, sir? When I joined the company from 1st April 23 till, can I say, 30 from 1st of September 23 till 31st of August 24, my salary was how much? 20,000 rupees. Hello, per month. From 1st of September 24 till 31st of August 25, my salary now became 25,000 per month. And from 1st of September 25 till 31st of August 26, my salary is now how much, sir? 30,000. Hello. So can I say in the given question, whatever information they have given that falls within this period? Hello. So my salary will be 25,000 because they have asked me the salary for previous year 25, 26. So it will be 25,000 for April, May, June, July, August, 5 months. Plus it will be 30,000 for balance 7 months. Ever students? Eh? 3 lakh 35. No one gave this answer. You're a nice person. You also. You're a very nice person. Anyone else gave? Yeah, you're also a very nice person. Yeah. Hey, did you understand? Go base. When is your exam, by the way? Nice. Sir, this and also we didn't study on this, sir. Why will they ask this? Yeah, they'll not ask. But if they ask, problem is. Hey, did you understand grade scale? Then you have something called as DA. DA means dearness allowance. What da? DA, dearness allowances. Dearness allowances, company will give you something called as DA. Why will company give you DA? To make sure that whatever expenses you are incurring for whatever expenses you are incurring because of increased cost of living. For example, nowadays gas prices are too high. Restaurant you go 10 rupees, 20 rupees extra that Google is taking. Correct? No? Hello. 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 Okay. I only get scared. Yeah. Now please see. Dearness allowances is there. Dearness allowances is there. Dearness allowances. Yeah. So this is the money which is given for increased cost of living. Now because of this, let us say my salary was 50,000 rupees. Now because this Goobase have increased the gas prices, etc. Because of that, my cost of living has increased. So temporarily, they are giving me extra 5,000 rupees every month as salary. Right now, my salary is 50,000. They are giving me extra 5,000 as the salary to me. Extra 5,000 they are giving as salary. What is that extra 5,000 rupees, sir? That is DA. That is what, sir? Dearness allowances. So it is an amount given for meeting the increased cost of living. What is DA? It is a money given by the company for meeting the increased cost of living. It is a money given by the company for meeting the increased cost of living. It is a taxable component of salary and is fully taxable. Dearness allowance is a taxable component of salary. And how much is taxable? It is fully taxable. Now, in the question, no, in examination or normally in questions, they will give you DA in two ways. DA in terms, DA not in terms. Whatever DA it is, it does not matter. For salary computation, you should take full DA. Whether it is DA in terms or DA not in terms. For salary computation, the entire amount of DA is taxable. But why is this breakup given, sir? Or why this bifurcation is there, DA in terms and DA not in terms? Because for calculation of some of the retirement benefits, we take only DA in terms. For calculation of some of the components, we will see perquisites amount, or for calculating allowances amount, we take only DA in terms. Therefore, this breakup is there. So DA in terms is DA forming part of retirement. They can use the word DA in terms, or they can use the word DA forming part of retirement, or they can use the word DA forming part of salary, or DA forming part of pay. That means it is DA in terms, and DA not in terms is DA not forming part of retirement or salary. If DA is given in percentage form, if they have given you dearness allowance in percentage form, then it should be taken as a percentage of basic pay. Now they will give you DA is 60%. 60% of what, sir? 60% of basic pay. And if the question is silent about DA, what should I assume? You should assume that it is DA not in terms. If the question is silent about DA, assume it to be not in terms and accordingly do your computation. Then the next component of salary is bonus. Bonus is an extra salary given to you. It is an extra salary given to you
because of any reason, because you're of your performance, or because it is given in the contract that I'll give you bonus, whatever it is. So it is a taxable component of salary and it is fully taxable. And it is taxable on what basis, sir? It is taxable on receipt basis. This DA, the bonus can be voluntary or it can be contractual. Now, in the question, you should be very careful. If they are given you bonus paid, then please include it while computing salary. If they have given bonus only, nothing else, only bonus they have given, then also include it for salary computation. But if they have given you what, sir? Bonus payable, then ignore it for salary computation. Then commission is there, commission or fees. It is a taxable component of salary and it is fully taxable. Commission and fees is a taxable component of salary. And how much is taxable, sir? It is fully taxable. Now, commission can be based on turnover, or it can be based on profits, or it can be based on product. Whatever type of commission it is, it does not matter. Whatever commission you are getting, that is fully taxable. Now, what are the important checkpoints over here? If question is silent about type of commission, they have not mentioned what type of commission it is. And if the question says commission is certain percent of turnover, that means it is a turnover commission. This is important because in some calculation, if you know basic plus DA in terms plus turnover commission you take. So you should see the commission properly. If they use the word only commission, nothing else they have given, ignore it. Okay, that means it is a normal commission. But if they give commission is equal to 5% of turnover, now that commission is what, sir? Turnover commission. When they give commission is 5% of turnover, that means that now it is a turnover commission. We have something called as advance salary. What is advance salary? Name only says I am advance salary. Advance salary means I am salary received in advance. Advance salary is, it is a salary received in advance. It is a taxable component of salary. Advance salary, salary received in advance. It is a taxable component of salary and it is fully taxable. It is taxable on what basis, sir? Receipt basis. It is taxable on what basis? Receipt basis. Yeah, advance salary is salary, but sometimes they'll give you advance against salary. Advance against salary. Advance against salary means what? Loan which is taken by you. If you take any loan, from the company against your salary, then it is called as advance against salary. If a bank is giving you loan against your car, it is loan against car or advance against car. Okay. Then we have something called as arrears of salary. Arrears of salary means what, sir? It is any increment in the salary with a retrospective effect. Any increase or increment in the salary with a retrospective effect. Any increment in the salary with a retrospective effect, which was not taxed in earlier years. It is taxable component of salary and it is fully taxable. So whenever you receive it, you have to pay tax on this. And it is taxable on what basis? Receipt basis. Please understand this carefully. Normally, salary is taxable on due basis or receipt basis, whichever is earlier. But there are three things which are taxable only on receipt basis. Which are these three things? Bonus, advance salary, arrears of salary. These three things are there which will be taxable on receipt basis. Please note, many people will get confused in life. Arrears of salary is not salary payable. No, 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 no. That is your accounts. Arrears of salary means your increment in salary from a retrospective date, which was not taxed in earlier years. Therefore, it will be taxable now. Okay. Now, one by one, we will see retirement benefit. Then we will take one question to discuss about these points together. Please note, as a student at this time, lunch which you should have should be very less, or have lunch at 12 o'clock. No, I'm not talking about, during this period, but I'm telling normally. Have lunch at 12 o'clock or don't have lunch at all. Your exam time is from 2 o'clock to 5 o'clock. Now I can see many people. Very nice they are looking. Variety design I can see on their face. They are trying to keep their eyes open. Dal chawal is the problem. Dal chawal is the main problem. So you want to have something else. What do you want to have? You tell me, Sundari. They're not giving chapati now. Yeah, I understand. Which PG you're staying? Atlas. You also stay there only. Girls PG. Yeah. What is there in your line? Boys is also there. Okay. What is there? Atlas. Okay. Retirement benefit. So we have different types of retirement benefit. We'll see one by one. First retirement benefit is what, sir? Gratuity. Gratuity means what? See, company wants to say thank you to the employee. So company, when the employee is leaving the company will give some money to that employee, extra money, because he has given services to the company. That money which is given is called as gratuity. Gratuity is received during employment. So basically it is one of the type of retirement benefits. So when is it received, that is very important. Okay, when the gratuity is received, that is very important. So if the gratuity is received during employment, then that gratuity will be fully taxable. If it is received during employment, it is fully taxable. Whether you are a government employee or you are a non-government employee, it does not matter. If the gratuity is received during employment, it is fully taxable. If the gratuity is received by legal heirs on death of employee, if gratuity is received when, sir? By legal heirs on death of the employee. Now employee has died. Okay, employee has died. So we don't want to tax it in the hands of legal heirs. Therefore, lawmaker says it is exempt. What is important is gratuity received at the time of retirement. Gratuity received at the time of retirement is exempt under section 1010. Gratuity which is received at the time of retirement is exempt under section 1010. How much is exempt? It depends on who you are. Are you a government employee or are you a non-government employee? If you're a government employee, then it is fully exempt. But if you're a non-government employee, then the exemption depends on whether you're a POGA employee or you're a non-POGA employee. You understand what is POGA, non-POGA? POGA means POGA. Non-POGA means A, whether you are covered under payment of Gratuity Act or not. If you are an employee who's covered under payment of Gratuity Act, then for you the exemption will be 15 by 26 into salary per month into completed years of service or actual gratuity received or limit of 20 lakhs. A 15 by 26. In a month, there are 30 days. Half of that is 15 days divided by 26. Why 26, sir? In that 30 days, 4 days will be Sunday. So 15 by 26 into salary per month into completed year of service, actual gratuity received or limit of 20 lakhs, whichever is less. If you are a non-POGA employee, half of average salary per month. Please note, here we are taking salary per month, here we are taking average salary per month into completed year of service. Sir, what is this completed year of service? Number of years you have completed working in the company. Compare that with actual gratuity received. Compare that with limit of 20 lakhs, whichever is less. Please see part. Sir, what do you mean by salary per month, sir? Salary per month means your last drawn salary. Sir, what do you mean by last drawn salary? At the time of your retirement, were you receiving some salary from the company? Of course, yes, sir. I was working, I was receiving that salary. That salary you should take. Your last drawn salary at the time of retirement. Now, what should you take in the salary? You should take only basic pay and you should take dearness allowance. Now, the DA can be in terms or not in terms. You should take the full DA amount that will give you your salary per month. Sir, I am non-POGA employee. For non-POGA employee, you have to take average salary per month. Sir, what is average salary per month? You should take last 10 months ka average. You should take average of what, sir? Last 10 months. In which you have to take what, sir? Basic pay plus DA in terms plus turnover commission. You should take basic pay plus DA in terms and turnover commission. Now, when you're taking completed year of service, sometimes what may happen when you're taking completed year of service, the employee would have worked for 26 years, 9 months. So how much should I take, sir? Should I take 26 years or 27 years? Now that depends on who you are. If you are a POGA employee, meaning if you are an employee covered under Payment of Gratuity Act, then fraction is more than 6 months. If the fraction is more than 6 months, consider it to be full year. So if you have worked for 26 years, 9 months, take it as 27 years. If you have worked for 26 years, 3 months, 26. 26 years, 6 months, 26. But if the fraction in completed year of service is what, sir? Less than, sorry, you are a non-POGA employee, then your fraction in completed year of service should be completely ignored. It does not matter how many years it is. Whatever months they have given, completely ignore it. 26 years will be taken as completed year of service. Yes, sir. More than 6 months. 6 months will come in category number 3, 26 years. No, sir, I saw that, but I thought someone will look at me when I ask a question. Yeah, Google. Yeah. Hey, do you understand this? Fraction in completed year of service, POGA employee, take it if it is more than 6 months. Non-POGA employee, completely ignored. Now, for calculating salary per month or average salary per month, you should ignore the month of retirement. Sir, what do you mean by this? The month in which you have retired, that month should be ignored. For example, if I have retired on 15th of July, ignore July month, take last month salary, meaning take the month of June. June ka salary should take. And average of last 10 months should be calculated from June till last 10 months. Okay. Ignore the month of retirement. Statutory limit is there, 20 lakh rupees is the limit which they have given. This limit is applicable to an individual as an employee throughout his lifetime. So throughout your lifeline, it is applicable to you irrespective of any number of employers you had. Meaning that 20 lakh rupees is per person for his entire lifetime. So if I worked for 5-6 companies, will this limit change, sir? No. If the question is silent about the type of employee, then assume him to be non-POGA employee and write a note about the same and accordingly answer. Okay. I'll give you only 2 minutes. Can you tell me the answer? You calculate and tell me. Nine lakh. Okay. Eight lakh. 58,000 is for second one. Now please see. Ravi is retired on 15th of May 2025 after completion of 26 years, 8 months of service and received a gratuity of 15 lakh rupees. So gratuity received by him is 15 lakhs. Basic salary they have given 50,000 per month. Dearness allowance they have given 10,000 per month. 60% forms part of retirement. So 60% is DA in terms which is required for non-POGA calculation. Commission is 1% of turnover and they have given a turnover of 1 crore 20 lakhs. Please note 1 crore 20 lakhs is turnover for full year 12 months. So per month turnover is how much? 10 lakhs into 1%. So per month the turnover commission is 10,000 rupees per month I am receiving as turnover commission. Then apart from that, they have given bonus. I don't need it for gratuity calculation. So taxable gratuity if you are a private employee. Now first we should find what's that? If first we should find salary. So for POGA employee, what is salary? Basic pay plus dearness allowance. Basic pay is 50,000. Dearness allowance is 10,000. Total is 60,000. Correct? Then for non-POGA employee, basic pay is for non-POGA employee, I'll take basic pay which is 50,000. I'll take only DA in terms which is 10,000 into 60% is 6,000 and I'll take turnover commission as 10,000 rupees. 10,000. I showed the calculation. So how much, sir? 66,000. Is this calculation correct? Have you got this calculation correct? Meaning whoever did it. Meaning if this calculation is correct, meaning if you are able to find your salary properly, everything else is just putting the amounts in the formula. So for POGA employee, it is 15 by 26. Take 15 by 26 into salary per month, which is how much, sir? 60,000 into completed year of service. How many years he completed? 26 years, 9 months, sorry, 8 months. I'll take how many, sir? 27 months. So 15 by 26 into 60,000 into 27 months, which is 934,615. Actual amount is 15,000. Limit is 20 lakh rupees, whichever is less. Exempt amount is how much, sir? 9,34,615. Non-POGA employee, half of average salary per month into completed year of service. Half will remain half. Average salary per month is 66,000 rupees into 26 years, which is 8,58,000. Actual amount is 15 lakhs, 20 lakhs is the limit. So whichever is less is exempt. So for POGA employee, 9,34,615 is exempt. Non-POGA employee, 8,58,000. So taxable amount is 5,65,385 and 6,42,000 and 0. You okay? Now please note, if you are very lucky, then you will get a separate question on this. But normally what they'll do is they'll merge it with the full question, the salary main question. Okay, we'll do that kind of question also. Next type of retirement benefit which you have is what, sir? Next type of retirement benefit which you have is called as pension. Pension, what happens after you retiring from your company, you will get a fixed amount of return. This you can also convert into one lump sum amount. That is called as what's a pension. Now this pension can be of two types. One is called as uncommuted pension, meaning that pension which you are receiving every month, that is called as uncommuted pension. Uncommuted pension is always taxable, whether you are a government employee or non-government employee, it does not matter. If you are receiving a pension which is not a commuted pension, then it is always taxable. But if it is a commuted pension, then commuted pension means what's a lump sum pension, then it is exempt under section 1010A. Commuted pension is exempt under section 1010A. Sir, how much is exempt? A. Uncommuted pension, whatever you receive on monthly basis, that is always taxable, irrespective of who you are. But if it is a commuted pension, then it is exempt. Exempt under section 1010A. How much is exempt? If you are a government employee, fully exempt. If you are a non-government employee, then the exemption will depend on whether you are receiving gratuity or not receiving gratuity. Meaning, apart from this pension amount at the time of retirement, is the company also giving you gratuity? Yes, sir. If you are also receiving gratuity, then total pension into 1/3 is exempt, meaning 1/3 of total pension is exempt. But if you are not receiving gratuity, then half of total pension will be exempt. You okay? What is this one talking about? Pension. Pension which you receive on monthly basis is called as uncommuted pension. This uncommuted pension is always taxable, but the commuted pension which is there, lump sum pension which is there, that is exempt under section 1010A. If you're a government employee, fully exempt. If you're a non-government employee, it depends on whether you are also receiving gratuity or you are not receiving gratuity. If you are receiving gratuity, 1/3 of total pension is exempt. If you're not receiving gratuity, half of total pension is exempt. Please see. The problem over here is you feel that you have understood, but you have not understood. Sometimes it happens in life. Meaning they are telling half of total pension is exempt. They are telling 1/3 of total pension is exempt. What you receive is not a total pension, it is just a commuted pension. Meaning the question may say, Dilip is receiving a monthly, Dilip retired on this particular date, let us say on 31st of August 25, he retired from the company, and from 1st of September 25, he started receiving a pension of 5,000 rupees per month. Okay. Now they say Dilip commuted on 1st of January 26. Dilip commuted 60% of his pension and received rupees 3 lakh. Dilip commuted how much? 60% of his pension and I received how much? 3 lakh rupees. Now what is the taxable pension? Tell me how much is the taxable pension? If I receive gratuity, how much is taxable? If I don't receive gratuity, how much is taxable? Sir, see sir, first we should see what is my total pension. Now, what are they telling? 3 lakh rupees is 60% of my pension. Hello? 3 lakh rupees is 60% of my pension. That means my total pension is how much? 3 lakhs divided by 60%, which is 5 lakh rupees. Now, what is my this uncommuted pension? Sorry, this commuted pension, the taxable component of this, if I receive gratuity, how much is taxable? Can I say 5 lakhs in 3 lakh rupees is received by me minus 5 lakhs into 1 by 3. How much? 1 lakh? 3 lakh minus 1 lakh 33,333 rupees. And what about uncommuted pension? Uncommuted law. What if I receive? I do not receive gratuity. Then 3 lakh minus 5 lakhs into 50,000 rupees. Now this is what, sir? This is my commuted pension cut taxable amount. What about uncommuted pension? This is my commuted pension ka taxable amount. Uncommuted pension means that pension which I am receiving in one monthly basis. Whatever pension I am receiving on monthly basis. Please note, I retired on 31st of August. I started receiving the pension from 1st of September. How much did I start receiving? 5,000 rupees. So September, October, November, December. For 4 months, I will receive 5,000. Now, because I commuted 60% of my pension, After commutation, I'm not going to receive 5,000. I'm going to receive what is left over? 60% I commuted, that means 40% of total pension is left over. So how much is the total pension I was receiving before commutation? Was 5,000 into 40% into 4 months. Sorry, 4 Allah into 3 months. This is my monthly pension. How much? 26,000 rupees. And this will be fully taxable. Did you understand what is commuted pension? What is uncommuted pension? How to calculate commuted pension? Commuted pension they'll give you, but using that commuted pension, I should find my total pension. By that, I will get my taxable component of commuted pension. Okay, that will help me find my exempt component or taxable component of total pension. And once I commute some pension amount, after commutation, the monthly pension also will be changed. How much ever I commuted, in the present case, I commuted 60%. So leftover part is only 40% of total pension. So going forward, I am going to receive only 40% of my total pension once I do the commutation. Is this point clear to everyone? Hello. I think this is the same question the question which is given over here is what we solved. Now we have one more thing called as leave salary or leave encashment or leave credit encashment. Leave salary means what, sir? Sometimes the company may say, you take leave and I'll still pay you the salary. You take leave, I'll still pay the salary. That salary is called as leave salary. Leave salary means what, sir? That salary which is given by the company even when you are not working in the company. So let us say company says, Dilip, you take leave for 2 months, 2 months, 2 days in a month. I'll still pay you salary. So in a year, I can take a leave of how many days? 24 days. In a year, I can take a leave of 24 days. So now this 24 days is what company says that Dilip, you can take a leave of 24 days in a year. So this 24 days is what, sir? This 24 days is leave allowed by the company. Leave allowed by the company is how much? 24 days. Out of these 24 days, 4 days ka leave is taken by me. Out of how much? 24 days. I have taken leave of how many days? 4 days. That is called as leave taken or leave availed by me or leave utilized by me. So what is left over? That is my unutilized leave. Please see. I can take 24 days ka leave, but I have taken only 4 days ka leave. Balance leave is not taken by me now. This is called as my unutilized leave. Now for this unutilized leave, the company is going to pay me the money. For this unutilized leave, the company is going to pay me the money. That is called as leave salary. What are you doing? Whatever this unutilized leave is there, no, this unutilized leave also called as leave available, also called as leave credit or leave balance. They are going to encash this. Encash this means they are going to give money for this particular item. Okay. Now, what is leave salary? Leave salary means encashment of leave credit. Leave salary means encashing the leave credit. Hey, do you understand what is leave credit? Leave credit is leave allowed minus leave taken. Whatever leave credit is leave allowed by the company minus leave which is taken by you. So, as per income tax law, only 1 month leave is allowed for every completed year of service. What is income tax law telling? For every completed year of service, how many how many months ka leave is allowed? For 1 year, I will allow only 1 month. Please note, we should find the leave credit as per income tax law. Many times in the question, they will give you leave credit and blindly student will start applying the formula and find the answer. Leave credit should be found first as per income tax law, not as per the company policy. Income tax law says I will give you only 30 days ka leave or only 1 month ka leave in a year. But company policy may say I'll give you 45 days ka leave in a year. Okay. So or company policy may say I will give you 2 months leave in a year or 1.5 months in a year. Should I take what company is telling? No. I should take what? Income tax losses. Leave salary received during employment. Received during employment means I am working in the company. I am working in the company, and while I was working, that time only company gave me the leave salary. Now it will be fully taxable whether you are a government employee or non-government employee, it does not matter. The leave salary received by you during your employment, that is fully taxable. Now if it is received at the time of your retirement, if you receive the leave salary at the time of what, sir? Your retirement, then it will be exempt under section 1010AA. How much will be exempt? That depends on whether you are a government employee or you are a non-government employee. If you are a government employee, then it is fully exempt. And if you are a non-government employee, the exempt portion will be leave credit into average salary per month, 10 months into average salary per month, actual amount received, or limit of 25 lakhs, whichever is less. Average salary per month means what, sir? Again, you should take last 10 months ka average till the date of retirement. You should take last 10 months ka average till the date of retirement. Meaning, if a person is retired on 15th of June, you should take last 10 months from 15 June to 15 May, 15 May to 15 April. Like this, you should take last 10 months ka salary. So what should I take, sir, in salary? You should take your basic pay, DA in terms and turnover commission. Leave credit should be calculated as per income tax law. Month of retirement should also be considered. The month in which he has retired, that month also should be considered. Fraction in completed year of service should be ignored. If there is any fraction in completed year of service, don't consider that. You okay? Now tell me the answer for question number 2. Others, please tell me the answer. Yeah. Yeah, so it depends on how many months you have completed. Sorry, how many years you have completed. So 5 years is the, I mean, again, it company policy may change, but government says 5 years. After that only it will be exempt. Not income tax, as per that particular act. Like we have PF Act separately, Gratuity Act, separate acts are there. Yeah. Sir, in gratuity question, he retired in the middle of the month, 15th of June. Ignore the month of June. Take from May month's last 10 months or take the salary for the month of May. Mr. Das has retired on 31st of March 2026. At the time of retirement, 18 months leave was lying to his credit. He received a leave encashment equivalent to 18 months basic salary equal to 1,26,000. So what is my basic pay? 1,26,000 divided by 18 months, how much, sir? 7,000 rupees. His employer allows him 1.5 months leave credit for every completed year. Now they are telling company gives 1.5 months credit for every completed year. Now that means what, sir? 18 months leave credit which they have given, that 18 months is as per 1.5 months calculation. Hello, I should see as per income tax law. Income tax law says only 1 month. So first I should calculate leave credit is equal to leave allowed minus leave taken. First I will have to see how many days, how much is his completed years. Have they given the information of how many years he has completed working in the company? So first I have to calculate that. Based on that only I will come to know what is the leave credit as per income tax law. Leave credit is how much as per company policy. Please note, leave credit as per company policy is 18 months into leave allowed is how much? Leave allowed is number of years into 1.5 months in a year. So can I say number of years, because they have not given, I take it as X into 1.5 months minus leave taken. A leave taken also they have given. What is leave taken? They have given leave availed by him is 12 months. So can I say X is equal to 18 plus 12 divided by 1.5, which is equal to how much? 20 or 30? 20 months. Sorry, 20 years. So this fellow has worked in the company for how many years, sir? 20 years. Hello. First, what did I do? I found the leave credit as, I found the leave, I found the number of years from the information which they have given. Using this, now I should find what? Using this, I should find what, sir? Leave. Using this information, I should find leave credit as per income tax law. Now, what is leave credit? Leave allowed minus leave taken. Leave allowed is how much? 20 years minus leave taken is how much? Leave taken is how much? 12 months. So 8 months is the leave credit. Now using this information, leave credit we have salary information they have given. Salary basic pay is how much? 7,000. Dearness allowances forming part of retirement. DA in terms is 3,000. Turnover commission they have not given. So salary for our computation is how much, sir? 10,000 rupees. Now you put these amounts in the formula. Leave credit into average salary per month. 8 months into 10,000. 10 went into average salary per month. Actual amount received or limit, whichever is less. 80,000 rupees is the least amount, and taxable leave salary is 46,000 rupees. How much is taxable leave salary, sir? 46,000 rupees is the taxable leave salary. Is this clear, everyone? Then we have one more retirement benefit called as retrenchment compensation. You know what is retrenchment? Retrenchment means what? Retrenchment means what? Where the company says, please get out of the company. That is called as what, sir? Retrenchment. When the company says, please go out of the company, please leave the company, that means it is a retrenchment. That is what, sir? That is a retrenchment compensation. Okay. Retrenchment compensation, if you are a government employee, retrenchment compensation is exempt under section 1010B. If you are a government employee, how much is exempt, sir? If you are a government employee, then it is fully exempt. But if you are not a government employee, then exemption will be 15 by 26 into average salary per month into completed year of service, actual amount received, or limit of 50,000, 5 lakh, sorry, whichever is less. Now please note, retrenchment compensation and VRS compensation, two things are those things which normally they will test you, where, sir, they are going to test these two things in your MCQ questions. Okay. All other things which we saw on retirement benefits, they will test you in main question, but these two things they'll test you in MCQs. Do you understand what I'm trying to say over here? Hello. Yes, sir. So non-government employee 15 by 26 into average salary per month into completed year of service or actual amount received or limit of 5 lakhs, whichever is less. Average salary per month is what's that? Same basic plus DA intervals plus turnover commission. Now here average salary per month when you're taking, you should take only last 3 months ka average. Fraction in completed year of service should be completely, if it is more than 6 months. Fraction in completed year of service, if it is more than 6 months, take it as 1 year. And VRS compensation. VRS is what, sir? When the company is throwing you out, it is retrenchment. When you yourself go out of the company, that is called as what, sir? Voluntary VRS, voluntary retirement scheme compensation, or VRS compensation. Now, VRS compensation, if the company pays you VRS compensation, then it is exempt under section 1010C. For both government employee and non-government employee, the exemption amount is same. How much, sir? Salary per month into 3 months into completed year of service. Salary per month into 3 months into completed year of service. Salary per month into remaining months in service. Please note, if I would have not retired from the company, I would have still stayed in the company. For how long I would have stayed in the company? My remaining month in service or actual amount received or limit of 5 lakhs, whichever is less. Note 1. Salary per month means what, sir? Your basic plus DA in terms plus turnover commission, and fraction in completed year of service should be ignored. Fraction in completed year of service, you should completely ignore it. Okay. Now you have allowances. We'll discuss this and we'll take up one question. Allowances. Allowances means what, sir? See, there are two things in life. One is called as allowances. One more is called as perquisites. Allowances means company is giving you money so that you can meet a particular type of expenditure. For example, company is giving the t-shirt to me, perquisites. Company is giving the t-shirt to me, it is perquisite. Company is giving me money, Dilip, go get whatever type of t-shirt you want. That is allowances. Company is giving a house to me, perquisites. Company is giving you money so that you can stay in whatever type of house you want to stay. That is allowances. Do you understand the difference between perquisites and allowances? Yes, sir. So allowances are basically monetary benefits given by the company. Allowances are monetary benefits given by the company to meet a particular type of expenditure. So there are different types of allowances. Commutation allowance, also called as transport allowance. Commutation. Commutation means what, sir? The money given for your travel from office to home and home to office. That is called as commutation. Commutation means for meeting the expenditure for travel from office to home and home to office, the money given is commutation allowance. If you receive a commutation allowance, it is fully taxable. Commutation allowance is fully taxable. How much, sir? It is fully taxable. But if you are a blind, deaf, or handicapped employee, if you are what type of employee? If you are a blind employee, handicapped employee, or deaf employee, then rupees 3,200 per month is exempt. How much, sir? Rupees 3,200 per month will be exempt only for blind, handicapped, deaf employees. Children hostel allowance. Children hostel allowance, maximum rupees 9,000 per month per child for a maximum of 2 children is exempt. A maximum 300 rupees, 9,000 I told her, because under new income tax act it is 9,000. So new income tax act has come now. They have increased the limit to 9,000. So problem is there, confusion is there in life. Yeah, I'm studying that also. Little I'm studying. Children hostel allowance, maximum rupees 300 per month per child for a maximum of 2 children is exempt. Education allowance. Now this Gube, the limits are very useless. Correct? No, 300 rupees. You stay in hostel. How many are staying in hostel? You pay 300 rupees per month. 12,000 rupees they are charging. Oh my God. Now 9,000 is still worth, no? It makes sense. 9,000, the new limit which is there. Children education allowance. What is the limit? 100 rupees per month. Array, that education ka book also will not get. Right now, it is the new limit is 3,000. New limit means new income tax act. It is good. Maja will be there. But you guys please study it in finals. Before that, ayo, Gube, you should not wait till new income tax. No, sir, I will clear only when new income tax act is coming. One body only. Please note, the beauty is because this is the last examination for old income tax law, your income tax question may normally be easy, point number one. Normally be easy, point number one. Or they may try to push you. They'll push you. Ayo, pass. Just better pass. Yeah, but you should be in that borderline to get pushed. You get 9 marks and they'll push you. How far they'll push? Correct, no, go face. Children education allowance. Maximum rupees 100 per month per child is exempt for how many children you can claim exemption? 2 children. Hey, what happens is many times the question will say, the question will give you, company has paid children hostel allowance of 500 rupees per month. They have not given any information whether I have children or not. They have not given information, I have children or not. What will you do? Will you claim deduction or not? Question says, the company has given a children education allowance of 500 rupees per month. Now, should you claim no information with respect to whether you have children or not, how many children, etc. Now, what will you do? Will you claim deduction? How much deduction will you claim? Like you are telling, sir, assume 300. Why 300? Yeah, so problem is when you assume children are there, no, this problem will happen. Correct. When you assume no children are there, directly fully taxable 500. Yeah, are you understanding? Please note, when the question is silent, of course you have the liberty of assuming, but assume you don't have children. Eh? See, company has a policy that we will give children education lines. Now, company will not come to you. Yeah, are you planning? Not planning? Do you have children? So, company will give it because it is a company policy. They'll give it to everyone. Meaning, many of my friends who are working in companies, they get meal coupon vouchers, etc. They get something. Okay, meal vouchers they are getting. Sodexo coupons they get. Now, those people every day they carry lunch to their office. Now, those gubes should not get meal vouchers, no, but still company is giving because company does not know. Anyways, tribal area allowances. If you are working in tribal area, sir, why will I work in tribal area? If okay, meaning sometimes it may happen that you want to do. I mean, you want to. If Puspa is there, he is going somewhere deep inside the jungle. Correct, no? So he's working in tribal area. So that company will give him how much, sir? 2,000 rupees per month. Or 200 only I told. 200 rupees per, sir, you also had food today. So 200 rupees per month company will give you as, meaning whatever amount they are giving, but maximum 200 rupees per month will be exempt. Truck driver allowance or allowances for employees of transport company. Actual amount received into 70%. Whatever company is giving you into 70% or 10,000 rupees, whichever is less will be exempt. Underground allowance. Underground allowances means some people are working somewhere under the ground. Correct? Yeah, Rocky Bhai. Rocky Bhai is working somewhere under the ground. So in such cases, the company will pay him underground allowance. Maximum rupees 800 per month per month will be exempt. Now you have other allowances like daily allowance, uniform allowance, conveyance allowance, helper allowance, academy allowance, traveling allowance. Traveling allowance is also called as tour and transfer allowance. Academy allowance is also called as research allowance or professional development allowance. Helper is also called as assistant allowance. All these allowances are exempt based on how much you actually spent. Company gives you some money or the money which is actually spent by you, whichever is less will be exempt. Which allowances, sir? Daily, uniform, conveyance, helper, academy and travel allowance. Please see. Before this we saw 6 allowances. Correct, no. Cheat you. Cheat you means commutation, hostel, education, tribal area, truck driver and underground allowance. They are all exempt based on the limit which is given in the question. They have given some limit. 100 rupees, 300 rupees, 800 rupees. They are exempt based on that limit. Then you have duck hat. Duck hat means what, sir? Daily allowance, uniform allowance, conveyance allowance, helper allowance, academy allowance, and travel or tour allowance. They are all exempt based on how much you are actually spending. How much you are actually spending. Now, important is your HRA. In allowances, what is important, sir? HRA. Now, the second section which you have to remember in salary is section 10, 30, 13A. Compulsory you should remember. A. First section which we discussed was 16, 1A. Now, the second section which you have to remember is what, sir? 10, 13A. Exemption under section 10, 13A. 40% or 50% of salary, actual HRA received, or rent paid minus 10% of salary, whichever is less, will be exempt. What is exempt? 40% of salary or 50% of salary, actual HRA received, rent paid minus 10% of salary, whichever is less, will be exempt. Salary for HR is what, sir? Basic pay plus DA in terms plus turnover commission. Please note. House rent allowance, exempt amount is how much? 40% of salary. Normally, it should take how much? 40% of salary. But in 4 cases, I'll take 50% of salary. If that employee is residing, not working, residing in metro cities. Metro city means what, sir? Delhi, Mumbai, Chennai, and Kolkata. Then I will take what, sir? 50% of salary. And salary is basic pay, DA interns, and turnover commission. Yes, sir. Yeah, they have increased, sir. But we'll study later, sir. In finals, I'll teach you, okay? Note. Now, place of residence is important and not the place of employment. Okay. Apart from this, any other type of allowances the company is giving you, it is fully taxable. Okay. Any other type of allowances company gives you, it is fully taxable. Now I want you to tell me answer for question. So many questions are there. Hey, when will you guys do this, all these things? Eh? Lava only you should badko. Tell me the answer for this question. Fast. Fast, okay? Not more than 5 minutes you should take. In examination, you'll have only so much time. 6 marks question, this question will come for. That I'll tell at the end. Which allowance is allowed under OT or DTR? End of this chapter I'll tell. End of every chapter I'll tell that. Done. Done now. Not even completed reading question you will tell. Income tax, I mean the tax paper basically is a very lengthy paper in your entire group 1. Group 2, I think there is no paper which is lengthy. Lengthy, yeah. Audit is something which you will not know. That is different. Length is different. Hey, done. Please see. You are required to compute the income from salary of Mr. Raja under default tax regime from the following. He retired on 31st of December 25 at the age 60 after putting 25 years 9 months in service from a private company at Delhi. His salary was 25,000 per month, HR is 6,000 per month, and rent paid is 6,500 per month for his tenure. Rent paid is how much, sir? 6,500. So salary is 25,000 per month. When did he retire? On 31st of December. So how many months salary he will receive? 9 months. What is his basic pay? 2 lakh? 2,25,000. 2,25,000. Now HRA, because he is opting for default regime, HRA will be fully taxable. Okay, HRA exemption you will not get because you are opting for default regime. So how much HRA you are receiving? 6,000 into 9 months, which is 6 nines are 54,000. On retirement, he was paid gratuity of 3,50,000. He was covered under Payment of Gratuity Act. He did not receive any other gratuity at any point earlier other than this gratuity. So that means he's a POGA employee. So if you're a POGA employee, then 15 by 26 into salary per month. Have they given you dearness allowances? In the question, they have not given you dearness allowances. Into completed year of service, how much, sir? 26 years. How much? 3,75,000. How much have you received? 3,50,000. Or actual amount received. How much? 3,50,000 or limit of 20 lakhs, whichever is less, 3.5 lakhs. So 3,50,000 is fully exempt. So how much is taxable gratuity, sir? 0. Hey, did you understand? Did you understand this part? On his retirement gratuity, sir, he accumulated leave of 15 days per annum during the period of his service. This was encashed by him at the time of his retirement. A sum of 3,15,000 was received by him in this regard. Employer allowed 30 days leave. No problem. Company allowed 30 days leave. Correct. So leave allowed by companies 30 days. Leave taken by him is only 15 days. So every year he has a leave credit of 15 days. For how many years? For how many years? Into 25 years. A fraction in completed year of service should be ignored. Are you sure? So what is the multiplication is 375 days divided by what? You should take leave credits in months divided by 30. 12.5 months. How much, sir? 12.5 months. Now, so how much will I take? So for leave credit, salary is basic plus DA in terms plus turnover commission. Can I say I don't have any information with respect to DA and turnover commission? So how much, sir? 25,000 per month into 12.5 months. How much? 3,12,500. Then 25,000 into 10 months, which is 2,50,000. Actual amount received is how much? Hello? 3,50,000 and limit is 25 lakhs. Whichever is less. Who is less? 2,15,000. So how much is taxable leave salary, sir? I'm reviewing the working over here. Taxable leave salary is how much? 3,15,000 is received. 2,50,000 is exempt. Taxable is 65,000. He is receiving a pension of 5,000 rupees per month. Okay, when did he retire from the company? On December. So 1 month he received 5,000 per month, and on 1/2/26 he commuted 60% of pension, received 3 lakh rupees. So that means his uncommuted pension will be 5,000 rupees for month 1. Month 2 it will be 5,000 into 40%. 5 fours are 2,000 and 2,000. So this will be his uncommuted pension. Hey, correct? Hey, do you understand?
Yes, sir.
Uncommuted pension 5,000 rupees I am receiving. I retired in the month of
Yes, sir.
December, 31st of December. So January month I will receive. In the month of February I commuted 60% of my pension. So 60% means leftover is only 40%. 5,000 I was receiving every month. Now I will receive 5,000 into 40%, which is 2,000. How much, sir? 9,000 rupees. A, is this correct, everyone? Now, apart from this, this is my uncommuted pension. What is my commuted pension? What is my commuted pension? What is my commuted pension? How much is my commuted pension, sir? I am receiving 3 lakh rupees minus taxable component I am taking 5 lakhs divided by, sir, why 5 lakhs? A 3 lakhs divided by 60% will give you 5 lakhs. Now, because I have also received gratuity, only 1/3 of 5 lakhs, which is 1 lakh 66,667, which is 1,33,333 is taxable pension. The company presented him with a gift voucher of 4,000 on his retirement. So can I say gift voucher of 4,000 rupees company presented? Now company gives you a gift. If it is a gift in kind, value of gift is more than 5,000, then only it is taxable. So you can ignore this amount. And his colleague gifted him 50,000 from their mobile phone. You can ignore this also because that is not taxable under salary. So what is the total taxable salary? A first is do the total 2,25,000. Addition you do at least calculator. You know how to use calculator. Check once. Yeah. 2,25,000. 5,40,000. After that add 0. What is 0, sir? HRA fully taxable. Yeah, HRA done no 54,000. 2,25,000 plus 54,000. Yeah. Then add what, sir? 0. Why, sir? Gratuity is fully exempt. A gratuity is fully exempt. Then so this is done. This is done. This is done. 65,000 leave salary. Then 9,000 pension. 9,000 plus 1,33,333. So what is the amount, sir? 2 lakh 4,86,333. Now because he's opting for default regime, 75,000 standard deduction he'll get. 4,11,333 is his what's up? Taxable salary or net salary. Is this clear, everyone? Hello. Is this clear, everyone? 40 means 20 minutes. 20 minutes. What can I complete? 20 minutes. Leave salary. What is the problem, Sundri? Leave salary, leave salary, leave salary. I'll come back over here. Leave salary. 15 days leave was there, Sundri. Please see. What are they telling? He has accumulated 15 days leave per annum during the period of his service. So every year he got leave credit of how much, sir? 15 days. How many days has he completed? How many years has he completed in the company? 25 years. So into 25. How many years, Sundri? 375. These many days he has leave available with him. Divided by 30 days, which is allowed under income tax law. How much? 12.5. Okay, multiply by 25,000, which is his salary. This is your point number 1 in your formula. Point number 2 in your formula is 10 months into 25,000. So can I say point number 2 will be least, then actual amount received, etc. So 3,15,000 you are receiving. 2,50,000 is exempt. Balance 65,000 is tax. And you wanted me to explain HRA. HRA, what is the problem, Sundri? HRA. For time being, I'll come to the end of this notes. Ting 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 ting. So big chapter. Hey, for me no problem. Problem is for you guys. Hey, please see. Sundri, what is the name, Sundri? Sudarshini. If an employee opts for default tax regime, if you are opting for default tax regime, government is going to take some benefits from you. What is that benefit which government is going to take, sir? Allowances under section 1014 will be taxable. Meaning, whatever allowances we studied what? You cheat, duck, hat, HRA, all this will be taxable except daily allowances, transport allowances, conveyance allowances, and tour allowances. Meaning, these are the allowances which will be exempt. All other allowances will be taxable if you are opting for default tax regime. Similarly, HRA under section 1013A would be fully taxable. We will study later. Leave travel concession under 10.5 is fully taxable, and no deduction will be given to you under section 16 except standard deduction of 75,000. So we have not taken that. Okay, one small point we'll discuss. Deductions. We have deductions. Please see. As of now, we have discussed till what point? Allowances. Allowances we have discussed. Now we'll see what's a deduction. Deduction is given under section 16. Deduction is given under section 16. Section 16, 1 capital small a, sorry, not capital A. Section 16, 1 A. Section 16, 1 A. Standard deduction. If you get a standard deduction, meaning if you get a standard deduction is what, sir? Standard deduction. Meaning this is something which you'll definitely get if you are receiving salary. So if you are a person who is earning a salary income, fixed amount of deduction you'll get. That deduction is called as standard deduction. How much, sir? It is available to all types of employees. Standard deduction is something which is available to whom? Every type of employee, whether you are a government employee, non-government employee, POGA employee, every type of employee, standard deduction you will be getting. How much is the amount of deduction? Employee, that depends on whether you are opting for optional regime or you are opting for default regime. Meaning, if an employee opts for optional regime, then gross salary into 50,000 rupees, gross salary into gross salary or 50,000 rupees limit is there, whichever is less. 50,000 rupees per annum. Sir, I am working at 5 places. Will I take 50,000, 50,000, 50,000, 50,000? Banbidi. They are telling take only once. How much, sir? 50,000. So gross salary or 50,000, whichever is less. If employee pays tax under default regime, if you are paying tax under what regime, sir? Default regime, then gross salary into 75,000, whichever is less, will be the standard deduction which will be given to you. Now, if the employee has received salary from more than one employer, deduction will be allowed only once. It does not matter you are working in 2 companies or 10 companies, deduction will be allowed only once. Entertainment allowance. Entertainment allowance means what, sir? Maja allowance. Entertainment allowance. Just imagine someone says you, ICI says that those who are writing examination, after your examination, I'll give you 1 lakh rupees. Maja aap kar lo. Correct? No? Huh? Yeah. Even if you don't pass.
4 times a day.
Yeah, Gube, why 4 times? Keep writing. Why 4 times? Entertainment allowance. Allala, not only you, in your family, just imagine 10 members are there. You tell everyone to join CA. 3 months once, 1 lakh rupees. So you just imagine 10 members are there in family, 10 lakh rupees every 3 months or every 4 months, 10 lakh rupees. So 4 into 3, 10 into 30 lakh rupees per annum. This is sufficient. No? Yeah. And don't do anything. I mean, protection. You should not stop in life. Yeah. Everyone should get opportunity. Yeah. Or go to some orphanage and adopt someone who is above 18. Tell them, please write the examination. Entertainment allowances. Entertainment allowances should first be added in your gross salary. Because it is an allowance. Allowances means some money company is giving, monetary benefit is given by the company. Because it is an allowances, it will be added to your gross salary, and deduction will be allowed only to government employee. And deduction will be allowed only to whom, sir? Government employee. How much deduction will be allowed? 20% of basic pay. Basic pay ka 20% or actual amount received or limit of 5,000 per annum, whichever is less. Entertainment allowance deduction is not allowed if you are opting for default tax regime. You okay? Then you have professional tax. You have what, sir? Professional tax. It is a tax on employment collected by state government. State government will collect tax on what, sir? Your employment. Tax on employment means what? Because you are working, you are acting as an employee for someone. On that employment, they will collect tax. That is called as professional tax. Please see, you are working in this state. Whatever income you are getting, salary income, on the tax you have to pay. The tax will be collected by whom? Central government. State government is not receiving anything from you. Therefore, they will collect from you something called as entertainment allowance. It is a tax on employment collected by state government. It is allowed as deduction only if it is paid by employee. When is entertainment allowance allowed as deduction? Only if employee pays this. Now, if the company is paying it, if professional tax is paid by employer, first add it to your gross salary, then claim it as deduction under section 16. How much deduction, sir? Amount of deduction is 2,500 per annum. Deduction is allowed on payment basis, meaning only if it is actually paid, you will get the deduction. Further, if the outstanding professional tax of earlier years was paid in the current year, then also deduction will be allowed for those payments. Maximum how much will be allowed, sir? 2,500 per month. And if you're opting for default tax regime, you will not get any deduction for entertainment allowances. Okay? Very simple. So stand deduction pakka for everyone, it will be given section 16(1)(a). If you are opting for optional regime, 50,000. Default regime, 75,000. Entertainment allowance only for government employees and only under optional regime. Professional tax for any type of employees, but only under optional regime. Entertainment allowance maximum is 5,000. Professional tax maximum is 2,500 per annum. Okay? Yeah? Now, we'll stop here only, but anyone has any question, you can ask. Anyone has any question, you can ask me. Online students, if you have any question, you can ask me. Very good morning to you all.
Very good morning, online students. I hope I am audible and also the screen is visible. Online students, I hope I'm audible. Yes, sir. Okay, let us continue our discussion. In our previous class, we discussed till deductions. So there is no concept of revision in marathon because already marathon is only a revision. Okay, the next point which we were discussing income from salary. The next point which we have is funds, various different types of funds which we have. First fund is what, sir? Provident fund. Provident fund, employee provident fund or public provident fund. Public provident fund is not covered in this chapter. Public provident fund is not covered in this chapter because we are discussing the chapter called as income from salary. So which provident fund is covered, sir? Employee provident fund. Now, employee provident fund are of three types. One is statutory provident fund. Another one is recognized provident fund. The next one is unrecognized provident fund. Statutory provident fund only applicable for government employees, central government, state government employees. Then recognized provident fund, private companies can create a fund and then get it recognized from the income tax department. And unrecognized provident fund, the fund which is not recognized, but still it is a provident fund. Now, statutory provident fund, very simple fund, very easy fund. In case of statutory provident fund, what happens, sir? In case of statutory provident fund, everything is exempt. What do you mean by everything is exempt? See, what happens in the fund is, there is a fund which is created. Okay. The lawmakers, the employee, basically the place where you are working, they will create a fund. Name of the fund is statutory provident fund. Now, employee as well as employer is going to put some money in the fund. Employee as well as employer are going to contribute some money in the fund. Employee makes contribution to statutory provident fund. Lawmaker says employee is going to make the contribution out of the salary which you are going to give to the employee. So you pay the salary to the employee. Whatever salary you pay to the employee, that salary ka money that will be contributed in this fund. Employer contribution in this fund. Employer contribution means what, sir? The company also will contribute the money. Okay. So whatever contribution is made by you as an employee, that should be ignored for calculation of salary, and your contribution will be allowed as deduction under section 80C. Whatever contribution you are making, I will give you deduction under 80C. Employer ka contribution is exempt. Whatever contribution is made by me, the employer, that is exempt. That is exempt. Meaning in the hands of employee, it will not be taxable. It is exempt. Now you get interest on employee ka contribution. Now please note this fund. This fund is basically a bank account. Now because you have deposited money, and I have also deposited money for you. Now whatever money you have deposited, on that money you will get interest. Lawmaker says that interest will be exempt, and whatever interest you are getting on my contribution, the employer contribution, that is also exempt. Please note, all these things will be income for the employee. Therefore, it will be exempt in the hands of employee. Now, so once you retire from the company, once you leave the job, once you retire from the company, now in this fund, money is there. What money is there? Whatever money you have deposited, whatever money I have deposited, whatever interest you got on your deposit, whatever interest you got on my contribution. So this entire amount is going to be withdrawn by you once, what, sir? You retire from the company. So at the time of your retirement, whatever amount is there, the lump sum amount which you withdraw from this fund, that entire amount also will be exempt. Then we have which fund, sir? Then we have a fund called as recognized provident fund. This is an important fund. From exam point of view, recognized provident fund is little important. What is recognized provident fund telling? Again, now we have created a fund. In this fund, who will put the money, sir? Employee will put the money as well as employer will put the money. Whatever contribution is made by the employee, you are the employee, whatever contribution you are making in this fund, we have to ignore that. Why, sir? Because you are going to put the money in this fund out of the salary which is paid by me to you, and you have already paid the tax on salary. So employee ka contribution should be ignored, and for whatever contribution you are making in this fund, lawmaker says I'll give you deduction under section 80C. Then employer ka contribution. Employer also contributes this money in this fund. So how much ever you contribute, equal amount I will also contribute. But lawmaker says over here, my contribution, the employer ka contribution will be exempt.
How much, sir? Only up to 12% of salary. Irrespective of how much the employer is contributing, the maximum exemption will be only 12% of salary. And what is salary for this purpose? The salary for this purpose is basic plus DA interns plus turnover commission. Now, you are going to get interest on your contribution and interest on my contribution. Whatever interest you get on employee contribution, that is exempt. How much is exempt, sir? Up to 9.5% per annum. Whatever interest you are going to get on employer contribution, that is also exempt. How much is exempt, sir? Up to 9.5% per annum. Meaning, this fund will give the interest on the contribution made by you. If the interest amount is up to 9.5%, that interest will be exempt, whether that interest is on employee ka contribution or employer ka contribution. If the interest is more than 9.5%, what will happen, sir? That extra amount will be taxable. Taxable as what? Salary. And in whose hand is it taxable, sir? In the hands of employee. Now, in this fund, 4 money is there. What are those 4 money which are there? Employee ka contribution, interest on employee का contribution and employer का contribution, interest on employee का contribution, interest on employer का contribution. Now all this money will be withdrawn by the employee at the time when he is leaving the company, at the time of retirement. They say whatever you receive at the time of retirement from this fund will be exempt. The lump sum amount withdrawn by you from this fund at the time of your retirement will be exempt, but condition is there. What is condition, sir? It will be exempt if you complete minimum 5 years in service. It will be exempt if what, sir? If you complete minimum 5 years in working in the company. It will be exempt if you complete minimum 5 years of service. Except in 3 cases. In these 3 situations, exemption will not be applicable. When will it not be applicable, sir? If you are leaving the job within 5 years. Meaning normally if you withdraw within 5 years, it will be taxable. But in these cases, even if you withdraw within 5 years, it will not be taxable. Which are these cases? If you are leaving the job because of your ill health, you are not feeling well, therefore you left the job. Or if the company only discontinued the business, if the employer has discontinued the business, now company only got closed, how can I stay in the company? Or where you are transferring the balance which is there in recognized provident fund, where you are transferring the balance which is there in recognized provident fund into the new employer recognized provident fund. Meaning you are leaving the job in this company. Now because you are joining a new company, whatever money was there in recognized provident fund in the old company, you are transferring it to new company, or you are transferring the money to a fund called as ATCCD pension fund. Okay, you are transferring the money, whatever money was there in the old company ka recognized provident fund, you are directly depositing that money in ATCCD pension fund. So I'll repeat, important. This is recognized provident fund, employee ka contribution, ignore, you can claim deduction under 80C. Employer contribution, my contribution, employer contribution is exempt up to 12% of salary. Now, interest which you get on your contribution and interest which you get on employer contribution, both will be exempt. How much will be exempt? Only up to 9.5% per annum. Meaning, if the rate of interest is more than 9.5%, that extra will be taxable. Now, lump sum amount which you withdraw from this fund, that lump sum amount will be exempt normally if you complete minimum 5 years in service. Sir, what if I withdraw within 5 years? Normally it will be taxable, but in 3 cases you can withdraw within 5 years. One, you are leaving the job because of ill health, or your company only, employer only discontinued the business, or you have joined a new company and transferred the balance in recognized provident fund of old company to the recognized provident fund of new company, or you have transferred the money to ATCCD pension fund. Now, in this fund, interest component is there, no? That is little important. Okay, the interest component of this fund is little important. Now, what is this interest point talking about, sir? So, you get interest on employer ka contribution as well as interest on employee ka contribution. They say interest accrued in excess of 9.5% per annum shall be taxable in the hands of employee, and it will be taxable as what? Salary. And please note, all the things over here, wherever it is not exempt, it is taxable. And if it is taxable, it is taxable as salary, because we are studying which chapter, sir? Income from salary. Now, interest point is very important. If interest on employer contribution, if the interest amount is more than 9.5% per annum, then that interest, that extra interest is there, no? Let us say interest amount is 12%. The fund is giving how much? 12%. But what is allowed as per law? 9.5%. So how much is extra? 2.5%. This 2.5% interest amount is there, no? That will be taxable in your hands, in the hands of employee as what, sir? Salary. Now, what is important is interest on employee contribution, your own contribution. They say interest accrued in excess of 9.5% per annum shall be taxable as salary. This is what is safe for both the things. If the interest is more than 9.5%, then it will be taxable as salary in the hands of employee. However, if the employee has contributed to recognized provident fund, if who? Employee, meaning if you have contributed money in this recognized provident fund in excess of 2,50,000 rupees per annum, meaning if employee ka contribution is more than 2,50,000 rupees, then interest on such excess contribution shall be fully taxable in the hands of employee. Then whatever interest you have got, that interest will be fully taxable. If the interest is how much, sir? If the interest is how much? More than 9.5% per annum, then whatever amount of interest it is, it does not matter. Whatever amount of interest it is, it does not matter. That interest will be fully taxable in the hands of employee. Okay, not okay. Sir, what does this mean? Please see. Normally, interest more than 9.5% is taxable. But if you contribute more than 2,50,000 in a year, then whatever amount of interest it is, whether it is 5% or 10%, it does not matter. Whatever amount of interest it is, whether it is exceeding 9.5% or not, that entire amount of interest will be taxable. Like for example, employee ka contribution, your contribution is how much? 3,50,000. PF ka interest is 6%. Can I say 6% is less than 9.5%? Law says, meaning Income Tax Act says up to 9.5% is exempt. So 6% is within 9.5% only. Now, but still, what is happening over here? The taxable interest in the hands of employee will be 3,50,000 you have contributed. How much is maximum you could have contributed? 2.5 lakhs. So you have contributed excess how much, sir? 1 lakhs. On that, the full amount of interest will be taxable. Though the rate of interest is less than 9.5%, full interest will be taxable. Employee contribution to recognized provident fund is 4 lakh. Now please see this carefully. How much contribution have you made in this fund? 4 lakh rupees. PF ka interest is how much, sir? 12% is the rate of interest. Interest on contribution in excess of 2.5 lakhs. If you have contributed money more than 2.5 lakhs, interest on contribution in excess of 2,50,000. How much is more than 2? See, please note. Up to 2.5 lakhs, only that extra amount is taxable. Correct? More than 2.5 lakhs, full amount is taxable. So how much is more than 2.5 lakhs? 4 lakh minus 2.5 lakhs is 1,50,000. This is the contribution made by you in this fund more than 2,50,000. On that, full amount of interest is taxable. How much is the rate of interest given by the fund? 12.5%. That full interest will be taxable. And excess interest, which is 2.5%. Law allows 9.5%. You have given 12%. So 2.5% is extra. Now that extra interest will be taxable on what amount, sir? 2,50,000. Why? Because on 1.5 lakhs, I have taxed everything. On 2.5 lakhs, which is the contribution which I could have made, on that only that excess amount of interest is taxable. How much is that, sir? 6,250. Please see this carefully. Have you understood this or not? This is very important. This is very important. In examination, they have asked one question only for 2 marks, MCQ question. But if I give that question to you now, you will take 2 years to do. You understood this? Let me check. That question is there or not there here. Tell me the answer for this question. Fast, you should tell. Okay, no time in life. Don't see the answer. Gobe, you should tell the answer. Compute. In examination, you do one thing. Take your textbook and go. Still, you will not be able to understand from which part they have given, sir. You don't even know in which question they are giving, from where they are giving, how they are giving. Fast, you should do. Okay. This is an exam question for 2 marks. MCQ question they had asked. Only for 2 marks. $6,000. What are they asking? What is the income chargeable in the as salary they are asking? Salary means he started working, that means 2,25,000 is his monthly salary. How can it be 6,000? They are asking you to compute the salary of this fellow. If fast, you should do, students. $17 lakhs 720. No, they are asking you to find the salary. Wrong, sir. Wrong, sir. Wrong, sir. Sundari. Wrong, sir. Wrong. 450. How you got that answer, sir? What is the salary? Two lakh. Show your calculation. How are you saying the answer there? When you didn't do the calculation, how are you saying the answer? I mean, go to the last page of the book. Do it again. Go back. What are you going to gain? No problem. Do. No talking. Do fast. Hey, please don't. You're fooling yourself. I hope you're understanding that. No, not you. I'm generally telling. You also, but others do. Please do. Nayan is attending online. Hi, Nayan. Mushroom. Nayan, how is your dot? Nayan's dot is very nice. Nowadays, very less post that person is putting. And why, Nayan? Anything happened between you both? Wrong, sir. Maya is very nice. I'm just waiting for one person to answer. I'll explain. Yeah, fast. Yeah. Right. And guess what? Only for 2 marks this question is asked in exam. Maja is there. But yeah, of course, it was an MCQ question. Which attempt, sir? May 23. Very old question. May 24. All students, please try. Purvi, wrong answer. Aryan, wrong answer. This much time you didn't take for the first time, sir. Yeah, I know. Some questions we know that you'll not be able to solve. And some people too, we definitely know that they'll never be able to solve. Yes, yes. Say it's only right. Yes, sir. You're right. Nayan. Think you'll definitely give the right answer if you have understood the previous concept. You'll definitely give the right answer.
what you should think over here is rate of interest is not given. First, you should find that. Then I think you should not have a problem in life. Yes, sir. What is the rate of interest? Your answer is also right, sir. Yeah. Yes, sir. Yes, sir. Now you parallel. Please see what is happening in this question. Mr. Gube completed his CA in April 25 and he joined XYZ Limited on 1/5/25. So he joined on which date, sir? 1st of May. So his basic salary is 2,25,000. Now he will receive this for how many months? 11 months. Hello? Because he joined when, sir? On 1st of May. Yeah, are you understanding this? 11 months at least, this common sense one. He is paid 12% of basic pay as DA. So this is my basic pay. And what is my dearness allowance? Whatever my basic pay is, 24,75,000 into how much, sir? 12%, which is 2,97,000. And he contributes 11% of his pay and DA to recognized provident fund. What is his pay and DA combined together? This amount is how much? 27,72,000 into 11% of this he contributes. How much he contributes? 3,04,920. Can I say it is within 12%? Yeah, up to 12%. Employer contribution is exempt. Correct? No. So now whatever contribution he's making in this fund, we are going to take what, sir? Employer contribution. How much contribution he has made? 3,04,920, because it is within the limit, that entire amount is exempt. And employee ka contribution, what should I do? Anyways, I have to ignore. Correct? No. Employer ka contribution, your contribution I will anyways ignore. So what is the total of this? No, before this we have to see the interest on employee ka contribution and interest on employer ka contribution. Now, they have given us, if you see further, read the question further, the accumulated interest on the provident fund is 4,9325. So the interest will be on the total amount which is there in the fund. Correct? No. Now, how much is the total amount there in the fund? Can I say 3,04,920? One person's contribution. Like this, how many people have contributed? Employer and employee. So how much, sir? 6,09,840. This is the total money which is there in the fund. Now, interest, how much interest is there, sir? 49,325. Can I say divided by 609,840 into 100? If I do, I'll get the rate of interest. How much? 8.08, 8.09, etc. 8.0888 something is there. So 8.09% I'll take as rate of interest. Now, can I say rate of interest is less than 9.5%? Hello. If rate of interest is less than 9.5%, interest on employer ka contribution will not be taxable. If the interest rate is within 9.5%, whatever contribution employer has made on that interest will not be taxable. But because employee has contributed more than 2,50,000, can I say the entire interest on that will be taxable on that extra money? How much is that interest amount? 4,443. So 4,443 total is how much? 27,76,443. Now this last figure which is there, no, based on how much you are taking. Some people may take 8.0
8, whatever amount they have given into they may multiply. Okay, that last figure may change. So you should see the question in the options. You should see options carefully at that time. Okay, if the difference is 5, 6 rupees, 10 rupees, then please see the nearest option. Do you understand? This one, how I got this? How much employer has contributed? And same amount is contributed by employee. Yeah, so both contributed, so multiply by 2. And on the both people's contribution, you will get interest. How much interest you have got? 49,325. Therefore, we have taken 49,325 divided by both of their contribution into 100. Sir, do we need to consider interest only for 11 months? Now, please note, interest is on the amount which is there in that fund. Okay. So now if I have got the rate of interest as 8.09%, that means it is only for 11 months. That interest, because the contribution was there only for 11 months and we have taken the interest of that amount only 949,325. That is the interest amount. That interest I'll get only for 11 months. So that rate which I have got is only for 11 months. Yeah, of course, that is there. Standard deduction will subtract. Please note, if they are asking income under the head salary, then we will subtract standard deduction based on which regime you are following, 50,000 or 75,000. Yes, 50,000 or 75,000 accordingly. He does not opt means 50,000 you should take as standard deduction. And what is the answer? 2,26,000, 27 lakhs 26,440. Is this clear? Now, the next fund which we have is unrecognized provident fund. Unrecognized provident fund is a very nice fund. This fund is not recognized. See, recognized provident fund important, unrecognized provident fund also important, but very easy, very easy. When compared to recognized provident fund, it is very easy. What is this unrecognized provident fund telling, sir? Whatever contribution is made by employee, ignore. Meaning whatever contribution you have made in which fund, sir? Unrecognized provident fund, ignore. Whatever contribution I have made in the fund, employer has made, exempt. Now, interest will be given on employee ka contribution, interest will be given on employer ka contribution. Interest on employee ka contribution, interest on employer ka contribution, both are exempt. Now, what is happening? Our contributions are exempt. Interest on our contributions are also exempt. Now, we have some money in this fund. That money I'm going to withdraw. Hello. That money which is there, that is going to be withdrawn. So that lump sum amount received by employee on his retirement, that lump sum will be taxable. In case of unrecognized provident fund, your contribution and interest is not taxable when they are getting accrued, but it will be taxable when you are actually withdrawing at the time of your retirement or any time when you are withdrawing it. So when you are going to withdraw the money, can I say total 4 money is there in this fund? When you are going to withdraw the money, total 4 money are there in this fund. What are these 4 money? Your contribution, my contribution, interest on your contribution, interest on my contribution. Lawmaker says very simple. Your contribution which you made, it is like you are putting the money in bank account, you are withdrawing the money from bank account. Is it taxable? Is it an income? So lawmaker says employee ka contribution. Your contribution in the fund is not treated as income, therefore it will not be taxable. Employee ka contribution. Interest on employee ka contribution. You have contributed money in this fund. On that contribution, you are getting interest. That interest will be taxable under income from other sources. As I said, you're putting the money in the bank account. You withdraw money from bank account, you don't have to pay any tax because that is your own money, you are taking it back. That is not an income. But you have put the money in the bank account, bank is giving you the interest on that money. Now, because bank is giving you interest on that money, can I say that interest is taxable for you as income from other sources? Hello. Employer ka contribution is there. Interest on employer ka contribution is there. Both are taxable as salary. Both are taxable as what, sir? Salary in whose hands? The hands of employee. Unrecognized provident fund, superannuation fund, exactly similar to your provident fund. Now, approved superannuation fund is exactly same as your statutory provident fund, and unapproved superannuation fund is exactly same as your unrecognized provident fund. Here there is one small change, but here there is no change. Meaning unapproved superannuation fund is copy paste exactly same. But approved superannuation fund, one small change is there. What is that small change? We will see. Approved superannuation fund. Employee is making contribution to approved superannuation fund. Employee ka contribution should be ignored and you can claim a deduction under section 80C. Please note, when the contribution is made by employee in unrecognized provident fund, no deduction will be given under 80C. When the fund is not recognized, you will not get a deduction under 80C. Okay. Approved superannuation fund, you are contributing the money in approved superannuation fund. Employee ka contribution you should ignore and you will get a deduction under section 80C. Employer ka contribution will be exempt. But here they have put a limit. Maximum contribution which employer can make in this fund is how much, sir? 7,50,000 rupees. That is the maximum amount of contribution which the employer can make in this fund. Now, interest you will get on employee ka contribution, interest you will get on employer ka contribution. Whatever interest you are getting, that is also exempt. Lump sum amount which you withdraw at the time of retirement, that is also exempt. So basically, this is a very simple fund. Only thing is they have put a limit for employer contribution. Unapproved superannuation fund, exactly copy paste word to word same as your unrecognized provident fund. Employee ka contribution ignore, employer ka contribution exempt. Interest on employee ka contribution, interest on employer ka contribution exempt. Then the lump sum amount withdrawn at the time of retirement will have your own contribution. Your own contribution is not treated as income. Interest on your contribution is taxable under IFOS. My contribution and interest on my contribution will be taxable in your hands as salary. Next, we have 80CCD pension fund. One more fund which is there is 80CCD pension fund. After this, we have one last thing which is perquisites to discuss in this chapter. 80CCD pension fund. Sir, what is this 80CCD pension fund talking about? So basically, this is also called as Central Government Pension Scheme or National Pension Scheme or Atal Pension Yojana. Now, what happens in this fund, sir? This is called as National Pension Scheme. Employee contributes money in this fund. Who contributes? This is little important. Okay, because this is also discussed in deductions chapter. Employee contributes money in this National Pension Scheme. Whatever contribution you are making, ignore for salary calculation. And you will get a deduction under section 80CCD1. Employer ka contribution, my contribution in this fund, is allowed as deduction to employer. Under which section, sir? 80CCD2. But what is important over here? What is important over here? Your contribution, employee ka contribution, ignore for salary calculation and claim deduction under section 80CCD1 from your gross total income. My contribution, first you add it to your salary. Whatever contribution is made by employer, this is the first time it is happening. All the previous funds which we saw, nothing like this happened. Whereas in case of 80CCD pension fund, whatever contribution is made by employer, first you add it to your salary, then you can claim as deduction under section 80CCD2. Your contribution claim deduction under section 80CCD1. My contribution claim deduction under section 80CCD2. Now, how much deduction can I claim, sir? Deduction for employee ka contribution. Deduction for whose contribution? My contribution. Employee contribution, whatever contribution he has made, or 10% of salary, whichever is less. And if you are a government employee, instead of 10% of salary, you will get a deduction of 14% of salary. Deduction for employer ka contribution. My contribution which I have made, for that also you can claim deduction under section 80CCD2. How much, sir? Whatever my contribution is there, employer ka contribution is there, or 14% of salary, or 14% of salary, whichever is less. And what is salary, sir? Basic plus DA incomes. Last part of this chapter is perquisites. Perquisites means what, sir? extra benefit company is giving you. Now, if the company gives you money for doing something, then it is allowances. But if company gives you what, sir? That particular thing, that non-monetary benefit, then it will be called as what, sir? Perquisites. Now, please note, it does not mean that perquisites cannot be in monetary terms. Normally, perquisites are not in monetary terms, but it can be in monetary terms also. Perquisites are an extra benefit given by the company. Normally, it is a non-monetary benefit. However, sometimes it can be in monetary term also. Reimbursement of expenditure. So, reimbursement of expenditure means there is some expenses which is incurred by you, company is giving it back to you. So, reimbursement of expenses or any expenses incurred by company on behalf of employee is also covered under perquisites. That will also be taxable as perquisites. Leave travel concession. First perquisite which we are going to discuss is what, sir? Leave travel concession. What is leave travel concession? It is the travel benefit given by the company for travel anywhere in India. What is leave travel concession, sir? Travel benefit given by the company for travel of employee anywhere in India. Anywhere in India. It is exempt under section 10(5). Leave travel concession is exempt under which section, sir? Section 10(5). Now, how much is exempt, sir? If you are traveling by air, then actual expenses or economic class ka airfare, whichever is less. In flight, now we have different class. We have economic class, we have business class, we have first class. Now, here what fare is allowed, sir? Economic class ka fare. Maybe, please note, actual expenses, maybe you traveled by economic class, maybe you traveled by business class, maybe you traveled by first class, it does not matter. But I am going to take only economic class ka airfare, compare that with your actual expenses and take whichever is less. Sir, no, sir, I'm not traveling by air, sir. I'm traveling by any other mode. If you're traveling by any mode other than air, it can be anything. It can be car, bike, train, bus, ship, auto, bullock cart, whatever mode. So if you're traveling by any other mode means if you're traveling by any mode other than air, then check whether the place where you are going. Please note, you can go by car, bike, etc. Whatever way you want to go, you go. But check whether the place where you are going, railway facility is available at that location or not. The place where you are going, is railway facility available at that location? Meaning, is train facility available at that location? Yes, sir. Train facility is available at that location. If train facility is available, then actual expenses or first class AC ka rail fare, whichever is less. Please note, I am going to Chennai from Bangalore. How am I going? I am going to Chennai in my personal car. Now, lawmakers are telling no problem, Dilip, you go by your car. But is train facility available from Bangalore to Chennai? Yes, sir, train facility is available. If train facility is available, take what, sir? First class AC rail fare for that particular distance. Meaning, whatever actual expenses is there, compare that with from Bangalore to Chennai, what is the first class AC ka rail fare, whichever is less. No, sir, the place where I'm going, railway facility is not available. Railway facility is not available at that location where I am going. No problem. Lawmaker says, is there any public transport facility available at that location? Wherever you are going, is there any public transport facility available? Meaning what? Bus facility is available? Yes, sir, it is available. Then compare your actual expenses. You can go by any mode. Compare your actual expenses with deluxe class ka bus fare. Take whichever is less. No, sir, bus facility is also not available. Lawmaker says, if recognized public transport facility is also not available for that location, then take your actual expenses, compare that with first class AC rail fare for similar distance. Meaning, from your location, if what is checked, first check the distance from your location to that place wherever you are going. Let us say the distance is around 200 kilometers. Now, from your location, check where the train goes up to 200 kilometers. Okay, from your location, if the train is traveling anywhere from your location up to 200 kilometers, then take that particular distance. First class AC rail fare for similar distance. Please note. Leave travel concession is exempt under section 10(5). If you travel by air, actual expenses or economic class ka airfare, whichever is less. If you travel by any other mode, then check whether rail facility is available, then take first class AC rail fare. No sir, rail facility is not available. Deluxe class ka bus fare. No sir, that is also not available. First class AC rail fare for similar distance. Compare all these things with your actual expenses and take whichever is less. Now sir, should I travel alone sir? Can I take someone with me? Definitely you can take someone with you. Whom can I take sir? This exemption is applicable for employee himself, or if he travels with his spouse, or if he travels with his children, or he travels with his dependent relative. Dependent relative means what, sir? Please note, dependent relative. Now, spouse, children need not be dependent, but relative should be compulsorily dependent. Relative means mother, father, brother, and sister. Now, leave travel concession exemption is available for 2 children born on or after 1st of October 1998. So this exemption will be available only for 2 children. Those children who are born on or after 1/10/1998. Sir, children born before this date, no problem. Any number of children you can take. But children born after this date, only 2. You can take all the children if you want, but exemption I give only to 2 children. Okay. Now please note, multiple birth in second pregnancy is considered as 1. So if multiple birth happened in second pregnancy, then lawmaker says I will treat it as only 1. But in multiple births happens in first pregnancy, whatever it is, I'll consider that only. Now this 2 journey exemption you can claim in a block of 4 years. So here one block is equal to how many years? 4 years. And in a block, how many years ka exemption? In a block, how many exemption you can claim? 2 exemption or 2 times. One block will contain 4 years, and year means over here calendar year. Present block is calendar year 2022 to 2025. So let us say we get only 2 exemptions in a block. You can travel any number of times, but exemption you can claim only 2 times. Let us say in the previous block, I did not travel at all. In the previous block, I did not travel at all. Now, can I carry forward in the current block, sir? Lawmaker says, yes, you can carry forward, but only one travel you can carry forward. And that one travel also should be used within the first year. Carry forward is possible. Employee can carry forward only one travel from the previous block, which should be used in the first year of the present block. You did not travel at all. Now you can travel 3 times. You traveled once in the previous block. Can you carry forward anything? No. You traveled 2 times in the previous block. Can you carry forward anything? No. Only if you have not traveled, you can carry forward. Medical facility. Here there is one small amendment over here. Medical facility. Medical facility means what, sir? Company is paying for medical. What does this line mean now? I did not understand it now. Sir, reality you exempt file madidira. You will not understand. We will understand, those who know Kannada. So for youth out of syllabus only. But I feel that is incomplete. Sir, reality you exempt file madidira. Ignore Google. No problem. Whatever she is telling. Medical facility. Medical facility. Medical facility. Treatment is happening in India. Treatment is happening in India. Then it will be exempt only if the treatment is happening in government hospital or government approved hospital or employer owned hospital. Please note, if the treatment is happening in India, you can claim exemption. When can you claim exemption? If the treatment is happening in government hospital, government approved hospital or employer ka owned hospital, then exemption can be claimed. In all other cases, it will be taxable. But if the treatment is happening outside India, expenses for treatment and expenses for stay will be exempt. Expenses for treatment and expenses for stay will be exempt as per the limit prescribed by RBI. In every question, they will tell you what is the limit of RBI. As per the limit which is given by RBI, that amount will be exempt. And please note, if you're going outside India, only patient and along with patient one attendant can go. Expenses for travel. Normally, expenses for travel will not be allowed, but expenses for travel will be allowed if you are an employee whose gross total income is up to 8 lakhs. This is changed to what, sir? 8 lakhs. However, if employee's gross total income is up to 8 lakhs, then even travel expenses is allowed as exemption. Normally, if treatment is happening outside India, treatment and stay is allowed as exemption, but travel is not allowed as exemption. Travel will be allowed as exemption if your income is up to how much, sir? 8 lakh rupees. Gross total income is up to 8 lakh rupees. So this is a change over here. Now, sir, treatment, can I take only my treatment, sir? No, you can take benefit for treatment of employee, spouse of employee, children of employee, dependent relative. Dependent relative means father, mother, brother, sister. Now, please note, in question, sometimes they will give you mediclaim taken by the company or health insurance taken by the company, it is exempt. If company is giving the benefit of health insurance or mediclaim, you can claim exemption. If the company gives you life insurance, then it will be taxable. You should be knowing that treatment by family doctor, treatment by any private clinic, all those things will be taxable. Only what will be exempt, sir? Government hospital, government approved hospital, and employer ka own hospital. Now, gift you are receiving. Gift under new income tax law, gift amount they have changed. Gift is received. Gift by employer here. Gift is in cash or gift is in kind. If gift is in cash, then it is taxable. If gift is in kind, then what is the market value of that gift? If company is giving you a cash gift, it is fully taxable. Company is giving what type of gift? Cash gift, fully taxable. But if the gift is in kind, then if the value of the gift is less than 5,000, if the value of the gift is less than 5,000 or equal to 5,000, it will be, sorry, not less than, more than 5,000 or equal to 5,000, it will be taxable. If the value of the gift is less than 5,000, then it will be exempt. Now, please note, here gift means anything. Company is giving a gift voucher to you, that also is taxable. Company is giving a, normally gift means DJ Paso baby. Correct? That is under other sources. But here the company gives you anything. Company gives you anything. Hey, you are retiring from the job. Your colleagues are giving. Yesterday we saw one question. Correct? Mobile phone, colleagues gave mobile phone worth of 50,000 something. Is that taxable? No. But company gives that mobile phone. Yes, it is taxable. Now this is also one nice point. Loan given by employer without interest or at concessional rate of interest. Please note, most of the time, whether it is GST or it is income tax, wherever there is a limit, no, the chances of institute asking that type of question is high. Okay, like in the previous case also there is a limit, and that limit is changed also. So chances of them asking the question about that limit is high because people will get confused. They'll give the figure also like that only. That you will get confused. 5,000 only they'll give you, or they'll give you 6,000. Now they will ask you whether fully exempt or only 1,000 rupees is exempt. Loan amount. So you are taking loan from the company. Why are you taking loan? For whatever reason you want, you are taking loan. Loan given by employer without interest or at concessional rate of interest. Company is giving you a loan without interest or at concessional rate of interest. Now, what is the purpose of loan? Loan is given for medical treatment or loan is given for any other purpose. If the loan is given for medical treatment of specified disease, then lawmaker says it is fully exempt. Loan is given for any other purpose. Loan amount is up to 20,000 rupees, exempt. If it is for specified disease, medical treatment purpose, exempt. Loan amount is up to 20,000, exempt. In all other cases, if the loan amount is more than 20,000, it will be taxable. How much will be taxable? That is very important. That is very important. You should take the loan amount which is outstanding at the end of every month. What is the payable loan balance, loan amount outstanding at the end of every month? Take that, multiply it with the interest. What is the rate of interest, sir? Take the SBI ka interest rate as on the first day of previous year. How much is the State Bank of India charging? And take that interest is rate as on first day of previous year, means 1st of April. Subtract from that the interest charged by employer. The difference is the benefit which you are getting. Multiply it with the loan amount outstanding at the end of every month. What is important is this interest rate they will give you on per annum basis, but here they are asking you to calculate on monthly basis. Okay, so whatever interest they have given, multiply it by 1 by 12 if the number of months are less. Like you see example over here, Miss Renuka is an employee of Priya's Saris and she took a loan of 1 lakh rupees for her marriage. The loan was taken on 1st of December 25 at the rate of 5%. And SBI ka interest rate is how much? 12%. So how much is the difference? 7%. That is the benefit which the employee is getting. She repays 10,000 on 5th of every month starting from 5th December 2025. So she took the loan on 1st of December and from 5th of December she started paying also. Compute the taxable amount. Now we should see when did she take the loan? December. So in the year December, January, February, March, 4 months the loan was there with her. Now how much was the loan amount outstanding at the end of every month? I will see. She took the loan of 1 lakh rupees and she paid 10,000 rupees on 5th of December. So how much is outstanding at the end of the month? 90,000 rupees. So 90,000 rupees into 9% into 1 by 12. 90,000 into 9% into 1 by 90,000 into 7% into 1 by 12. Why 1 by 12, sir? Because this 7% is per annum and 1 by 12 will tell me for 1 month how much it is. How much, sir? 525. Similarly, January, by end of January, the outstanding amount got reduced by 10,000. So how much is the outstanding amount? 80,000. 80,000 into 7% into 1 by 12. So like this, I will do till March and my total taxable perquisites will be 1750. We have something called as ESOP. ESOP, yes, sir. Cash gift, even 1 rupee is taxable. Kind excess amount is meaning if it is more than 5,000, fully taxable. Meal voucher, only extra amount is taxable. Now this value also they have changed in the new act. Next is what's the ESOP? ESOP means employee stock option plan. Company gives you the shares of the company at a concessional rate. ESOP means shares of the company are offered to the employee at a concessional rate. So what is the benefit which you are getting? On the date when you are exercising the option, what is the market value of that share? Less what is the price at which they are giving you. On the date when you are exercising the option, meaning at the date when you are purchasing the shares from the company, what is the market value of this less the issue price into number of shares which are there will give you what's the taxable perquisites. Now capital gain point also I will discuss here only. Cost of acquisition of shares acquired through ESOP shall be the fair market value as on the date of exercising the option. A date of exercising the option means what? On that date when you are actually purchasing the shares from the company. Okay, so that is the amount which I take for calculating perquisite, and that same amount will be taken as my cost of acquisition for computation of capital gain, because that is the money which is paid by, that is the money which is there at the date when I purchase the shares or I exercise the option. Now the period of holding of these shares should be counted from the date when the shares are allotted to me. Gift of shares acquired through ESOP shall regarded as transfer and capital gain will be applicable. So if you give these shares acquired through ESOP, then also it will be regarded as transfer. So this one question is there. Education facility. If it is given to employee, if I am educating you, I will get benefit from you. So education facility given to employee is exempt and therefore no perquisites. Education facility given to any other person related to employee other than employee ka children is always taxable, fully taxable. If it is given to employee ka children, then it is exempt based on how much is the value of that education. If the education is happening at employer ka own school or employee ka tie-up institution, own institution or tie-up institution, and if the value of that education is less than 1000 rupees per month, then it will be exempt. If the value of education is more than 1000 rupees per month, then it will be taxable. If the education is to any other person, then it is also fully taxable. Movable asset except car. Movable assets are given by the company except car. Except car. Movable asset. Movable asset means company has given you TV, washing machine, refrigerator, AC, etc. Anything other than car. Lawmaker says, check whether the asset given by the company to you, is it owned by the company or has the company taken that asset on rent? Very simple this is. All these points are simple and very easy and compulsory. They may ask also if there is a question on perquisites. Normally salary question will be asked in combination. Normal plus allowances or normal plus perquisites. Something like this they'll ask combination. Okay, now movable asset, car, except car. Movable asset except car, like AC is there, refrigerator is there, washing machine is there, sofa is there. That movable asset which is given by the company, check whether it is owned by the company or it is taken on rent by the company. If it is owned by the company, the value of perquisites will be 10% of cost of that particular asset. But if it is taken on rent by the company, the value of perquisites will be what, sir? Rent or higher charges paid. If it is owned, 10% of cost. If it is hired or rented, rent or higher charges paid. Amount recovered by the employer from the employee should be reduced. Whatever amount who is recovering, employer is recovering from employee, that should be reduced. Any laptop or computer is given, exempt. Please note, if it is owned, 10% of cost. If it is taken on rent, whatever rent they are paying. And if you are paying anything to the company, reduce the value of that amount from the value of perquisites. Sale or transfer of movable asset by the employer to the employee. Now please note, two things are there. Company is giving you the asset, company is selling you the asset. Giving you the asset, you are just using it. Selling you the asset, meaning now the ownership is getting transferred. So sale or transfer of mobile assets by the company. Employer. So in case of sale, what is happening, sir? In case of laptop and computer, perquisite value will be WDV minus consideration. And WDV you should take by giving depreciation at what rate, sir? 50% per annum under WDV method. Car, WDV minus consideration, and car ka WDV you should find by giving depreciation at what rate? 20% at which method, sir? WDV method. And for any other assets other than laptop and car, any other type of asset which is given by the company, furniture, sofa, AC, etc., take perquisites equal to WDV minus consideration. If WDV means the value of that asset at the time when they are giving that to you. Consideration is what you are paying it to the company. So here WDV is what, sir? Find the WDV by giving depreciation at 10% per annum. Under which method, sir? Straight line method. Depreciation shall be computed for a completed year. Completed year means if the asset is given on 1st of January, from 1st of January till 1st of January is 1 year, meaning till 31st of December. So completed year. Let us say you have used the asset for 3 years, 4 months. After that, you are purchasing it from the company. I will give depreciation only for 3 years because completed year only will be considered. Sir, what if it is 3 years, 11 months? 3 years only. So depreciation should be computed for a completed year. Part of year should be ignored. Completed year shall be calculated from date of acquisition till the date of transfer of the asset. Lunch or meal facilities provided by the company at the office or through vouchers. Value of the meal is up to rupees 50, fully exempt. If it is more than 50 rupees, then amount in excess of 50 is taxable. Extra amount is taxable over here. Refreshment, snacks, non-alcoholic beverages given by the company at office, that is also fully exempt. If you are working at a remote location or you are on an offshore duty, company gives you something at that time, then it is fully exempt. Transport facility is given by the company. What facility? Transport facility. Now, you are an employee of transport company, whether you are a railway employee or airline employee, that will be exempt, or you are any other type of transport company employee, it is fully taxable. You are any other companies का employee, not in transport company का employee, then taxable. If the company gives you the facility of transportation from office to home, home to office, some buses will be there of company, that is always exempt for all types of employees. Rent free accommodation or house facility, important. This rent free accommodation and HRA both are important. Sometimes they may ask you HRA, sometimes they may ask you rent free accommodation. And in perquisites, what are most important thing is like rent free accommodation is important. Then we have this car facility given by the company. These things are very important. Rent free accommodation or house facility. You are a government employee or you are not a government employee. If you are a government employee, then it will be taxable as per the license fee which is decided by government. If you are a government employee, then whatever rent free accommodation they have given you, the house which is given by the company, that will be taxable as per the license fee which is decided by government. No sir, I am not a government employee, I am any other type of employee. Then check whether the house which is given by the company, is it owned by the company or is it hired by the company? Is it owned by the employer or is it hired by the employer? If the house is owned, value of perquisites will be 5% or 7.5% or 10% of salary. If it is hired by the employee, then the value of perquisites will be 10% of salary or rent or higher charges paid, whichever is less. The house which is given by the company to you, in normal cases, the house which is given by the company to you, if it is owned, 5%, 7.5% or 10% of salary. If that house is taken by the company on rent, whatever rent they are paying, or 10% of salary, whichever is less. Now, if the house is given along with other assets, along with furniture if they are giving, then check whether that furniture given, is it owned or it is taken on rent. This is the value of house, but in house a sofa, TV, AC, everything will be there. So for those items, check whether it is owned or whether it is rented. If it is owned, 10% of cost will be taken as value of perquisites. If it is taken on rent or higher charges paid. Now in all the cases, whatever money company is recovering from you, whatever amount is recovered by the company from the employee should be reduced. Population, now how will I come to whether it is 5%, 7.5% or 10%? You should see the population of the area where the house is given to you. If the population as per the latest census of the place where the rent free accommodation is provided is up to 15 lakhs, then you take 5% of salary. If it is more than 15 lakhs up to 40 lakhs, 7.5% of salary. More than 40 lakhs, 10% of salary. Population you should see. What is salary for this purpose, sir? Salary is BD Bumsy. BD Bumsy means what, sir? Basic pay, DA in terms, bonus, allowances, only the taxable amount, monetary benefit, and commission. Any type of commission. Now, while calculating BD Bumsy, while calculating what, sir? Basic pay, DA, etc. While calculating BD Bumsy, salary should be taken on due basis. And while calculating salary, do not take all these items. What should you not take, sir? Retirement benefit, perquisites, contribution to any fund, advance salary or arrears of salary. Then, perquisite value should be calculated from the date of occupying the house, not from the date of allotment. Company has given the house to you in the month of April, but you started staying in the house from the date of November. Company has given the house in the month of April, but you started staying in the house from which month, sir? November. So I will start calculation of perquisite from which month, sir? November month. Exemption for 90 days in case where two houses are allotted. If company has given you two houses, then for 90 days you can take the value of only one house. Whichever house you want to take, you can take that value. Better take whichever value is less. But after 90 days also, if you have both the houses, then it will be taxable. Both of those will be taxable. Where two houses are allotted to the employee due to his transfer or because of any other reason, he can claim the exemption of one house whose perquisite value is higher for a period of 90 days, and thereafter the value of both the houses will be taxable. Note 6. Hotel benefit is given by the company. What benefit is given? Hotel benefit. Value of perquisites will be 24% of salary, which is BD Bumsy, or rent charged by the hotel, whichever is less. Now, if the hotel facility is provided for a period up to 15 days due to transfer of employee, then it will be fully exempt. Many times it will happen that the same house is given to you for more than 1 year. If the same house is given to you for more than 1 year, then please don't. Your salary may increase, but house is same. Now, because of increase in salary, the perquisite value will also increase. Because I have to take 5% of salary, 7.5% of salary, 10% of salary. When the house is same, but because the salary is increasing, the perquisite value of this house is also increasing, which is wrong. So lawmaker says, if the same house is allotted for more than 1 year, then the perquisite value of this house shall not be more than this limit. Where the employer provides for residential accommodation owned or rented to his employee for more than 1 year, then the value of the perquisites for the current year shall not be more than what was the value of the rent-free accommodation for the first year when the house was given. What is the value of the house for the first year when it was given? Multiply it by index for the current year. What is the index for the current year? Divide it by index for the first year. Index for the current means cost of inflation index for the current year this year, divided by index for the first year means index for that year for which in which the house was first given to you, not in the year 2001 2. In index for the first year means that year ka index when the house was first allotted to you. If you do that, you'll get some amount. Now, this is the maximum value of perquisites. If the value of perquisite is less as per the calculation, take that. If it is more than this amount, take this amount. Whichever is less, you should take. Tell me the answer for this question. Four lakh. You're telling the salary amount. Children education loans Are you claiming deduction or not? Just write a note that since there is no information about children's given, if you are not claiming benefit of children, if you are claiming benefit, write that. Did you understand? Many people take the advantage. If the company is giving, I will claim the benefit now. It is company's responsibility in real to check whether the employee has children or not. Based on that, they should give children education allowance or children hostel allowance, even rent-free accommodation, etc., or house rent allowance. It is company's responsibility. Income tax law specifically says, if employee is claiming any benefit, it is your responsibility to check whether that benefit is claimed validly or not. Now, basic pay I'll take as it is 25,000 into 12 months. How much? 3 lakh rupees. DA is how much, sir? 60,000. Now here, what have you taken? If you have taken it as, how many of you have taken, sir? 200 rupees ka exemption I have claimed, sir. How many of you have taken fully taxable, sir? Because no information is given. Okay, write that note. Whatever you are doing, no problem. Because maximum people have taken fully taxable. So what is the answer? This is 36,000. So total is 3,96,000. That is my salary for calculation of perquisites. Hello. Correct, no? The house is at a population where population is 14. So 14 lakh population means how much will I take? 5% of salary. Salary for perquisite is this amount only, 3,96,000 into 5% is how much? Rent free accommodation, house ka value is how much? 90? 93,000? 19,800. Now they have given some assets which are hired, taken on rent. If the assets are taken on rent, I'll take rent paid. So can I say 12,000 plus 2,000, which is, yeah, how much? 14,000. And there is also owned asset, which is how much? 35, 25, 35,000 into 10%, 3,500. So total value is 43. A total you should tell 3 lakh 3,96,000 plus 19,800 plus 14,000 plus 3,500, 4,33,300. This is when you take it as fully taxable. 4,33,330 rupees. But if you take it as exempt, then your amount will be 4,27,780 rupees. And question is silent about DA also. Oh, if the question is silent about DA, we should assume it is not in terms. And here we have calculated by assuming it is in terms. Problem is there. Problem is there. So since the question is silent about DA, 3,36,000 will be the salary for perquisites. 3,36,000 into 5% will be how much? 16,800. All other things will remain same. 4 lakh. 4 lakh. 800. 4,30,000. 300. Sir, but DA should not be assumed, not in terms. Yes, Aryan, you're right, Aryan. Okay. Now there is a very good question which says about difference between once they had asked this question for 5 marks or 4 marks, what should the employee take, whether rent-free accommodation or house rent allowance? Now company gives you car facility. Company is giving what facility? Car facility. Now car, if you are using the car only for office purpose, then can I say as an employee I am not getting any benefit? Because I am not getting any benefit, there is no perquisites. But if the car is used for personal purpose, only for personal purpose, very nice benefit I am getting, because I am using, the company is giving the car to me and I am using only for personal purpose. Then check whether it is owned by the employer or it is rented. If it is owned by the employer, 10% of cost will be taken as value of perquisites. If it is taken on rent, then rent or hire charges paid by the employer. Now, what is the value of perquisites, sir? You take the value of perquisites of car. If it is owned, 10%. If it is rented, whatever rent they are paying. Add running and maintenance charges, petrol, service charge, etc. as running and maintenance charges. Add driver's salary or chauffeur's salary if the company is paying. Add them only when the company is paying. You will get your value of perquisites. But what is most important is this car, which is partly used by you for office purpose and partly used for personal purpose. Now, in case the car is partly used for office purpose and partly used for personal purpose, check whether the car which is given, whether it is owned by the employee or owned by the employer. If it is owned by the employee, then check who is paying for running and maintenance charges. If you are owning the car and you are only paying the running and maintenance charges, what benefit are you getting? No benefit, there is no perquisites. But if it is your car and if I am paying the running and maintenance charges, whatever running and maintenance charges are paid by me, from that subtract the value of car. If the car is up to 1600 cc, 1800 rupees per month you should subtract. If the car is more than 1600 cc, 2400 per month you should subtract. If the car is owned by me and running and maintenance charges are paid by you, 600 rupees per month if it is up to 1600 cc and more than 1600 cc, 900 rupees per month will be taken as value of perquisites. And if the car is owned by me as well as running and maintenance charges I am only paying, then 1800 or 2400, which depending upon 1600 cc or more than 1600 cc. Now, on the above amounts, add 900 rupees per month if the company is also paying driver's salary. For these amounts, you will add 900 rupees extra if the company is also paying driver's salary. But if the company is reimbursing driver's salary, take the amount reimbursed and subtract 900 rupees per month for driver's salary. If more than one car is given, which you are using for partly office purpose and partly personal purpose, then only one car ka benefit you can take for partly. All other cars will be taken as only personal purpose. And month should be taken completed month. If the company has given the car to you on 10th of April, you should not take April month, you should take from May month. Any amount recovered by the employer from the employee should be reduced from value of perquisites. So amount recovered should be reduced. Now here also there is one small change. Gas facility is given by the company, electricity facility is given by the company, water facility is given by the company. Gas facility, electricity facility, water facility is fully taxable. Servant facility, gardener facility, watchman facility and personal assistant given is also fully taxable. Now note, in case 1 and case 2, including car facility, including for car facility, if the facility is provided by the employer to the employee, then it will be taxable only for specified employee. Now, who is a specified employee? That employee whose salary is, this is changed. Specified employee ka salary was 50,000. Now the specified employee's ka salary has been increased to 4 lakh rupees. Specified employee ka salary has now been increased to 4 lakh rupees per month. हाँ सर ಮಾಡೋಣ ಸರ್ ಮಾಡೋಣ per annum ಏನಂ 4 lakh rupees per annum. Servant, gardener, watchman or personal assistant they are giving, then including car facility. Now the salary of that specified employee has been increased from 50,000 to 4 lakh rupees. If the company is giving you credit card facility, then check whether credit card is used by you only for office purpose or personal purpose. If it is used only for office purpose, exempt. If it is used for personal purpose, then it is taxable. Club facility. Club means Saturday, sir. Don't ask. A club means what, sir? You are taking any corporate club ka membership, golf club ka membership, etc. No problem. Then it will be fully taxable. But if the club is corporate club, sports club, fitness club, health club, then it will be exempt. Employee ka obligation incurred by employer or reimbursed by employer. This is important. And expenses was supposed to be incurred by you, but I am incurring that expenditure. Then that is treated as perquisite and it will be fully taxable. Employer contribution to recognized provident fund, approved superannuation fund, 80 pension fund. Who is contributing? I am contributing more than 7,50,000 in a year in total, not individually, but in total. If I contribute more than 7,50,000, then that excess amount, whatever extra I have contributed, let us say I have contributed 9 lakh rupees. What is extra? 1,50,000. That full 1,50,000 will be fully taxable. Following perquisites are exempt. What are the perquisites which are exempt? Laptop and computer the company is giving, fully exempt. Mobile phone, telephone, fully exempt. Tea, coffee, snacks, non-alcoholic beverages, fully exempt. Goods given by the company to you at a concessional rate. Health insurance, mediclaim, personal accident policy or group insurance policy, all these are fully exempt. Following receipts are exempt under income from salary. So there are other points in this salary chapter. Basically, this topic is over. Now, these amounts will always be exempt. Remuneration received by officials of embassy from foreign state. So if your foreign government ka embassy is there over here, you are receiving salary. Here you are working, you are receiving salary over here only. Because it is received in India, it should be taxable. Maker says it is exempt. The remuneration received for services rendered in India as an employee of foreign enterprises is also fully exempt. Condition is that the foreign enterprises is not engaged in business and your stay in India should be less than 90 days. Basically, many people come to India from foreign countries for some training purpose, and if they are over here for less than 90 days, then it is exempt. Salary received by non-citizen, non-resident for services rendered in connection with employment of foreign ship. So if you are working in a foreign shipping company and you come over here with the ship and you work over here for some period, whatever salary you are getting, fully exempt. Remuneration received by a foreign government employee during his stay in India for specified training. So if any foreign government employee is coming over here, government employee is coming over here for training purpose, whatever remuneration he is receiving, fully exempt. Pension received by recipient of gallantry awards. So they will give you something called as Padma Bhushan, Padma Vibhushan, or Mahavir Chakra, Ashoka Chakra, some chakra they will give you, know. Whatever pension you are receiving under that scheme is fully exempt. These are the allowances which will be fully exempt. Allowances given to High Court ka judge, salary and allowances paid to United Nation organization ka employees, slumpy allowances granted to High Court or Supreme Court ka judge. These are exempt only if you are opting for optional regime. Allowances granted to government employee who are working outside India, that is exempt under both the regimes. Now this is the most important thing. Sir, if I am a person who is opting for default tax regime and if I am an employee, if I opt for default tax regime, what is that benefit which I am going to lose, sir? If you are a person who is an employee and if you opt for default tax regime, you cannot claim the benefit of any allowances under section 1014. 1014, what are the allowances covered under 1014? You cheat, duck hat. HRA is 1013A. You cheat, duck hat is 1014. They will be fully taxable except daily allowance, transport allowance, conveyance allowance, tour allowance. All these things are related to travel only. Daily allowance when you go outside, food, tea, coffee expenses. Transport allowance, office to home, home to office. Conveyance allowance, local transportation, traveling allowance to any other city you are going. You will get only this exemption, but all other types of allowances will be fully taxable. HRA under section 1013A would be fully taxable. Leave travel concession under section 10(5) would also be fully taxable, and no deduction will be given to you under section 16 except standard deduction. How much standard deduction will they give, sir? 75,000. Yeah, okay. I'll do one thing. We will take RTP question. We'll take up one question of RTP of the salary, and I'll give how much minutes shall I give? Relief under 89, you ignore, sir. We'll see that. Oh, problem is there. Question in 2 pages means problem is there. How to take? Oh, you're able to take. Hey, quickly, can I say 5 minutes is sufficient? If 5 minutes is sufficient, no. Roughly, you should do. Fadafat you should do. Is the question visible to you? Compute the income taxable under the head salary under optional regime. Only 9 points are there, right? Yeah. Hey, is the question visible, everyone? Not visible, huh? If you open, you will open answer in that. That is the problem. Because problem is when you are watching web series, you want to know what is happening in the next episode. Don't watch that. Yes. 1014 is allowed for optional regime. Done. First 3 points is done. First 2 points so easy, only multiplication is to do. Shakti, tell me the answer for this question. 8. Something you have got in life? Something only we are trying, sir. And something only we are getting, sir. Okay. Just check your answers. We'll see, wait, sir. Now, please see. Computation of salary of Miss Nisa. Basic pay is how much? 45,000 into 12 months. How much? 5 lakh? Hey, everyone got same answer? Wow, they'll not give any marks for this. Dearness allowance is 10,000 per month and 30% forms part of retirement. Can I say full DA is taxable? 1 lakh 20,000. Bonus is 1 month of basic pay. Basic pay is how much? 45,000. Bonus is 45. Till here everyone got correct answer. Wow. She contributes 18% of her salary, meaning basic plus DA, towards RPF, and the company contributes the same amount. Her contribution to, can I say, ignore. Employee contribution to RPF, ignore. Now, what will happen to employer contribution? They are contributing 18% of salary, 18% of basic plus DA. Now, what is basic plus DA? 5,40,000 plus 1,20,000 into 18%. Correct? No? Yeah, but how much is exempt, sir? 5,40,000 plus DA in terms 3,000, meaning 1,20,000 into 30%, which is 36,000. Sir, I did not understand how you got 36,000. How much is exempt? 12% of salary is exempt, and salary for the purpose of recognized provident fund is basic plus DA in terms plus turnover commission. Here, basic they have given, DA in terms they have given. Correct? No? So, DA in terms is how much? 30%. 30% of what? A total DA is 1,20,000. 30% of that is how much? 36,000. So, I have taken basic, which is 5,40,000, and 36,000 as DA in terms. Hey, did you all understand this calculation? Hello. Into how much? 12%. So how much is that amount and difference? This is no. What is this amount? 1 lakh. And how much is the other amount? 69,000. So what is the difference? 40. 680. Motor car owned by the employer, which exceeds 1.6 liters, provided to owned by the company. A car is owned by the company. It is provided to employee. From which date? 1st of November. So can I say I should calculate from the date of 1st of November, which was used for both office and personal purpose. Repairs and maintenance expenses of 50,000 is fully met by Nisha. A car is owned by employer. Expenses are paid by employee, and it is a self-driven car. That means no driver is there. Can I say in such cases 900 rupees I'll take? Hello, sir, why 900? Did you understand why 900 rupees? Because car is owned by employer, running and maintenance charges by employee, 900 rupees because it is more than 1600 cc. 900 into 5 months: November, December, January, February, March. 4,500. Company pays medical insurance. Ignore medical insurance. Her employer gave him or her. Sometimes it happens. Institute will do mistake. Her employer gave her a rent-free accommodation in Mumbai from 1st April 24, meaning this year is 25-26. The house was given last year. The house was taken on lease by Rose for 12,000 rupees. The perquisite value of the accommodation in the last year is 55,000. So for the current year, what is the perquisite value? The house was taken on lease. A company has taken the house on lease. So can I say 10% of salary or rent or lease paid? Now what is salary for perquisites? BD, Bumsy, basic plus DA in terms or full DA? A, basic plus DA in terms plus bonus plus commission is not there. Allowances are not there. Monetary benefit is also not there. So what will I take, sir? Can I say I will take salary for this purpose is my basic pay, which is 5,40,000, huh? And DA in terms is how much? 36,000. Bonus is the total of this is 6,21,000 into 10%, 62,100. And how much rent they are paying? 12,000 into 12, 1,44,000. So I'll take whichever is less, which is, but this should be compared with 55,000 into current year ka. This last note, if you remember last note which we wrote, 55,000 into 376 divided by 363. How much is that? 56,970. Whichever is less will be taken as value of perquisite. Hello, whichever is less. So how much will I take, sir? 56,970 rupees. Hey, did you understand this calculation? A very easy calculation. This is, we first find the perquisite value and we multiply the previous perquisite value with the index values. Company incurred an expenses for treatment of her daughter abroad, including stay expenses of 1,50,000, and this was permitted by RBI. Can I say because it is permitted by RBI, we will ignore it? Company also incurred expenses in relation to foreign travel expenses for medical treatment of her daughter. How much, sir? 80,000 rupees. Now this, what will I do? Do you remember this amendment is there? You understand? Amendment question is there. Therefore, amendment ka question they have made and they have asked in the examination. So what is the answer for this? Will it be exempt or not exempt? If your gross total income is up to 8 lakhs, it is exempt. Now, what is your gross total income? No information they have given. They have not given information about gross total income. Have they given? That means whatever income I have, that is only my income. So, what is the total of whatever income I have earned? Do the total 5,40,000, 1,20,000, 45, 49, 680, 4,556. So, can I say my gross salary before travel expenses is how much? 150. Now I'll get my standard deduction of, why, sir, 50,000? Because he has opted for what? Optional tax regime. Correct? No. So how much, sir? 7,66,000. Okay. So can I say this is less than 8 lakhs? So this will be exempt. A travel benefit will be exempt. Why travel benefit will be exempt, sir? A normally travel benefit is taxable, but exemption will be given if your gross total income. Now here her net salary is 7,66,150, which will be her gross total income because they have not given information about any other income earned by this person. Yeah, are you clear with this point? So this will be exempt. So your final answer also will be same. Your final answer will also be what, sir? Same amount. 7,66,150 rupees. Hello. Hello, 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 hello. Is this clear, everyone? Now there is one more point in this salary relief under section 89 for salaried employees. Now Priya Saris is the employer. We have an employee, Wesley is the employee. Now what happens? Relief under 89 says if you were supposed to receive salary in any previous year, and that amount if you have received in current year. I was supposed to receive something in last year, but I did not receive that in last year. I have received that amount in the current year. Now, because you have received that amount in the current year, your salary amount in the current year will be more. Because your salary amount in the current year will be more, you will have to pay more taxes in the current year. Now, in that year, let us say I worked in the company in the year 23-24 and the current year is 25-26. In that year, my actual salary was 10 lakh rupees, but they paid me only 9 lakh rupees. Because of which I will have to pay tax only on 9 lakhs. In the current year, my actual salary was 10 lakh rupees, but because I did not receive the salary at that time, that pending salary they paid me now. 1 lakh rupees was pending over here, they paid me now. Now, because of that, what will happen? In the current year, don't you think I will have to pay salary on 11 lakhs? And in that year, I would have paid salary only on 9 lakhs. Actually, I should have paid salary on 10 lakhs in that year. And in current year also, actually, I should have paid salary on 10 lakhs. Now, because in the current year, I'm paying salary on 11 lakh rupees, government is collecting more taxes from me. Hello, in the current year. In the current year, I'll be paying more taxes, relatively more taxes I'll be paying. Now, the difference between the tax on this amount and the difference between the tax on this amount will be taken as your relief under 89. But how is it calculated, sir? How is it calculated? Please tell us that, sir. Did you understood what is relief, sir? Because you are receiving your past year ka salary in the current year, because of which our current year ka tax will increase. So whatever was that increased or incremented tax you are paying in this year, and whatever was the less tax which you paid in the previous year, compare both of them. Difference between that will be taken as relief under section 89. Now very simple. How do I calculate this? Now let us say you worked in my company. You started job in the company from 1st of April 2023. At that time, I told your salary will be 60,000 rupees per month and you will get a bonus of 1,20,000 rupees. And you are opting for optional regime. So how much salary I actually paid you? Salary I paid you 60,000 rupees, 7,20,000. But I told you this year I don't have money. The company did not perform well. So I will not be able to pay you the bonus. So I will pay this bonus to you in future years. You agreed for it and you took only 7,20,000. Okay, therefore standard deduction of 50,000 is there and your actually in hand salary is how much? I mean the taxable salary for you is 6,70,000. Yeah, actually your salary should have been 720 plus 120. Bonus also I should have paid, no, but you did not pay. Correct, no? 8,40,000 less 50,000. Your actual salary should have been 7,90,000, but your in hand what you actually got is only 6,70,000. Now, because you got only 6,70,000 or because your income from salary is only 6,70,000 in this year, can I say you will pay tax only on 6,70,000? So what is the tax on 6,70,000, sir? 48,360 rupees. But actually you should have paid the taxes on 7,90,000. Correct? No, actually you should have paid the taxes on 7,90,000. You should have paid the taxes of what, sir? 73,320. You have paid a tax of 48,360. That means you have paid less tax in this year. How much less you have paid? 24,960 rupees you have paid less. How much, sir? 24,960 rupees is the less tax which is paid by you in the current year. Hey, this part you have understood. Less tax you have paid in the current year. Now, I told you that I'll pay you that extra amount in the future years. Now, in future, what happened? Salary of 75,000 per month is the salary for 25-26. You are going to get a bonus of 1 lakh rupees in 25-26. And I also told that your pending bonus of that year will be paid by me to you in the current year. How much, sir? 1,20,000. So your current year ka salary will become 90 plus 1 lakh plus 1,20,000, which is 11,20,000. From this you subtract 50,000. You will get how much, sir? 10,70,000 rupees. Now the 10,70,000 is your current year ka salary. You first compute the tax on this current year ka salary, which is 1,38,840. Okay, 1,38,840 is your tax. Yeah, but can I say actually your current year ka salary should have been only 9,50,000? Why, sir? Because this bonus was pertaining to that year. Now, because you have added the bonus in this, your salary became 10,70,000. Now, your actual salary, if I don't take bonus, it would have been only 9,50,000 in the current year. Now, because you added the bonus, you are paying some extra tax. If you would have not received the bonus, your salary would have been only 9,50,000. You compute the tax on 9,50,000. Meaning, in this time you have paid extra tax of how much? 32,440. 32,240 rupees. Please see. Money which I was supposed to receive that time, I am receiving this time. Whatever I was supposed to receive at that time, that I am receiving at this time. Effectively, whatever less I paid at that time should be the tax which I should pay at this time. Hello, my tax was less by 24,960 rupees at that time. This time also, the tax which I should pay extra should remain same only, but it is increasing. Why is it increasing? Because I am pushed to an higher slab. In this year, I should have paid tax only at 20% because my salary crossed 10 lakhs. I am paying tax at what, sir? 30%. If because I am pushed to an higher slab from 24,960 rupees, my tax amount got increased by 32,240 rupees. Do you understand this point? Actually, even if I would have received that money now, my extra tax should have been only this much, whatever I paid less at that time. Now, because my extra tax is more than whatever I was supposed to pay, the difference between 32,240 is a tax which is paid by me, and what is the tax less paid by me at that time will be taken as relief under section 89. This amount will be taken as what, sir? Relief under section 89. Is this point clear to you all? Relief under section 89? Yes, sir. This I should deduct before cess or after cess. You can deduct before cess, sir. Or you deduct after cess only, no problem, because this is including cess. It will not make any difference. But before cess, if you did, that's good. Is this clear? That is all about this chapter called as income from salary. We'll do one thing, we'll take a break. 15 minutes break we'll take, and then we'll continue. Anyone has any question? Next, we'll continue income from house property. In this chapter, you understood what are the two amendments? One is the limit of 8 lakhs and limit of 4 lakhs. Now, please note, because there are two amendments, there are high chances of them asking question on amendments. May month is an amendment month normally. The questions normally will be asked of whatever amendments were there. Okay, we'll meet at what time, sir? 11 o'clock we'll meet. Welcome back, students. Welcome back. All students, I hope I'm audible. And also the screen is visible. Income from house property. Very easy chapter, very simple chapter. One of the easiest chapter in your entire income tax law. Now the charging section is section 22. Section 22 to section 27 are the different sections which are covered in this chapter. What is section 22 telling? Section 22 says rental income or annual value of a house property will be taxable under the head income from house property if two conditions are satisfied. The rental income or annual value of a house property will be taxable under the head income from house property if two conditions are satisfied. There should be a house property and assessee should be owner of such house property. There should be a house property and assessee should be owner of such house property. There should be a house property and assessee should be owner of such house property. Both the conditions should be satisfied. You should have a house property, and what is house property, by the way? Building and land upper to rent to that building. There should be a house property, and assessee should be owner of that house property. Now, if the assessee is in the business of renting of house property, if you are an assessee who is in the business of renting house property, if it is a commercial property, the entire income will be going to which head, sir? Business or profession. And if it is a residential house property, you are in the business of renting residential house property, the entire income will be taken as what, sir? Income from house property. Now, please note, for income tax purpose, your house property is divided into two categories. One is called as let out property, another which is a property which you have given on rent. Now, because it is a let out property, a property which is given by you on rent, you are receiving rent from that property. Because you are receiving a rent, it is always taxable, and is taxable under income from house property. If it is a self-occupied property, then check whether it is self-occupied for residence purpose or self-occupied for business purpose. If self-occupied for residence purpose, if it is self-occupied for business purpose, kindly ignore it. Why? Because you are already showing it under business. Please note, if you are having any property where you are doing business, that means you will not be paying rent to anyone. Because you are not going to pay rent to anyone, that means you will not be claiming rental expenses while computing your business income. Therefore, they say please ignore that property. Now, if it is a self-occupied property for your residence purpose, if you have up to 2 self-occupied property, then it is exempt. If you have more than 2 properties, then 2 properties you can claim as exemption, and remaining all the other properties will be treated as deemed to be let out property. And please note, if the property is not occupied by you, if it is an unoccupied house property, if it is what, sir? Unoccupied house property, it is a self-occupied property. Let out property always taxable. If you have more than 2 self-occupied property, deemed to be let out property, and that will also be taxable. Now, how do I compute the income from house property, sir? I will take municipal value, compare that with fair rent, and take whichever is higher. That whichever is higher, I'll compare with standard rent and take whichever is lower. That will be my expected rent. Expected rent I'll compare with actual rent and take gross annual value. From the I'll take whichever is higher. That will be my gross annual value. From gross annual value, I'll subtract municipal taxes. I'll get my net annual value. From net annual value, I'll subtract deductions. Section 24A, you should remember the section number 24A, standard deduction, NAV into 30%, and 24B, interest on loan. You subtract this, you will get your income from house property. Now, what is municipal value? That is the value of the house property as per municipal records. A municipal value is what, sir? Value of the house property as per municipal records. Then we have fair rent, reasonable amount of rent charged for similar kind of property in that same locality. Standard rent, rent as per Rent Control Act. It is the maximum amount of rent which can be legally recovered from that house property from the tenant. Actual rent is rent received plus rent receivable minus unrealized rent. Municipal taxes, important point. Municipal taxes is the tax which you pay on the house property. It is a tax levied on the house property by the municipality or local authority, and it is also known as house tax, property tax, sewerage tax, or local tax. It is allowed as deduction on payment basis. Only if you pay it, you can claim it as deduction. It is allowed as deduction only if it is paid by the owner, and no deduction will be allowed of municipal taxes if it is paid by the tenant. If municipal taxes is given in percentage form in the question, then take it as a percentage of municipal value. Did you understand what this line is meaning? If it is given in percentage form, take it as a percentage of municipal value. Only if it is paid by owner, you can claim it as deduction. Now, actual rent is what, sir? Rent received plus rent receivable minus unrealized rent. Now, unrealized rent can be subtracted if you satisfy 4 conditions. Which are these 4 conditions? Tenancy should be bona fide. Tenant should have vacated the house property. Tenant should have not occupied any other house property of the same assessee, and reasonable steps should have been taken by you to recover such unrealized rent. Then deduction under section 24. Now you can subtract 2 types of deduction. One is 24A, which talks about standard deduction. Standard deduction will be given flat 30% of NAV. So only when I have an NAV, I will get a standard deduction. For self-occupied property, we don't have an NAV. If I don't have NAV, I will not get any standard deduction. And for let out or deemed to let out property or deemed to let out property, I will have an NAV. Therefore, I can also claim 30% of that as standard deduction. Any expenses for house property, I will not get deduction. Okay, many times they'll give in the question they have paid rent or they'll have paid repair charges, electricity charges, water charges. All those things will not be allowed as deduction. Instead of them, flat 30% will be allowed as deduction as standard deduction. Next is 24B, interest on loan, important deduction for the house property. Now, if you have taken a loan for house property purpose, whether you have taken the loan from bank, financial institution, family members or friends, it does not matter. If you have taken loan for the purpose of your house property, that loan can be for construction, purchase, repairs or renovation of house property. Whatever interest you are paying on such loan will be allowed as deduction under section 24B. Now, please note, loan can be taken from any person. Loan should be for construction, purchase, repairs, renovation of house property. And interest is allowed as deduction whether you have actually paid it or not. Municipal taxes is allowed as deduction only when it is actually paid, whereas interest is allowed as deduction whether it is actually paid or not. Interest on interest, which is called as penal interest, interest on interest or penal interest, is not allowed as deduction. Interest paid on fresh loan, which is taken for repayment of existing house property loan, will also be allowed as deduction. So if you have taken a new loan or a fresh loan for repaying the existing house property loan, on that also whatever interest is paid by you, that will be allowed as deduction. Any interest paid to a non-resident person who is staying outside India will also be allowed as deduction only if the TDS has been deducted and paid to the government. So if you are taken loan from outside India and you are paying interest to any non-resident person, then that interest will be allowed as deduction if TDS is deducted on that interest amount. Now, how much interest is allowed as deduction, sir? That is very important. How much interest is allowed as deduction? Sir, whatever amount of interest I am paying, can I claim fully deduction, sir? No. If it is a let out property or deemed to be let out property, here there is no limit. Any amount of interest you are paying, full amount of interest you can claim as deduction. But if the property is a self-occupied property, what property? Self-occupied property. And if it is self-occupied for residence purpose, normally I will give you an interest of 30,000 rupees per annum. I'll give an interest of how much, sir? 30,000 rupees per annum. And in special cases, I'll give interest of how much, sir? Up to 2 lakh rupees per annum. I'll give interest of up to 2 lakh rupees per annum. Now, loan is taken on or after 1/4/1999. When will I get this 2 lakh rupees? Condition number 1. The loan should be taken on or after 1/4/1999. The loan should be taken for construction or purchase of house property. If the loan is taken for construction of house property, the construction should be completed within 5 years. The construction should be completed within 5 years. 5 years from what date, sir? 5 years from the end of the financial year in which the loan has been taken by you. Now, very important, very important. See, this is the only difference, or this is the only point under the income from house property which is different under default regime. All the things are same. Optional regime, default regime, there is one difference only under this chapter, income from house property. What is the difference, sir? With respect to interest. So if the assessee has opted for default tax regime under section 115 BAC, then he will not get deduction under section 24B for interest paid on self-occupied property. So if you have a self-occupied property, on that self-occupied property, if you have paid any interest under section 24B, that interest will not be allowed as deduction. Now, assessee opts for optional tax regime or assessee is opting for default tax regime. If assessee is opting for optional tax regime, then whether it is let out or deemed to be let out property, if it is let out or deemed to be let out property, full amount of interest is allowed as deduction. If it is a self-occupied property, then maximum 30,000 rupees will be allowed. In special cases, you will get 2 lakh rupees. If it is a default, if you are an assessee who is opting for default tax regime, let out property, self-occupied property, no problem. As a let out property, deemed to be let out property, no problem. Full amount of interest is allowed. But for self-occupied property, no interest deduction is allowed. You okay, not okay? So simple thing is what, sir? If you are opting for default tax regime and if you have a self-occupied property, you will not get any interest ka deduction. Now we have a concept called as pre-construction period interest. Very simple concept it is. Pre-construction period means whenever you take the loan, okay, it does not matter when you have taken the loan. From the date of taking the loan, till the year before the year in which construction or purchase of the house property is completed. That year is called as pre-construction period. Let us say I took the loan 5 years back and now in this year the construction got completed. So they say from the date when you took the loan till the date of completion of construction till the year before the year in which construction was completed is called as pre-construction period. What is pre-construction period means? All the years before the year in which construction is completed. Many students make a mistake. They take pre-construction period as the period from the date of taking the loan till the date of construction completion. No. Take from whenever the construction is completed. See that year. Before that, what is the year? Whenever the construction was completed, see that year. Before that, what was the year? Meaning, if the construction is completed on 28th of July 2025, before that the year was 31st March 2025. From this date, go back till the date of taking the loan. This period is called as pre-construction period. So in simple words, what is pre-construction period? All the years before the year in which construction was completed. Now pre-construction period interest is allowed as deduction in 5 equal installment. You can claim deduction of pre-construction period interest in how many installments, sir? 5 equal installment from the previous year in which construction was completed. From which year I can take for 5 years, sir? From the year in which construction got completed. So how much deduction will you get for every year? See, the deduction will be given not when you pay the interest, but when the construction is completed from that year. So how much deduction will you get, sir? Whatever interest is for that year plus share of pre-construction period interest. Okay. So interest for that year you should take because the loan will be running. So interest for that particular year. Add the share of pre-construction period interest for that year. It will be divided by 5 now. So for that year, how much share is coming? You take that. That is the total amount of deduction. Interest for that year plus share of interest for that year. That is the total amount of interest. Now this depends on whether it is self-occupied property or let out property. If it is a self-occupied property, maximum 2 lakh rupees you will get. If it is a let out property or deemed to be let out property, then it will be fully allowed as deduction. Okay, not okay. Hello. We have a beautiful concept called as concept of vacancy. Vacancy means what, sir? House property is empty or house property is not occupied by anyone or house property is available for rent. Now, vacancy and unrealized rent are not same. Unrealized rent means what? That person stayed but did not pay the rent. Vacancy is no one is there only. Okay. So I have a house which I gave on rent to Virat Kohli from 1st April 25 to 30th September 25. After this, the next tenant came on 1st of December. So what is happening over here? From 30th September till 1st of December, for a period of 2 months, the house was not occupied by anyone. I wanted to give it on rent, but I could not find any tenant at all. So this 2 months ka period will be taken as period of vacancy. So normally what will happen? Normally our gross annual value is expected rent or actual rent, whichever is higher. Correct? No. What is our gross annual value? Expected rent or actual rent, whichever is higher. Now in vacancy also I should do the same thing, but with one small change. Whenever there is a vacancy, you compare your gross annual value. Compare with whom? Actual rent plus vacancy period rent. The logic is very simple over here. What is the logic over here is, see, when you take expected rent, you will take expected rent for what period? Can I say you will take expected rent for full year? But when you are going to take actual rent, can I say actual rent you will take only for let out period? So they are telling if the property was not vacate, you would have received the rent, no? So add to your actual rent, add what, sir? Vacancy period ka rent. Compare that with expected rent. In case there is a vacancy, what should I do? Take expected rent and compare that with actual rent plus vacancy period rent. Now there are 3 possibilities which are there. What are those 3 possibilities? Possibility number 1, my expected rent is more than actual plus vacancy period rent. Whatever expected rent is there, that is more than actual plus vacancy period rent. In such cases, your gross annual value will be your expected rent. Your gross annual value will be what, sir? Your expected rent. Case number 2, your expected rent is less than actual plus vacancy period rent. Meaning, who is more, sir? Actual plus vacancy is more than expected. In such cases, your actual rent is there, no, that will be taken as gross annual value. Third possibility is there. What is the third possibility? Your expected rent is equal to actual plus vacancy period rent. In that case also, only the actual rent. Hey, please note, vacancy period rent is only taken for comparison purpose, but it has no other impact. For comparison purpose, I will take, if expected rent is more, I will take expected rent only. If actual plus vacancy is more, I'll take actual rent only as gross annual value. You okay? Yeah. So if a person, now common sense you should apply. You are staying in a house property on rent. You have stayed only for 20 days. How many days rent you will pay? 20 days or full month? Now it is, will you pay 20 days rent or full month rent you will pay? Full month he will take or 20 days he will take? In PG they are taking full month rent. Okay, but in the house etc. you will fight with that Gube. You will tell no, I'll pay only 20. Ignore that. You have worked in some company. You worked only for 10 days. Now because you did not work for 20 more days, will you take rent? Will you take salary for full 30 days or only 10 days? Or will he not give salary at all because you have worked only for 10 days? Don't you think you'll fight and take for 10 days? You go, I have worked for 10 days. No, correct. No. So just like that, if the person has stayed in the property, because we have questions wherein we saw that in between the increment was made. On 15th of October, increment is made in the rent. When the increment is made in between the month, so what will happen? Will I calculate the increment from middle of the month or from the next month? Middle of the month. Middle of the month. So if a person has stayed for some part of month, take it only till that date. Now we have partly let out and partly self-occupied property. Sir, will we be doing income tax? Now we'll do income tax today and tomorrow. Actually, 5 days ka schedule was there, but you have some test I heard. Yeah, some batch they have test. IQ. Yeah, I know. Repeat, sir. Okay. So we are supposed to complete this on Monday. Actually, we were supposed to complete on 7th, but I am supposed to complete it on Monday. Tomorrow also I'll take income tax. GST is just what? What is GST? Nothing is there. Can't be it off again. Hey, how many of you feel GST is difficult? If you feel GST is difficult, then ignore. This paper is gone. Seriously. Hey, because the only thing which is going to help you clear the examination is GST. I will show you the question paper. I'll show you the question paper. We'll take, I told you, you remind me. We'll take 3 attempts, 4 attempts, 5 attempts, 6 attempts, 10 attempts question paper. I'll show you, and I'll show you questions which are asked in GST. You'll laugh at the examiner. What nonsense question you're asking? You're insulting us. We are CA students. You say like that. So you'll not answer only. Therefore, partly let out and partly self-occupied property. A partly let out and partly self-occupied means what, sir? Some portion of the house is given on rent. Some portion of the house is self-occupied, or same house is given on rent for few months and few months it is self-occupied. So partly let out and partly self-occupied means what, sir? Partly let out means the house property is self-occupied for few months and some portion of the house property is self-occupied for few months, or some portion of the house property is self-occupied and the balance is let out in the previous year. Partly let out, partly self-occupied, area-wise and time-wise. If it is partly let out, partly self-occupied, area-wise, then how do I do the computation? Very simple, very easy. If it is partly let out, partly self-occupied, area-wise, divide everything. Divide everything means what, sir? Divide municipal value, fee, rent, standard rent, municipal taxes, then interest in the proportion of let out and self-occupied. Divide everything in the proportion of let out and self-occupied. If it is area-wise, area-wise means what? You have 2 floors. Ground floor is self-occupied. First floor is given on rent. You have a house, 40% of the house is given on rent, 60% is self-occupied. So this is what's our area wise. If it is a partly let out and partly self-occupied house property, area wise, if it is partly let out, partly self-occupied, area wise, compute the income from house property separately for let out portion and self-occupied portion. Sir, how will I take this let out portion and self-occupied portion separately? By taking municipal value, fair rent, standard rent, municipal taxes, interest proportionately for let out portion and for self-occupied portion. And interest will be allowed as deduction. If it is a self-occupied property, maximum how much will be allowed, sir? 2 lakhs. And if it is a let out property, then it will be fully allowed as deduction. Okay, yeah. If it is a partly let out and partly self-occupied property, time wise, partly let out, partly self-occupied property, time wise, then what will happen, sir? Then you have to compute your income from house property for the full year as if the property was rented for full year. Meaning, ignore that it was partly let out and partly self-occupied. Compute the income from house property as if the property was let out for full year. But what is very important to be noted over here is actual rent should be taken only for let out portion. Actual rent will be taken only for let out period. What will you take full year? Municipal value, fair rent, standard rent, municipal taxes, and interest will be fully allowed. Meaning you should take those things for full year. Those things you should take for full year when it is partly let out, partly self-occupied. Time wise, area wise, proportionately. Time wise, assume this it is rented for full year and take it for full year. So see, if it is partly let out, partly self-occupied, area wise, municipal value, if it's self-occupied is 60% and let out is 40%, municipal value, fair rent, standard rent, municipal taxes, and interest. If you see, I'm taking in the ratio of let out and self-occupied. Actual rent I'll take only for let out period, and standard deduction will be allowed as usual. Now, interest which is there, interest is very important. For self-occupied portion, maximum I can claim only 2 lakh. For let out or deemed to be let out portion, no limit is there, fully allowed. And if it is time wise, take everything for full year. Actual rent only for let out period. Interest also will be allowed for full year. Then we have co-ownership, a concept called as co-ownership or joint ownership. What is co-ownership or joint ownership, sir? If the same property is let out for, sorry, co-ownership means same of a property is owned by more than 2 or more people, then it is co-owned property or jointly owned property. Computation is very simple. Why, sir? Compute the income from a house property normally. Ignore that it is co-owned property. Compute the income from house property normally. Whatever final answer you get, you divide that amount between each co-owner in the ratio of their ownership. But one very important thing, if the co-owned property is, a self-occupied property, each co-owner will get the benefit of 30,000 or 2 lakhs. Interest benefit for each co-owner you will get 30,000 or 2 lakhs. So where the house property is jointly owned by 2 or more person, then such type of house property is called as co-owned property or jointly owned property. The owners of such property will be called as co-owners. Computation of income from house property. Compute the income from house property normally as if there is no co-ownership, and then divide the income from house property which is derived at step number 1 between the co-owners in the ratio of their ownership. Note, if self-occupied house property is co-owned, then each co-owner will get the benefit of interest of 30,000 or 2 lakhs, and if the ratio is not given in the question, take it as equal. Then we have what's, sir? Income from house property. If you have more than 2 self-occupied property, this is also very easy. Please note, I can take the benefit of let out property only for self-occupied property benefit. I can take only for 2 properties. All other properties will be let out, correct? No, or deemed to be let out. Now, if I have more than 2 properties which are self-occupied, lawmaker says if you have more than 2 properties which are self-occupied, if you have more than 2 self-occupied property, you can claim exemption only for 2. Remaining will be treated as deemed to be let out property. Now, how will I come to know which I should call as deemed to be let out, which I should call as self-occupied? Now you have to do the computation. In examination, normally they'll ask only for 3 properties. Okay, so I should do the computation. See, I have 3 houses. All the 3 houses are self-occupied. Lawmaker says case number 1. What are the different possibilities? There are totally 3 possibilities. Possibility number 1. House 1, house 2 is self-occupied. House 3 is deemed to be let out. Possibility number 2. House 1 and house 3 is self-occupied. House 2 is deemed to be let out. Possibility number 3. House 2 and house 3 is self-occupied. House 1 is deemed to be let out. Meaning, in each of the cases, because everything is self-occupied, in each of the cases, one of the property should be deemed to be let out. Okay, and do the computation. Do the computation of income from house property. Check wherever the income is lowest. Wherever or whichever case the income is lowest, that case will be taken as your income from house property, or that is the best option. Best way of computing this question is find the answer as if all the properties are self-occupied. Find the answers as if all the properties are deemed to be let out. Why, sir? Because when all the properties are taken as self-occupied, you can directly start with NAV, taking NAV as 0. For self-occupied property, net annual value is 0. Please note, many people make mistake. Even in partly let out, partly self-occupied, they'll do everything for self-occupied property. No, directly you take dash, 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 and directly you start with NAV as 0. Because self-occupied property means what, sir? Nothing is there. It is occupied by me. NAV will be 0. Only thing you can subtract is interest. And for income for deemed to be let out property, you will have to do all the computation as normal. Then section 25A, taxability of what, sir? Arrears of rent or unrealized rent. Arrears of rent means what? Arrears of rent means the rent which is there under dispute. Unrealized rent means rent which I was supposed to receive, but I did not receive that rent. Arrears of rent and unrealized rent are taxable in the year when you recover them. In the year when it is received, it is taxable. How much is taxable? Whatever you receive into 70%. Why is 30% is not taxable? Because if you would have received it that time, you would have claimed standard deduction. No? So you just remove that standard deduction and only 70% of amount received is taxable. Arrears of rent and unrealized rent will be taxable in the year when it is received under income from house property. Such amount would be taxable even if the assessee is not owner of the house property. Even if you are not the owner of the house property, that amount will be taxable in your hands. Okay. Composite rent, you know what is composite rent? If the house property is rented with other assets, then the rent which you receive is called as composite rent. Now there are two possibilities. You know that what is the rent which you are charging for house property, what is the rent which you are charging for other assets. If it is separable, income from composite rent is separable, then the rent for house property will be taxable under income from house property, and rent for other assets will be taxable under PGBP or other sources. If you cannot separate it, then the full amount of rent will be taxable under PGBP or income from other sources. Now, if you can't let out, if let out of a house property is not possible or not acceptable, if you cannot let out a house property or no one will accept the property, the other party will not accept that house property without other assets or services, then the total amount of rent will be taxable under PGB or under IFOS. Whether composite rent is separable or not, whether you can separate the rent or not, the entire amount will be taxable under PGP or other sources. Now, house property is held as stock in trade by you. You are holding a house property as stock in trade. Then income from sale of house property will be taxable under PGP, and income from renting of a house property will be taxable under IF, income from house property. Now, if you are a person who is in the business of dealing in house properties, then your income normal will go under PGBP, but if you are renting, it will go under income from house property. Now, if you have unsold flats, if you have unsold house properties, then lawmaker says I will wait for 2 years. Even after 2 years, if you are not giving it out rent, or if you are not able to sell them, I will wait for 2 years. Even after 2 years, if you are not able to give it on rent, or if you are not able to sell them, then I'm going to assume them to be deemed to be let out property. If the house property is located outside India, will it be taxable in India, sir? If the house property is located outside India, will it be taxable in India? If you are resident and not resident, yes. If you are resident but not ordinary resident, or if you are a non-resident, then normally no. But if it is received in India, yes. And if house property is located in India, it is taxable for everyone. Now, self-occupied benefit is there no up to two self-occupied properties exempt. That benefit is given only for individual and HUF. Now, municipal taxes paid outside India will also be allowed as deduction if you are computing income from house property for a property located outside India. Proof is not necessary for non-residential house property, meaning even stadiums, swimming pools can be treated as house property. If building consists of different flats, each flat will be taken as one house property. Refund of municipal taxes is taxable under income from other sources and not income from house property. Refund of municipal taxes. And if the assessee lets out the house property to his employee for smooth running of business, then the income which is going to receive will be taxable under PGP. Now, who is the owner, sir? Owner means owner includes legal owner, beneficial owner, and deemed owner. Deemed owner means what, sir? If you transfer the house property to your spouse without consideration or for inadequate consideration, though the actual owner is your wife, you will be deemed as owner of that property. Two exclusions are there, except in case of divorce or except in case of agreement to live apart. If you transfer the house property to your minor child, excluding minor married daughter, without consideration or for inadequate consideration, then in such cases also, who will be deemed owner? Individual will be deemed owner. The person who has transferred. Then holder of impartable estate. If you are holder of impartable estate, sometimes what happens, property is given to someone so that it cannot be divided. That person who is holding that impartable estate, he will be deemed as owner of that property. Member of cooperative society. In flats, apartments, no, the entire building will belong to the association and you are member of that association. So each person who is the member of that association, who is the owner of that flat, they will be taken as deemed owner. Members shall be deemed as owner, though the property is in the name of society or association. Transfer of possession without transfer of movable property, the transferee shall be deemed owner. And if you give any asset on a long-term lease for a period of 12 years or more, who is the deemed owner, sir? The transferee will be deemed owner. We'll do one question. Yes, Sundari.
Is voting for 6 months, voting for 3 months, and next 3 months it's vacant. So will there be vacancy in the next 3 months or
Yes. No, we will have vacancy rent for that 3 months period.
opposite one of the LOP for 6 months?
No, it does not matter. Vacancy is there for 3 months.
For 6 months LOP. Next 3 months is next it's vacant.
Same, no. Now, how does it? So, if it is self-occupied, your intention is it to keep with you only?
No, like how do we
That's what. So, first 6 months, it was let out. Then you self-occupied it. Now, after self-occupied for 3 months, what is your intention now?
it's vacant.
Yeah, vacant means, do you want to keep it for yourself and you have shifted somewhere else? Then it is unoccupied property, self-occupied property. But if your intention is to give it on rent, that means it is vacancy. What is your intention in that property? We'll see this question. No, this is easy question. This is also, yeah. Jan 25 RTP question. 5 minutes is sufficient. Cheating you should not. In house property, there is no amendment.
Income
48,000. This is Sundri. Wrong answer, I think. One more answer I was saying 62,000. Total income will be
So, income from house property is 70,000.
okay. Now see, Mr. Yogesh constructed a house in the year 1920 with 3 independent units. During the previous year 25-26, Unit 1 50% of floor area is let out for residential property at a monthly rent of 20,000. Rent for January 26 could not be collected from the tenant and a notice was given to vacate the property. So the property was rented for 10 months. Okay, for how much, sir? 20,000 rupees per month, and January month ka rent was not collected, unrealized rent. No other property of Mukesh is occupied by tenant. Unit 1 remains vacant from February and March. So this is vacancy rent. When it is not put to use, when it is not put to any use, okay. Unit 2, 25% of the property is self-occupied for business purpose. Unit 3, 25% of the property is self-occupied for residence purpose. They have given other details like municipal value, fair rent, standard rent, municipal taxes, repair. See, till here information is important. Repair is not important for calculation of income from house property. Interest on borrowed capital for construction of the house property is relevant. Ground rent not relevant, and insurance premium paid not relevant for computing income from house property. Income of Yogesh from business is 2,40,000 without debiting house rent and other incidental expenses, without subtracting house rent and other expenses. Determine the taxable income of Yogesh. Please note, last line leading is very important. Okay, any question, because we should know whether he has opted for 115 BSc or not. Now, now, wow, maja hai. Now you see many people changing their expression. Oh sir, I did not read that line only, sir. A, he pays tax under default tax regime. Yeah, are you understanding? I hope you are understanding what type of mistake you'll do in your life. Keep doing, no problem. So computation of income from house property. Shall we compute? Fatafat will compute. Okay. Computation of income from house property. Particulars. Self-occupied property, let out property. A municipal value, fair, rent, whichever is higher, compare that with standard rent and take whichever is lower. That will be my expected rent. Compare that with actual rent and take whichever is higher. That will give me my gross annual value less municipal taxes. That will be give me my net annual value less standard deduction less interest on loan. Standard deduction and interest on loan section number is important. Now let out properties 25%. Sorry, 50%. Self-occupied property is 25%. I'm taking self-occupied for residence because self-occupied for business should be ignored. Can I say self-occupied ting 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 NAV is 0, therefore no standard deduction. Can I say no interest deduction also? Because he has opted for default tax regime. For self-occupied property, how many seconds I took to answer? No seconds only minutes I took. Yeah. Now please see, let out property. Let out property, what is the municipal value given in the question? Municipal value is 2,88,000 into how much, sir? Compulsory you should show this calculation. Though you know, but yeah, but I mean, if you're writing like this, better like this. How much? 1,44,000. Fair rent is how much? 2,98,000 into 50%. Evlo 1,40,000. Whichever is higher is. Compare that with standard rent. How much is standard rent? 2,78,000 into 1 lakh. Expected rent is 1,39,000. Actual rent is how much, sir? Actual rent is rent received plus rent receivable minus unrealized rent. Rent received is how much? Actual rent is 20,000 rupees into 10 months minus 1 lakh 80,000. Correct? No. Can I say I don't have to do that comparison of adding vacancy period rents because anyways this is higher. So I'll take gross annual value as 1 lakh. Municipal taxes is 1.8 lakhs into how much? 1.8 Allah. 1.8 Allah. 1 lakh. They have given the amount. Municipal taxes 30,000. 30,000 is municipal taxes they have given in the question only. 50% only I'll take, which is 15,000. 1,65,000. Stand deduction 1,65,000 into 30%. 40. And interest on loan. How much interest on loan they have given? 90,000 into 50%. What is my income from house property? Hey, was this difficult? But still you did mistake, no? Maja is there. So what is my net income from house property? Now they have given one more point in this. What is your taxable income they have told? Now that means business income also I should find. Now business income is important over here. This is very easy. This is nothing. Nothing is there in this. What is my profit before house expenses? 2,40,000. And can I say 25% I'm using for this? Now tell me, can I subtract rental expenses? Hello. Rent, can I subtract 25% rental expenses? No. Hey, because self-occupied for business, that means you're not going to claim any rental benefit. Hello. But can I say other things I'll get? Municipal taxes, repairs, interest, ground rent, and what is this? Insurance. Can I say all these things I'll get? How much will I get? Now, fatafat I will do. I mean, in examination, you should show separately and take 25%. But tell me the total of this. 1,93,000. Into 25% is how much? 48,000 less other expenses for house property 48,250. Total is 1,91,000. So net income from net income is 2 lakh. $75 from whom? This fellow? No. Income from house property standard deduction is there, not from business income. Yeah, so PGBP income, we don't subtract standard deduction. 75,000 you are subtracting. Yeah, subtract. Salary. So just now we studied salary. Hey, is this clear? Now please note, in case of business, it does not matter ground rent, first floor rent, whatever it is. It is everything is allowed as business expenses, including insurance paid, etc. Okay, yeah? Let us continue and discuss the next topic. What is the next topic for discussion? Income from capital gain. So I think capital gain will be able to complete today. If possible, we'll complete other sources. Tomorrow we'll start with PGB and other chota topics we'll do. If possible, tomorrow second half I'll do. Tomorrow I'll extend little bit because we have to complete by day after tomorrow. Income from capital gain. Okay, tomorrow I'll not take class for evening students. I'll extend and we'll complete this something. Income from capital gain. Income from what, sir? Capital gain. Yeah, income from capital gain. We short capital gain. Very easy chapter. Very important chapter. Important chapter from your exam point of view. There is no changes in this chapter. Okay, meaning. But if you were a person who wrote examination in the previous attempt, then you may feel changes are there. Meaning there was some concept like before 23rd July, after 23rd July. That concept is still there. But yeah, there is no change in this chapter as such. Income from capital gain. Very simple, section 45(1). Section 45(1) talks about what, sir? Charging section. It says any profit or gain arising from transfer of a capital asset shall be taxable under the head income from capital gain in the year in which transfer took place. What is a transfer? Transfer includes sale, exchange, relinquishment of capital asset, extinguishment of capital asset, conversion of capital asset into stock in trade, compulsory acquisition of capital asset, allowing possession of immovable property, transfer of share in cooperative society as per TOFA, and redemption of zero coupon bonds. Section 24, section 2, clause 14, which gives the meaning of capital asset. What is a capital asset? Now here there is a small change in the sense you already know this is a new asset which is added, nothing else. In capital gain, this is a new asset which is added. Section 2, clause 14. It as of now, whatever you have discussed, did you feel that there is any point where major change is there? No, very simple. Rebate change is important. Salary change is important because salary limits are changing. So that is important. And we have seen this year's what is that? RTP, they have given a question on that point. Section 2, clause 14, capital asset means property of any kind held by the assessee, whether connected to the business or not, but it shall not include stock in trade, gold bonds and gold certificate, movable personal effects, rural agricultural land, except DJ Paso BV. A DJ Paso BV is a movable asset, but still it is treated as capital asset. It is still treated as capital asset. What is DJ Paso BV? Drawings, bullions, DJ, drawings, jewelry, paintings, archaeological collections, sculptures, shares and securities, other works of art, and bullion and virtual digital assets. These are treated as capital asset. Then what else is capital asset? Any securities held by foreign institutional investors or any investment fund registered under section or notified under section 115 UB. And ULIP, which is not exempt under section 1010D. All these things are treated as capital asset. Now, capital asset can be of two types. One is long-term capital asset, another one is short-term capital asset. If it is a long-term capital asset and if you transfer long-term capital asset, the gain which you get is long-term capital gain. If you have short-term capital asset, if you transfer short-term capital asset, the gain which you get on that is short-term capital gain. Now, how will I come to know whether it is a short-term or long-term capital gain, sir? You should see your period of holding. Period of holding is the period from the date of purchase till the date of transfer. If the period of holding is more than 1 year or more than 2 years, it is a long-term capital asset. If the period of holding is less than 1 year, then it is, or less than 2 years, it is short-term capital asset. 1 year period of holding is applicable for whom, sir? For 4 items. Any securities other than units which are listed in recognized stock exchange of India. Securities listed in recognized stock exchange of India. Units of equity oriented mutual fund. Units of unit trust of India and zero coupon bonds. For these 4 items, the period of holding should be taken as 1 year. And for all other types of capital asset like jewelry, unlisted shares, immobile property, painting, etc., the period of holding will be taken as how much, sir? 2 years. So if you are holding it for less than equal to 12 months, short-term capital asset, more than 12 months, long-term capital asset. Now, how do I compute the capital gain? Computation of capital gain is same irrespective of whether it is a long-term capital asset or short-term capital asset. Meaning, for computing, please note, many people while studying also they make mistake, but in examination don't make this mistake. For computation of capital gain, there is no indexation benefit given irrespective of whether it is a long-term capital asset or it is a short-term capital asset. Irrespective of whether an asset is a long-term capital asset or a short-term capital asset, for computation of capital gain, indexation will not be given. When will I give indexation benefit? Only if the question is asking you to find the tax on long-term capital asset being an immobile property. And if that immobile property is transferred by individual or HUF. Section 48, computation of capital gain. Particulars, rupees. Full value of consideration is what, sir? Whatever amount they have given in the question, take that. Full value of consideration, subtract expenses incidental to transfer, will get your net sale consideration. From that, subtract cost of acquisition, cost of improvement, will get your gross capital gain. Subtract exemption, you will get your taxable capital gain. Now, if the long-term capital asset is transferred before 23rd of July 2024, if long-term capital asset is transferred before 23rd July 2024, when will this be required, sir? This will require, that is fine. This will require if the transfer is before 23rd July. Now, normally we will not get a question where the transfer is before 23rd July. But we have some exception if you remember. Conversion of capital asset into stock in trade, compulsory acquisition of immovable property. So those cases, it may happen that the transfer is before 23rd July. Okay. So if the transfer is before 23rd of July 2024, then the capital gain should be computed along with indexation. Same, take your, if it is a long-term capital asset, if it is a long-term capital asset, any type of long-term capital asset transferred before 23rd July, compute it with the indexation. Take full value of consideration, subtract expenses incidental to transfer, you will get your net sale consideration, subtract index cost of acquisition, index cost of improvement, you will get your gross capital gain, subtract exemption, you will get your taxable capital gain. ये okay? Hello. Now, capital gain should be calculated along with indexation for two cases. If it is a long-term capital asset, you should compute capital gain with indexation in two situations. Which are these two situations? If the transfer is made before 23rd July 2024. So see the question carefully, date of transfer is important. Or in case of finding the tax amount, for individual and HUF for transfer of immovable property. So if they are giving a question and that question is about individual or HUF and the property transferred is a immovable property, compute the capital gain with indexation. Can I repeat once? When will indexation be applicable? If transfer is before 23rd July 2024, in case of long-term capital asset, any type of long-term capital asset, indexation will be applicable. But if the transfer is after 23rd July, only for immovable property, only for individual and HUF, and only when? Only for individual HUF, only for immovable property, and only when? Only when? Only when they ask you to find the tax amount. Now, what is this index cost of acquisition, sir? Very simple. Take your cost of acquisition, multiply it with index for the year of transfer, divide it with index for the year of acquisition. Index cost of improvement is also same. Cost of improvement into index for the year of transfer divided by index for the year of improvement. And if the capital asset is acquired before 23rd of July, then the cost of acquisition will be what, sir? Actual cost or fair market value as on 1/4/2001, whichever is higher. Any improvement done before 1/4/2001 should be completely ignored. Please note, if the asset is acquired before 1/4/2001, what is the cost of acquisition? Actual cost of that asset or the fair market value as on 1/4/2001, whichever is higher. This is also very important. Tax rate for capital gain. Capital gain can be of two types, short term or long term. If it is a short term capital gain, taxable under 111 slab rates. If it is a short term capital gain, taxable under section 111A, 20%. In case of long term capital gain, taxable under section 112 or 12A. If it is taxable under section 112A, then 12.5% for gain in excess of 1,25,000. If it is a long term capital gain taxable under section 112, then normally tax rate is what, sir? 12.5%. But if the asset is an immobile property, which is land or building or both, and if the asset is transferred by individual or HUF, then the tax rate will be 20% with indexation or 12.5% without indexation. That is only difference. Computation part, I hope you know how to compute the income from capital gain. No, sir, we don't know. Maza panna. Exception we have. Exception means what? Exception means in the following cases, exception to section 45(1). In the following cases, section 45 subsection 1 will not be applicable. In the following cases, what will not apply, sir? Section 45 subsection 1 shall not apply. If 45(1) talks about normally when I should pay the taxes. When should I pay the taxes? In the year of transfer. In the year of transfer, I should pay the taxes. But there are three exceptions. There are many exceptions, but for us at this level, it is only three exceptions which are applicable. What are these three exceptions talking about? Exception to section 45 subsection 1. General rule. Capital gain is taxable in the year in which transfer took place. However, in the below cases are exception to this general rule. In normally, capital gain is taxable in the year in which transfer took place, but there are some exception for it. What are those exception? Section 45 subsection section 45 subsection 2, conversion of capital asset into stock in trade, then compulsory acquisition of capital asset, insurance claim for damage or destruction of capital asset. Exception number 1, conversion of capital asset into stock in trade. Now, in case of conversion of capital asset into stock in trade, transfer will take place in the year of conversion. Transfer will take place in the year of conversion. Whenever you convert the capital asset to stock in trade, transfer will take place. But you don't have to pay tax at that time. Why? Because you have not sold, it is just converted. You have converted, you had a capital asset, now you have converted it into stock in trade. At the time of conversion, transfer will take place. But when will I have to pay capital gain tax? In the year when the stock in trade is sold. So basically, in the year when stock in trade is sold, you will have two types of income. One is your capital gain income, another one is your business income. Sir, how much will be my capital gain income? For computing capital gain income, you should take full value of consideration. Sir, what is my full value of consideration? Your full value of consideration is fair market value of capital asset on the date of conversion. On the date when you converted the property, what is the market value of that property? Take that less expenses incidental to transfer. That will give me my net sale consideration. Subtract cost of index cost of acquisition. Why, sir? Because the transfer is before 23rd of July 2024. You will get your capital gain. Now, please note, capital gain amount will never change. Capital gain amount will never change. Why, sir? Because transfer took place in the year when the conversion took place. Correct? But this capital gain will be taxable as and when the stock in trade is sold. If the stock in trade is sold in installment, then as and when the stock in trade is sold, capital gain will be taxable in those years. Meaning it will be taxable proportionately in those years. Now, how much will be my business income? What is the final thing which I sold? Stock in trade. So, what is the money which I received? Take that. Less expenses incidental to sale. Less cost of that stock in trade. This stock in trade ka cost will be what, sir? The market value on the date of conversion. On the date when you converted this asset, what was the cost of that asset, or what was the fair market value? That will be taken as cost of stock in trade. So, as per section 2 clause 47, now please note this note you should write whenever a question like this comes in your examination. You should tell why are you doing this particular calculation. As per 247, conversion of capital asset into stock in trade is regarded as transfer. Transfer takes place in the year of conversion. However, capital gain is taxable in the year when stock in trade is sold. Therefore, in the year when stock in trade is sold, two income shall arise. One is capital gain income, another one is business income. So if the stock in trade is sold in installment or in parts, then capital gain shall also be taxable in installment or in parts as and when stock in trade is sold. Calculation of capital gain, take full value of consideration, which is nothing but fair market value on the date of conversion, less expenses incidental to transfer, less index cost of acquisition or index cost of improvement. That will give you your capital gain. Now, if the transfer has happened after 23rd July 2024, don't take index cost of acquisition and index cost of improvement. Business income, in business income, never indexation will be allowed. Take your sale price of the stock, less expenses for selling, less cost of stock in trade. Section 2 of section 45 subsection 5. Business income. Volta is happening in life. His question is, sir, what if stock in trade is converted into business asset? Section 28 says if you convert stock in trade into not business asset, stock in trade into capital asset. I am having a jewelry store. Now one of the jewelry my wife liked, so that jewelry which was a stock in trade, now it is getting converted into capital asset. On the date when it got converted, whatever was the market value, that will be taken as business income, and that will be taken as cost of acquisition of, yeah, for capital gain purpose, that will be taken as cost of acquisition of that capital asset. Section 45(5), compulsory acquisition of capital asset under any law. Now very simple, if your capital asset is getting compulsory acquired by the government, then the year when compulsory acquisition happens, that year transfer will take place. But capital gain will be taxable in the year when compensation is received by you. Why, sir? Because it is just a transfer, but I will have to pay tax only when I receive the money. So when you receive the money, pay the taxes. So what will be my full value of consideration in this case? The money received by you, the compensation which government told that they will pay. Compulsory acquisition of capital asset under any law. Compulsory acquisition of capital asset is regarded as transfer. Transfer take place in the year when capital asset is compulsorily acquired. However, capital gain is taxed in the previous year. Capital gain is taxable in the year in which compensation is received. So how much capital gain will be taxable, sir? Now compensation, sometimes what happened, because you are not happy with the compensation, you can ask for extra compensation. So the first compensation will be initial compensation, the extra compensation will be additional compensation. For initial compensation, how much will be taxable, sir? Whatever amount compensation was agreed by the government to pay, less expenses incident to transfer, that will give you net sale consideration, less cost of acquisition or index cost of acquisition, cost of improvement or index cost of improvement, that will give you your capital gain. And for additional compensation, what will you do? For additional compensation, take your full value of consideration, which is nothing but extra compensation which they agreed to pay, less only one thing you can subtract, which is litigation expenses over here. Why? Because all your cost related expenses and improvement related expenses you have already subtracted. Now you cannot subtract that. Only legal expenses for getting that extra money, that can be subtracted when you receive the additional compensation. Hey, did you understand what I told? When you receive extra compensation, you can subtract only one expenses, which is legal expenses. Now, if the compensation is received in installment, if the initial compensation is received in installment, lawmaker says total capital gain amount will be taxable in the year when the first installment is received. If the first compensation, the initial compensation they are paying in installment, lawmaker says, I don't care, that is your headache. Entire capital gain will be taxable in the year when you receive first installment. If additional compensation is received in installment, then capital gain will be taxable as and when the compensation is received. Then now the money, government has to pay the money. Now government may make delay in payment of money, therefore they'll give you interest. That interest is taxable under other sources, and 50% of the amount received will be taxable. If any interest is received for delay in payment of initial or additional compensation, then such interest is taxable in the year of receipt. Further, it will be taxable under income from other sources. Taxable interest will be what, sir? Amount received into 50%. If the owner of the capital asset dies before receiving the compensation, capital gain would be taxable in the hands of that person who receives it. Then section 45(1), capital A, insurance claim on damage or destruction of capital asset. Insurance claim on what, sir? Damage or destruction of capital asset. Now lawmaker says if there is a damage or destruction of capital asset because of four reasons. If there is a damage or destruction of capital asset because of natural calamities, enemy attack, riots and fire explosion, and if insurance claim is received for such damage or destruction, then transfer will take place in the year when damage and destruction is happening. However, capital gain will be taxable in the year when insurance claim is received. How much will be taxable, sir? Whatever insurance claim is received by you. You may receive insurance claim in monetary terms or it can be in non-monetary terms. So whatever insurance claim is received by you, you take that money plus fair market value of whatever you have received. Subtract expenses incidental to transfer, you will get net sale consideration, subtract cost or index cost of acquisition and improvement. That will give you capital gain. Section 50C, important concept of stamp duty value. Now this concept of stamp duty value is applicable only for immovable property. It is not applicable for any other type of capital asset. It is applicable only for immovable property. See, normally your sale price will be taken as your full value of consideration. For computing capital gain, we should take full value of consideration. What is that full value of consideration? Your sale price, the price at which the capital asset is sold, will be taken as full value of consideration. But here what they say is, if the stamp duty value is more than 110% of sale price, if the stamp duty value is more than 110% of sale price, then stamp duty value will be taken as full value of consideration. Then what, sir? Stamp duty value will be taken as full value of consideration. When will I take stamp duty value as full value of consideration? If stamp duty value is more than 110% of sale price. Many times it may happen. Stamp duty value, first they'll give you sale price and they'll give you stamp duty value. Now 110% you should calculate. Just randomly don't compare both of them and take whichever is higher. No. They have given stamp duty sale price 20 lakhs. Stamp duty value is 21 lakhs. 110% of 20 lakhs is 22 lakhs. Is it more? Is stamp duty value more? No. So I'll take sale price as full value of consideration. What if it is equal, sir? Stamp duty value and full value of consideration is equal, sir. Whom will I take? I'll take sale price only. If it is more, then only I'll take stamp duty value. Now, sometimes it may happen that the stamp duty value which is given the question is too high and I am not happy with the stamp duty value which they have given. I can go to assessing officer. Further, if the assessee is not satisfied with stamp duty value, he can make a request to the assessing officer. Assessing officer will transfer the case to valuation officer. Now, if valuation officer ka value is more than stamp duty value, then valuation officer ka value shall be taken. Sorry, if valuation officer value is more than stamp duty value, then stamp duty value, valuation officer ka value is less than stamp duty value, officer ka value, valuation officer ka value is less than sale price or equal to sale price, then take sale price. Now, stamp duty value, which stamp duty value should I take, sir? This is common for even income from other sources. There is concept like this. So, which stamp duty value should I take? Stamp duty value as on the date of agreement should be taken by you. Stamp duty value as on the date of agreement should be taken. When, if there is any money paid at that time. See, normally I will take stamp duty value as on the date of sale. Why? Because that is the date when I transfer the property. So normally I will take the stamp duty value as on the date of sale, but I will take the stamp duty value as on the date of agreement if any amount has been paid on the date of agreement by account pay check, account pay demand draft, or any other electronic clearing system. Normally, stamp duty value as on the date of transfer shall be taken. However, if any amount is paid on the date of agreement through account pay check, account pay demand draft, or any other electronic clearing system, then the stamp duty value as on the date of agreement shall be taken. Now, question will give cash, bearer check, cross check. All these things are not allowed. Now, please note, if the property is purchased by you before 1/4/2001, if the property is purchased by you when, sir? Before 1/4/2001, and if the question also gives you the stamp duty value as on 1/4/2001, if the property is purchased before 1/4/2001, can I say actual cost or fair market value as on 1/4/2001, whichever is higher is my cost of acquisition. But as on 1/4/2001, if they have also given you what? Stamp duty value, then you compare first fair market value as on 1/4/2001 with stamp duty value of as on 1/4/2001, take whichever is less. That you compare with your actual cost and take whichever is higher. Advance money forfeited. Advance money forfeited means what, sir? Advance money forfeited. You have given advance for purchase of property, but you did not honor that contract. So that person to whom you have paid the money, he will not give that advance money to you. That is called as advance money forfeited. Advance money forfeited. If advance money is forfeited before 1/4/2014, then reduce that advance money from the cost of acquisition of that property before giving indexation benefit. If advance money is forfeited before 1/4/2014, then reduce it from cost of acquisition of that property before giving indexation. If advance money is forfeited on or after 1/4/2014, then it will be taxable under 56 to 9. 10 is gift income. So it will be taxable under section 56 to 9 in the year when it is forfeited. If it is forfeited after 1/4/2014, then it will be taxable directly in the income from other sources. And if any advance money is forfeited by the previous owner, then you should ignore. Now section 47 is there. Section 47 talks about those transactions which are not regarded as transfer. So there are some transactions, and these transactions will not be regarded as transfer. Not regarded as transfer means there is no capital gain which will be applicable in this situation, where capital asset became the property of the assessee on any distribution of asset on total or partial partition of HUF. Meaning, if asset is transferred to members of HUF upon partition of HUF, it is not a transfer. If the capital asset is becoming your property, how did I get a capital asset, sir? By way of gift or will given by an individual or an HUF. If the capital asset became your property due to succession, inheritance, devolution, etc., or if any distribution of asset upon liquidation, or under transfer of revocable or irrevocable trust, or under any transfer of capital asset by holding company to its wholly owned subsidiary company or vice versa, or transfer of capital asset because of amalgamation, amalgamating company transferring to amalgamated company, and similarly demerged companies transferring it to resulting company, or if an individual is transferring his own asset to the HUF. Now, in all these cases, what happens? That is very important. In all these cases, what happens? That is very important. Now, let us say there is a person called as Simbu. He has a capital asset which he purchased for 10 lakh rupees in the year 2001-2. He gifted this capital asset. He gifted the capital asset in the year 1718 to Nayantara. Can I say because he gifted this capital asset to Nayantara, it is not a transfer? Now, because it is not a transfer, there is no capital gain in the hands of Simbu. Now, on the date of gifting, the market value was 50 lakh rupees. That on the date of gifting, the market value of this property was how much, sir? 50 lakh rupees. Now, what Nayantara did? Nayantara sold the property to Vignesh. Now, because she sold the property, can I say it is a transfer? Now, if it is a transfer, that means what will come in life? Capital gain will come in life. Hello. If it is a transfer, capital gain will come in life. Now, when I'm computing capital gain for Nayantara, because it is a transfer made by Nayantara, if I compute the capital gain for Nayantara, I don't know what is the cost of acquisition which I should take. Why? Because Nayantara got this property for free. Hello. Nayantara got this property for free. So I don't know what is the cost of acquisition I should take for this property. So in this situation, lawmaker says apply section 49(1). What is 49(1) telling? 49(1) says for Nayantara, you should take the cost of acquisition as cost of previous owner. Now, please see. First, let me discuss this point. Then I'll merge this with income from other sources. For Nayantara, I will take cost of acquisition as cost to previous owner. And for Nayantara, I will take period of holding from the date when she became the owner or from previous owner? From the previous owner. Period of holding to check whether it is a long-term capital asset or a short-term capital asset. I'll take period of holding from previous owner. Cost of improvement should be taken of present as well as previous owner. The improvement which is done by Nayantara as well as the improvement done by Simbu, both will be taken. indexation benefit will be given from the date when Nayantara became the owner, from the date when present owner became the owner, but I can also follow Manjula. What is Manjula telling? Manjula says indexation benefit is also available from the date when the capital asset became the property of previous owner. And if the property was acquired before 1/4/2001 and if the gift was given after 1/4/2001, then I, meaning present owner, can take the benefit of fair market value as on 1/4/2001. Now, what is important over here is if Nayantara, please note, when I am gifting an immovable property to someone, don't you think it is taxable in the hands of Nayantara because she received it as gift under section 56(2)(10)? 56(2)(10) says if the stamp duty value of the gift is more than immovable property is more than 50,000, and if the stamp duty value is more than 50,000 rupees, then it is taxable in the hands of recipient. Can you see it is taxable in the hands of recipient? Now, if Nayantara has paid tax on 50 lakhs, then for her, when she received the gift, if Nayantara has paid the taxes on 50 lakhs when she received the gift, then for her, the cost of acquisition of this property will not be cost to previous owner. This cost of acquisition will be taken as what, sir? 50 lakh rupees. Do you understand this? You remember Bhim, Tuntun Mosi, Kalia, something like this we discussed. And please note, one more point I'll tell you. So if Nayantara has paid the taxes under 56(2)(10) when she received the gift, for her, I will take cost of acquisition as what? Fair market value, which is 50 lakhs. Further, if Nayantara has paid the taxes under 56(2)(10), for her indexation benefit, I will give from the date when she became the owner. I cannot follow Manjula. If she has paid the taxes under 56(2)(10), I am giving the benefit to you of taking a higher cost. No, if I am giving the benefit to you for taking higher cost, which is nothing but fair market value as on date when you became the owner, you also take the benefit of, you will also not get the benefit of Manjula. For you, indexation will be given from the date when you became the owner. Yes. Same for period of holding and cost of improvement. Section 50B. Section 50B talks about slum sale. Slum sale means what, sir? Transfer of an undertaking without assigning values to individual assets and liabilities. You're transferring the entire business to someone. You're transferring your full business to someone without checking what is the value of individual assets and liabilities. Without checking what is the value of individual assets and liabilities, entire business is transferred by you to someone. Okay. Without assigning values to individual assets and liabilities. Very simple, very easy this is. Transfer of an undertaking without assigning values to individual assets and liabilities. Transfer of an undertaking without assigning values to individual assets and liabilities. Computation of capital gain. Computation is very easy. Please note, for slum sale, there is no indexation benefit. Anyways, no indexation benefit is available for anything. For slum sale, full value of consideration will be fair market value as per Rule 111 UAE. Sir, what is this Rule 111 UAE telling? Rule 111 UAE says, I will give you two market values. One is fair market value of the business which you are transferring, and fair market value of consideration which is received by you. Fair market value of unit transferred, fair market value of consideration received. I'll give you two fair market value, whichever is higher you should take, whichever is higher. That will be your full value of consideration. From that, subtract expenses incidental to transfer, you will get your net sale consideration. From that, subtract cost of acquisition, you will get your net worth of the business. Net worth of the business, once you get, determine whether from your net sale consideration, subtract cost of acquisition, which is net worth of the business, you will get your capital gain. Whether it is long term or short term, how will I come to know, sir? You should see period of holding of the undertaking which is transferred. Now, the period of holding, normally it is only 1 year, 2 year, but for slum sale, the period of holding of 3 years will be taken. If the undertaking was held for more than 3 years, long term capital asset, and therefore long-term capital gain. If it is held for less than equal to 3 years, short-term capital asset and short-term capital gain. 3 years only. For slump sale, the period of holding is always 3 years, irrespective of when it is transferred. Now net worth is cost of acquisition. Sir, what is net worth? Very simple, asset minus liability. Now assets can be of two types, depreciable assets or other assets. If it is a depreciable assets, WDV as per income tax law will be taken, and if it is other assets, I will take book value less liabilities. Liabilities, I will take all the liabilities at their book value excluding shareholders fund. That will be my net worth. Now, if the stock in trade is transferred under slump sale, will that income be taxable under capital gains, sir? Yes, stock in trade sold under slump sale will also be taxable under capital gain. Then we have revaluation of asset should be ignored. If any asset was revalued, slump sale wala asset was revalued, ignore the revaluation, get it back to that normal value. Then if 35 AD asset is transferred under slump sale, the cost of acquisition of the 35 AD asset should be taken as nil. And in case intangible asset being goodwill, patent, etc. is getting transferred, then the cost of acquisition of that intangible asset should be taken as nil if it is self-generated, purchase price if it is purchased. Now, capital gain in case of shares and securities. In case of shares and securities, also capital gain will be applicable. How do I compute the capital gain for shares and securities, sir? Very simple. Computation for shares and debentures and securities, any other type of security, is same as whatever is applicable for other type of capital asset. It is exactly same. What is important over here is if the shares are unlisted, it will be taxable under 111, 112. If it is listed share, it is taxable under 111A, 112A. And for listed shares, you will pay something called as security transaction tax, which cannot be taken as expenses incidental to transfer. Computation will not change because there is no indexation benefit available, whether it is listed or unlisted, it does not matter. The indexation benefit is not available. Only thing is tax rate is different. For listed, it is 12.5%. For gain in excess of 1,25,000. For unlisted, it is 12.5%. Then debentures, 9%. So debenture also calculation is exactly same. No indexation benefit is available, and tax rate is what, sir? 111 or 112. What is important is in case of shares, you will get something called as bonus shares and right shares. Now, when you are getting a bonus share, what is the cost of acquisition of those bonus shares? So, in case of bonus shares, if the bonus is issued before 1/4/2001, the cost of acquisition of those bonus shares will be the actual cost or the fair market value as on 1/4/2001, whichever is higher. But if the bonus is issued, please note, normally bonus means what, sir? You are getting something for free. Hello. Bonus means what, sir? You are getting something for free. So for bonus shares, the cost of acquisition will be taken as actual cost or fair market value. If the bonus was issued before 1/4/2001, actual cost or fair market value as on 1/4/2001, whichever is higher. But if the bonus is given on or after 1/4/2001, take the cost of acquisition as 0. Sir, what about right shares? Right shares means what? Company is giving you a benefit. Company is giving you a benefit. Sir, what benefit? Company is giving you a right. Company is giving you a benefit. Company is giving you a right. Why, sir? Company is giving you a right to purchase the shares of a company at a lower price. Now you have two options. Either you can exercise the right or you can transfer your right to someone. If you are exercising the right, meaning if you are saying the company, yes, I am interested in purchasing these shares under right issue, then for you, the cost of acquisition of those shares will be the right issue price which you are going to pay to the company. For you, what will be the cost of acquisition, sir? Right issue price which you are going to pay to the company. And if the shareholders has renounced the right or transfer the right to someone else, then it will be treated as relinquishment of capital asset. Relinquishment of capital asset is a transfer, and if it is a transfer, cap gain will come. Now, whatever amount I received, a relinquishment of capital asset means what? I am giving away the right which I have in that shares. Because I am giving away my right, lawmaker says it is a transfer. Now, whatever amount you received, whatever amount I receive, let us say I have a right, I'm transferring that my right to you. So you will pay some money to me. Whatever amount I received, that entire amount will be taxable as short-term capital gain. Why? Because you will have a very less period for exercising the right issue shares. For the purchaser of right, let us say you purchase the right from me. For you, what will be the cost of acquisition of this asset? Right issue price which you pay to the company plus renouncement price which you pay to me, that will be the total cost of this asset for you. Now, in case of non-resident, they'll normally not ask this in your syllabus. They have not, I mean, non-resident taxation is not there, so they'll not ask this, but because it is there, we have capital gain in case of non-resident where shares are bought and sold in foreign currency. This is first proviso to section 48. Computation of capital gain. Computation, very simple. Now, if you are a non-resident person, for you, we are giving an option to calculate the capital gain in foreign currency. Only if you make gain while computing capital gain in foreign currency, you have to pay the taxes. Computation of capital gain. Full value of consideration should be taken as, see, we have to compute the capital gain in the foreign currency because I will sell the asset in India. All the amounts which are there will be in Indian rupees. Now I have to convert that Indian rupees into foreign currency. So full value of consideration, you take average exchange rate as on the date of transfer, meaning to convert that full value of consideration from rupees to dollars, euros, pounds, yen. Take the average exchange rate as on the date of transfer. From that, subtract expenses incidental to transfer. You will get your net sale consideration. From that net sale consideration, subtract cost of acquisition. What is my cost of acquisition? What is the cost of acquisition in rupees? Convert them into dollars, euros, pounds, etc. by taking the average exchange rate as on the date of acquisition. Sir, what is this average exchange rate, sir? TT buying rate, TT selling rate divided by 2. Telegraphic transfer buying rate, telegraphic transfer selling rate divided by 2. And the difference amount is your capital gain. Now we have what, sir? Exemptions under capital gain. Exemptions means what? Exemptions. From your gross capital gain, you can subtract few things. What things you are allowed to subtract, those things are called as exemptions. Exemptions under capital gain, section 54. Exemption for residential house property. Exemption for, first exemption is for what, sir? Residential house property. This exemption says, this exemption is applicable for an individual or an HUF. If you have a residential house property and if you transfer that residential house property, if first exemption is exemption under section 54, that is applicable to whom, sir? Individual or HUF. So this exemption is applicable for individual or HUF. If you have a residential house property, if you transfer that residential house property, upon transfer of that residential house property, if you get any gain, what gain, sir? Long-term capital gain, then that long-term capital gain will be exempt. If you acquire another one residential house property in India, if you acquire one residential house property in India, now what is the time limit for acquiring that one residential house property in India? If you are purchase within 2 years from the date of transfer or purchase it 1 year before the date of transfer. And if you want to construct something, then construct it within 3 years from the date of transfer. Within 3 years from the date of transfer, you should construct it. Now, whatever asset you have purchased, that asset will have a lock-in period of 3 years. This asset which you have purchased should not be sold by you or transferred by you within the lock-in period of 3 years. If you sell it or transfer it within the lock-in period of 3 years, then whatever exemption I gave earlier, that will be reduced from the cost of acquisition of that new asset which is transferred by you. Meaning the new property which is purchased, when you sell that, whatever exemption you took, I will reduce that exemption from cost of acquisition amount. Sir, how much is the exemption which I am going to get? Capital gain ka amount or amount invested by you or 10 crores, whichever is less. Now the amount can be invested either in the new property or in capital gain account scheme account. So you also have an option to invest the money where, sir, in capital gain account scheme account. Sir, what happens if I invest the money in capital gain account scheme account? Then also you'll get a deduction. If the capital gain amount is up to rupees 2 crores, then the assessee can acquire 2 residential house property. If the capital gain amount is up to how much, sir? 2 crores. It is not more than 2 crores. Then you have an option of purchasing how many properties? 2 properties. But this option will be available to you once for lifetime. Ding, 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 ding. Section 54, important section. Section 54B, not that important, but yet still you should be knowing. Section 54B is for urban agricultural land, exemption for urban agricultural land. This exemption is applicable if you are an individual or an HUF, and if you have an urban agricultural land. Sir, how will I come to know whether the land which is there in urban area, whether it is an agricultural land or not? Very simple. That land should be used for agricultural purpose by the individual or his parents or the members of his HUF for a period of 2 years before the date of transfer. For a period of 2 years before the date of transfer, that property should be used for agricultural purpose, either by you or your parents, in case of HUF by members of HUF. Now, if you are an individual or HUF and if you have an urban agriculture land, if you transfer that urban agriculture land, upon the transfer, whatever type of gain you get, whether it is long-term capital gain or short-term capital gain, that gain will be exempt. When will that gain be exempt? If you purchase another one agricultural land in India. Now, the beauty is the purchased land can be rural or urban. But this purchased land will have a lock-in period of 3 years. The new agricultural land should not be transferred within the lock-in period of 3 years. If you transfer it within the lock-in period of 3 years, then whatever exemption was given to you earlier will be reduced from the cost of acquisition. Now, how much is the exemption which I am going to get? Capital gain amount or amount invested, whichever is earlier. Amount can be invested in capital gain account scheme account also. Then section 54B, sorry, D. Section 54D talks about what's a compulsory acquisition of industrial land or building or both. So you are any type of assessee if you have an industrial land or building or both, and if that industrial land or building or both is compulsorily acquired, I'm going to call it as transfer. Now, upon the transfer, whatever gain you get, whether it is a short-term capital gain or long-term capital gain, that short-term or long-term capital gain will be exempt. It will be exempt if you acquire another one industrial land or building or both. Now here the beauty is that new industrial land or building or both should be acquired within 3 years from the date of receipt of compensation. Why, sir? Because here it is a case of compulsory acquisition. So I will be able to purchase the new asset only when I receive the money. So the time limit is what, sir? Within 3 years from the date of receipt of compensation. Section 54D, compulsory acquisition of industrial land or building or both, applicable to all assessees if you have an industrial land or building or both. And if that industrial land or building or both is compulsory acquired, I will call it as transfer. Upon transfer, whatever gain you get, long term or short term, that long term or short term capital gain will be exempt if it is acquired within 3 years from the date of receipt of composition. What should you purchase? Another one, industrial land or building or both. And this new industrial land or building or both will have a lock-in period of 3 years. It should not be transferred within the lock-in period of 3 years. If it is transferred, whatever gain was exempted earlier, that will be reduced from cost of acquisition of that asset when you compute the capital gain for this transferred asset. How much exemption is there? Capital gain amount or amount invested, whichever is less, and you can invest the money in capital gain account scheme account also. Important section, section 54 EC. For this attempt, it is important because two new assets have been added, which is Udco and Irada. Section 54 EC, exemption for transfer of immovable property. Exemption for transfer of immovable property. Exemption for transfer of immovable property, meaning you can transfer any type of immovable property to claim exemption over here. This exemption is applicable for all types of assessee. If you have any type of immovable property, whether it is land, building, or both, if you transfer that immovable property, upon transfer of that immovable property, if you get any long-term capital gain, then that long-term capital gain will be exempted if you deposit the money in government bonds. If you deposit what, sir? The gain amount in government bonds, then how much ever you are depositing, or there is a limit, that much amount of exemption you will get. Deposit should be made within 6 months from the date of transfer. You should deposit the money in government bonds. Deposit the money within 6 months from the date of transfer. Sir, which are these government bonds? NHAI, RECL, PFCL, IRFCL, HUDCO, and IRADA. NHAI is National Highway Authority of India. RECL, Rural Electrification Corporation Limited. Power Finance Corporation Limited. Indian Railway Finance Corporation Limited. Housing and Urban Development Corporation Limited. Indian Renewable Energy Development Agency. So exemption under section 54 EC will be capital gain amount or amount invested or 50 lakh rupees, whichever is less. Now lock-in period is what, sir? 5 years. Lock-in period, the government bonds should not be sold or converted into money within the lock-in period of 5 years from the date of investment. What will happen if I convert them into money or sell, sir? If the bonds are sold or converted into money within the lock-in period of 5 years, then whatever capital gain was exempted earlier shall be taxable in the year when violation happened. Now you don't have to reduce anywhere, you just have to tax it. Whatever was converted by you or whatever bonds you sold, that much amount will be taxable. Now, how much is the exemption under 54 EC? This is important. Exemption is capital gain amount or amount invested or 50 lakhs, whichever is less. Last exemption which we have is section 54. Section 54F, exemption for transfer of any type of long-term capital asset. Exemption for transfer of any type of long-term capital asset. Any type of long-term capital asset means the asset which you are transferring can be any long-term capital asset. It can be shares, jewelry, anything. So this exemption says, this exemption is for transfer of any type of long-term capital asset. If you are an individual or an HUF, and if you have any type of long-term capital asset except residential house property, and if you transfer that long-term capital asset, upon transfer of that long-term capital asset, if you get any long-term capital gain, that long-term capital gain will be exempt. That long-term capital gain will be exempt if you acquire another one house property in India. Which house property? Residential house property in India. Time limit is if you are purchasing, either purchase 1 year before the date of transfer or purchase within 1 year, 2 years from the date of transfer. And if you are constructing it, construct within 3 years from the date of transfer. And it will have a lock-in period of 3 years, meaning the new property should not be transferred within lock-in period of 3 years. If you transfer within the lock-in period of 3 years, then the cost of acquisition of the new residential house property will be reduced while computing the capital gain for that transferred property. Now, what is important over here is computation of exemption. Now, here the exemption is not based on your gain amount. The exemption is based on your net sale consideration. So, exemption under 54F. If the amount invested by you in the new property is more than or equal to net sale consideration ka amount. If it is more than or equal to net sale consideration, then your full capital gain shall be exempt. The full amount, whole amount of capital gain will be exempt. But if the amount invested is less than net sale consideration, then capital gain will be exempted, but proportionately. Please note, what is net sale consideration? I sold the asset for 100 lakhs, 10 lakhs is my expenses, 90 lakhs is my net sale consideration. From this, I'll subtract cost of acquisition of 50 lakhs. I'll get a gain of 40 lakhs. Now, if you want this 40 lakh to be exempted, you'll have to invest how much? 90 lakhs or more than 90 lakhs. Yeah, you understand? Amount invested is more than equal to net sale consideration, full capital gain shall be exempt. If the amount invested is less than net sale consideration, Capital gain will be exempted proportionately. How much will be exempt, sir? Capital gain amount multiplied by amount invested divided by net sale consideration. Now, maximum amount of exemption under 54F shall not be more than 10 crores. Assessee should not have more than one residential house property as on the date of transfer to claim this exemption. Before transfer, I had no property. Now I have one property. Total, I have one residential house property. Can I claim exemption, sir? Yes. Before transfer, one I had. New property purchased, one I have. Can I claim exemption, sir? Yes. You should not have more than one. So if I have two before transfer, you cannot claim any exemption under 54F. Section 1037, exemption for compulsory acquisition of urban agricultural land. I have urban agricultural land which I am compulsorily acquiring. If you are an individual or an HUF, if you have an urban agricultural land, and if that urban agricultural land is compulsorily acquired by you, I will call it as transfer. Upon the transfer, whatever gain you get, long-term or short-term capital gain, that will be fully exempt. This is when your asset is getting compulsorily acquired. Now this amalgamation, merger, demerger, all these points they will not ask in examination. These are all final topic. But other important points are cost of acquisition of intangible assets. If that intangible asset is purchased by you, then the cost of acquisition will be purchase price. If the intangible asset is self-generated, the cost of acquisition will be nil. If they are acquired before 1/4/2001, will I get the benefit of 1/4/2001? No. Indexation benefit is never available for following capital asset. In case of following capital asset, I will never get indexation benefit. Now, though I will not get on anything, but these assets, even if it is transferred before 23rd July, you will not get indexation benefit. Which are these? Devgans, debentures and bonds, listed equity shares, virtual digital asset, global depository assets, non-resident, where you are computing capital gain under foreign currency, and in case of slum sale. Section 50AA, capital gain in case of market linked debentures. So they have given list of 3 items. In these cases, capital gain will always be short term. Capital gain in case of following capital asset will always be short term capital asset, irrespective of the period of holding. In case of specified mutual fund, market linked debentures, or in case of unlisted bonds or unlisted debentures which are transferred or redeemed on or after 23rd of July 2024. Capital gain on these assets will be taxable under section 111. Why, sir? Because it is short term, it will be taxable under 111, which is nothing but slab rates. Further, no indexation benefit will be allowed, and security transaction tax cannot be claimed as deduction. Now they have given the definition of specified. They have changed the definition, so only I made you write at that in the class. Market linked debenture means the debt securities whose return is linked to market index or underlying and are regulated by SEBI. Specified mutual funds are mutual fund which are mutual fund which invest 65% in debt fund and money market instruments, or 65% or more in units which is of another debt oriented mutual fund. Now we have a small concept of reverse mortgage. You know what is reverse mortgage? Wherein you give your property to bank will give you money for fixed amount of time. Whatever amount bank is going to give you, that is completely exempt in your hands. After your death, the property will go to bank. Whatever capital gain you will get at that time, that will be completely exempt. Reverse mortgage is a special scheme designed for senior citizen. It is designed for whom, sir? Senior citizen who has a house but do not have any regular income. You have a house but you don't have any regular income. It allows them to mortgage their house to the bank and receive regular monthly, quarterly, annual payment without the need for vacating the house. The mortgage of the house to the bank is not regarded as transfer. So when I give the property to the bank, for which bank is going to pay me money, that is not regarded as transfer, and no capital gain will arise at the time of mortgage. The monthly and lump sum payment which is received under reverse mortgage is fully exempt under section 1043. Upon death of the borrower, Bank will sell the house and recover the loan along with interest. Extra amount will be paid to the legal heirs. Cost of acquisition of, this is very, very important. I mean, for this attempt, you can mark it as important. Cost of acquisition of listed shares acquired before 1 to 2018. Cost of acquisition of listed shares acquired before 1 to 2018. See, if any listed shares is purchased by you, acquired by you before 1 to 2018, the cost of acquisition of those listed shares will be actual cost or fair market value as on 1/4/2001. Compare that with sale value of the property. Sale value is today's sale price. First, compare sale value with fair market value as on 31st of January 2018. Take whichever is less. That you compare with actual cost. Take whichever is higher. If any listed security, this point is applicable only for listed security. Therefore, it is important. Okay, in examination, how will I come to know whether this point is applicable or not? In examination, whenever the question says listed securities, that time you should understand. Or whenever the question unnecessarily, randomly they have given information about share price as on 31st of January 2018. You should think, Ayo, why is this amount given over here? Okay, you should ask a question to yourself. So if any listed securities is acquired before 1 to 2018, then the cost of acquisition of those listed securities for the purpose of computation of capital gain shall be first compare fair market value as on 31st of January 2018 with sale value, take whichever is less. Compare that with actual cost and take whichever is higher. Section 50C, full value of consideration in case of unquoted shares or unlisted shares. It is just like your section 50C stamp duty value you have 50 CA for unlisted shares. Full value of consideration normally is sale price, but if the fair market value is more than 110% of sale price, then fair market value will be taken as full value of consideration. Section 50D, full value of consideration, if consideration is not determinable, then the full value of consideration shall be taken as fair market value of that asset. Tell me the answer for this question. Avada, this chapter is done. Or else wait. I'll read the first line. Determine the capital gain or loss of listed equity shares. Security transaction tax is paid at the time of purchase and sale, and units of equity oriented mutual fund for assessment year 26-27 and the tax thereon, assuming that these are the only transaction covered under section 112A in respect of this. So this asset is sold, okay. So these two assets are sold. You are required to compute the capital gain, and they are also telling that there is no other type of income which he has, no other type of whatever it is. These are the only asset which is sold under 112A. Tell me, what is the capital gain? First one 1 lakh 56,000. One answer I have received. 1,50,000. One more answer. 25,000. Variety answer I have received. By the way, when they have given three rates, highest rate, average rate, lowest rate, which rate should I take? Highest rate you should take. That is more beneficial to you know. Hey, what have you studied? I'm not understanding. 2,10,000 and 1 lakh 50 lakh 1,50,000. We'll see. Mr. Sagun purchased 300 shares of A Limited on 20th May 2017 at a cost of 400 rupees per share. He sold all the shares of A Limited on 31st of May 25 for 1,20,000. The price at which these shares were traded in stock market was, I'll take the highest price. Why, sir? But that is more beneficial to me. So my cost of acquisition will be 400. Compare that with 700. Compare that with sale price. How much is sale price? 1,200. Whichever is less, whichever is higher. This is my cost of acquisition. Very simple. Sale price minus cost of acquisition. Into how many shares? 300 shares. How much is the answer? 1,50,000 is the capital gain. Hello, I'm not computing in the full format, but I hope you know how to compute. Mr. Raj purchased 200 units of equity oriented mutual fund at, so here also cost of acquisition, actual cost is 550 rupees per unit. The units were not listed at the time of purchase. No problem. Can I say in case of equity oriented mutual fund, listing should happen at the time of sale? It should be listed at the time of sale. But in case of normal securities, it should be listed at the time of sale and purchase. Somewhere like this we have studied yesterday. Subsequently, units of Fund A were listed on 1/1/2018. Oh, ho, ho. Maja is there. 1/1 only it got listed. And then what happened, sir? They started taxing that particular thing. On National Stock Exchange, Mr. Raj sold all the units for 900 rupees. 900 rupees is sale price. The detail relating to quoted price on National Stock Exchange. So what is that? Market value 750 rupees as on 31st of January 2018. So that you compare with actual cost, whichever is higher. 750 rupees is my, hello, 750 is my cost of acquisition of these units. Net asset value as on 31st of January 2018. This is only to confuse you. There is no concept of net asset value. Now they have given how many assets he has sold? 200 units. At what price he has sold? 900 units minus 750 units. How much? 30,000 is the gain. They have also asked us to find tax thereon. So this gain is 1,50,000. Tax is how much, sir? 1,50,000 is gain, and I will pay tax only on 25,000. Why, sir? 1.5 lakhs minus 1 lakh, 25,000. So tax amount is 3,250. Here 30,000 is the gain. Not taxable because the amount is within 1,50,000 limit. Is it sold in 2 different years? March. Yeah, Raj and Sagun, different people. Therefore, for Raj also there is no tax which he has to pay. Okay, yeah. Can you send the question back? How to send? I don't know, sir. I mean, you can ask that group fellow, whoever is there. You can ask in the group. Wherever you are attending the class, in that group, you can ask. Okay, yeah. Now, before break, tell me the answer for this question. Answer in the sense, don't calculate and tell me anything. Tell me answer for one thing. Now, this Sarthak is there. He sold a property. You see this question till here. Tell me what is the full value of consideration which I should take. Nothing else. Read the question and tell me what is the full value of consideration I should take. Tell me what is the full value of consideration which I should take. $1.7. 1 crore 70 lakhs. Okay. He entered into an agreement. He entered into an agreement to sell his house on 16th of August 2025. This is the date of agreement. How much he agreed to sell it for? 1 lakh? 1 crore 50 lakhs. 20% of the amount, the sale proceeds were realized like this: 20% by account pay check on the date of agreement, 60% on the date of possession, and balance on the completion of registration. Jay Kumar handed over the possession on 15th of December and the registration was completed on 14th of January. Normally I should take the stamp duty value as on the date of 14th of January, which is the date of registration. The value determined by stamp duty authority is for 16th of August it is 1 crore 70 lakhs. 15th of December 1 crore 71 lakhs. 14th of January 1 crore 71 lakh 50,000. Okay, correct. These three cases are there. Now in these cases, what is the value should I take? Because he received some money by way of account pay check, I will take how much, sir? 1 crore 70 lakhs, which is the stamp duty value as on the date of agreement. Stamp duty value as on the date of what, sir? Agreement will be taken over here. Why, sir? Because there is a money received by you by way of account pay check. Did you understand this? Many students make this mistake. Many students have made this mistake. And I know you will also be one among them. But I know you will not make mistake. You will not make, no? Avada. Sir, isn't tax amount 13125? In the previous case, you are telling? In the previous case, tax amount will be how much is taxable? 25,000. 25,000 into 12.5%. Yeah, it is correct, but also they have added 4% cess. So it is 3,250. Sahana. Ignore that concept under salary. Shakti. 50 CA. Yeah. Fair market value you should take. Yeah. Stamp duty value is for immovable property only, and this is for unlisted shares. There you will get stamp duty value, here you will get fair market value. Then, any question you have? No question means we'll meet at 2 o'clock. 2 o'clock only, no? 1 hour, what will you do, sir? Yesterday, what time I gave break? 1 hour I gave, no chance. No chance. 1:10 I gave the break, I know. PG very long, make it short, go away. Okay, anyways, we'll meet after a short break. 2:05 is fine. 2:05. Welcome back, students. Welcome back, online students. I hope I'm audible and also the screen is visible. Yes, sir. Yes, sir. Yes, sir. Okay. So in our previous class, we discussed something. We'll continue our discussion with the next point. What is the next point? Income from other sources. Income from other sources we'll discuss. Okay, we'll discuss other sources. Small chapter, easy chapter, no amendments in this chapter. Then we'll have one last topic, which is PGBP, and all your important topics will be over. Tomorrow we'll try to start second half. GST will start. Tomorrow class will be till 4 o'clock only. Okay, no extended classes. Income from other sources. Section 56 to section 59 are the different sections which are covered under this chapter, income from other sources. Now please see, very simple chapter, very easy chapter, one of the easiest chapter of all. What does this chapter say, sir? If you have any income which you have not taxed in any of the other head, then that income will be taxable under the head other sources. So if there is any income which is not taxed under salary, house property, capital gain, or business or profession, that income will come over here and it will get taxed over here. Now here the major component is taxation of gift. Section 56 to 10 talks about taxation of gift. Now gift is taxable in the hands of the person who is receiving the gift. Gift is taxable in whose hands, sir? In the hands of receiver. The gift is taxable in the hands of receiver. Now, gift which is there, gift is received by any person. Any person can receive it. It does not matter who you are. The recipient can be anyone. So it can be an individual, HUF, AOP, BOI, AGP, anyone. It will be taxable. Or if any asset is acquired for inadequate consideration. Sir, asset acquired for inadequate consideration means what? You are purchasing an asset for a price less than its market value. Then also this provision of 56 to 10 is applicable. So either you receive something for free or you receive something for a lesser price or an inadequate consideration, this section will be applicable to you. Now, gift received by any person, if the gift is received at the time of your marriage or from your relative, these are the two important points which normally they will test you in examination. If the gift is received at the time of your marriage, irrespective of what type of gift it is fully exempt. If the gift is received from your relative, then also it will be exempt. Now, what is important is who is relative. For me, who is my relative, sir? For me, my father, mother is my relative. My brother, sister is my relative. My spouse is my relative. And my children are my relative. For me, my father, mother's brother, sister is also relative. For me, my spouse ka father, mother, spouse ka brother, sister are also my relative. You okay, not okay? Very simple. For me, who is my relative? For me, my father, mother, brother, sister, spouse, children's, father, mother's brother, sister, spouse ka father, mother, spouse ka brother, sister are my relative. And spouse of all the above people are also my relative. Spouse of all the above people, they are also my relative. And who else is my relatives are lenient antecedent and lenient decedent. Lenient antecedent, lenient decedent means my parents, their parents, their parents, their parents, their parents, my children's, their children's, their children's, their children's. So when is the gift received by you? Gift is received at the time of your marriage. Gift is received at the time of your marriage, completely exempt. Gift is received from your relative. Gift is received from whom, sir? Gift is received by you from your relative. If the gift is received by you from your relative, then it is fully exempt. Now, who is the relative? We just now saw. If the gift is received in contemplation of death, someone is dying. Someone is dying. Instead of crying, he's giving gift to you. I'm dying. Take all these things. See, whatever belongs to me, that will now be yours. So, in such case, gift is received at the time of in contemplation of death. That is also exempt. Then, gift is received during inheritance, or gift is received by inheritance or will. Parents' property is coming to children's, or gift is received from local authority, or gift is received from a trust or an university or an hospital, or in COVID cases, then it will be exempt. It will be exempt. It will be exempt. Any other cases, all other cases, if the gift is not received in the above cases, all other cases, gift will be taxable. When will it be taxable? It depends on what you have received. If you have received money, then aggregate money means total money. Aggregate money received by you is more than 50,000 rupees in a year. From a single person, it does not matter whether it is from single person or multiple people. In a year, if you have received more than 50,000 rupees in a year, then that amount, whatever you have received, is fully taxable. If you receive movable property, what can you receive under movable property? DJ Paso BV. If you receive DJ Paso BV, and if you receive that DJ Paso BV without consideration, lawmaker says if the aggregate fair market value is more than 50,000 per annum, then it will be fully taxable. And if you receive it for inadequate consideration, if you receive what, sir? DJ Paso BV for inadequate consideration. What is inadequate consideration? You are receiving it for a consideration which is not adequate, which is not complete. Let us say the price of that asset is 1 lakh, you are paying only 80,000. That is inadequate consideration. So if I receive DJ Paso BV, drawings, jewelry, paintings, archaeological collections, sculpture, shares and securities, other work of art, bullion and virtual digital asset without consideration. Now it does not matter whether you are receiving one thing or more than one things. Combined together, please see. When I say aggregate, that means money paid by 10 people, each person is giving you 6,000 rupees. 6,000 into 10 people is 60,000 rupees. This is more than 50,000, therefore fully taxable. DJ Paso BV, whether I have received for free or for inadequate consideration, that breakup I should do first. Now, whatever DJ Paso BV I have received for free, take the total. And if the total is more than 50,000, then it is fully taxable. And whatever is received for inadequate consideration, take the total of that difference. And if the difference is more than 50,000, then it is fully taxable. Now, please see aggregate, aggregate, aggregate. Aggregate means total, you should take. But next point is our immovable property. If you receive immovable property, in case of immovable property, you should not take on total basis. You should take each and every individual immovable property separately. So if you receive immovable property without consideration, then the stamp duty value of that immovable property will be taken into consideration. If the stamp duty value is more than 50,000, then it will be fully taxable. If it is received for inadequate consideration, then I should see two conditions. What are these two conditions? The difference between the stamp duty value and consideration should be more than 50,000, and the stamp duty value should be more than 110% of consideration. A difference between stamp duty value and consideration is more than 50,000 and the stamp duty value is more than 110% of consideration, then such difference is fully taxable. Then whatever difference amount is there, the difference amount is fully taxable. Note, Section 56(2)(10) is applicable only for movable or immobile property when that movable or immobile property is held as capital asset for you. It is not applicable for stock in trade. Meaning, as a businessman, if I am purchasing something for a lesser price, will I apply this provision? No. Because as a businessman, I will like to purchase something for a lesser price. Then we discuss this with our capital gain chapter. What is this point talking about, sir? If you receive anything for free or for inadequate consideration, section 49(4) says, if any capital asset is received for as a gift, that is without consideration or for inadequate consideration, and if the recipient assessee has paid taxes under section 56 to 10 on that item which he received, then the stamp duty value or fair market value of that capital asset will be taken as cost of acquisition of that capital asset for the recipient assessee. For the recipient, that will be taken as cost of acquisition, stamp duty value or fair market value. Now we have concept of stamp duty value, section 50C. Section 50C is applicable for what, sir? Immovable property, when the immovable property is held as capital asset. Similarly, we have one more section called as 43 CA, that is also talking the same thing, but this is applicable for an immovable property which is a stock in trade. Very important, taxation of dividend. Important. Why, sir? There is a new section added about which they have not yet asked any question, therefore it is important. Section 222F, buyback. Okay, taxation of buyback. Normally it is important from final point of view, but because we have it in our syllabus, they may ask us this question. Taxation in case of buyback. Taxation in case of what, sir? Buyback. Sorry, taxation in case of dividend, sorry, not buyback. Profit distributed to shareholder. If the company, see, please note, whatever profit a company is earning, that profit company can distribute to the shareholders, or the company can keep that profit. If the company distributes that profit to the shareholders, then in the hands of shareholder, it will be taxable as dividend. And if the company keeps that profit for itself, then that profit is called as undistributed profit. That undistributed profit is called as what, sir? Retained earnings or accumulated profit. You understand what is the word accumulated profit? That profit of the company which the company is not giving it to anyone, it is keeping for itself. Why is this important, sir? It is important, we'll understand why. But whatever profit is distributed, that is dividend, and dividend is taxable in the hands of shareholder. Now, dividend, whether it is given by domestic company or a foreign company, it does not matter. Both will be taxable in the hands of shareholder. How much will be taxable, sir? That it will be taxable under income from other sources. How much will be taxable, sir? Full amount will be taxable. Now we also have a concept of deemed dividend. Deemed dividend means what, sir? They are actually not dividend, but we are going to assume that they are dividend. Section 222A, distribution of any asset by the company to its shareholders. So if any company is distributing asset to its shareholder, I am going to call it as dividend. Where a domestic company distributes any asset to its shareholder, it shall be deemed as dividend to the extent of its accumulated profit, whether capitalized or not. Where what, sir? Where a domestic company, 222A says, where the domestic company is distributing any asset to the shareholder. What is the company doing? Not giving any money, they are giving asset to the shareholder. Then lawmaker says, I will call that asset as dividend. How much will I call as dividend? To the extent of its accumulated profit, whether capitalized or not. Let us say there is a company. Now, what do you mean by capitalized accumulated profit? That portion of accumulated profit which you have converted into share capital by issue of bonus share or etc. Now, let us say this company has a reserves of 8 lakh rupees and 2 lakh rupees is bonus share. So, can I say their total accumulated profit is 8 lakh plus 2 lakh, 10 lakh rupees? Because normal accumulated profit is 8 lakh, 2 lakh rupees is accumulated profit which is capitalized by them. Now, if they give any asset to the shareholders, I will take the market value of that asset and compare with what is the accumulated profit. Whichever is less will be taken as deemed dividend. Section 222B, not that important. Distribution of debenture or debenture stock to shareholders. So where any domestic company is distributing debenture or debenture stock or any deposit certificates to its equity shareholder and bonus share to its preference shareholder, then it is going to be deemed as dividend to the extent of accumulated profit, whether capitalized or not. 222C, distribution of asset by a company to its distribution of asset by the company upon its liquidation, very important section. So when a company is going into liquidation, meaning company is getting closed. So whenever a company is going into liquidation, it will distribute the asset which it has to its shareholder. Why, sir? Because shareholder are the owners of that particular company. So distribution of asset by the company upon its liquidation. Now in this point, we are also going to discuss about what will happen in capital gain. Section 46 talks about capital gain in case of liquidation. Now what is deemed dividend concept telling? Where a domestic company distributes any asset to its shareholder. So if you are a domestic company and if you are distributing asset to whom, sir? Your shareholder. When, sir? On your liquidation, then I will call it as dividend to the extent of accumulated profit, whether capitalized or not. So if any domestic company is distributing assets to its shareholder, it will be deemed as dividend. How much will be deemed as dividend? To the extent of its accumulated profit, whether capitalized or not. Now, see this example. So there is a company called as Queenfisher Private Limited. Okay, the balance sheet of Queenfisher is given as on the date of liquidation. Share capital is 5 lakh. There are totally 5 shareholders. Each one of them have invested 1 lakh rupees. Reserves is 15 lakhs. Liabilities 5 lakhs. Total is 25 lakhs. Assets is how much, sir? 25 lakhs. In the year 2008, company started with 5 shareholders, A, B, C, D, E, and they each of them invested 1 lakh rupees. On 12th of December 2025, after repaying all the external liabilities, the company distributed assets to its shareholder worth rupees 7 lakh each. Cash they gave 2 lakhs and assets they gave worth rupees 5 lakhs. Taxation in the hands of company. So what happened over here? Company went into liquidation and each shareholder got how much? 7 lakh rupees. 2 lakh rupees cash, 5 lakh rupees asset. Now what will happen in this case, sir? Company goes into liquidation, it is giving asset to the shareholders. Now taxation in the hands of company. Company sold the asset in the market. Whatever assets were sold by the company in the market, on those assets, capital gain will arise if those assets are sold at a price more than its book value. If the asset is sold at a price more than its book value, capital gain will come into existence. Whatever asset is distributed to the shareholder is not a transfer. Hey, why is it not a transfer? Section 46 says asset distributed by a company upon its liquidation is not regarded as transfer. Now, what is the taxation in the hands of shareholder? In the hands of shareholder, how much tax I have to pay? In the hands of shareholder, let us say one of the shareholder, which is Mr. A. Every shareholder received 7 lakh rupees. Correct. Every shareholder received 7 lakh rupees. Now, capital gain in the hands of shareholder will be there, plus income from other sources also will be there. How much will be income from other sources in the hands of shareholder, sir? It will be deemed dividend under 222C. How much will be deemed dividend, sir? You first take total accumulated profit of the company, which is 15 lakh rupees. Now you see share of one shareholder. What will be the share of one shareholder? A's share in accumulated profit will be 15 lakhs into 1 by 5. So deemed dividend is how much? 15 lakhs into 1 by 5, which is 3 lakh rupees. Now A received 7 lakh rupees. Out of 7 lakh, 3 lakh is taken as deemed dividend. Balance 4 lakh rupees will be used for computing your full value of consideration. Computing your what, sir? Capital gain. So for computing capital gain, full value of consideration will be total minus money received minus deemed dividend. Total money received minus deemed dividend less expenses incidental to transfer. You will get your net sale consideration less cost of acquisition. You will get your long-term capital gain of 3 lakh rupees. Now, one more section, newly added section, section 46A. Taxation in case of buyback of shares. Now, buyback of shares, if company is doing any buyback of share, then for company, there is no tax treatment. In the hands of company, whenever a company does buyback of share, there is no tax treatment in the hands of company. And in the hands of shareholder, there will be income from other sources. How much will be your income from other sources? In the hands of shareholder, income from other sources will be the total buyback price which you are paying. The total buyback price which you are paying will be taken as income from other sources. Sir, what is total buyback price? Total buyback price means number of shares which is bought back by the company into buyback price per share. That entire amount will be taken as what, sir? That entire amount will be taken as deemed dividend under 222F. Okay, please note. Company is buying. Company is buying back your shares. Company is buying back your shares. When company is buying back your shares, whatever amount company is going to give you, that entire amount will be deemed as dividend. That entire amount will be deemed as dividend. Full amount will be deemed as dividend. So the total buyback price, which is number of shares bought back into buyback price per share, will be deemed as dividend under section 222F, and it will be taxable in the hands of shareholders in the year of buyback. And what will be the capital gain in the hands of capital gain will be in the hands of whom, sir? Shareholder. Now here they say capital gain will not be there. Why? Because we will not have any full value of consideration. Why, sir? Because the entire money you received was taxed as deemed dividend. Therefore, you will not have any full value of consideration. You can subtract expenses, subtract cost, whatever is left over, that will be your loss. Meaning, when you subtract the cost from the net sale consideration, which will normally be zero, you will get loss. It can be short-term capital loss or long-term capital loss. Note, full value of consideration will always be taken as nil in case of buyback of shares by the company. Whenever company is buying back the shares, full value will always be taken as nil. But if the buyback is happening before 1/10/2024, normally they will not ask a question on this point, but for our knowledge purpose, we should be knowing. If the buyback is happening before 1st of October 24, then that is exempt in the hands of shareholder and will be taxable in the hands of company. How much will be taxable in the hands of company? Buyback price minus issue price into number of shares bought back. Then 222D not required. Reduction in share capital, where any domestic company reduces its share capital and distributes asset to its shareholder, then it will be deemed as dividend to the extent of accumulated profit, whether capitalized or not. This they may ask, they may test you this point. 222E. Loans are advances given by closely held company. Loans are advances given by whom, sir? Closely held company. If you are a closely held company means what? If you are a private company, if you are a closely held company or private company, whatever loans and advances you are getting, whatever loans and advances you are giving, sorry, that will be deemed as dividend. When you give it to whom? Your shareholder. So if you are a closely held company or a private company, if you are giving loans and advances, if you are giving what, sir? Loans and advances to your shareholder. If you are a closely held company giving loans and advances to your shareholder holding 10% or more equity shareholding, if you are giving loans and advances to a shareholder who is having 10% or more equity shareholding, then I will call it as, then I'll call it as dividend. Then I'll call it as deemed dividend in the hands of shareholder. If a closely held company is giving any amount of loan or advances to a shareholder, which type of shareholder? That type of shareholder who is holding 10% or more equity shareholding, then I'm going to call it as dividend. Or if you give any loans or advances to any person on behalf of the shareholder or for the benefit of the shareholder, then also I'm going to call it as deemed dividend. Or if you give loans and advances to any concern in which shareholder has substantial interest. Substantial interest means what? 20% or more equity shareholding or profit sharing ratio or voting rights. Loans and advances given in above cases will be deemed as dividend to the extent of accumulated profit, whether capitalized or not. Note, above provision shall not apply in following cases. Which cases? If the company's business is only giving loan. If the company's main business is only to give loan to the people, then this provision shall not be applicable. Or if it is a business advance, meaning I am a banking company, I can give loan to anyone, right? Or it is a business advance. Now, one of my shareholder is going for a vacation to some country. Now, from that country, I am asking him to purchase some business asset. So he takes some advances from me. That is allowed. Now, please note section 222E will be applicable even if the loan is called off within the same year. Meaning, even if you repay the loan in the same year, it will be applicable. 222E shall apply even if interest is charged at normal market rates of return. Then other points with respect to this chapter, very important point. Please see carefully. Following incomes are always taxable under IFOS. Dividend income, casual income. Casual income is what, sir? Winning from lottery, crossword puzzle, races, any type of race, including horse race, card games, gambling, and other games, etc. Interest received on delay. Interest received on delay in payment of compensation or enhanced compensation for undisclosed income is also covered. Or you are receiving interest for delay in payment of compensation or enhanced compensation for compulsory acquisition of capital asset. Any advance money is forfeited on or after 1/4/2024. Gift is received or any asset is acquired for inadequate consideration. If you are receiving gift from someone or if you are receiving asset from someone for an inadequate consideration, lesser price. Compensation received due to termination of employment or modification of terms of employment. Sum received under life insurance policy except unit linked insurance policy or key man insurance policy. Why, sir? Because unit linked insurance policy is taxable at capital asset, therefore it is taxable as capital gain. Key man insurance policy is also taxable. Income from owning and maintaining racehorse and any other income not taxed under other heads. All those will be taxable under IFOS. Following income will be taxable under income from other sources if they are not taxed under PGBP. So these incomes which we have given over here, they will be taxable under IFOS if they are not taxed under PGBP. Meaning normally they should be taxed under PGBP, but if you have not taxed them under PGBP, it will be taxable over here. What are those incomes? Interest on securities. Income from letting out on hire plant, machinery, furniture. You are giving them on rent. First preference is PGBP. If not PGBP, IFOS. Composite rent of house property. So house property, you are renting house property along with other assets. Any sum received by employer from his employee as contribution to any provident fund, superannuation fund, etc. See, normally this should come under PGP. Employer is receiving employee ka contribution, PGP. But if it is not taxed under PGP, IFRS. Any sum received under key man insurance policy which is not taxed under salary. Following incomes are exempt. These incomes normally come under which head? Other sources, and they are exempt. Which are the incomes, sir? Agricultural income from land located in India. If the land is outside India, then it will be taxable. Then what, sir? Interest on money standing to the credit of individual in his non-resident external account. So in India, a non-resident person can open an account called as non-resident external account. So if he puts any money in that account, and if that account is giving him interest, that interest will be exempt. Compensation received due to disaster. Disaster happened in life. Disaster means whatever disaster it is, like tsunami, floods, etc. Due to that, money is received. Who received the money? The person who got affected due to that disaster, he receives money or his family member receives money. In such cases, in their hands, it is completely exempt. Educational scholarships are exempt. Awards given by government is also exempt. Tax rates for income from other sources. Casual income is taxed at a flat rate of 30%. Add surcharge and cess, of course. Undisclosed income is taxed at a flat rate of 60%, add surcharge of 25% compulsorily, add health and education cess 4% compulsorily. So effective rate is 78%. Online money games 30%. All other incomes under IFO is taxable at slab rate. Examples of other incomes covered under IFOS is income from subletting of house property, renting of a vacate land, insurance commission you are receiving, remuneration you are receiving for paper checking, interest on income tax refund, stipend which you have received, family pension you have received, royalty you have received, sitting fee received by a director of the company which is non-employed director, or interest income, income received by an MLA, MP, etc., or daily allowance or constituency allowance. Now, interest income is little important under IFOS because lot of people will make mistake in interest income, and in question examination, one of the adjustment will be about interest income. Interest you are receiving because of delay in payment of compensation, it is taxable. How much is taxable, sir? 50% of amount received. If you are having a account in post office saving bank account, if you have what, sir? Post office saving bank account, in that if you have received any money as interest, then it is exempt up to 3,500, and if it is a joint account, 7,000 rupees. Public provident fund account interest, Sukanya Samriddhi account interest, gold bond 1999 interest, deposit certificate under gold monetization scheme, etc. All these interests are completely exempt. Any other type of interest, whether it is FD interest, saving account interest, loan you have given to someone, for that you are receiving interest, recurring account, deposit account interest, they are all fully taxable. Now, is there any expenses which I can subtract under section 57, sir? Yes. Allowable deductions under income from other sources. The tax, if the income is taxable, very simple, if the income is taxable, expenditure which is incurred by you to earn such income is also is allowed as deduction. If the income is taxable, whatever expenses you are incurring to earn such income is allowed as deduction. If the income is exempt, expenditure to earn such exempt income will be ignored. If it is a casual income, then whatever expenditure is incurred by you for earning that casual income will be ignored. Then if it is what, sir? Interest for delay in payment of compensation, whatever interest you got into 50% is allowed as deduction. If you receive family pension, then if you receive what? Family pension. In case of family pension, optional tax regime or deferred tax regime. If you are opting for optional tax regime, 1/3 of family pension or 15,000 is allowed as deduction. If you are following default tax regime, 1/3 of family pension or 25,000, whichever is less, is allowed as deduction. Dividend. By dividend you are receiving, or you are receiving income from any unit trust of India, or you are receiving income from mutual fund companies, then only interest expenses will be allowed as deduction. Only the interest which is incurred or interest which is given by you for that dividend will be allowed as deduction. Only interest expenses is allowed as deduction to the extent of 20% of money or income received. Now, under the new income tax law, this is removed. Section 58, expenses not allowed as deduction, majorly covered under income from business or profession. What are those items which deduction cannot be claimed by you at all? There are some items for which you cannot claim any deduction at all. What are those items, sir, for which you cannot claim any deduction at all? You cannot claim deduction for personal expenses. You cannot claim deduction for interest which is paid outside India without TDS, salary paid outside India without TDS, excessive or unreasonable payment made to related person, any payment in excess of rupees 10,000 to a single person for a single expenditure in a single day, or 30% of expenses to resident without TDS. Section 59, time pass, one section is there. If any expenditure is allowed as deduction in any earlier previous year, then it will be deemed as your income in the current previous year. If it is seized, seized means no more liable to be paid by you. You know, concept of grossing up, very much used in this chapter. Many times in question they'll ask, in examination they'll ask a question wherein they'll give you the amount without TDS. Okay, but you should take the amount including TDS as your income. Meaning, I did not understand it also. See, I won a lottery of 10 lakh rupees. Now, on lottery, there is a TDS of 30%. So, what will the government do when they pay this lottery money to me? They'll pay me only 7 lakh rupees after deducting 30%, that is 3 lakh rupees TDS. Now, the question is, what is my income? Is my income 7 lakh rupees or 10 lakh rupees? When I take in my computation, should I take 7 lakh rupees or 10 lakh rupees? Lawmaker says, Dilip, you should take 10 lakh rupees. This is called as concept of grossing up. This is called as what, sir? Concept of grossing up. Do you understand what is concept of grossing up? You are actually adding back the TDS amount which they have reduced for finding your income. Ding ding ding. Tell me the answer for this question. 4 marks, November 23 RTP. One lakh 51,000. One answer I have received. 1,51,000. 1,51,000. 2,32,000. 35,000. Maja is there. 2,34,000. 1,66,000. In Chennai and all, when we go, no, there is a food there called as variety rice. We have variety answers. So 2,26,000. Now please see dividend. Dividend of 50,000 received in April 25. So how much, sir? 50,000. Advance money forfeited is how much? 1 lakh rupees. Can I say full 1 lakh rupees is taxable because it is forfeited this year? Cash gift from non-relative 51,000 fully taxable. During the year 25-26, he received 99,000 as pension from the employer of deceased wife. 99,000 minus one third of 99,000 is how much? Or 15,000. So 19,000. 99,000 minus 15,000. How much? 84,000 is taxable. So what is the total? 50 plus 2 lakh 85,000. They have got 2 lakh 35,000. Why, sir? They have not taken dividend. Now, normally they say dividend is taxable in the year when it is declared. But please note, no problem. Do you know how much? See, declared means in annual general meeting, they will tell that I am going to give dividend. How much they will give? That you will come to know only when they give, no? Hello? Correct, no? So they have given, you see, alternative view also they have given. In examination, this will happen, no problem. Since the dividend is declared on this date, accordingly, see this point, alternative situation. Since the exact amount of dividend to be taxed can be determined only at the time of payment or distribution of dividend, alternative use possible to tax the dividend on receipt basis. So in such case, our answer will be how much? 2,85,000. We got our answer as 2,85,000. Hey, did you understand this point? In practical life, which meaning once you qualify, we follow receipt basis only. Only when it is coming to your bank account, we will assume that it is paid. Bang, 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 bang. Tell me the answer for this. Discuss the taxability with reasons in hands. Mr. Ram received 5 lakh rupees from his father on Ram's wedding anniversary. Can I say ignore? Govind sold his house property to Mrs. Radha for 1 crore 25 lakhs. Stamp duty value is 1 crore 75 lakhs. Can I say 50 lakhs is income? But father, no. Please not. Father is father. Mother is it. So this is how they'll confuse you. Agastya got a gift of car. Can I say ignore? 50 lakh rupees should be the answer. September 25 RTP. Tell me the answer for this question. September 25 RTP. Now, Aryan, a resident individual, is working in LN Limited and he receives a salary of 90,000 rupees per month during previous year 24-25. He holds 20,000 equity shares of A Limited, an Indian listed company purchased on 1st of January 2016. So please note it is a Indian company and listed company, and he purchased for 200 rupees. These were acquired through recognized stock exchange and the STT was paid. On August 24, Aryan transferred a plot in Chandigarh for 70 lakhs, which was acquired by him in May 16 for 22 lakhs. He paid a brokerage of 1% on transfer. November 24, Alpha Limited decided to buy back 50% of its share at 250 rupees per share. Alpha Limited bought back proportionate shares from Aryan. In May 25, Mr. Aryan acquired a residential house property for 40 lakh rupees. Fair market value of equity share as on 31st of January 28 is 190 rupees. You are required to compute the total income. A, please see. Salary is how much? 90,000. A, please note, ignore the year. Ignore the year. Let us say the essence of the question. 90,000 into how many months? 12 months. How much? Now he pays tax under what regime, sir? Default tax regime minus 75,000. How much? 10 lakh? 5,000. Huh? That is his income from salary. Now, what is his income from capital gain? Now, income from capital gain, you see, he sold the shares and purchased a house. Can I say 54F will come in life? Hello. He sold the shares and purchased a house. 54F will come in life. Hello. Now he purchased the shares at what price? 200. Market value is how much? 190 rupees. So can I say cost of acquisition will be 200 only? Hello. What is this? 200 is purchase price, right? Yeah. He holds 20,000 shares of listed company purchased on this date. He acquired these through recognized stock exchange on. He transferred a plot. Okay, okay. Plot is here. 70 lakh rupees is say, capital gain we are computing. 70 lakh rupees which was acquired in May 16 for 22 lakhs. Transfer can I say is happening after 23rd of July. Anyways, ignore. I mean that is not relevant because now you will not get that benefit. So minus, yeah, minus 1% brokerage, which is 70,000 minus 22 lakh rupees as your 47 lakh 30,000 is your gross long-term capital gain. From this, you will subtract the amount invested by you in the new property. How much you have invested, sir? They have given you have invested in new property 40 lakh rupees. So your taxable gain will be, that is that taxable long-term capital gain. Did you understand 7 lakh 30,000? Hello. Now, in November 24, he decided, A Limited decided to buy back 50% of its share at rupees 250 per share. Alpha Limited bought back proportionate shares from Aryan. In May 25, Aryan acquired a residential house property. This story is done. So now 50% was bought back. How many shares he has? 20,000. 50% is 10,000 into 250 rupees. Total is how much? 25 lakhs. This will be taxable under income from other sources. Can I say there will also be capital gain? Correct? No. Long term or short term? He purchased the shares on which date, sir? He purchased the shares on January 16th. So long term capital loss will be how much? Purchase price is 10,000 into 200, which is 20 lakhs. 20 lakhs will be your long term capital loss. So net long term capital gain will be a loss, I think. This minus this, if you do some loss, you will get. This is a loss, okay? Now salary is 10 lakh 5,000. Income from other sources is how much? 25 lakhs. Capital gain we will see. Capital gain on buyback of shares, 20 lakh rupees. 20 lakh rupees we got. Then on loss on buyback is 20 lakhs. Sale of plot, 70 minus 70, 693 minus 22, 4,73,000. And deduction is how much? Oh, 54. What the? Section 54 F. Problem will happen in life. A, he invested how much? 40 lakhs. He should have invested how much? 69 lakhs 30,000. So 40, 69 lakh 30,000. No, amount invested is 40 lakh. Gain amount is how much? 47 lakh 30,000. So how much will be exempt? Now please note, Maja, we knew the provision, including me, but still we made mistake. Hey, how many of you did this correctly? Are you understand? Like, look at the classroom. Two people have done correctly, all others have done it wrong. Meaning, you know, but still you will make mistake. That is income tax. Okay, yeah. The subject is like that. You will be knowing and you will be feeling, wow, I did it properly. Hey, when you did it, you felt no. Yes, I did it properly. But examiner knows what you have done. So how much is the answer? How much is the proportionate amount? 27 lakhs, 30,159. That is the exemption you will get. Balance amount will be taxable. Now against this taxable amount, you can adjust the loss of buyback. So there is no taxable capital gain. Hey, did you understand this question by any chance? Hey, did you understand till here? Then proportionate credit, did you understand? 40 lakhs into this calculation. Now after that, you will get a gain of how much, sir? 19,99,841. Against this, I'll adjust 20 lakh rupees ka loss. So net, I will get a loss of 2,59,000. Correct? No, not 259 rupees ka loss is there. Next topic is what, sir? Income from business or profession. Freshly will do tomorrow, no? See, Sandesh sir is there or not outside? Question I should show. Their students are there. Ask them how many. What time is the class? 4:15. Not at 3 o'clock. Banbidi. Is this clear? Depreciation will discuss. Now, one small concept is the depreciation. Okay. Then we'll continue tomorrow. Cubase. Can we do sums instead of that? But no, I thought sums we'll do tomorrow. No, no problem. GST will be done easily. Because once we get no total income, 1-2 questions, if we do, that will make sense than doing these chota questions. Hey, income from business or hey, nothing is there in this. Only depreciation will discuss. Small concept will discuss. Depreciation is very small. Nothing is there. PZBP. Maja is there. Don't eat food during lunch break. Seriously, I'm telling. You guys are students. I'm serious about this. When I say eat less, lunch eat less, eat less. This is your exam time. You should be very active at this time. Very active you should be. You should be so active that you should be knowing what is happening in the next room. Not at your PG, Gube. Yeah. But you should be knowing everything in life. Yeah. You should be very active at this time, this specific time, 2 o'clock to 5 o'clock, very important time in life. Hey, this time if you are feeling sleepy, no, Maja will be there. How many attempts will go, you'll not even know. Profits and gains from business or profession. Hey, please, hey, how many of you are writing in May? Everyone is writing in May. Hey, how is your preparation going? 2 minutes break I'll give. Yeah. How is your preparation going? How many of you are confident that you'll clear? Then fine. You should be no, this go away. Looking at others is lifting hand. So nice. I am confident on others. I'll copy properly and clear. Hey, please note. You should be confident. I was confident on 31st of March that I'll clear my examination. When I was studying, I was confident on 31st of March that tomorrow, if you give me all the paper, I'll write everything, I'll clear my examination. That confidence you should have. Or else problem is there. Now it is just time for revision. Now it is not as time to study something new. If I say, hey, this is most important thing, study, get lost, you should say. Seriously, you should not study anything new. You should study whatever is already studied by you. Revise that. Revision is going to help you clear the examination, not this studies which you are doing. Okay, what is this? Whatever we are doing is also revision only. It is just a revision. And please note, how many of you are writing both the groups? You have a big problem in life. If you have not revised both the groups properly, if you have just attending both the groups, then again problem is there. But if you have studying and writing, then you'll have to study hard. Very hard you'll have to study. Okay. Very difficult it is. It is not that easy. If you're writing for the first time, you'll come to know that it is not that easy. If you're writing for the second time, you already know it is not that easy. Or else you would have cleared it at the previous attempt. Correct, no? Huh? Only one room. One group you are writing. Yeah, but it is still difficult. One paper is also difficult only. Please see, marrying one person or 10% same only. So please study well. I mean, After this, you have any other marathon going? FM marathon will be there. Okay. But revise properly. Revise meaning from day after tomorrow or whenever your classes gets over, 20 days you'll have no. 20 days you should just revise. If you're writing one group, you have good amount of time for revision. At least you can spend 5 days per subject or 6 days per subject and you can revise completely. Don't start anything new. Go to your institute website. Your institute is telling you what to study. Of course, whatever I'm telling now is of no use because now if you're doing this exercise, then problem is there in life. Your institute website tells you which is most important topic. Those topics though you should never go. You see, there is something called as section wise weightage. Correct? No? Yeah, I'm not talking about my paper. I'm talking about your general paper. My paper, I'll only tell what is important. You should open no Google. CA Inter. You see, accounts is their first subject. What is most important, sir? 55 to 65% will come from accounting standards. Meaning around 60 marks will come from accounting standards only. Company accounts will come for how much? 30 marks. Company accounts. Maja is there now. One chapter I'll study and go. Nothing else I'll study. If I were at your place. Now branch accounting 5 to 10 marks. I will ignore. I don't like branch accounting, etc. But you are not supposed to do that. No, 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 no. Company accounts 70 marks is company law and LLP, whatever it is. 20 to 30% will come from company incorporation, prospectors, shares and debentures. I mean, when I was a student, no, genuinely I studied only one topic which I remember. I studied declaration and payment of dividend, accounts of company, audit and auditors. Why? It was common for audit as well as and genuinely no, I should not say this, but I genuinely did like that, okay? Because I was very bad student. LLP I never studied. I know have no idea. Other laws also, I never understood this interpretation of state rule. The words only I did not understand. Seriously, I'm telling. There are some points no which you will not even understand. FEMA also I didn't understand. FEMA is very difficult. It is easy, yeah? Oh, for me maybe it was difficult. General clauses, I don't know. I think this was not there only. I studied only company accounts. Yeah. See, for me, all these papers I got 40, 42 maximum. Okay, my expectation was only that. See, from some people you should not expect more. You are giving arrows, you are just giving arrows. Don't expect something in return. Now comes the tax paper, basic concept, residential status. See, I'll tell you, tax simple. I'll tell you, residential status. One question will come for sure. Residential status, scope of total income. Your second question in your examination will be this question. Okay. Heads of income, salary. One question will come for sure. 100% one question will come. Income from house property, MCQ question will come. But if you're lucky, they'll ask you a descriptive question. But you can think that MCQ question will come for sure. Or if it is a descriptive question, they will merge with your total income question. Separate question chances are very less, very less. But yeah, they may ask. PGP, yes, that first question which is there, total income will be from PGBP only. Separate question from PGBP may come. Only 2-3 concepts are there where separate question can come, like 44 AE is there, or you have your partnership firm, or the partnership something is there. 35 AD is there, or you have 35 section 35 only scientific research. Those things are only separate question, but normally it will be your total income question. Capital gain, yes, there will be a question. 5 to 6 marks question can come, either separate question or it will be in your MCQ. Other sources, normally they will not ask separate question, but if you're lucky, they'll ask a separate question for you guys. But it will always be merged with your first question. 2 or 3 adjustment will be from IFOS. Clubbing, no separate question, either MCQ or merge with some question. Set off and carry forward, important. Separate question will come definitely. Deductions, merge with your first question. Advanced tax, TDS, TCS, and provision for filing income tax return. Provision for filing income tax return, 4 marks, one theory question. And advanced tax, TDS, TPS, 4 marks, one practical question or theory question as they want, they'll ask. And computation of total income, of course, this is merged with your PGBP. So one question will come, that is first question, 15 marks question. GST, very easy. GST, nothing is there. One of the easiest, trust me, GST is one of the easiest. And in examination, if you ask me, you should start with GST, nothing else. Start with GST. Your chances of clearing examination will be too high if you start with GST. Any person who has started with income tax, that person is directly falling in the well. And he knows that he does not know how to swim. Hey, genuinely, I'm telling. Income tax is something which you will feel that you know, but you don't know. Hey, genuinely, I'm telling. Section 54F, we did mistake. We know that section 54F says you should do proportionately, but we will not come to know at that time, because at that time our feelings will be, oh wow, this is an easy question. Yes, this is an easy question, and easy thing you'll remember, forget. Now GST is very simple. GST supply topic is there, the first topic. First chapter which is there, introduction under GST, no, that will come for 2 marks. If you're lucky, 3 marks, introduction. That will be the last question. Or MCQ they may ask. Then you have levy and collection of GST, wherein they have mixed few chapters. First is your supply chapter in your institute material if you go. One question for so 5 marks, 100% question will come 5 marks. Supply topic, 100% one question will come for 5 marks. What is the high chances of asking question? Wherever there is an amendment, wherever there is a circular issued. First chapter has lot of circulars. Then second chapter is your charge and composition scheme. I'm talking from institute material point of view. Charge and composition scheme. It depends, if they feel like asking, they'll ask, or else 2 marks question you can expect, 2 to 4 marks if you are lucky. And they may ask a question in this attempt because section 9 subsection 5 is there. There is an amendment in section 9 subsection 5. There are totally 4 services. Now they have added one more services, which is local delivery services, porter and dunzo. Then you have exemption. Now how does it work? Either they will ask a question on exemption or they will ask a question on charge composition. But high chances are asking question on exemption, because exemption they don't test in final level. So they test in intermediate level. So very high chances 100% question will come, meaning 100% question comes in exemption. Exemption though you can definitely expect a question. Meaning even if they don't ask a direct question on exemption, 4 to 6 marks to pakka will come from exemption. Pakka it is. Composition scheme we discussed. Then place of supply, 100% one question, 5 marks or 4 marks question will be there. Time of supply, chances are less. Value of supply, yes, question will come. Either they'll ask a separate question or that first question which is merged question, no, that will be. So that first question will have value of supply. That first question will have exemption. That first question will have value of supply, exemption, and ITC. 3 topics together. ITC, of course, 6 marks weightage is there in the examination. And computation of GST liability also is similar to ITC. Registration, one question will come. Either they are asked MCQ of 2 marks, or they'll ask a theory question or some question like find the effective date of registration, etc. Tax invoice, debit note, credit note, e-way bill, accounts and records. Combined together, 4 marks, one question. If you are lucky, 8 mark, one question will come. Returns, payment, accounts and records, all one single chapter. Returns and payment of tax, one question for 4 marks you can expect. Okay, so this is very easy. Now, here many people don't study these chapters. Which chapter? Registration. Registration also they cover, but tax invoice, debit note, credit note, accounts and records, returns and payment of tax. You see these chapters. What is the weightage of this chapter? 20 to 45%, meaning 10 to 15 or 20 marks. 20% means 10 marks, 40% means 20 marks. So 10 to 20 marks, can I say at least 12 marks they'll ask? Even if they give 3 questions for 4 marks, 12 marks they are going to ask. And this 12 marks is a easy mark. This 12 mark which is there, no, it is a very, 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 very easy marks. I'll show the question paper also. I told no, I'll do it this in last day. I'll do it today only. Why wait till last day? What is it, sir? Because you don't want to study now. So I'll just show you my tax question paper. My question paper means, of course, your institute question paper. Previous year question paper, new syllabus. Intermediate you are studying. Shall I take your last attempt? Last attempt, they said the tax was very difficult. I mean, some people said that is because they started with income tax. GST, if you start, never it will be difficult. See, what is the question asked? 5 marks question. Determine the situation which require issuance of credit note. When should you issue the credit note? We'll study, and I have told in the classroom that this question will come for sure in the examination. That question only they'll ask. What is the maximum time limit for declaring credit notes? 30th November, something like this is there. And can credit note under GST be issued in case of secondary discount? You can issue financial credit note, you cannot issue this credit note, something like this is there. Explain the concept of seamless flow of credit. Seamless flow of credit means this is first chapter, 2 marks question. Under GST, concept of GST, there is a point telling GST we have continuous tax credit available. That is, instead of the word continuous, they have used the word seamless. Now you will feel seamless, go by, I never studied in the book at all, and you will ignore. Many people do that. Then with reference to registration, if Aadhaar number is not assigned to an existing registered person, such person is offered an alternative and viable means for identification. What are those alternative and viable means? Physically, they'll come and verify, they'll take some photo, etc. 3 marks question. Can I say these are all theory questions? How many marks theory question? 5 marks, 5 marks, 10 marks. Now you see this go back question, useless question. Why they ask also, I don't know. Supply topic. You know, supply chapter is there. First chapter, second chapter. State in which schedule of CGST Act the following supplies have been covered. Which schedule it is covered? We have only 3 schedule. 1, 2, and 3. What is schedule 1 talking about? Supply without consideration. Schedule number 3 is talking about negative list of supply, and schedule number 2 either supply of goods or supply of services. Correct? No? Only 3 schedules are there. You should say them which schedule it is. Wow. What is this first point telling? And also determine whether it is supply of goods or supply of services or deemed supply. Deemed supply means supply without consideration. Services by court or tribunal. Schedule number 3. It is not a supply. Correct? No? Any treatment or process applied on goods belonging to another person. Supply of services. Schedule number 2. Goods forming part of business assets are transferred or disposed of under the direction of person carrying on business, so no longer to form part of those assets. Schedule number 2. This is 2. Schedule number 2. It is treated as supply of goods. Sale of land. Schedule 3. Not a supply. Permanent transfer or disposal of business asset on which input tax credit has been availed. Schedule number 1. First point is this only, supply of goods. Are you understanding? 5 marks they asked. Hey, now you must be feeling, no, oh my God, I should have attended this examination. Yeah, 5 marks, 15 marks you saw. What is there in 15 marks? Nothing is there. 15 marks for doing nothing you got. Now you see, this is the even useless question. See, question number B, explain in brief. In brief means in short. Explain in brief the provision requiring the issuance of e-invoice. Oh, wow. I should issue the invoice. When I should issue the invoice? When your aggregate turnover is up to, when your aggregate turnover is more than 500 crores in any year starting from financial year 17, 18, correct? No, something like this is there. Also list out entities which are exempt from issuing e-invoice. Government CPs, something like this we have discussed. Government CPs, government entities. C for cinema halls, P for passenger transportation, I for insurance company, government pig, G for pigs, G for goods transport agency, S for SEZ unit. Does applicability of e-invoice is also applicable to SEZ developer? Yes, it is applicable to SEZ developer, not applicable to SEZ. 5 marks. Hey, please note, don't you think if you know the answers, it will hardly take 5 minutes, 20 minutes to write the answers for this? Or maximum if you take also 30 minutes you will take. 30 minutes, 20 marks. Easy or not easy? Now you go to any question of direct taxes. If you can tell me the answer like this, I'll change my name only. Seriously, I'm telling. And you see, this question is also easy. How to adjust the amount which is there in electronic cash ledger? We have that. You should first use it for previous month return, then current month return. Something like this is there. And this is GST I'm talking about. Something like this is there. See. Now this is exemption question. Exemption question for how much? 5 marks. Amount received for camps conducted for advancement of religion. Advancement of religion, spirituality, yoga. Exempt. Correct. No. Exempt. You have to write exempt. Wow. Dash. You have to write. You write this again. You write this line and write dash. Nothing you have to write. Seriously, I'm telling. Provide skill development program to abandoned children, homeless children, and 1 lakh rupees, and persons over the age of 65 years in urban area. Can I say 1 lakh is exempt? 2 lakh because it is in rural area was exempt, urban area is taxable. Wow, you know the answer, and you have not even revised. I mean, if you talk about marathon, how many marks? If 5 points are there, each point 1 mark. Tell me, if anyone would have started with GST, would he have felt that the question paper is difficult? Not possible at all. Whenever tax paper is coming, go to the last page, start reading ulta. No, sir, but yeah, say assalamu alaikum and start reading ulta. Oh, no problem. Okay, start reading ulta. Genuinely, I'm telling. Start reading ulta, you'll not feel any problem. Okay, you see. I mean, this is what, sir. This is the balance. Better we read the question. ABC is an and 5 marks question. Okay, it is an unregistered partnership firm having operation in Kerala made payment of advance of 1,50,000 to a GTA, the balance of 2,50,000. You are required to determine the time of supply. Wow, time of supply. There was an amendment in time of supply. What was the amendment, sir? Normally, it is date of making the payment or 61 days, whichever is earlier. But there was an amendment. If supplier is not issuing the invoice, then within 31 days, I should issue the invoice. Within 30 days, the recipient has to issue the invoice. So that amendment was there. About that amendment, they asked a question for 5 marks. And what is the value of supply? They have asked in this, the first question which is there. Now, salary chapter you feel is an easy chapter? Correct? No, normally, I mean, comparatively, because GST, see, income tax, even if you feel I know everything in my life, never read the first question until the last 30 minutes. Seriously, I'm telling, trust me when I say this. If you want to clear the examination, you follow this. Okay, genuinely, I'm telling. Has anyone written the examination before? If you have written, if you would have read this question, you would have felt that it is easy, and you would have started also, and you would have fell in well, and now you have seen. You felt that you know how to swim, but then you fell while jumping. When you were halfway there, you found crocodile is also there inside. That is this crocodile in the question paper. No, I'm not scaring you. It is not that it is difficult, of course, but it needs time. And that time, no, it will take your full time. If you start with this question, it is not that you will not be able to do. I'm not talking in that way. I'm telling that it will take your time. So first give time to those questions which are easy. By that, what will happen? Your confidence will boost like anything. Once your confidence is boosted, no one can stop you. And at that time, no, when you are reading this question, also you'll not make mistake. But when you start that question first, you are writing the test for the first time or exam for the first time. You will have that, oh, I should attend properly. Meaning that you will be very conscious when you're writing. You will be writing as if you're writing the exam. Correct? No. When you're normally doing something, you'll not be very conscious whether I'll be right or wrong. But at that time, you'll be very conscious. Now, because you're conscious, you will make mistake. So don't start with this, even though you know the answer. Okay? Don't start with that. Now you see this kind of question. Like I told, no, second question will be your every attempt. It is the same thing. You take any attempt, it is the same thing. Same story is repeated. Residential status. They have given some story and they have given Residency status and scope of total income question 6 marks. Okay. Then second question is what, sir? TDS some question they have given. So they have given 2 points about that TDS they have asked. Now you see salary question. Now one of the student asked me doubt on this question. Therefore, I am just referring to this point. Suresh, aged 55 years, is a resident individual employed in government company. Government company means our brain should say entertainment allowances, allows that deduction if it is there. During the financial year 24-25, he received monthly salary of 1 lakh along with a DA of 25% of basic pay. In addition, as per company's policy, he was provided with following allowances. He was given following allowances and perquisites on account of natural calamity caused by cloudburst in Himachal Pradesh. He instructed his employer to directly deposit his basic and DA for the month of September 24 to PM Cares Fund. Foregoing salary. Foregoing salary. Can I say if you forego the salary, then also it is taxable except where you forego for central government or state government. Now that is just one small line which we have written. If you see in our notes, it is just one small line, and many people would have ignored foregoing salary. Okay, foregoing salary is taxable. Now you see just this small line. If you would have not read, and if you would have directly started with the retirement benefit or whatever the provisions are there, then you would have not been able to answer this point. Just one small line. Okay, and that small line you would have made mistake. Sir, what to do with this point, sir? One question had, one student had asked me that question. So I'm bringing this point. Leave encashment he is receiving. Leave encashment, has he retired from the company? Hello. He is employed in the company. Can I say fully taxable? It does not matter what story they have given. He received entertainment allowance. Oh, what? Government employee. His employer incurred 5 lakh rupees towards medical treatment of his married daughter outside India, including 1 lakh rupees for travel expenses of patient and one attendant as permitted by RBI. That means in this attempt, they are not going to test us on this point at least, but they may test. There is an amendment. Upon his appointment as director during the year, the company provided free education to his child in school and monthly. This is 900 rupees. 900 rupees means up to 1000 rupees is okay. Yeah, are you understanding? Some types of questions like this are there. I'll just go to other question paper. And just to show you, if you start with GST, what is the benefit? Rule 86B of CGST Act imposes restriction on use of amount available in, oh wow, useless question. You know, if your taxable turnover is more than 50 lakh rupees, you can pay only 99% from ITC, 1% you have to pay in cash. That story they have written over here. 5 marks. Hey, the theory I have made, you write in the class note. State in brief, everything they want in brief only. State in brief the requirement of generation of e-way bill with reference to e-way bill. Okay, when you are supposed to generate e-way bill, do you know when you are supposed to generate? Yeah. Also discuss the brief provision of generation of e-way bill in case of bill to ship to. In case of bill to ship to, how many e-way bill you will generate? Bill to ship to. Karina told Priya to supply goods to Nayantara. Supply movement is happening only once, but invoice is going to be given 2 times. So how many bills I should give, sir? 1 e-way bill I should give. Something like this you are supposed to tell. How many marks? 5 marks question by the way it is. Yeah, are you understanding the importance of 5 marks? You are not understanding, I think. Hey, why? Some ulta manner they have given the question. No? 8A they have given, 7A, 7B they have given. This is not in right order. 15 is there. 14 is also correct. 13 is also correct. Okay. Now, see, e-way bill, before e-way bill, what do we have, sir? Compute your aggregate turnover. Compute your aggregate turnover. Aggregate turnover, you don't know how to compute. That is the only thing which you should know in life. And you should tell whether he's liable for registration or not. He will be liable if his aggregate turnover is more than some limit. Correct? No. And for this, how many marks question it is? 5 marks question it is. Again, can I say time pass question? You should say yes. Place of supply, useless question. Place of supply, so I mean, one of the easiest chapter I feel. I don't know why do we even study this chapter? Place of supply, 5 marks question. And please note, you can answer this. I mean, if I ask you a question, even now you will be able to tell me the answer. See, Ravi Builders of Pune, Maharashtra hired builder and company, an architect firm registered under GST law at Ahmedabad, Gujarat, for designing an architectural plan of for a 21 floor building to be constructed in Canada. What is the place of supply? I have given example. What is the example? I have a property right next to Burj Khalifa, mini Burj Khalifa. I'm asking them to construct. You remember something like this, yeah? But you don't remember. What is the place of supply? Location of recipient will be taken as place of supply, because the normally it should be location of immobile property, but immobile property is outside near location of recipient. What is the location of recipient? Pune, Maharashtra. Mukul, a bank manager, is transferred from Kolkata to Jodhpur. His family resides at Ranchi. He hires Fastman Courier Private Limited, registered in Kolkata, to transport his household goods from Ranchi to Jodhpur. Transportation of goods. Services given to a registered person or unregistered person. If it is registered person, location of registered person. If it is unregistered person, location where you are handing over the goods for transportation. Where are you handing over the goods? Ranchi. So place of supply is 5 marks question. Yeah, are you understanding something? You take any attempt. If you start with GST, your confidence will be built. That is the only thing. And okay, this is about how to start. Meaning, always start with 15 marks is there. First, read GST question to check whether from the last, you check whether you know the last 2-3 questions. If you know, that means your confidence will be built. Then, when you are answering MCQ questions, the best way of answering MCQ question is not to read the story first. Read the questions first. Let us say there is a case study, 3 questions will be there. Read those 3 questions so that you will understand what the question is asking for. Okay, are you understanding what I'm trying to say? Then you read the case study. In our school days, we had comprehension. What is that? Comprehension reading something. Like they would have given Ram is a person who is staying in Kodagu district of Karnataka. He has 5 buffaloes, 4 elephants, and his father's name is Sham, etc. All the some stories they'll give. And then the question is, what is Ram's father's name? So now, don't you think his buffaloes, cow is of no use to us? Correct, no? But still, I would have wasted my time studying that. Oh, 5 buffaloes. Some people would have also written on top. Oh, 5 buffaloes, 5 bees, 8 elephants, something like this. At that time, genuinely, many people would have done. But if I read the question, now my brain will look only for father. When you're reading the MCQ question first, and then if you go to case study, your brain will think only from that point of view which the question is asking for. Okay, and then take your time and complete. So your target should be 1.5 hours for completing MCQ and GST. 1 hour 30 minutes complete MCQ and GST, or maximum 1 hour 45 minutes, but not allowed. 1 hour 30 minutes is sufficient. Okay, MCQ you just have to write A B C D E F G. I mean A B C D only you should write. E F G if you write, then gone case only. Okay. Now if you have any question, you ask me. This I'll start tomorrow only. Go base. How do I start, sir? Start with, see, 15 minutes time utilization is this. Read the GST questions. You got confidence, start with GST. Start with GST, then MCQ. But in that 15 minutes, if you are able to read MCQ also, if you are able to read MCQ, or in that 15 minutes, read GST questions, then read income tax from second question. Don't read the first question. Okay, don't read that first 15 marks. I know it is compulsory question. See, compulsory question, you have to attend that. Attend means what? Question number 1, answer. Name of the assessee, right? Mr. Neeraj. That is attending, correct? No. Even if you don't write, no problem. Please note, your question paper will be for how many marks? Your paper will be for 120 marks. In 120, you are supposed to get how much? Now that is problem. See, that is the problem. That is the problem. You are supposed to get 40 marks. Now you are thinking from 40 point of view. How will you get 40? You tell me. Meaning our aim should be out of 120, I should at least attend for how much? Not 100 to not possible. I'll do one thing. You do one thing. If possible, take your previous attempt ka answer, suggested answer, write the answer as it is, copy. You will not be able to complete the entire paper. Not possible at all. Not possible. You will not be able to complete tax paper. Aim to write at least for 80, 90 marks. And if you are very good at the subject, of course, you will be able to write 90 or 100 marks. Okay, 90, 100 marks, that is possible. And please note, one of the student got 48 in GST. Income tax, that person got 42.5. Meaning GST, there are high chances of getting 50 on 50. If you write it properly, thoroughly, properly, whatever it is there. So start in that way. That 15 minutes you should utilize properly. So income tax, when I'm starting, start from second question. Read the question, aram se read the question. From second question, read, solve, read, solve, read, solve. How much ever you are able to do, if you are able to manage this time properly, first 15 minutes by reading the question. Because if I take GST, which is 35, and MCQ, which is 30, 65 marks will be done in how many hours? 1 hour 30 minutes. That should be my target. 1 hour 30 minutes should be my target. And if any person starts total income, okay, you start total income, and you yourself know total income will take minimum 20 to 30 minutes. If you have done total income question before, it will take 20-30 minutes. It will take for sure for you to write completely thoroughly. Now just imagine, for 15 marks you are giving 20 minutes, or 30 minutes you are giving for 15 marks. On the other side, you are giving, if I take 15 marks, 30 minutes, that means you will be able to complete only 45 marks in 1 hour 30 minutes. But there you are able to complete 65 marks in 1 hour 30 minutes. That should be your target. And then you are, I mean, once that is done, no, your confidence will increase. Now you know that to clear this paper, I only need to attend 15 more marks. If you attend 15 more marks, you'll get how much? 80 marks. After that, whatever is left over is maja only. Yeah, correct, no? And MCQ, you will not get any negative marking. So don't be scared in answering. This I'll answer later. That later will never come. So A, B, C, D, whatever is there, you just answer. Okay, yeah. Yeah, okay, not okay. Let us meet tomorrow, same time. Till then, Tata, bye bye. Take care. Enjoy.
Very good morning to you all. Very good morning, online students. I hope I am audible and also the screen is visible. Online students. Yes, sir. Okay. So let us continue our discussion. Profits and gains from business or profession. PGBP is the next topic, the last head of income, which we are supposed to discuss. Important topic. Of course, you all know that the main question, the first question will come from majorly around 60 to 70% of the first question is from this topic called as PGBP. Correct? Now, very simple chapter. As you all know how to prepare a profit and loss account, as per accounts, you take income on the credit side, take expenses on the debit sides, and the difference between that income and expenditure is taken as profit. Now, same thing you are supposed to do over here only. Here also you are supposed to do the same thing, but the only difference is that when you are taking income, you should take income as per income tax law. And which income should I take? I should take only business income as per income tax law. There will be a lot of different types of income, but I should not take all those incomes. I should take only business income as per income tax law, and expenses also I should take only as per income tax law. Not all the expenses related to your business or profession, of course. And that difference will be your PGBP income. Now, business includes trade, commerce, manufacture. Definition of business is business includes trade, commerce, manufacture, and profession includes vocation. Profession and vocation difference is that if you're doing something because of the qualification and degree which you have, then it is profession. And if you're doing something because of your skill and talent in that particular field, then it is called as vocation. Now, there are two methods of accounting, cash system of accounting and accrual system of accounting. This method of accounting is adapted only to find income under IFOS and income under PGBP. Only to find income under these heads, we use this method of accounting. Then ICDS, we have something called as ICDS, which you are going to learn in your final level. ICDS means for sir, income computation and disclosure standards. Then section 28. Section 28 is the charging section of this particular chapter. It says
Any profit or gain from business or profession will be taxable under the head PGBP, or any amount received by you for termination of your business or for modification of terms of your contract, that also will be taxable over here. Amount received for not carrying on any business or profession. Whatever money you receive for not doing any business or profession or not sharing any technical know-how, that amount also, if it is related to your business, it will come over here. Income from services rendered to an association by an association to its own members. So if there is an association which is giving services to its own members, then that income will also come over here. Export business will have incomes like export. If you are into export business, then you may receive something called as duty entitled passbook, duty drawbacks, or cash compensatory support. All this will also be treated as your business income. Any benefit or perquisites arising from business or profession will come over here. Interest, salary, bonus, remuneration, or commission which is given by a partnership firm to its partners. Please note, salary, bonus, remuneration, commission given by partnership firm to partners, that will not be taxable under what it's that will not be taxable under salary. It will be taxable under PGBP, subject to the limit which is given under 40B. Some received as under key main insurance policy. Key main insurance policy money, where it is taxable depends on who is receiving it. If the employee receives it, then it is taxable under salary. If the company employer receives it, then it is taxable under business. But if any other person receives, then it is taxable under income from other sources. Then fair market value of stock in trade on conversion of stock in trade into capital asset. Now, yesterday one question was asked, sir, what if yesterday we studied in capital gain that yesterday in the sense just recently, for those who are watching recording, we had studied what, sir, that if capital asset is converted into stock in trade, then capital gain will come on the date of conversion. Whatever amount is there, that will be taken as full value of consideration for computing capital gain. Similarly, when a stock in trade is converted into capital asset, whatever is the market value on the date of conversion, that market value will be taken as business income. Now, important point to be noted is set off and carry forward. For set off and carry forward purpose, the business are divided into three categories. One is your normal business, one is your specified business, because you know what is specified business. Other type of business is your speculation business. Speculation business is important. Speculation business means what, sir? Buying and selling of shares without taking its actual delivery. If you are buying and selling any shares without taking the actual delivery of the shares, then it is called as speculation. If I am doing trading in shares, or if I am doing option trading, derivative trading, etc., then it is treated as a normal business. Only if you buy and sell shares without taking actual delivery, then it is speculation. If I take delivery, then it is capital gain, which is short-term capital gain or long-term capital gain, depending upon the period of holding. Now, for computing the business income, there is a section 29 which says, for computing the business income, you should go through all the sections starting from section 30 to section 43D. Section 30, rent, rates and taxes, repairs, insurance for building. Section 30 says, if you have a building, if you have a place from where you are doing business, and if that place is taken on rent, if that place is a rented place, then you can claim the benefit of rental expenditure. You can claim the benefit of rates and taxes you are paying for that building, that is municipal taxes. You can take the benefit of insurance which you have taken on the building. You can take the benefit of revenue expenditure taken by you, and you can take the benefit of capital expenditure. But capital expenditure, you cannot claim it as deduction straight away like other expenses. Capital expenditure will be treated as deemed building, and you can claim depreciation on capital expenditure. But if the building is owned by you, on that owned building, you can claim rental expenses. No, sir, because I will not be paying any rent to anyone. Therefore, I will not be allowed to claim rental expenses for owned building. But any other type of expenses related to building. Yesterday we saw, I mean, in the previous class, we saw a question with respect to one question. We saw three incomes were together under house property, wherein 25% of the property was used for business purpose. Correct? No. So there we allowed all the expenses while computing business income. Correct? We allowed rates and taxes, insurance, repairs. If it is revenue repairs, allowed capital repair, added to the cost of building, and claim depreciation on that particular asset. Then section 31 talks about insurance and repairs on plant, machinery and furniture. So if you have any plant, machinery or a furniture, and if you take any insurance on them, then it will be allowed as deduction whether it is owned by you or rented by you. If you incur any expenditure for repairs, if it is a revenue repair, allowed as deduction. If it is a capital repair, then please claim depreciation by adding that asset to the cost of the for capital expenditure. Please claim depreciation by adding it to the cost of asset. Then section 32 talks about depreciation. One of the most important section in your PGBP chapter is section 32. Section 32 talks about depreciation. Two conditions should be satisfied if you want to claim depreciation. Depreciation is allowed as deduction if two conditions are satisfied. If you want to claim depreciation, you should satisfy two conditions. Assessee should be owner of such asset. So if I am claiming depreciation on any item, I should be the owner of that asset, and that asset should be used for business or profession. So two things I should satisfy. Assessee should be owner of that asset, and that asset should be used for business or profession. So I have a plant and machinery. If it is rented, can I claim depreciation, sir? No, because I'm not the owner. But if it is owned by me, I can definitely claim depreciation. Then I have laptop. Priya Saris has laptop that is used for the purpose of, it is used for personal purpose. I cannot claim depreciation. If it is used for business purpose, yes, I can claim. If I take anything on hire purchase system, I can claim depreciation from the date of possession of that item. In case of lease transaction, lesser, the person who is giving the property on lease can take the depreciation. And if the property has a joint owner or a co-owner, each of the co-owner can claim the depreciation proportionately. Now, depreciation under income tax law is allowed from the date when the asset is put to use and not from the date of purchase. Under income tax law, date of purchase has no relevance. What is important, sir? Date of put to use. So, depreciation can be claimed by you from the date when you have put the asset to use. Now, assets are classified into 4 different categories for claiming depreciation: building, furniture, plant and machinery, intangible assets. Intangible assets includes all the different types of intangible assets except goodwill. Now, methods of depreciation. There are totally how many methods of depreciation, sir? There are totally 2 methods of depreciation. One is called as what, sir? Straight line method. Another one is called as WDV method. Straight line method follows a system called as individual asset system. Normally, they don't test you on this point in examination. Individual asset system, meaning depreciation is given for each and every asset individually, separately. And this method of depreciation is not generally followed by people. It is only an option given to power generation and distribution of power entities to follow this method. But if it is WDV method of depreciation, WDV method follows a system called as block of asset system, and this is required to be followed by all types of assessees. All types of assessees should compulsorily follow this method called as WDV method of depreciation. Now we have block of asset system. What do you mean by block of asset system? If you are a person who is following WDV method of depreciation, you don't give depreciation for individual asset separately. You create a block of an asset. That asset which has same rate of tax, and that asset which falls under same class. A block will be created for that. That asset which has same rate of depreciation and that asset which falls under same class. Class, we have totally 4 classes: furniture, building, plant and machinery, and intangible assets. So what is having same rate of tax and what is falling under same class? I will create a group of that. I'll create a block of that, and for this block I will give depreciation. Now, rate of depreciation. Building, if it is a residential building, then rate is 5%. If it is a temporary structure, 40%. And if it is any other type of building, then 10% will be taken as depreciation. Normally for building, if I ask you what is the rate of depreciation, sir, answer should be 10%. Now, furniture, if it is a furniture, for furniture, the rate of depreciation will be furniture including electrical fittings. For furniture including electrical fittings, the rate of depreciation is 10%. Intangible assets, the rate of depreciation is 25%, except goodwill. Goodwill is not depreciable asset. Then plant and machinery. For plant and machinery, rate of depreciation is 15%. Sorry, for motor vehicle, in plant and machinery we have different asset, meaning all the assets normally fall under the category of plant and machinery only. So under plant and machinery, if it is a motor vehicle, then rate of depreciation is 15%. But if you are in the business of running motor vehicle on hire, depreciation rate is 30%. Ships, vessels, boats, etc., 20%. Aircraft, 40%. pollution control equipment 40%, computer including computer peripherals and computer softwares is 40%, windmills 40%, oil wells 15%, books including annual publications, whether it is normal books or annual publications, for everything it is 40%. All other types of plant and machinery rate of depreciation is 15%. Now, if an asset cannot be classified by you under any head, then classify it as plant and machinery and apply the rate of 15%. Calculation of depreciation. Calculation part is very important because here many of people will make mistake, because here whatever you learn in accounts, that is not applicable at all. So for calculation of depreciation, you should take your opening WDV. Meaning whatever your opening WDV is there, take that. Add the assets which are acquired by you during the previous year. Add what, sir? All the assets which are purchased by you or acquired by you during the previous year. Now, whatever you are purchasing, no, whatever assets is acquired by you, that is divided into three categories. Whatever purchases you are making during the year, divide that purchases into three categories. The asset acquired or purchased by you during the year and put to use for 180 days or more. So what are the purchases made by you and used for 180 days or more? What are the purchases made by you but put to use for less than 180 days? And what are the purchases made by you during the year but which is not put to use at all? Please note, whatever purchases you are making during the year, that should be divided into three categories. Asset acquired and put to use for 180 days or more, put to use for less than 1 days, and not put to use at all. From that, you subtract your sale proceeds. Sale proceeds means whatever money you have received from the asset which is sold by you during the year. Whatever money is received by you from asset sold, then that will give you your WDV for depreciation. From this WDV for depreciation, subtract your depreciation, you will get your closing WDV. So repeat, sir. Opening WDV, add your purchases. Purchases in three categories. Put to use for 180 days or more, less than 1 days, not put to use. That will give you some figure. From that, subtract sale proceeds. In accounts, you subtract the cost of value of that asset. Correct? No. No. Here you should subtract whatever money is received by your sale proceeds. You will get your WDV for depreciation. Subtract depreciation, you will get your closing WDV. Now, this WDV for depreciation is there, no? This WDV for depreciation, that should be divided into three categories. Whatever WDV for depreciation you have, you divide the WDV for depreciation into three separate categories. What are these three categories? Asset which is not put to use by you, asset which is put to use for less than 180 days, asset which is put to use for 180 days or more. So repeat, whatever depreciation you have, whatever WDV for depreciation you have, to claim depreciation under section 32, divide that WDV for depreciation into three categories. How should I divide, sir? You take this amount. First, give it to that item which is not put to use, meaning segregation you should do. Out of whatever amount you have, first allocate it to that asset which is not put to use at all. Then allocate it to the asset which is put to use for less than 180 days. Now, whatever is left over, that is the asset which is put to use for more than 180 days or more. So WDV for depreciation should be divided into three categories: asset which is not put to use, asset which is put to use for less than 180 days, asset which is put to use for 180 days or more. Now, sir, why is this division important, sir? Because that asset which is not put to use by you during the year, on that asset you cannot give any depreciation. If there is any asset which is put to use for less than 180 days, you can give depreciation, but only 50% depreciation, meaning whatever is the normal rate of depreciation, 50% of that is allowed. If there is any asset which is put to use for 180 days or more, then depreciation is allowed. But how much is allowed, sir? Depreciation fully allowed. 100% depreciation is allowed. So what is not put to use? No depreciation. Put to use for less than 180 days, 50% depreciation. Put to use for 180 days or more, 100% depreciation will be allowed. Now, very important point. If any asset is put to use during the previous year, is purchased during the previous year and put to use for less than 180 days in that previous year, meaning in the year when you are purchasing, in the same year if you are using for less than 180 days, if you are purchasing an asset and in the year when you have purchased it, in the same year if you are using it for less than 180 days, then only 50% depreciation is allowed for that year. Meaning I purchased an asset in this year, and this year only I used it for less than 180 days. I will give only 50% depreciation. I purchased the asset in this year and I put to use that asset in next year. Now it does not matter for how many days you are using. If I purchase in this year and use it in next year, if whether I use it for more than 1 days or less than 1 days, I will get 100% depreciation. Do you understand this? So calculation part is there. We have one more section called as section 32(1)(2)(a), which talks about additional depreciation. Additional depreciation means what, sir? Extra depreciation they are giving you. Additional means extra depreciation. So that is an extra depreciation which will be given only if you are in the business of any power generation, distribution or transmission, or you are in manufacturing business. So section 32(1)(2)(a) says additional depreciation, it will be given if you are in the business of power generation, power distribution, power transmission, or in the manufacturing business. Additional depreciation will be given to you at the rate of 20%. Meaning what, sir? Irrespective of what is the normal depreciation, even if the normal depreciation rate is 15%, additional depreciation, how much will you get? 20%. Additional depreciation will be available only if assessee has opted for WDV method of depreciation. So if I'm a power generation business person, then I have an option either to go for WDV method or to go for SLA method. But if I want additional depreciation, I have to compulsorily take which method, sir? WDV method. If I want to go for additional depreciation, I should definitely go for WDV method. Additional depreciation is available only for plant and machinery. Additional depreciation which is there, I will give that additional depreciation only for what, sir? Plant and machinery. Additional depreciation will not be given for building, furniture, intangible assets. Now, additional depreciation is not available in following cases. In these cases, you cannot claim additional depreciation. Which case? In case of used or second-hand plant and machinery. If you have any used or second-hand plant and machinery, you cannot claim. In case of vessel, vehicle, aircraft. In case of plant and machinery, which is used by you in residential accommodation. In case of plant and machinery, which is used in office premises. And in case of plant and machinery, where 100% deduction is already claimed by you under any other provisions of income tax law. Sir, repeat. Additional depreciation will not be given to you if it is a used plant and machinery, if it is a second-hand plant and machinery, or if the plant and machinery is a vessel or a vehicle or an aircraft, or the plant and machinery is used in residential accommodation, or the plant and machinery is used in office premises, or the plant and machinery for which 100% deduction is already claimed under any other provisions of income tax law. Okay, not okay. Now, please see, additional depreciation is at the rate of 20%. Very important is whenever you are seeing the question, you should see whether that person who is doing the business, whether he is a professional or he is a trader or he is a wholesaler or he is a manufacturer. Because in the first line, they will tell that he is a manufacturer and they will not give you information whether to calculate additional depreciation or not. If they specifically say in the question that don't find additional depreciation, don't calculate additional depreciation. And if the question says that this person has opted for 115 BAC default tax regime, then also additional depreciation will not be available. In all other cases, if the question is silent, then always claim additional depreciation. Okay, manufacturing business, very important. Now, additional depreciation is not available if an assessee is opting for default tax regime. Sir, you said additional depreciation rate is 20%, correct? No, sir, correct. Sir, what if I am using the asset for less than 180 days? Will I get 20% depreciation or only 10%? You will get 10%. And balance 10% will be given to you in next year. Additional depreciation is allowed in the previous year in which plant and machinery is put to use. Further, if the plant and machinery is put to use for less than 180 days, then only 50% additional depreciation will be allowed. And for that year, and the balance 50% will be allowed in the next year. Can you tell me the answer for this question? Ding, ding, ding. Additional depreciation is allowed only in the year when plant and machinery is put to use. Only once you will get. You will not get additional depreciation every year. 11 lakh 20,000 one answer I've received. Depreciation is how much? 3,10,000 one answer I've received. 8,50,000 one more answer I've received.  Now see opening WD they have given new machinery purchased. For this you will get normal as well as additional depreciation. Machinery imported from Colombo. Now this is a second hand plant and machinery or used plant and machinery, therefore no additional depreciation on this. New computer installed in generation wing, because it is installed in generation wing. Yeah. So if you are normal class, I would have told something. It is used. No. Used means that is 35 AD. Oh. Hey, used plant and machinery is used plant and machinery. Don't do goobeism. No, sir, I am getting some foreigner, sir. Used means used only, no goobe. Hey, are you understanding something in life? You are mixing this with 35 AD. 35 AD says imported second hand plant and machinery is treated as new plant and machinery. But this does not say that. Maja is there. So you take your, okay, there are two blocks. One is what, sir? For computer, it will be 40% block and this, it will be 15% block. So opening WDV, I take computer, there is no opening WDV. Asset not put to use is not there. Asset put to use for less than 1 days is 10 lakhs, more than 1 days is 9 lakhs and 2 lakhs. So now we have 61 lakhs and 2 lakhs. Now how much is the additional depreciation, sir? Now 61 lakhs, I will claim normal depreciation. What is put to use for less than 1 days? 10 lakhs into 15% into 50%. What is put to use for 180 days or more? 51 lakhs into 15% into 100%. Additional depreciation of on 10 lakhs only I will get additional depreciation, which is this 9 lakh value ka asset. I will not get additional depreciation on used or second hand plant and machinery. So 10 lakhs into 20% into 50% because put to use for less than 1 days. Now depreciation for block 2, 40% block, normal depreciation we get 2 lakh into 40%, which is 80,000. Additional depreciation 2 lakh into 20%, which is, why is it 20%? Additional depreciation rate is 20%. Sir, how come you are giving depreciation for computer, sir? Because Because what, sir? It is used in generation wing. If it is used in office premises, not allowed. Then section 50 talks about capital gain in case of depreciable asset. In case of depreciable asset, capital gain, what will happen to your capital gain in case of depreciable asset? Capital gain for depreciable asset will always be short term. First thing which you have to notice, whatever capital gain you get for depreciable assets, that capital gain will always be a short term capital gain, and the cost of acquisition for those assets should be taken as what, sir? The cost of acquisition of those assets should be taken as the WDV before sale proceeds. Before subtracting sale price, you get no opening WDV plus purchases. That amount will be taken as what is computer? Yeah, what is computer? Yeah, so hey, yeah, it does not matter which block you are. Are you a plant and machinery? Hello, even book is treated as plant and machinery. Hey, feelings. Problem is there in life. WDV method of depreciation. Now, when will you get WDV method of depreciation? When will you get a capital gain, sir? Very simple. If you have an asset but no WDV, capital gain or capital loss will come. If you have an WDV but no asset, capital gain or capital loss will come. If you have asset, if you have asset as well as WDV, depreciation will come. No, yes, asset but no WDV, capital loss or capital gain will come. No asset, yes, WDV, depreciation will not come, capital gain or capital loss will come. No asset, no WDV, capital gain will come. What is important to understand over here is the WDV of an asset can never be negative. It can be nil but never negative. Meaning, if I have see my purchase opening WDV is 6 lakhs, purchases is 2 lakhs. So value of asset which I have is 8 lakhs. From this 8 lakh rupees, I'll subtract my sale proceeds. My sale price is 11 lakh 50,000, but I cannot subtract 11 lakh 50,000 because if I subtract 11 lakh 50,000, this will come as negative. WDV of an asset can be nil but never negative. Under which method? WDV method. It can be nil but never negative. So the difference between the sale price and the WDV will be taken as short-term capital loss because the difference of this will come as negative, no? So that will be taken as short-term capital loss. Now, what is important is sometimes they may ask you in MCQ with respect to SLM method. What is terminal depreciation? What do you mean by balance in charge? They may ask you in MCQ. Now, under SLM method of depreciation, there is a separate concept applicable. Under SLM method, what happens? The rate of depreciation, the amount of depreciation will remain same throughout the life of asset. And this is the one thing that the amount of depreciation will remain same. Point number 2 is SLM follows a system called as individual asset system, wherein the depreciation is given by you separately, individually for asset over a period of, for every asset you give depreciation separately. Now let us take an example wherein the cost of asset is 100 lakhs, which was purchased on 15th of August 23. SLM method of depreciation says rate is 10%, and this asset was sold on 31st of December 25. Now the asset was sold for 72 lakhs. I sold the asset for 72 lakhs and the WDV of this asset was 80 lakhs. That means I sold at a price less than its WDV. That means I sold at a loss of 8 lakh rupees. Lawmaker says if you sell a asset for which you are claiming depreciation under SLM method at a loss, then that loss will be treated as terminal depreciation. If you sell any asset at a price less than its WDV, then that will be taken as what, sir? Terminal depreciation. That loss will be treated as not short-term capital loss or long-term capital loss, but it will be treated as terminal depreciation. If WDV method ka asset is sold for a loss, that means it is a short-term capital loss. But under SLM method ka asset, if it is sold at a loss, then that loss will be taken as what, sir? Terminal depreciation. and you can claim deduction of that expenditure. It will be treated as your normal business expenditure and you can claim it as deduction. If it is sold at a price more than its WDV, WDV is 80 lakh rupees, sold at 90 lakh rupees, meaning you sold at a price more than its WDV. How much more, sir? 10 lakh rupees more. Now, this amount of 10 lakh rupees which is there, that will be taken as your balancing charge. I will treat it as what, sir? Your balancing charge. This will be deemed as your business income. As per section 41(2), it will be deemed as your business income in the previous year when asset is sold. If you sell at a price more than its actual cost of asset is how much? 100 lakhs. If you sell it at a price more than 100 lakhs, then the difference between actual cost and sale price, that 12 lakh rupees will be your capital gain. And the difference between WDV and the cost of asset, difference between WDV and cost of asset will be taken as balancing charge. Okay. So under SLA method of depreciation, if the asset is sold at a price less than WDV, terminal depreciation more than WDV, less than cost, difference between WDV and sale price is balancing charge. More than cost, difference between cost and sale price is capital gain, and difference between WDV and cost is balancing charge. Now this balancing charge is deemed as business income under section 41(2). It is deemed as your business income. Now, if there is any fluctuation in foreign currency rate, if you purchase an asset from outside India, and because you are purchasing the asset from outside India, due to that, if there is any fluctuation in foreign currency, due to the fluctuation in foreign currency rate, if you pay high or more amount, then that high or more amount which is paid by you, that will be adjusted towards the cost of that asset. Before giving depreciation, whenever you make the payment in that year, you please adjust. If you are paying more, add it to the cost of WDV. If you are paying less, subtract it from cost of WDV. If any gain or loss arises at the time of making payment for an asset which is acquired from outside India, if you purchase an asset from outside India, and if any gain or loss arises for the asset which is purchased by you from outside India due to fluctuation in foreign currency exchange rate, and why is this gain or loss coming? Because of fluctuation in foreign currency exchange rate, then such gain or loss due to fluctuation shall be adjusted with the cost or WDV of the asset in the year when the payment is made. In the year when you make the payment, you should adjust it with WDV or cost of asset. Then we have unabsorbed depreciation. Unabsorbed depreciation means what, sir? If your current year ka business income is not able to take care of your current year ka depreciation, then it is said to be unabsorbed depreciation. See what happens if your current year ka business income is not able to take care of current year ka business expenses, then it is a business loss. Meaning if your income is more than expenses, profit, income is less than expenses, loss. But if your income, see your income is 10 lakhs, expenses is 14 lakhs. That means expenses are more, 4 lakh rupees is your business loss. Your income is 10 lakhs, expenses is 8 lakhs, meaning income is able to take care of expenditure, depreciation is 4 lakh. Income is able to take care of depreciation to the extent of 2 lakhs, and balance 2 lakhs it is not able to take care of. This is called as unabsorbed depreciation. Okay, what is unabsorbed depreciation? If your current year ka business income is not able to fully adjust or absorb the current year ka depreciation, then that unadjusted depreciation is called as unabsorbed depreciation. Unabsorbed depreciation can be carried forwarded for indefinite period and can be set off or adjusted against any income in the future years except salary income. Depreciation in case where asset is partly used for business purpose and partly used for personal purpose. If you have any asset which you are using partly, depreciation will be given proportionately only for business purpose. Actual cost of asset, you know this actual cost calculation same as your accounts, whatever is there. So take your cost of asset, add all the expenses which are incurred by you till the asset is put to use. Add all those expenses, including the interest which you have taken on the loan repaid by you till the date it is put to use. Subtract the subsidies, grants, subtract the sale proceeds from trial runs, if any. That will give you your actual cost. Now, if you have incurred any expenditure, above expenditure, any type of expenditure, if you incur more than 10,000 rupees in a single day to a single person for a single expenditure, by any mode other than account pay check, account pay demand draft, or other electronic clearing system, then that expenditure should be completely ignored by you. You should not take into consideration that expenditure. If any stock in trade is converted into business asset, if you have stock in trade that you are converting into business asset, I'm an AC dealer, one of the AC I'm converting into business asset, then the market value of that asset on the date of conversion will be taken as actual cost for business purpose. If any asset is acquired through gift, will, or inheritance, then the actual cost of such asset shall be, if you get any asset by way of gift or will or inheritance, for you the actual cost of that asset will be the cost to previous owner less notional depreciation. Notional depreciation is what, sir? Depreciation for that asset as if it was used for business purpose by the previous owner till the date when he gifted. If any asset is purchased by an assessee at a higher price so as to claim higher depreciation, the actual cost of that asset will be determined by assessing officer. Where an assessee sold, where an asset is sold by an assessee is repurchased by him to claim higher depreciation, the actual cost of such asset shall be sale price or WDV of that asset or repurchase price, whichever is higher. So I sell some asset to you and I purchase it back from you, sale price or repurchase price, whichever is less will be your actual cost. Where an asset on which depreciation is claimed by the assessee is sold by him to any person and is subsequently taken back on lease. I sold an asset to you and I purchased back that asset from you. That is the previous one. Now what is happening? I'm selling the asset to you. Within, I am selling the asset to you. I am selling the asset to you, and I am taking back from you that same asset on lease. In such cases, the actual cost of that asset will be WDV of that asset on the date of sale in the books of seller. Now, this is very important. MCQ they may test, and they have tested also previously. Actual cost of building used for personal purpose now put to use for business purpose. So, if you have any building which you were using for personal purpose, if you have any building which you were using for personal purpose, and now if that building is used for business purpose, then the actual cost of that building for you will be the actual cost of purchase of that building less depreciation as if that building was used by you for business purpose before you put it to use for business purpose. This option is applicable only for building, meaning if there is any other asset, for example, today you are purchasing a computer or a laptop for your studies purpose, and after some years you will start your own practice and tomorrow you are going to use it for your business purpose. For your business purpose, what will be the cost of that asset? Your actual purchase price. But if it is a building, actual purchase price less depreciation. Next we have section 35. Section 35 is also important section. They may test you in your that total income ka question. Or if you are lucky, they will ask you separate question. But normally they will not ask separate question. Scientific research means what, sir? Scientific research means any activity for extension of knowledge in the field of natural or applied science, including agricultural, animal husbandry, and fisheries. Now, scientific research can be two types: in-house scientific research, or you are giving donation to someone who is conducting research. Now, in-house scientific research means what, sir? I am doing research for my own business. So I may incur the expenditure either after commencement of business, or I may incur the expenditure before commencement of business. If I incur any expenditure after commencement of business, then check whether it is a capital expenditure or it is a revenue expenditure. If it is a capital expenditure, 100% deduction is allowed except on land. And if it is a revenue expenditure, then 100% deduction is allowed irrespective of what it is. If I incurred any expenditure after starting the business, capital expenditure 100% deduction allowed, revenue expenditure also 100% deduction is allowed except on land. If any expenditure is incurred before commencement of business, if you are incurring any expenditure for scientific research, when are you incurring these expenditures? Before commencement of business. Before commencement of business means what? Before starting the business, then you can take the expenses incurred by you only 3 years before the commencement of business. You can take expenditure incurred by you only 3 years before the commencement of business. And if that expenditure is a capital expenditure, 100% deduction is allowed except on land. If it is a capital expenditure, what will happen, sir? 100% deduction will be allowed except on land, and if it is a revenue expenditure, only for material and salary excluding perquisites you can claim deduction. Any other type of revenue expenditure incurred by you before commencement of business will not be allowed as deduction. Please note. Expenditure after commencement of business, whether it is capital or revenue, 100% deduction is allowed except on land. Expenditure before commencement of business, you can go maximum 3 years before. So if it is a capital expenditure, 100% deduction is allowed. If it is a revenue expenditure, then revenue expenditure, if it is for material and salary, allowed. Any other type of revenue expenditure, not allowed. Now, if you have claimed a deduction for any item under section 35, you cannot claim depreciation for that item. And if you are purchasing a building along with land, then the market value of such land and building should be segregated, and you can claim deduction only for building. Unabsorbed capital expenditure is stated like your unabsorbed depreciation, meaning it can be carried forward for indefinite period and it can be set up in future years. Sale of asset on which deduction under section 35 is claimed. If you sell any asset on which you have claimed deduction under section 35, then your business income will be deduction claimed under section 35 or sale price, whichever is less. Where sale price is more than your actual cost, then difference between cost and deduction given is your business income. Sale price and cost is your capital gain. Because the sale price is more than your cost, the difference will be taken as capital gain. Now this is important, where they will normally ask a question on donation. Now in-house research is allowed for everyone. In-house research is allowed for everyone. Donation for scientific research is allowed only for optional tax regime. It is not allowed for default tax regime. Donation to research association, research organization. If you are giving donation to an approved research association, approved institution, approved college or approved university for conducting scientific research, social research or statistical research, 100% deduction is allowed. If you are giving money to whom, sir? Research association, institution, college or university which is approved for what type of research? Scientific, social or statistical research, 100% deduction is allowed. If you are giving money to approved Indian company, if you are giving money to whom, sir? Approved Indian company which is engaged in the business of research and development, if it is scientific research, then 100% deduction is allowed. If you are giving money to national laboratory, IIT or university for scientific or for approved scientific research. Please note, in the previous two cases, the person to whom you are giving money is approved, and in these cases, the work which is there, that is approved. The research which you are doing is approved. If you are giving money to national laboratory, IIT or university, the research should be approved. Now, sir, once I make the donation, after that, if approval is withdrawn, can I still claim the deduction? Yes. Once you make the donation, after that, if approval is withdrawn, you can still claim the deduction. Now, sir, this deduction is not available for those people who are opting for default tax regime. Donation cannot be claimed by default tax regime persons. 35 AD, again, a good section and important section. Section 35 AD talks about what, sir? Section 35 AD talks about specified business. So they have given list of few businesses. They have given list of few businesses. These businesses, there are some extra benefit given to you. What are those benefits? You will see. What are these different types of business? If you are in cold chain business, honey business, sugar business, cross country, natural gas or pipeline business, hotel of 2 stars and above category, affordable housing, slum redevelopment, fertilizer business, or new infrastructure facility business, or hospital business anywhere in India, warehouse for storage of agriculture produce, semiconductor wafer fabrications, or inland container depot, and iron ore business. For all these businesses, what lawmaker says, for all these businesses, you will get deduction for capital expenditure incurred by you. You will get what, sir? Deduction for capital expenditure incurred by you. You can be any type of assessee. Section 35 AD says you can be any type of assessee, but you should be engaged in specified business. If you are any type of assessee who is engaged in specified business, and if you are incurring any expenditure, what type of expenditure? capital expenditure. If you are incurring what type of expenditure? Capital expenditure, except on land, goodwill, and financial instruments. Except on what, sir? Land, goodwill, and financial instruments. Then 100% deduction of that capital expenditure will be allowed to you. How much? 100% deduction of that capital expenditure will be allowed to you. Any type of assessee, it does not matter whether you are individual HUF, AOPBI, company, etc. If you are engaged in specified business, 14 businesses, and if you incur any type of capital expenditure except on LG fridge, except on what, sir? Land, goodwill, and financial instruments, then 100% deduction of that capital expenditure will be allowed to you. 100% deduction of that capital expenditure will be allowed to you. What are the important points over here? Section 35 AD is an optional section. What do you mean by this? Deduction under section 35 AD is optional. Assessee may or may not opt for this section. So if you want to claim the benefit of this section, you can claim. If you don't want to claim the benefit of this section, very good, be happy, don't claim. The business should be a new business. Such business should not be set up by splitting up or reconstruction of existing business. The business which we are talking over here should be absolutely new business. It should not be split up or reconstruction of an existing business. And the plant and machinery which is there, that should be a new plant and machinery. Whatever plant and machinery we are talking about over here, it should be a new plant and machinery. Used plant and machinery you cannot claim as deduction. However, 20% of your total plant and machinery can be used plant and machinery, and imported second hand plant and machinery will be treated as new plant and machinery for this section. Okay, what, sir? Imported second hand plant and machinery will be treated as new plant and machinery for this section. Now, how much deduction is allowed? So, three types of questions will be asked in this topic. How much deduction will be allowed? Then carry forward of losses. Then what if I transfer the asset from one business to another business? So how much deduction is allowed? 100% deduction is allowed under this section for capital expenditure incurred by you. How much deduction is allowed, sir? 100% deduction is allowed for capital expenditure incurred by you under this particular section. 100% deduction is allowed under this section for capital expenditure incurred. Capital expenditure is incurred after commencement of business. If the capital expenditure is incurred after commencement of business, if capital expenditure is incurred after commencement of business, 100% deduction can be claimed in the year when such expenditure is incurred. If the expenditure is incurred before commencement of business, then also you can claim 100% deduction. But when, sir? In the year when the business is commenced, provided you have capitalized that expenditure. A very simple, I'll repeat. Expenditure is incurred by you. When is the expenditure incurred by you? Expenditure is incurred by you before commencement of business. If expenditure is incurred by you before commencement of business, you can claim 100% deduction. When can I claim the deduction, sir? In the year when business is commenced, if you capitalize the expenditure in your books of account. If it is incurred after commencement of business, whichever year you are incurring, you can claim deduction. You will not get double deduction. If you have already claimed deduction under this section, you cannot claim deduction under any other section. Then no depreciation will be given to you. If you have claimed the benefit under this section for any asset, then you will not get depreciation for that particular asset. No depreciation will be allowed under section 35 AD. Then lock-in period of for asset. Whatever asset is there, that asset will have a lock-in period of 8 years. Meaning the asset for which you are claiming a deduction under section 35 AD, that asset should not be transferred by you. It should not be transferred by you or sold by you within the lock-in period of 8 years. If it is transferred by you within the lock-in period of 8 years, then if the asset is demolished, destroyed, discarded within the lock-in period of 8 years, whatever amount you receive, that is your business income, deemed as business income. But if you transfer the asset to your another business, from specified business you're transferring to non-specified business, for you, whatever deduction you have claimed, less depreciation, if it would have been used for business purpose, that balance amount will be deemed as business income. And for the other business who is purchasing, whatever is the cost of asset less notional depreciation as if it was used for business purpose, difference will be the actual cost of that asset for that other business who is purchasing. What if the asset is transferred to other business after 8 years, sir? Then for that company, new company, which you are transferring it to, the actual cost of this asset will be taken as nil. Then one more important point of this topic is what, sir? Set off and carry forward of losses. Set off and carry forward of losses. Now, loss of specified business can be set off only against profit of specified business. That is very important. Whatever loss you have under specified business, that loss of specified business can be carried forward by you only with the profit of specified business. Loss of specified business can be carried forward only with profit of specified business. Similarly, loss of a non-specified business can be set off with any business. If it is not a normal business loss can be set off with anyone. Specified only with specified, speculation only with speculation. Sir, for how many years can I carry forward the specified business ka loss? There is no limit. Specified business ka loss can be carried forward for indefinite period. Other points not relevant. Now, if you want to claim deduction under section 35 AD, your books of accounts are required to be audited by chartered accountant. So we need a lot of chartered accountants. So please clear your examination soon, because there are a lot of companies who are doing business over here, but chartered accountants are less. Go best, study well. So section 35D. 35D means what, sir? Preliminary expenditure. D for preliminary expenditure. Section 35D. Section 35D, preliminary expenditure. Preliminary means expenses incurred before commencement of business is called as preliminary expenses. That expenditure is allowed a deduction under section 35D, and it is allowed in 5 equal installment from the year in which the business is commenced. And they have given list of some expenditure. Only those expenditure will be treated as preliminary expenses. This section is applicable only to a resident assessee. You cannot claim the deduction under this section if you are a non-resident. So you can be a resident Indian company, or you can be any other type of resident assessee. The expenses incurred by you before commencement of business or after commencement of business, before commencement of a new business or after commencement of a business, for setting up a new unit or for extension of the undertaking. Deduction is allowed in 5 equal installment from the year in which the business is commenced. Amount of deduction allowed is, in case of Indian company, actual expenses or 5% of capital employed, 5% of cost of product, whichever is higher. Compare that with actual expenditure, take whichever is less. 5% of capital employed by you. Capital employed means what is the money which is put by you in the business. 5% of cost of project, whatever project you are starting, what is the cost of that project. Take 5% of that, take whichever is higher, compare that with actual expenses, take whichever is less. And for other resident assessee, take your actual expenses or 5% of cost of product, whichever is less. Capital employed means share capital of the company, debentures and long-term borrowings. This is the money which is deployed by you or employed by you in the business. Cost of project means amount invested by you in fixed assets of new project as per the books of accounts as on the last day of previous year. Preliminary expenses are listed below. What is preliminary expenses? FM less. FM less means preparation of feasibility study report, preparation of MOA, AOE, legal expenses, engineering expenses, market survey, expenses for public issue of shares and debentures. Section 35 DDA, expenditure incurred under voluntary retirement scheme is also allowed as reduction in 5 equal installments. This is applicable for all types of assessee. If you are incurring any expenditure in connection with voluntary retirement of an employee, expenditure is allowed as reduction in 5 equal installment from the year in which it is paid. So whenever you are paying from that year, expenditure will be allowed in 5 equal installment. Section 36 is an important section. One question will definitely come from section 36. Section 36 talks about some expenditure which is always allowed as deduction. Expenses always allowed as deduction. Section 35, 36(1). Insurance premium paid on stocks and stores. So if you have any stock in trade, and if on that stock in trade, if you're taking any insurance, that insurance is allowed as deduction. Then insurance taken by you on health of employees, very important. If you take any health insurance for employees, then health insurance for employees is allowed as deduction if it is paid by any mode other than cash. If it is paid by any mode other than cash, then health insurance, whatever you are taking, that hence health insurance will be allowed as deduction. Bonus and commission is also allowed as deduction, provided the condition is that bonus and commission should be paid by any mode other than. Bonus and commission should be actually paid. Bonus and commission is allowed as deduction if that bonus and commission is actually paid to the employee. Section 43B is there. Now section 43B. See, if you are paying for insurance premium for stocks and stores, it is allowed. For health of employees, it is allowed if it is paid by any mode other than cash. Then if it is an employee insurance, if it is related to life insurance of employee, never allowed as deduction. Life insurance of employees never allowed as deduction. But if it is health insurance, then health insurance will be allowed as deduction, provided it should be paid by any mode other than cash. The premium amount which you are paying, that should not be paid by you in cash. Okay. Now bonus and commission which is there, bonus and commission paid to employees, it will be allowed as deduction subject to section 43B. Section 43B, there is a section called as section 43B. That section 43B which is there, that talks about some expenditure which will be allowed as deduction only when that expenditure is paid within the due date specified under section 139(1). So section 43B gives a list of expenditure which is allowed as deduction only if it is paid within the due date under section 139(1). The due date under section 139(1) is what, sir? 31st of July of assessment year or 31st of August of assessment year for company, October for companies and audit cases. Now, these expenditure which are listed in 43B will be allowed as deduction in the current year, in the year when you are incurring that expenditure, only when that expenditure is paid within the due date specified under section 139(1). Sir, what if I pay this expenditure after 139(1) ka due date? If you pay this expenditure after 139(1) ka due date, then it will be allowed as deduction in the year when they are paid. Then interest on loan. Interest on loan, if you are taking loan from banks, means loan from banks means all scheduled bank, cooperative society. If you're taking loan from scheduled bank, cooperative society, public financial corporation, state financial corporation, NBFC, or state industrial investment corporation, then all that will be allowed as reduction if it is paid within 139(1) ka due date. If you are taking loan from any other person, it will be allowed as reduction whether it is actually paid or not. Discount on zero coupon bonds, you can amortize it over the useful life of the asset on pro rata basis. Employer contribution to employee ka welfare fund. Employer ka contribution, my contribution. Please note, if you remember in salary we discussed, employer will contribute money, employee also will contribute money. We are talking about employer ka contribution. Employer's contribution to recognized provident fund, approved superannuation fund, approved gratuity fund, approved provident fund, or any other approved welfare fund, or pension scheme of 80CCD. For 80CCD, there is a limit separately. If you contribute to these funds, then it will be allowed as deduction only if the money is paid to that fund within the due date specified under section 139(1). If you are contributing money to pension scheme referred to in 80CCD, then actual contribution or 14% of salary, whichever is less, will be allowed as deduction. Then if employee ka contribution is made, to this fund, now please note, for this 14% of salary means basic plus DA incomes. If employees ka contribution is made to the fund, then whether to PF fund, superannuation fund, employee state insurance corporation, or any other welfare fund, then it is first treated as income, and it will be allowed as reduction if it is paid within the due date of that particular act. Security transaction tax and commodity transaction tax is allowed as business, a deduction if you are in trading business. Animals which are dead or which becomes permanently useless, allowed as deduction. How much is allowed as deduction, sir? Cost minus scrap value. Family planning expenses will be allowed as deduction only for companies. Family planning expenditure will be allowed as deduction only for companies. If it is a revenue expenditure, 100% deduction is allowed. And if it is a capital expenditure, 1/5 of expenditure, meaning it is allowed as deduction in 5 equal installments. One more important point is bad debts. If family planning is also important, they normally ask question on this point. But it is allowed as deduction only for companies. That is important. Bad debts, if it is related to your business, you can claim it as deduction. If it is related to the loan given by you to someone, if your business is not giving loan, and if you are given money to someone and that person has not paid the money to you, that bad debts cannot be claimed as deduction. Now, provision for bad debts not allowed as deduction. Any type of provision under income tax law is never allowed as deduction. Then bad debts will be allowed as deduction only if you satisfy these two conditions. That debt should be treated as your income in any year, and that debt should be written off in your books of accounts. Recovery of bad debts will be deemed as your business income. It will be taxable as your deemed business income. Bonus commission, interest on loan. If it is loan from bank, allowed as deduction subject to 43B, meaning allowed if it is paid within the due date of 139(1). If you have taken loan from any other person, it will be allowed as deduction whether it is actually paid or not. If any interest payable on loan is converted into a fresh loan or a new loan, then deduction will be allowed as and when such loan ka installment is paid. Discount on zero coupon bonds. It can be amortized over the useful life of the asset. Discount on zero coupon bonds. Zero coupon bonds means what, sir? Those bonds which are issued at a discount but redeemed at a par. Now, with respect to zero coupon bonds, important point for MCQ is if any zero coupon bond is issued in between a month, and if number of days in the month is 15 days or more. If any zero coupon bonds is issued in between, and if number of days in the month is 15 or more, then consider it to be full month. Employer's contribution to employee ka welfare fund. If it is an approved fund, recognized fund, deduction is allowed subject to 43B. If it is unapproved or unorganized, unrecognized fund, then deduction is never allowed. And for 80CCD pension fund, 14% of salary is the limit for employer ka contribution. Salary is basic plus DA in terms. For employee ka contribution, first add it to your income. Whose income? Employer ka income. Then deduction will be allowed if it is paid within the due date of that respective act. If it is PF act. Bad debts, if it is provision for bad debts, never allowed as deduction. If it is normal bad debts, if it is business related, allowed as deduction. If it is related to the loan given by you to someone, then not allowed as deduction unless business is only giving loan. Now, bad debt will be allowed as deduction if you satisfy these two conditions. Condition is that debt should be treated as your income and that debt should be written off in your books of account. Section 37. Section 37 talks about what, sir? General deduction. General deduction means if there is any expenses, this is actually general expenses. If there is any expenses which is not specifically covered from section 30 to 36(1), if there is any expenditure which is not covered from section 30 to 36, and if that expenditure is incurred by you for your business purpose, if it is not a personal expenditure, if it is not a capital expenditure, and if it is not an offense prohibited by law, then that expenditure will be allowed as deduction under section 37. Sir, repeat, sir. If you have any expenses which is not covered under section 30 to 36, and if that expenditure is wholly and exclusively incurred by you for your business purpose, it is wholly and exclusively incurred by you for your business purpose, and that expenses is not an expenses of personal nature, and that expenses is not of capital expenditure nature, and that expenses is not an offense prohibited by law, then that expenditure will be allowed as deduction under section 37. Now here there is one small amendment, not an amendment, meaning addition they have done. Now they have told what, sir? Expenses should not be an offense prohibited by law. So they have added 4 laws basically. If it is an expenses related to, if you violate this laws, then that expenses is not covered. I'll just tell you which are those laws. See, under basic concept, what is the amendment? Amendment I'll discuss again tomorrow separately. Now, for business and profession, with effect from 23rd of April 2025, any expenditure incurred for settlement of proceeding due to contravention or default shall not be allowed as reduction under PGBP. Meaning, whatever fine penalty you are paying, that is not allowed as deduction. Applicable if paid under following laws: SEBI Act, Securities Contract Regulation Act, Depository Act, and Computation Act. Expenses incurred for settling violation under above laws are not allowed as deduction. Meaning, if you are paying any penalty, if you are paying any fine, that is all for expenses prohibited by law. Now they have added 4 laws to specifically tell you that if you are paying any fine under SEBI Act, Securities Contract Regulation Act, Depository Act, or Computation Act, then that penalty will not be allowed as deduction. SEBI, Securities Contract Regulation Act, Depository Act, Computation Act. If you remember, I would have told penalty for breach of law, penalty for breach of contract. Breach of contract ka penalty is allowed, breach of law ka penalty is not allowed. So these laws are included now. So important, penalty for breach of law is not allowed as deduction. Penalty for breach of contract is allowed as deduction. Breach means you are breaking the contract, breaking the law. Salary paid to employees is allowed. Partners is allowed as deduction, subject to 40B, sorry, 40 small b. Directors allowed as deduction, and leave salary is also allowed as deduction. Insurance, if it is life insurance for employees, never allowed as deduction. Keyman insurance, health insurance, stock insurance allowed. Advertisement expenses is not allowed, is normally allowed as reduction, but if advertisement is in a newspaper or a pamphlet or a brochure or a TV channel of a political party, then I will not give you as deduction. It will be treated as donation to political party, and I will give donation ka deduction under 80 CA, GGB, something like this is there. CSR, corporate social responsibility ka deduction is not allowed. If you are incurring any expenditure under section 135 for corporate social responsibility, not allowed as deduction. Under income tax law, anything you pay with respect to income tax, not allowed as deduction. Whether you are paying, meaning the profit which is there under business income, it is a profit before tax. Whatever profit is there, no, that is a profit before tax. PGBP income is profit before tax, so tax is not allowed as deduction, income tax. So if you pay any type of taxes, surcharge, cess, or interest penalty under income tax law, not allowed as deduction. Indirect taxes, if you are paying, yes, allowed as deduction, except penalty. Indirect taxes, and whether it is indirect taxes, surcharge, cess, or it is interest under indirect tax law, it will be allowed subject to 43B. Any other type of business expenditure will always be allowed as deduction. Now, what is 43B telling? 43B gives the list of expenditure which will be allowed as deduction only if it is actually paid. What are those expenses covered over here? Any tax, duty, cess, or any other sum payable under any law for the time being in force. Bonus or commission payable to employees. Employer contribution to approved or recognized provident fund, superannuation fund, gratuity fund, or any other welfare fund. Interest on loan taken from scheduled bank, NBFC, state industrial investment corporation, public finance corporation, or state financial corporation. Leave salary or any sum paid for earned leave. Any sum payable to Indian Railway for use of railway assets. For all these things, deduction will be allowed only if these expenses are actually paid. If you don't actually pay this expenditure, the deduction will not be allowed. If above payment, if the above payments are made after due date of filing income tax return under section 139(1), then such expenditure will be allowed as deduction in the year when such expenditure is paid. If any interest is payable is converted into a fresh loan, then it is not treated as actual payment of interest. Further, interest will be allowed as deduction as and when such installments are paid. Now, there is a small change over here also. MSME, the definition of micro and small enterprises have changed. Before, micro enterprises means what, sir? Micro enterprises means, I'll tell you what is the new law. Micro enterprises means that enterprises where the investment is less than or equal to 2.5 crores and the turnover of which is less than equal to 10 crores. Micro means investment is less than 2.5 crores, turnover is less than 10 crores. There is a change over here. And small means your investment is less than equal to 25 crores and your turnover is less than equal to 100 crores. Micro investment is less than equal to 2.5 crores and turnover is less than 10 crores. Small is 25 crores and 100 crores. Now, apart from that, everything else is changed. Only the definition of micro and small has changed. Any amount payable for an expenses to micro and small enterprises under section 15 of MSME, if it is not paid within the number of days agreed, and if you don't have agreement within 45 days or within 15 days, if you have not paid within the number of days agreed, which should not be more than 45 days, or within 15 days if you don't have such agreement, then that expenditure will be disallowed. If the payment is made, if the payment is not made within the above period, then the expenditure will be allowed as reduction in the year when the payment is made. If you pay it in next year, reduction will be allowed in next year. Ting, 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 ting. Expenses which are specifically disallowed. TDS wala provision this is. Section 40A1 says, if there is any interest, technical fee, royalty which is payable outside India or to a non-resident or a foreign company in India. If you are paying what, sir? Interest, technical fees or royalty outside India or to a non-resident or a foreign company in India where TDS is not deducted in the previous year, or meaning you are paying money to them without deducting TDS, or after deduction of TDS in the previous year, it is not paid to the government within 139(1) ka due date. Interest, technical fee, royalty is paid by you outside India or to a non-resident or a foreign company in India without deducting TDS, or you have deducted the TDS but not paid to the government within 139(1) ka due date, then that expenditure is 100% disallowed. You cannot claim deduction of that expenditure. Basically, if you don't deduct TDS, no deduction is allowed. If you deduct TDS but don't pay within 139(1) ka due date, no deduction is allowed. But this money, if it is paid to a resident person, then only 30% disallowance will be there. Any sum payable to a resident in India where TDS is not deducted in the previous year, or after deduction of TDS in the previous year, it is not paid to the government within 139(1) ka due date, then 30% of that expenditure will be disallowed. And this will be allowed subsequently when TDS is deducted in the next year, or it is deducted in the current year, previous year, but paid after due date of filing return, then such disallowed amount will be allowed in the current year whenever you are deducting and paying. Now, in these cases, amount will be allowed as deduction if the recipient has filed that person's return and considered the above amount and paid the taxes on same. So, one example I had given wherein you gave the services to me, I made the payment to you without deducting TDS, but you paid the tax on that amount. Genuinely you paid the tax on that amount. Now lawmaker says whenever you pay the taxes on that amount, that year I can claim the deduction. Section 40A2, income tax including surcharge and cess will not be allowed as deduction. Section 40A2A, wealth tax is not allowed as deduction. Section 40A3, salary payable outside India or to a non-resident in India where TDS is not deducted, or after deducting TDS it is not paid within the TDS ka due date. What is TDS ka due date? For April to February it is 7th of next month. For March it is 30th of April. Then that salary will never be allowed as deduction if it is paid to non-resident or any person outside India. Contribution to provident fund or any other welfare fund of employees where TDS arrangement is not made at the time of withdrawal of the money from this fund will not be allowed as deduction. Any tax paid by employer on non-monetary perquisites given to employee will not be allowed as deduction. Section 48 to 48.3, most important section. Section 48.2 talks about what, sir? Any unreasonable or excess payment made to whom, sir? Related person. You should remember the section number also. Any unreasonable or excessive payment made to a related person. Section 48.2 says unreasonable or excess payment made to related person or relative. Where any unreasonable or excess payment is made to a relative for an expenditure, then such expenses shall be disallowed. Now, who is a related person? For an individual, spouse, father, mother, brother, sister, lenient antecedent, lenient decedent is a related person. And for HUF, members of HUF, for firm or LLP, partners of the firm and their relatives, for a company, director of the company, for holding company, it is subsidiary company. And any person having substantial interest in the concern is a related person. Substantial interest means 20% or more voting rights, equity shareholding or profit sharing ratio. 40A3, payment made in excess of rupees 10,000 for a single expenditure to a single person in a single day by any mode other than account pay check, account pay demand draft, or any other electronic clearing system like NEFT, RTGS, UPI will not be allowed as deduction. It will be fully disallowed. And this limit of 10,000 rupees is 35,000 rupees for transporter. Section 40A7, provision for gratuity is not allowed as deduction. 40A9, contribution to any unrecognized fund or unapproved welfare fund of employees is also not allowed as deduction. Taxation of partnership firm. Section 40B. Section 40B talks about how much remuneration and interest you can pay to the partners of a partnership firm. Remuneration and interest to partners of a partnership firm. If remuneration means what, sir? Salary, bonus, commission or any other amount. Interest means interest on loan and interest on capital. Remuneration and interest is allowed as deduction only if it is authorized by partnership deed or partnership agreement. A remuneration and interest which you are paying to the partners, it will be allowed as deduction only when it is mentioned in the partnership deed. Remuneration and interest will be allowed as deduction prospectively and not retrospectively. Meaning, if you are mentioning that about remuneration and interest today, then deduction will be allowed from today, not from a retrospective day. Remuneration and interest. Remuneration is allowed for working partner only, not for sleeping partner. Interest will be allowed for both working and sleeping partner. How much interest can you give, sir? The interest limit under section 40B is 12% per annum to each partners. Remuneration allowed as per 40B, it completely depends on your book profit. If the book profit of the company is up to 6 lakh rupees, then 90% of your book profit or 3 lakh rupees, whichever is higher. Meaning minimum you are going to get is 3 lakh even if the company is making loss. And for the balance book profit, for the remaining book profit, it is 60% of your book profit. So add both these things. That is the total remuneration which you can give to your partners. Now, what do you mean by book profit? Book profit is nothing but your business ka income, your net profit of the income as per income tax law before remuneration and interest. Okay, so take net profit before remuneration and interest, meaning you compute the business income by giving all the items which is allowed, what is not allowed, everything you take and find the income. After you find the income, subtract interest. Subtract what, sir? Interest as per 40B. Now you get your book profit. So remuneration, net profit before remuneration interest, subtract interest, that will give you your book profit. Now, what is the taxability of income earned by partnership firm and partners? See, whatever a partnership firm is earning, on that partnership firm has to pay the taxes at flat 30%. Taxability of income earned by partners from the firm. So whatever the firm is whatever the partner is earning, the partner can earn two things: remuneration and interest, and share in profit. Whatever share in profit a partner is earning from the partnership firm, that share in profit is exempt under section 10 2A. Remuneration and interest which is earned by partner of a partnership firm, if it is within the limit of 40B, then it will be allowed as deduction for the firm, but it will be taxable in the hands of partner. Remuneration and interest more than the limit given in 40B, that remuneration and interest which is more than the limit given in 40B, that if up to 40B ka limit will be allowed as deduction for the firm and will be taxable in the hands of partners as business income. If it is more than the limit, it will be disallowed for the firm. That extra amount will be disallowed, and that extra amount will be not taxable in the hands of partners. Section 41 talks about deemed business income, remission or cessation of trading liability, balance in charge, sale of scientific research asset, recovery of bad debts, and brought forward loss of defunct business. They are all deemed as your business income. Now, how do I solve PGP question? 90% of the time question will be with respect to indirect method, but sometimes they may ask you direct method also. Direct method is used when they give you list of all the different types of income loss, list of all the different types of expenses. Take only business related items, take business incomes, take business related expenses. That is the difference is your business income. Indirect method is normally followed. Indirect method means they'll give you profit and loss account, or they'll give you net profit and they'll give you some adjustments. So you take the net profit which is given in the question, add whatever is related to business, add and subtract whatever is related to the business, add and subtract whatever is not related to business. Take net profit, subtract the income taxable under other heads. What will happen normally is when you are preparing your profit and loss account, you may also take your interest income, meaning other incomes in your profit and loss account. So subtract the income taxable under other heads, add the expenses related to income taxable under other heads. Okay, why am I subtracting income taxable under other heads? Because of this income, my profit would have been increased. Therefore, now I am decreasing. And why am I adding the expenses of related to other heads? Because of this expenditure, my expenses would have reduced. My profit would have reduced. Therefore, I am adding it back to get my normal profit. Add all the expenses which are debited to the profit and loss account, but it is not allowed as deduction. Less all the expenses which is not debited to profit and loss account, but it is related to your business. Add business income which is not credited to your profit and loss account. That will give you your business income. Last part of this chapter is called as presumptive taxation. So we have section 44 AD, 44 ADA, 44 AE. 44 AE is important, and second important is 44 AD. Presumptive taxation means what, sir? You are declaring your income under presumptive basis. Section 44 AD, if you are doing any business, or if you are a non-specified professional, if you are doing any business or if you are a non-specified professional, then this 44 AD is applicable. This says if you are a resident individual, HUF and a firm except LLP, and if you are doing any type of business, or if you are a non-specified professional except commission business, agency business, or 44 AD and 44 AE business, and if your turnover is up to 2 crore rupees, then your business income will be taken as 8% of turnover, and your business income will be taken as 6% of turnover. Please note, 44 AD is applicable if you are an individual, HF, firm excluding LLP, if you are doing any type of business, or if you are not a specified professional, and if your total turnover is up to 2 crore rupees, and if your total turnover is how much, sir? Up to 2 crore rupees, then your business income will be 8% of your turnover, or it will be 6% of your turnover. Sir, when will I take 8% of turnover? Normally, we'll take 8% of turnover. When will I take 6% of turnover? If the business sales ka receipt, if the sale proceeds of the previous year is received through account pay check, account pay demand draft, or any other electronic clearing system within 139 ka due date. If you receive through account pay check, account pay demand draft, or any other electronic clearing system. Sir, what if I receive after 139 ka due date through these modes? Take 8%. If it is within this date, then only 6% you will take. Now, what is important for this? And 44 AD A. 44 ADA also talks about presumptive scheme for specified profession. Who are specified profession? I lift come. I lift come means accountant, chartered accountant, cost accountant, architect, interior designer, legal professional, then IT professional, film artist, then technical professional, then company secretary, what is this, sir? Medical professional and engineers. So for specified profession also, this same 44 ADA is applicable, which says if you are a resident individual or a resident firm excluding LLP, and if you are a specified professional, and if your gross receipts is up to 50 lakh rupees, then you can claim the benefit of this. Whatever your gross receipts is there, into 50% can be claimed as your business income. Now, these notes are common for 44 AD and 44 ADA. Now 50% is your business income, 6% or 8% is your business income. Therefore, you will not get any deduction from section 30 to 37. It will be assumed to be given. 40B ka benefit will also not be allowed in case you are a firm. If you want to declare higher income more than 6%, 8% or 50%, you can always declare. If assessee wants to declare an income lower than the limit specified under 44 AD, then he can do so subject to following condition. If you want to declare the income lesser than the limit given over here, then maintain books of accounts and get it audited by a chartered accountant or cost accountant, meaning prove me that you have lesser income. Deduction under chapter 6A is allowed to section 44 AD assessees. Brought forward losses can be set off against this income. Higher income of, there it is 3 crore and here it is 75 lakhs is allowed. For businessmen it is 3 crores. For specified professional it is 75 lakhs is available if your cash receipts and cash payments are less than 5% of total receipts and total payments. Section 44 AE, presumptive scheme for goods transport businessmen. Goods transport businessmen means what, sir? GTA. If you are a person who is involved in the business of transportation of goods in a goods carriage, this section says I am applicable to all types of assessee if you are doing any business or any business of playing, hiring, leasing, renting of goods carriage, and if you have up to 10 goods carriage at any time during the previous year. If it is a heavy goods vehicle means what, sir? Your gross vehicle weight is 12 tons or up to 12,000, more than 12 tons or more than 12,000 kgs. Then I will take your business income to be equal to 1,000 rupees per ton per vehicle per month or part thereof. And if it is not a heavy vehicle, if it is any other type of vehicle, 7,500 per vehicle per month or part thereof. Note, month over here should be considered from the date of purchase of the asset, not from the date of put to use. Please note, you should have not more than 10 goods carriage. You should have not more than 10 goods carriage. If it is heavy goods vehicle, gross vehicle weight is more than 12 tons or 12,000 kgs, 1,000 rupees per ton per vehicle per month or part thereof. Other vehicles, 7,500 rupees per vehicle per month or part thereof. Month should be considered from the date of purchase, not from the date of put to use. Then this small time pass point is there with respect to section 44 AA, maintenance of books of account. Specified profession. If you are a specified profession, who is a specified profession? I lift come is a specified profession. You have to maintain your books of accounts if your gross receipts is more than 1,50,000 in all the preceding 3 previous years. If you are a new business entity, if your expected gross receipt for the current year is likely to exceed 1,50,000, then you should maintain books of accounts which are cash book, journal, ledger, carbon copy of bill more than 25,000, original copy of expenses more than 50,000. And in case of medical professional, daily case register, stock register should be maintained by you. Then if you are not a specified professional, if you are a specified profession and if your gross receipts in all the 3 years is not more than 1.5 lakhs, or if your expected gross receipt is not more than 1.5 lakhs, then maintain those books of accounts which will help the assessing officer to compute your business income. Person carrying on non-specified profession or any type of business. If your profit is more than 1,20,000 or turnover is more than 10 lakhs, you should maintain books of accounts in any of the 3 preceding previous years. And if you are an individual or HUF, profit limit is 2.5 lakhs, turnover limit is 25 lakhs. For new business, your turnover is likely to exceed the above limit. Then you should maintain such kind of books of accounts which will help the assessing officer to compute your income. But for person who is not a specified profession or who is doing any type of business, profit is not more than 1.2 lakhs, or turnover is not more than 10 lakhs in any of the 3 years, or your individual HUF and your current year profit is not more than 2.5 lakhs, or profit is not more than 2.5 lakhs and turnover is not more than 25 lakhs, then you are not required to maintain any type of books of accounts. Section 44 AB, audit of books of accounts. If you are a businessman and if your turnover or gross receipts is more than 1 crore, you should get your books of accounts audited. Limit will be 10 crores if your cash receipts and cash payments are less than 5% of total receipts and total payment of that business. For professional, the limit is 50 lakhs for getting your books of account audited. If your turnover is more than 50 lakhs, you should get it audited. And this 50 lakhs will be 75 lakhs if your cash receipts and cash payments are less than 5% of total receipts and total payments. Persons covered under presumptive scheme. If you are a person who is opting for presumptive scheme and if you want to claim the income lesser than the limit specified over there, which is 6%, 8%, 50%, etc., then you also should get your books of account audited. If I don't get my books of account audited, I have to pay a penalty equal to 0.5% of turnover or 1.5 lakhs, whichever is less. This is about what's your business income. Now what we'll do one question from RTP. The total income question is there. There's too much is too much. RTP. LD revision test papers. Okay, this is your total income ka question. Question number 10 in your RTP is your total income ka question. Mr. Yuvan, a resident individual aged 45 years, engaged in manufacturing of textile business. See what I told you. First line will tell you who you are, correct? So if you're in the textile business, then additional depreciation may come. So that is important. Okay, it may come. Okay, we don't know. It may come. He follows Mercantile system of accounting. The net profit as per profit and loss account after debiting and crediting following items is 20 lakhs. So what is his profit, sir? 20 lakh rupees. So just write the net profit amount somewhere. Net profit is 20 lakhs. This is as per books. Now they have given different items to you. 25,000 paid to creditors for goods in cash. Can I say disallowed? Who will come in live? 40A? 40A3 will come. Hello. Gross interest received from saving bank is 15,000. So this will go under income from other sources. From here, what will I do, sir? I'll subtract it from my 20 lakh rupees of net profit. Contribution to accrued research association 1,10,000 rupees. So if it is default tax regime, these expenses will not be allowed as reduction or else no adjustment. He paid a job charges for value addition of fabrics 1,10,000 without deduction of tax to job work by account paid check. He paid through account paid check but did not deduct the TDS. So if you are paying the money to a resident person without deducting TDS, 30% of that expenditure is disallowed. Okay, so what will happen over here? 33,000 rupees will be disallowed. Normal depreciation is 4,50,000 as per income tax law. Normal depreciation is 4,50,000, including depreciation on 15 lakh being cost of new machinery purchased and put to use on 1925. Now please note, what does this mean? This means what, sir? They have given normal depreciation of 4,50,000, but they are not talking anything about additional depreciation, and they have told what? New plant and machinery. This normal depreciation includes depreciation on a new plant and machinery whose value is how much? 15 lakh rupees. That means I should provide for additional depreciation. 20% subsidy of 20% on new machinery under technology upgradation fund scheme from central government, which was credited to profit and loss account. Okay, no problem. Subsidy is deemed as your business income, or that should be reduced from your cost of asset to claim depreciation. Insurance expenses include 50,000 deposited with Life Insurance Corporation of India for maintenance of her mother. Okay, so in your personal expenses. So personal expenses, what is it telling? 50,000 is insurance expenses includes Life Insurance Corporation for maintenance of her mother, 70-year-old, dependent upon him, suffering from severe disability. Here, can I say business expenses? I will ignore in the sense I will subtract it or I will add it back because he has already claimed the expenditure. I will add it back and I will claim deduction under 80 DD. Dependent is disabled is DD. I am maintaining a dependent who is disabled and they say that she is severe disability. Therefore, 1,25,000 ka full deduction I can claim. DD is dependent is disabled. You is personal. You yourself are disabled. General expenses include revenue expenditure incurred for promoting family planning among employees. 75,000 promoting family planning. Family planning allowed only for company. Yeah, company only they get or everyone will get. Company will get. So can I say not allowed this expenditure? Yuan on 1/3/26, Mr. Yuan purchased raw material for 30,000 from Kanha and Company, a medium enterprises. Oh, medium means no problem. Micro and small is a problem. Registered under MSME Act, for which the payment was made on 18th of April 26. There was no agreement for payment. If there was no agreement, you should pay normally in 45 days. 45 days is 15th of April, but you have paid on 18th of April. But anyways, this is medium enterprises. Without agreement, 15 days. Yeah, correct. But still it is. Additional information, Mr. Yuan repaid housing loan principal and interest of 75,000 and 80,000 rupees availed. So housing loan ka principal repayment he can claim under 80C and interest repayment he can claim under Section 24B. He received rent of 35,000 from letting out of the property. Municipal taxes is 40,000 for this house, which was paid by him on. So these are additional information. Additional information means there is no adjustment done in your profit and loss account. So this is separate information. He received 75,000 by premature withdrawal of deposit, including 5,000 rupees in post office time deposit eligible for deduction under ATC. He sold gold bracelet. Can I say we will ignore these points? We'll concentrate on business income. Hello? Is the question visible to you? Yes, this is the only question for business income. Compute. Do whatever you can do in life. Sorry. Compute the total income and tax liability of Mr. Yuan for the assessment year under default regime and optional regime, both the regimes. And they have told turnover of the business for the financial year 24-25 is 250 lakhs and 25-26 is 300 lakhs, meaning 2.5 crores and 3 crores. Now, see what is the net profit given? How much? 20 lakhs. First item which they have given is what? Add cash to creditors 25,000. Then gross interest received from saving bank account, taxable under other sources. So less interest income, taxable under income from other sources. How much? Hey, you should write a note for everything. So for first one, what will you write? In the bracket only you write immediately. What will you write, sir? As per section 48(3), it is disallowed. Second one, you will write that interest is covered under income from other sources. It is taxable under income from other sources. Contribution to notified approved research association. Now, which regime are we following? Now, normally we should follow default tax regime and find the answer. So I will find under default regime. Business income only I'll find under default regime. Then I'll find business income under optional regime. So what is this? Scientific research. Because I have already subtracted, add back. Scientific research 1 lakh. Job worker 33% expenses is disallowed. Less job worker charges 33,000 rupees is disallowed. Job work charges how much, sir? 33. Who says this? 40A1. Not less, add. 40A1, add. Because your profit is more by 33,000, your profit is less by 33,000, you should add it back. Normal depreciation 45,000. Now here additional depreciation I'll write, but less additional depreciation not applicable for this fellow. Why not applicable? Default tax regime. Then subsidy 20% on subsidy of 20% on new machinery under technology upgradation scheme for central government, which was credited to profit and loss account. What is the value of new machinery? 15 lakhs. Subsidy is how much? 20%. Now what will I do? I have credited it to profit and loss account. I should have subtracted from cost of that asset. So because I have subtracted it from my profit and loss account, I will add back subsidy. I'll add back or subtract. Because of subsidy I have credited. That means my profit is increased. Hello, subsidy I have credited. That means my profit is increased. My profit is increased, which is wrong increase in profit. Hello. Hey, my profit is increased. That means what, sir? It is a wrong increase in profit. So how much is the subsidy which I should subtract? 15 lakhs into 20%, which is 3 lakhs. Now please note, this you would have done properly. But one additional adjustment for this will be, see, if I have not subtracted it from my cost of asset, my actual cost will be more by 3 lakhs. Hello. If I have not subtracted from cost, that means my actual cost of this machinery will be more by 3 lakhs. If my actual cost is more by 3 lakhs, that means I would have claimed depreciation on this item. Hello. That means I would have claimed depreciation. So can I say I should add back that depreciation because it is wrongly claimed by me? So add depreciation on subsidy. Now see, these are the points wherein you know that you have right, but still you will make a mistake. See, this point, okay, we know generally, yeah, we should subtract, but because I would have not subtracted depreciation or added back the depreciation, my answer will become wrong. Does that mean that I will not get marks at all for this question? You will still get for whatever right you have done in life. So 3 lakhs into 15%, 3 15s are 45,000. Then insurance expenses 50,000. Insurance expenses, that is personal expenditure. Add back insurance for mother. General expenses include revenue expenditure for promoting family planning, not allowed. Add back family planning expenses allowed only for company. How much? General expenses, family planning is there. Purchased raw material 30,000 from medium enterprises, ignore. Raw material from medium enterprises, not disallowed. So these are the only points with respect to business. Huh? Yeah, meaning not disallowed. Yeah, but only for micro and small it is applicable. Just now we revised. Maja is there. What is the answer? Tell me. Eh? 20 lakhs plus 25,000. 20 lakhs plus 25,000. Minus 15,000 plus 1,10,000.
18,67,000. 20 lakhs? 8. I have got calculator. Thank you. 20 lakhs plus 25,000 minus 15,000 plus 1,10,000, 33,000 minus 3 lakhs plus 45,000 plus 50,000 plus 75,000. Okay, yeah. Hey, please check your answers 2-3 times. Go base. This also you are doing mistake. Now this is under default tax regime. Business income under default tax regime. What will be the answer under optional tax regime? Hey, but you don't have to do this separately for optional tax regime. Find the total income, then add and subtract whatever is allowed under optional tax regime. Here, because we are doing only business income, I am doing it under optional tax regime. Business income as per default tax regime, 20 lakhs, 23,000. Now I will subtract what, sir? Additional depreciation. On how much will I subtract additional depreciation? 15 lakhs into 20%. Yeah, subsidy I should reduce. Subsidy I have subtracted. No, normal depreciation you have subtracted. No, something. We are taking additional depreciation over here. 12 lakhs into 20% is, and less scientific research expenses 1 lakh 10,000. Sir, why you have taken additional depreciation only on 12 lakhs? Because 3 lakh rupees was the subsidy on the new plant and machinery, which I am again subtracting. Hello. Huh? 16 lakh. This is my business income under optional tax regime. But I don't have to do like this separately. I can compute the total income and then directly find the total income under optional tax regime. That is more sensible. We'll continue this question after doing deductions, because we have some deduction points and we'll do that after the break. We'll discuss that. Anyone has any question? You understood? See, question is very simple, very normal looking question, but one point was there which was different, correct? So every question will be like this. So now if you're doing 100 questions or 10 questions, if you're doing 10 questions also, you should not learn. You should just learn that one adjustment where you have chances of making mistake. Okay, let us take a break. We'll meet at what time? Sir, go home, sir. From Coimbatore, you have come here. Eh? Trading? Which trading? Futures and option trading. Yes, it is under slab rate, meaning it is normal business. Why entertainment taxes? Correct. Yeah, that is normal. Indirect taxes, GST allowed. Direct taxes is not allowed. Indirect taxes can be taken as deduction. We'll meet at 10:30. Welcome back, students. Welcome back, online students. I hope I'm audible and also the screen is visible. Next, clubbing of income.
Clubbing means what, sir? Income of another person included in assessee's total income. Very simple and small chapter. Section 60 talks about what, sir? Transfer of income without transfer of asset. So if you have any asset which is generating income, and without transferring that asset, if you're transferring the income from that asset to someone, then though income is going in the hands of any other person, that income will be clubbed in your hands. If an individual transfers the right to receive income without transferring the ownership of an asset, you're transferring what, sir? The right to receive the income on an asset without transferring the ownership of that asset, then such income shall be clubbed in the hands of the transferor. Revocable transfer. I am transferring an asset to you with a condition that I will take back the asset from you on a future date. If an assessee transfers an asset with the power to revoke or cancel the transfer, income from such asset will be taxable in the hands of transferor. Meaning, if I transfer an asset to someone with a condition that I will take back this asset from you on a future date. Now, though the asset is transferred to someone, though the other person is receiving the income from the asset, but because I have the right to revoke the transfer, that income will be taxable or clubbed in my hands. There are two exceptions for this. If it is an irrevocable transfer, then this is not applicable. If I transfer with the condition that I never take back the asset from you, it is an irrevocable transfer. Or the transfer will become revocable upon death of the transferee. I transfer an asset to you with a condition that I will take back this asset from you on a future date only if you die. I'll take it back. I don't want any other person to enjoy the asset. Section 64(1)(4) and 64(1)(5). Transfer of asset to spouse 64(1)(4). Transfer of asset to son's wife 64(1)(6). So if an individual transfers any asset to his or her spouse. So if you are an individual and if you're transferring any asset to your spouse without consideration or for inadequate consideration, you're transferring the asset to your spouse without any consideration or for lesser inadequate consideration, the income from such asset shall be clubbed in the hands of transferor. Okay, though I am giving the asset to my wife, though my wife is the owner or my daughter-in-law is the owner, that income will be clubbed in my hands if I give the asset to them without consideration or for inadequate consideration. Condition is marriage should exist at the time of transfer of asset as well as at the time of receipt of income. When the income is getting generated, as well as when the asset is transferred, at both the times marriage should exist. Above is not applicable in case of divorce or in case you have an agreement to live apart. If you get divorced, then this provision is not applicable, or if you have an agreement that you will not stay together, then also this provision shall not apply. If above, then one more important point is there. If any amount has been given to the spouse, if you give any money to your spouse, and if that money and if the same has been invested by the recipient spouse in his or her business, and if the spouse is investing that money in his or her business, if the spouse is investing that money in the business of the spouse, in his or her business, if any amount has been given to the spouse and the same has been invested by the recipient spouse in his or her business, then clubbing provisions will apply only if such amount is included in the capital of that business as on 1st April of previous year. Meaning what, sir? If I give any money to my spouse and using that, if she's using that in the business, now any profit earned by the spouse from that business will be clubbed in my hands if that money given by me was there in the opening capital of that business. Meaning, if I give the money on 1st of April and she includes that money on 1st of April, whatever profit is earned during that year will be clubbed in my hands as well as spouse hand. But if the business is started on 1st of April, but I gave the money on 8th of April, 9th of April, or September month, etc., that means that money is not there in the opening capital of the business. So that year ka profit will not be clubbed. But in the next year, because my money also will be there in the business, next year ka profit will be clubbed in my hands. This is important point. If any amount has been given to the spouse and if the same has been invested by the recipient spouse in his or her business, the clubbing provision will apply only if such amount is included in the capital as on first day of the previous year. Clubbing shall not be applicable. See, when I say clubbing of income, that means clubbing of loss also will happen. If you are making loss, that loss also will be clubbed. Income of spouse from a concern where assessee has substantial interest. Now, where any salary or remuneration or commission is paid by a concern, if salary, remuneration or commission is paid by a concern where the individual has a substantial interest, which concern, sir? The concern where the individual, that is the assessee, has a substantial interest to the spouse of such individual, even when the spouse has no professional or technical qualification to receive such amount, then such remuneration shall be clubbed in the hands of individual. Now, what is happening in this case, sir? If the spouse is receiving income from any company where I have substantial interest, so I have substantial interest in the company, and my company is giving substantial interest means 20% or more voting rights, profit sharing ratio, and that company is giving remuneration to my spouse, and my spouse does not have any proper qualification to receive such remuneration. Now, lawmaker says that money, whatever is received by spouse, will be clubbed in the hands of me, provided she should not have any proper professional technical qualification to receive that money. Now, sir, what if both of you are having substantial interest and both of you don't have professional technical qualification? Clubbing will happen with that person who has a higher income. If both does not have any other income, then no clubbing will apply. Where both the spouse have substantial interest in the concern and both of them are receiving remuneration from the concern, and if both of them have no professional or technical qualification, clubbing provision shall be in the hands of the assessee who has a higher income before clubbing this income. Where both the spouse have substantial interest in the concern and both of them are receiving remuneration from the concern, and if both of them have no professional or technical qualification, then they do not have any other income, then clubbing provision shall not apply at all. Then clubbing of minors income, this is important in clubbing provision. Clubbing of minors income. If any income is earned by the minor child, then that income will be clubbed in the hands of his or her parent. It will be clubbed in the hand of that parent whose total income is higher before clubbing this income. It will be clubbed in the hands of that parent whose income is higher before clubbing this income. Further, where an income is clubbed in the hands of any parent for that year, for all the subsequent years, clubbing will be done in the hands of that same parent. Which parent, sir? Whichever has higher income in the first year, in all future years with the same parent, even if his income or her income is reduced. Exception: below incomes will never be clubbed. Income earned by the minor child through his or her skill and talent, manual work, or if that minor child is an ATU disabled minor child. Exception: below will not be clubbed. When it will not be clubbed? If the income is earned by the minor child because of the minor child's own skill and talent, because of manual work of the minor child, or if that minor child is an ATU disabled minor child. Section 1032 exemption also will be given to the parent in whose hands the minor child's income is getting clubbed. The parent in whose hand minor child income is getting clubbed will get an exemption of 1,500 per child, irrespective of any number of children. Now, this is not applicable, meaning this 1,500 ka benefit will not be given if an assessee is opting for default tax regime. Note: minor child includes minor married son and minor married daughter. Minor child will include own child, stepchild, and legally adopted child. In case of divorce, clubbing shall be done in the hands of that parent who is maintaining the child. Clubbing of HUF income. HUF ka income also will be clubbed in the hands of parent. If an assessee transfer his or his own asset to HUF, meaning my asset, my individually earned asset, I am transferring it to my HUF. Any income received by HUF on that asset shall be clubbed with in the hands of assessee. In case of partition of HUF, the income earned by the transferor or the transferor's spouse will be clubbed in the hands of individual. So I transfer any asset to the HF, that income will be clubbed in my hands. Now HF has partitioned, asset will be given to me, my children, spouse, etc. My income will be taxable in my hands. My spouse's income also will be taxable in my hands. Minor child income will be taxable in the hands of any one of the parent. Major child income will be taxable in the hands of major child. Any income earned by minor child will be at the time on partitions on that partition HF asset share will be clubbed in the hands of parent in accordance with section 64(1) capital A. Then we have one more case called as cross transfer. Cross transfer means what, sir? It is an arrangement where two persons transfer asset to each other relative instead of directly transferring to their own spouses or own minor child, with an intention to avoid clubbing of income. So I am transferring the asset to my own related person except my wife or my minor child. And this I am doing with an intention to do what, sir? This I am doing with an intention to, this I am doing with an intention to avoid clubbing of income. Here the court has applied substance over form for this arrangement, and it has held that in case of Keshavji Murarji case law, Supreme Court has given the judgment in whose case, sir? In case of Keshavji Murarji, Supreme Court has told what, sir? If two transactions are interconnected and they form part of single transaction and a circuitous method is adopted to evade the taxes, then clubbing provision shall apply. Asset transfer to son's wife. Now asset transfer to son's wife or your own spouse, if it is invested in the business, if it is there in the opening capital of the business, then only clubbing will apply for that year ka profit. If it is not there in the opening capital, clubbing will not be applicable. Now if I have substantial interest in a concern and that concern is giving remuneration to my spouse, then clubbing will happen only when the spouse does not have any professional technical qualification. Minor child will include what, sir? Own child, legally adopted child, and stepchild. In case of divorce, that parent who is maintaining the child, in that person's hand, clubbing will apply. Question number 6, you tell me the answer. Question number 6. Question number 6 ka screenshot is not attached. No, sir. Ignore. Because it's a nice question, exam question it is. Set off and carry forward of losses. Set off and carry forward of losses. Set off and carry forward of losses. Set off means what, sir? Adjustment. Set off means adjustment of loss against income. Set off means adjustment of loss against income. So there are two types of set off. One is called as intra-head set off. Another one is called as inter-head set off. Intra-head set off means same head. Inter means different head. So if you have loss under one head and if you set off that with loss of income of same head, it is intra-head set off. If you have loss under one head and if it is adjusted with income of another head, it is inter-head set off. Carry forward and set off means what, sir? If you have loss in the current year and if your current year loss is not getting fully adjusted, then you can carry forward it to future year and adjust in future year. Section 70, intra-head set off or intra-head adjustment, set off and carry forward, very important chapter. Compulsory question will be there in the examination. So income from salary, one by one we'll discuss about different incomes we have. Income from salary, under salary, the possibility of getting loss is not there. Therefore, intra-head set off is not applicable. Intra means with same people. House property, one house property loss can be adjusted with another house property loss. Business income is divided into three categories. normal business, speculation business, specified business. Normal business loss can be set off with any business loss, any business income. Speculation business loss can be set off only with speculation business income. Specified business ka loss can be set off only with specified business ka income. Income from capital gain. If it is a long-term capital gain, long-term capital loss can be set off only with long-term capital gain. Short-term capital loss can be set off with long-term capital gain as well as short-term capital gain. Income from other sources. Normally, loss under this head is not possible. Loss under which head? Under income from other sources is not possible. So, income from other sources, loss is normally not possible. But even if you have losses, can you adjust, sir? Yes, we can adjust in some cases only. If it is an exempt income ka loss, exempt income means agriculture income from India. It is an exempt income. If it is an exempt income ka loss, that exempt income ka loss can never be adjusted with any income. If it is casual income ka loss, that casual income ka loss also can never be adjusted with any income. If it is loss from owning and maintaining race horse, then that can be adjusted only with profit from owning and maintaining race horse. Any other type of loss which you have under IFOS, that loss can be set off or adjusted with other taxable income under IFOS. Then interhead, meaning set off of one head with another head. Income from salary. Loss under any head can be set off with or adjusted with salary except the business loss. Other people's loss can be adjusted with salary income except which loss, sir? Business loss. Loss under the head house property can be set off or adjusted with income of any other head. Loss of house property can be adjusted with income of any other head, maximum 2 lakh. Other losses can be adjusted with house property. There is no restriction. Business, loss of any head can be adjusted with business. Business loss can be adjusted with anyone except salary. However, speculation loss will be adjusted only with speculation. Specified business loss will be adjusted only with specified. Capital gain ka loss, whether it is short-term capital gain or long-term capital gain, that can never be adjusted with other incomes. But other losses can be adjusted with capital gain ka income. Income from other sources, loss of any head can be adjusted with IFOS ka income. IFOS ka loss can be adjusted with other incomes. However, exempt losses and casual losses can never be adjusted with any other head. And unadjusted loss of any head can be carried forwarded to subsequent years except the loss of other sources. Carry forward and set off of losses. Please note, other sources ka loss can never be carry forward except owning and maintaining resource ka business. So always if you have a loss under other sources, first adjust that loss because that loss cannot be carry forwarded. Carry forward and set off of losses. Any unadjusted losses of the current year can be carried forwarded to future years. Unadjusted losses are carried forwarded to future years for adjustment against the income for those years. Any loss under any head of the current year can be adjusted with income of any other head in the current year. Meaning, if you have a loss under one head, that loss can be adjusted with any other head in the current year. But once a loss is getting carry forwarded, it can be adjusted with same head of income only. However, once any loss has been carried forwarded, then such carried forward loss can be adjusted only with income of same head in subsequent years. Now, carry forward, how can I carry forward? I mean, how many years can I carry forward? And after carry forwarding, against whom can I adjust? Very simple. Current year, I can adjust with anyone, subject to what is 71, 72 talking about. But once it is carry forward, I can adjust only with the same head of income. So house property loss can be carried forwarded for 8 years and it can be adjusted in future with house property income. For carry forwarding house property losses, you don't have to file the loss return. See, normally you have to file income tax return. Just like that, if you have any loss, you have to file loss return. But if you want to carry forward house property loss, filing of loss return is not mandatory. Then normal business loss. Normal business loss can be adjusted with any business ka income. Normal business ka loss can be adjusted with any business ka income. And this normal business ka loss can be adjusted with any business means including speculation and specified business, normal business ka loss. And it can be carry forwarded for how many years, sir? 8 years. And if you want to carry forward normal business ka loss, you will have to file your loss return. Then speculation business ka loss can be adjusted only with speculation ka business ka income. Speculation business ka loss can be carried forward for how many years, sir? Only 4 years. Specified business ka loss, specified business means 35 AD business. Specified business ka loss can be carry forwarded for n number of years and can be adjusted only with specified business ka income. And for carry forwarding this loss, filing of loss return is mandatory. Long-term capital loss can be adjusted with long-term capital gain, and it can be carry forwarded for 8 years, and filing of loss return is mandatory. Short-term capital loss can be adjusted with long-term or short-term capital gain, and it can be carried forward for 8 years, and filing of loss return is also mandatory. Owning and maintaining racehorse losses can be adjusted only with owning and maintaining racehorse ka income, and this loss can be carried forward for 4 years. Unabsorbed depreciation can be carried forward for indefinite period and can be adjusted with any income in future years except the income of salary. Okay. Now, first, what is the order of set off, sir? First, you should set off current year ka loss with current year ka income. Then you should set off the brought forward losses. Now, when you are doing current year ka set off, also there is a procedure which you have to follow. What is the procedure, sir? First, intra-head, solve your own house problem. Intra-head adjustment you should do. Then you should do inter-head adjustment. What is the order of set off, sir? Current year loss should first be adjusted with order of set off of business loss. Current year business loss with current year income. Current year depreciation with current year business income. Brought forward business loss with current year income. Then brought forward depreciation, capital expenditure, etc. should be set off. Now, if you have any losses in the current year, that loss should first be adjusted with the incomes of the current year. Only then the brought forward losses can be adjusted. Current year losses should first be adjusted with the current year income, and then brought forward losses should be adjusted with current year income. Brought forward business loss can be set off even if the business is discontinued. No loss can be set off against undisclosed income. Undisclosed income, whatever you have, you cannot set off any losses. If the assessee opts for default tax regime, which regime? Default tax regime, then he cannot set off house property losses with other heads of income. This is your set off and carry forward. Very simple chapter, very important chapter. Here we can do one question. Set off and carry forward, one question normally comes in the examination. Mr. Vipul furnishes the following details for the previous year 25-26. Loss from house property 2,60,000. Income from business in India 8,60,000. Short-term capital gain on sale of equity shares listed in recognized stock exchange is 1,99,800. Income from card game 1,02,500. Loss from betting 87,500. Expenses for lottery income, no point, you cannot claim the deduction. Income from lottery, net of TDS they have given 38,500. So what is the total income from lottery? 38,500 divided by 55,000, divided by 70%, 55,000. Loss from activity of owing and maintaining camel camel, not owning and maintaining racehorse. This is normal business only. 20,000. Income from activity of owning and maintaining racehorse, 97,800. Long-term capital gain from sale of land, 25,000. Income of minor daughter Ria from script writing for a television channel. Oh, minor is writing script. 15,000. No, this big goobers we cannot write script. Interest income of minor son who suffers from disability, 2,50,000. Oh. Following are the brought forward losses. Loss from textile business pertaining to 14-15, 7,000. 14-15, that means 8 years is over. Correct? No, 25-26. Long-term capital loss pertaining to 17-18, 11,250, 11,250. Short-term capital losses pertaining to 18-19, 90,200. Compute gross total income of Mr. Vipul as per optional regime and found out the losses to be carry forward. Question is big. I mean, because it is in 2 pages, not that way big. Okay. Problem is there. Question is visible properly. Brought forward losses. I'll write over here long-term capital loss is 112,500. Business loss we have to ignore. Short-term capital loss is 90,200. Long-term capital loss also, I think more than 8 years it is. 17-18. Assessment year. 17-18, 18-19, 19-20. Huh? This is the 9th year. Assessment year, if you are counting, you should count till assessment year. Mixing you'll do in life. Yeah, I mean, you have to ignore this. But this is a fresh loss. 90-100. Ignore.
So how much is it?
200. This is a loss. Now, can I say this? I can adjust 2 lakh with this fellow. With this, I'll adjust the brought forward loss of 90,200. So this is done. This is taken care. Card games fully taxable. Loss from betting, ignore. Expenses of lottery, can I say ignore? Income of lottery is how much? 55,000. Loss from owing and maintaining camel. Camel losses, can I adjust with them? Hello. Camel losses. Yeah, I can adjust with short-term capital loss. I mean, this also. No problem. I can adjust with anyone. A camel loss. You understand what is camel loss? Income from owing and maintaining racehorse. This is taxable under IFOS because it is an income. Long-term capital gain from sale of land. Fully taxable because I don't have any. Income of minor child, ignore because skill and talent, and this also you ignore because ATU disabled minor child. So camel, you can set off with anyone. You can set off if you want to set off with business, set off with business. Yeah, current year you can set off with anyone, right? Now you want to set off with whom, Sundri? You tell me. I'll set off with that fellow. You want to set off with this fellow? You can set off with this fellow. Yeah, but this is camel, right? That is horse, right? Horse. No, camel has a loss. Camel loss is not any special loss. So camel loss can be adjusted with anyone. Owing and maintaining racehorse loss, that only can be adjusted with owing and maintaining racehorse ka income. So camel loss, you can adjust with anyone. Please note. You want to adjust with this one, you can adjust. There is no problem. There is no restriction. Please note. All these things, 20,000 which I adjusted. What is this 20,000? This amount. Can I say I can adjust with short-term capital gain also? Yes. Now, adjustment you should do in such a way that your income tax liability is minimum. If I adjust with this fellow, what will happen? Tax rate of flat 20%. Now my income is 8,60,000 and my other income, if you see, lottery income is there, flat 30% is there, card game income is there, flat 30% is there, but against them I cannot adjust anything. Yeah, you understand? If I want to adjust this both against this income, can I adjust? Yes, you can adjust. At the end of the day, you do whatever you want to do, your income will not change. Why? Because what you are subtracting only. So what is this income? Can I say this 60,000 will be carry forwarded? Hello, this is at least clear. What is 8,60,000 minus 2 lakh minus 20,000? 6 lakh 40,000. Short-term capital gain, brought forward loss is set off. Current year loss will be 1 lakh 5,000 9,600. This will be fully taxable, 1,02,500. This is ignored, this is ignored. This will be taken as 55,000. This I'll remove now. This I'll take as it is. This is already taken, 55,000. Camel losses I have set off. Race horse ka loss is how much? Income. Total is this two incomes. I will, sorry, business income is this long term capital gain is also there, 25,000. 10 lakh, 89 or 29, 29,900. Now please see. Sundari, what is your name, Sundari? This, if I would have adjusted with anyone, okay, this I would, if I would have adjusted with this also, can I say this would have been reduced by 20,000 and this would have been increased by 20,000? Answer would not change. And beauty is, tax rate is also slab rate only. For this also it is slab rate. For this also it is slab rate only. There is no special rates. So 10,29,900 rupees is the income. And you have to carry forward how much? 60,000 rupees. 60,000 rupees is the income which is required to be carried forward by you. Next we have deductions. Format for computation of total income. There is a specific format in which you are supposed to compute your total income. Income from salary, you will take income from salary. Income from house property. Income means computed amount you should take. Income from business or profession, income from capital gain, income from other sources. Then you apply clubbing provisions, then you apply set off and carry forward provision. That amount which you get is called as your gross total income. From this gross total income, you subtract deductions, you will get your total income. Correct? Now, under optional tax regime, this deduction is there. Default tax regime, deductions are not allowed normally. Now you have computed the total income. On this total income, you should compute the tax. Total income will have all the different types of income. How will I compute tax on total income, sir? First, compute the tax on special rates of income. Whatever income are taxable at special rates, compute the tax on that. And whatever is left over, that compute the tax at slab rates. Okay, compute the tax at special rates, compute the tax at slab rate. Now let's rebate under section 87A. If it is applicable, of course. When is it applicable? If the total income is up to 5 lakhs. Now rebate is not available against default regime. If you are following default regime, no rebate can be taken against special income. Please note, normally it is not allowed. Against special income, you cannot claim. Then you add surcharge on that income, add health and education cess, you will get your tax liability. And of course, you subtract marginal relief before adding after adding surcharge, subtract marginal relief if marginal relief concept is also applicable. You will get your total tax liability. From that, you subtract the TDS and TCS credit if you have any. Subtract your advance tax payment which you have made. That will give you your net tax liability. Now, is there any amendment in this chapter, sir? No, there is no amendment in this deductions chapter. Okay, now why is this chapter, deductions chapter, important, sir? This chapter is important because if you want to find the total income, because we pay the tax on total income, and if you want to find the total income of a person, it is compulsory that you should learn deductions. Now, deductions is available against all types of income except few incomes. Except which incomes, sir? Deduction is not available against deduction is not available against what, sir? Deduction is not available against deduction under chapter 6A is not available against following income, which is long-term capital gain 112, long-term capital gain 112A, Then short-term capital gain under section 111A and casual income. Deduction is not available against these incomes. Special incomes basically. Deductions under chapter 6A is available only if the assessee claims such deduction. Only if you're claiming the deduction, it is allowed as deduction. If you don't claim, they'll not come and tell, oh, please take the deduction. No. Deduction under chapter 6A is available only if the assessee has claimed the is not available if you have already claimed the benefit under any other provisions of income tax law for the same expenditure. Now, what are the important deductions? This too you should definitely know: 80C, 80D, 80E, G, TTA and 80U. These are something which you should compulsory know. 100% you should know. Other things, okay, meaning you should be knowing, but 80C, D, E, G, TTA and U are mostly asked deductions. 80C talks about life insurance premium, tuition fees, PPF, principal repayment of housing loan, and there are a lot of other things. 80C says if you are an individual or an HUF, whether you are a resident or not, I'll give you deduction. Condition is you should be an individual or an HUF. You can be a resident or you can be a non-resident. How much deduction will you get, sir? You will get a deduction of 1,50,000 rupees. You will get a deduction of how much, sir? You will get a deduction of 1,50,000 rupees. That is the maximum under 80C, not individually for each item, but that is the total deduction which you will get under 80C. LIC premium paid. If LIC premium is paid for individual can claim the deduction under this section if he takes premium for himself, his spouse or his children. Children can be dependent or non-dependent, does not matter. And HUF can claim deduction under this section for members of HUF. How much deduction will be allowed, sir? The deduction which will be allowed is equal to how much, sir? Premium which is paid by you or limit of whatever limit is there, whichever is less. What is the limit, sir? The limit means the maximum amount of deduction which you can claim under this particular section. Normal cases, it is 20% of sum assured if the property is if the policy is taken before 1/4/2012, and if the policy is taken on or after 1/4/2012, it is 10% of sum assured. And if you are a person with disability, and if the policy is taken before 1/4/2012, 20% of sum assured. In the year 12/13, it is 10% of sum assured. And if the policy is taken anytime after 1/4/2013, 15% of sum assured. Sum assured is the maximum, meaning the money which the company, insurance company is telling that I will pay this money to you. So Dilip has these three policies which is taken in the different years. Now we should see what is the limit for each policy. This is the premium paid. First we should calculate the limit. Limit will be calculated based on sum assured. Then I should compare the premium and the limit based on the deduction will be allowed. So if the policy is taken before 1/4/2012, it is 20% is the limit. After that it is 10%. So how much deduction will be allowed? 50 or 60? 50. 75, 50, 50, 81, 80. Meaning whichever is less will be allowed as deduction. With effect from 1/4/2024, if any policy or policies are issued on or after 1/4/2024, if the policy is issued on or after 1/4/2024, then maximum premium amount of a single policy or all the policies together should not exceed 5 lakh rupees in a year. The maximum premium which you can pay for one single policy or all the different policies which you have taken together, if it exceeds 5 lakh rupees, it should not exceed 5 lakh rupees. What if it exceeds 5 lakh rupees? The money which you receive at the time of retirement, that will be retirement in the sense maturity of the policy, that will be taxable. If the premium amount is more than the limit specified, that is, it is more than 10%, 15%, or 5 lakh rupees, then amount received on maturity of the by the policy holder will be fully taxable. Now see, for LIC, whatever amount you receive is exempt under section 1010D. When is it exempt? If it is received by the nominee upon death of policy holder, irrespective of what type of policy it is, it will be fully exempt. But if the money is received by the policy holder himself upon its maturity, then check how much is the premium paid. If the premium paid during the term of the policy is more than the limit given, fully taxable. If the premium paid during the term of the policy is within the limit specified, then exempt under section 1010D. Then PPF ka contribution is also exempt. So if an individual is contributing money for himself, his spouse or his children under PPF account, or an HF is contributing for members of HF, then deduction he will get under ATC. How much ever amount is invested by you, or 1,50,000, which is the limit of ATC, whichever is less. Employee is contributing money to recognized fund, statutory provident fund, or recognized provident fund, or superannuation fund. He can claim a deduction over here. If the provident fund is an unrecognized provident fund, no deduction is allowed. Now, if you have taken a house and if you are doing any principal repayment of that housing loan, including the stamp duty and registration charges, you can claim deduction. Condition is it should be a residential house property. Loan should be taken from bank or financial institution. Loan should be taken for construction or purchase of house property. Then other items which are covered under ATC are if you are investing the money in National Savings Certificate or NABARD bonds or Senior Citizen Savings Scheme or Equity Linked Saving Scheme, Unit Linked Insurance Policy, Pension Scheme of any mutual fund or unit trust of India, notified units of any mutual fund or unit trust of India, Sukanya Samriddhi Yojana account, or fixed deposit for a period of 5 years or more. Now, tuition fees, how much are maximum? For 2 children, you can claim deduction for education which is happening in India, and it should be a full-time education. Tuition fees shall not include donation or any building development fund, etc. Then you have what's the 80CCC pension scheme. 80CCC pension scheme talks about pension scheme of any life insurance company. 80CCC pension scheme of any life insurance company. If you are an individual and if the contribution is to any pension scheme of life insurance or any other insurance company, then you can claim maximum deduction of how much, sir? 1,50,000 rupees per annum. More important when compared to 80CCC is 80CCD. Contribution to pension scheme. Which pension schemes are? National Pension Scheme or Atal Pension Yojana or Central Government Pension Scheme. How much is allowed? Maximum 1,50,000 is allowed. For salaried employee, we have already discussed in the salary chapter. Amount contributed by for employee ka contribution deduction is allowed under 80CCD 1. For employer ka contribution deduction is allowed under 80CCD 2. How much for employer ka contribution? Whatever employee ka contribution is there, or 10% of salary, whichever is less. And for employer ka contribution, or 14% of salary, whichever is less. Salary is basic plus DA in terms. And if I am contributing, I'm a non-salaried employee. If I contribute money over here, amount contributed by me or 20% of gross total income can be claimed as deduction. 80CCE. 80CCE talks about combined limit applicable for ATC, ATCCC, ATCC D1. The combined limit is how much, sir? 1,50,000 rupees. Plus you will get extra under ATCCD 1B, you will get extra 50,000 rupees if you have contributed money in ATCCD 1. You have Agniveer scheme. Agniveer scheme is just like your ATCCD. You have ATCCH. So if you are working for Indian Army and if you work over there, a fund is created for you which is called as Agniveer fund. 30% of your salary will be contributed in this fund. Employer also will contribute the similar amount. Employer contribution first it will be added to the salary, then allowed as deduction under ATCCH2. Your contribution will get a deduction under ATCCH1. How much deduction will be allowed? Whatever you have contributed or 30% of salary. Now here there is one amendment in the sense there is one additional point, additional section which they have added. Amendment. Under deductions chapter 80CCD, now covers 80 CCD was National Pension Scheme. No, now they have added one more item in this National Pension Scheme or Atal Pension Yojana or Central Government Pension Scheme was the name. Now they have added one more item in this called as NPS Vatsalya Scheme. What is the name of scheme, sir? Vatsalya Scheme. What is NPS Vatsalya Scheme? So they may give this point. So just remember NPS Vatsalya Scheme. NPS Vatsalya is an NPS scheme designed for minor Indian citizens. Key features is the account will be opened and operated by the parent or the guardian of the minor child. When the minor attains the age of 18, the account will continue to remain operational and be shifted to NPS Tier 1 account like normal NPS account. Contribution to NPS Vatsalya. Eligible assessee is the parent or the guardian of the minor child. Deduction is available. Amount deposited in minor's NPS Vatsalya account is allowed as deduction under section 80 CCD 1B. That 50,000 benefit is there, no? 80 CCD 1B. Maximum deduction under 80 CCD 1B is how much? 50,000 I'll give you. This limit of 50,000 includes assessee's own NPS contribution and contribution to minor child, meaning it is not a separate extra deduction of 50,000. Whatever we saw 50,000 deduction under 80 CCD 1B, in that limit only, if you are able to contribute for your minor child also, then good. Important, this limit of 50,000 includes assessee's own contribution. Okay. Withdrawal taxed as deemed income. Amount received from pension account of the assessee, that is the minor, upon closure of the account shall be taxable as income in the year when such amount is received by the assessee or nominee. However, certain withdrawals are specifically exempt. Normally, if you withdraw money from this account, then it is taxable, but exemption also will be given to you. When will the exemption be given? In the following cases, the amount withdrawn will not be taxable. If you are doing partial withdrawal shall be exempt from tax if the withdrawal does not exceed 25% of the amount contributed. Whatever amount is there in the fund into 25%, if you are withdrawing, it will not be taxable. See, normally if I withdraw the money from this fund, taxable. But in some cases, exemption is there. If you withdraw 25% money, this exemption is applicable if you are an employee or if you are a self-employed or you are a parent or a guardian of minor child. And second type of exemption is on closure of account. On closure of account, if 60% of the total amount payable at the time of closure shall be exempt. So when you close this account, see, normally the account is operational. At that time, if you are withdrawing, how much you can withdraw, sir? 25%. Now you are closing the account. If at the time of closure of account, you will receive entire 100%. Of that, only 60% is exempt. Balance 40% is taxable. Amount received on death. Amount received by nominee or parent or minor upon closure of the account due to death of the assessee or minor shall completely be exempt. Amount used for purchase of annuity. If you use this money to purchase any annuity plan, if the amount withdrawn from the scheme is used for purchasing an annuity plan in the same previous year, such amount shall also be exempt. Meaning, I am taking this money and using this money for purchasing some annuity plan. Annuity plan means what, sir? They'll give fixed amount of returns to you. So lot of insurance company provides some annuity plans if you are putting the money in that plan. 80D important section. 80D talks about what, sir? D for medical. So if you are paying for medical insurance, if you are paying for medical insurance premium or health insurance premium, or you are contributing money for central government health scheme, or you are contributing money for preventive health checkup, or you are incurring expenditure for medical treatment of any senior citizen. Now, medical insurance or health insurance should be paid by any mode other than cash. That is compulsory. What is this point telling? If you are an individual and if you take policy for yourself, your spouse, or your dependent child, or your parents, and HUF takes policy for members of HUF, then deduction will be allowed. For individual, self, and dependent child, 50,000, meaning 25,000 is normal limit. If anyone among you is senior citizen, additional 50,000. For parents separately, I'll give you 25,000, and any one of your parent or both of your parent is senior citizen, extra 25,000. So for me, my spouse, my dependent child, 25,000, and my parents separately I can take 25,000. If any one of them is senior citizen, extra 25,000. Any one of parents are senior citizen, extra 25,000. This is for medical insurance which you pay. Now, what is important is age. Whenever you see the question, age is very important of that person. Note, medical treatment expenditure. If you're incurring any expenditure for medical treatment of a senior citizen who has no health insurance with them, then you can claim a deduction of 50,000 for that senior citizen. Preventive health checkup, 5,000 rupees. You can claim the benefit of 5,000 rupees as preventive health checkup. And this 5,000 is not an extra amount. It is within that limit of 5,000, 25,000 or 50,000. ATDD, deduction for maintenance or medical treatment of dependent who is disabled. If you are maintaining a disabled person, if you are maintaining a person who is dependent on you and who is disabled, then this section is applicable. This section says I am applicable to a resident individual. If you are having a dependent, it can be your spouse, your child, your father, your mother, your brother, or your sister, or you are having what, sir? If you are an HF and if you are taking care of members of your HF, then deduction will be allowed. How much is the deduction which will be allowed, sir? In case of normal disability, it is 75,000 flat deduction, and in case of severe disability is 1,25,000. Severe disability should be 80% or more. In the question, they will give you whether it is normal disability or severe disability. Deduction available only if such disabled person has not claimed deduction under section 80U. Now 80U, if the person himself is disabled, he can claim a deduction over there under 80U. If you are a resident individual who is a disabled person, you can claim deduction. In case of normal disability, 75,000, severe disability, 1,25,000. 80DDB, not important section. 80DDB, deduction for medical treatment of specified disease. If you are a resident individual and if you take a policy, if you incur expenditure for medical treatment of yourself or your dependent relative, which includes your spouse, children, father, mother, brother, sister, or if you are an HUF taking policy for, paying expenditure for members of HUF, then you will get a deduction of 40,000 in normal cases, and senior citizen you will get a deduction of 1 lakh rupees. How will I calculate the deduction amount, sir? Take your actual expenses, compare that with limit, 40,000 or 1 lakh, take whichever is less. From that, subtract the insurance claim which is received by you. That is the amount of deduction which you will get. Section 80E, interest for higher education loan. So if you are an individual and if you take an higher education loan for higher education of yourself, your spouse or your children, and if any interest is paid, then that interest will be allowed as deduction for 8 consecutive years. That interest will be allowed as deduction for how many years, sir? 8 consecutive years from the year when you start paying interest. Higher education means education after 12th standard. 80EE, interest for housing loan. If you are an individual, 80E is very important section. 80EE, interest for housing loan. If you are an individual who is paying interest on housing loan of any bank, if you have taken any housing loan from bank or financial institution, and the value of the property is 50 lakh rupees and the loan amount is up to 35 lakh rupees, and the loan is sanctioned in the previous year 16-17 only, then you will get a deduction of 50,000 rupees, useless section. 80EEA, interest for housing loan. If you have taken a housing loan and whose stamp duty value is up to 45 lakhs and the loan sanctioned during the previous year 1/4/2019 till 31st of March 2022, then, and if you don't have any other houses apart from these houses, you will get a benefit of 1,50,000 of whatever interest you are paying. 80EEB. If you're taking loan for electric vehicle, you will get a deduction of up to 1,50,000 rupees. The loan should be taken from bank or financial institution. It should be for purchase of electric vehicle, and the loan should be given during the period 1/4/2019 to 31st of March 2023. 80G is for donation. If you're donating money to someone, very important section again. Any assessee gives or makes donation will get deduction. Deduction will be how much, sir? It depends on donation. There are two types of deduction. One is limit based, one is without any limit. Without limit means what, sir? Whatever amount you contribute, 50% of that or 100% of that will be given as donation without any limit. Limit based means what, sir? Whatever amount you get, contribute, that will be compared with the limit. I'll take whichever is less, and then 50% of that or 100% of that will be given as deduction. Now, if it is a PM drought fund, then there is no limit on how much you can contribute, but how much deduction will be given is only 50%. But if it is any fund related to state government or prime minister fund or chief minister fund or any national fund, Swachh Bharat fund, Clean Ganga fund, army or Zilla Parishad fund, etc., then whatever amount you contribute, 100% of that will be allowed as deduction. If it is a fund related to minority or any trust, 80G registered trust, or temple, mosque, church, gurudwara, or any housing accommodation, then 50% of amount contributed will be allowed as deduction. And if you are contributing money for family planning, and if you are Indian company and contributing money for Olympics, then 100% deduction will be given based on the limit. What is the limit, sir? Amount donated by you or 10% of adjusted total income. Adjusted total income is your total income before claiming 80G ka deduction. Now compare, take whichever is less, then 50% or 100%. Now donation in kind is not covered over here. If you are making donation more than 2,000 rupees, then it should be made by account pay check, account pay demand draft, or any other electronic clearing system. 80GG, this is just like your HRA. 80GG is when you don't get HRA. Rent paid for house property. If you are an individual who is not getting any HRA and who has no houses at the place of his employment and who has not claimed SOP ka benefit, all the three conditions should be satisfied. If you have not got HRA, if you have no houses at the place of your employment, and if you have not claimed SOP ka benefit, then deduction will be maximum 5,000 rupees per month, or 5,000 rupees per month, totally 60,000 rupees in a year, or 25% of adjusted total income, or rent paid minus 10% of adjusted total income. Adjusted total income is what, sir? Gross total income, subtract all the deductions except 80G deduction. However, casual income should not be subtracted while computing this. Now, if you are an individual's spouse, minor child, and HUF also should not have house at the place of your employment, and you should also submit a declaration in form 10B for claiming this deduction. 80GGA, if you are donating money for scientific research, and if you are not claiming deduction under section 35 of PGP, then you can claim deduction under 80GGA. This is applicable to all type of assessee except the assessee having business income. If you make donation to section 35 wala cases, rural development or poverty eradication, 100% of that donation is allowed as deduction. Donation more than 2,000 rupees should be by account pay check, account pay demand draft, any other electronic clearing system. If you donate money to political party, then 80GGB and 80GGC is the section applicable to you. 80GGB, if you are an Indian company, 100% deduction is allowed. 80GGC, for all the types of assessees, 100% deduction is allowed over here, except local authority or an AGP which is funded by government. Now, donation should be made by any mode other than cash. Even 1 rupee you should donate by any mode other than cash. Expenses incurred for donation to political parties is disallowed as a business expenses, but it can be claimed as reduction under 80GGB for companies and 80GGC for other assessees. 80JJAA, deduction for employment of new work. If you are hiring new people or if you are giving job to new people, then I'll give you deduction under this section. You are any type of assessee, you are engaged in business and whose books of accounts are subject to audit. You will get a deduction equal to 30% of additional employee cost, and that will be allowed for 3 years continuously. 30% of additional employee cost. Additional employee cost means emoluments paid to additional employee for existing business. The increase in total number of, so for existing business, what do you mean by additional employees? The increase in total number of employees when compared from last year to this year. Increase in total number of employee compared to employees employed on last day of the preceding year. For new business, whomever you are hiring during the year, they are additional employees only. Now, when you are calculating additional employees should not include those employees whose salary is more than 25,000 per month, employees employed for less than 240 days in a year, and employee who participates in recognized provident fund. ATTTA. ATTTA, interest on saving account. If you receive any interest on saving bank account, you will get a deduction under ATTTA. If you are an individual, not a senior citizen, because if you are a senior citizen, you are covered under ATTB. If you are an individual and if your interest income on saving account is whatever amount, you will get a deduction of interest earned by you or limit of 10,000, whichever is less. This interest can be earned from bank or post office or cooperative society anywhere. ATTB, interest on deposit. If you are a senior citizen and if you have interest on any deposit which is made from bank, post office or cooperative society, you will get a deduction of interest earned by you or limit of 50,000, whichever is less. If you are receiving royalty income, ATTTA is important. If you are receiving royalty income, if that royalty income is for a book, ATQQB is applicable to you. If it is for patent, ATRRB is applicable to you. So section 80 QQB says royalty for book of an author, deduction is available to a resident individual. Amount of deduction is, if the royalty is less than 15% of book value, then amount royalty received less or 30,000 rupees, whichever is less. If the royalty is more than 15% of book value, take the royalty income as 15% of book value, compare that with 3 lakhs, whichever is less. If you are receiving the money from foreign country and if that is received in convertible foreign currency, then that amount also can be considered. For ATRRB, meaning for a patent, it is amount received or 3 lakh, whichever is less will be allowed as deduction. Tax holidays, important section. Tax holiday for SEZ units. This section is applicable to all types of assessees irrespective of who you are. If you are engaged in manufacturing or production business, or you are engaged in provision of services at where sir SEZ unit, at SEZ location, you will get a deduction under section 80. You will get a deduction under section 10AA. Now, for this is a tax holiday. A. This section says what, sir? I am applicable to all types of assessees. If you are in the business of manufacturing or you are in the business of providing services, at which location? At SEZ location. Deduction which I am going to give you will be under section 10AA. For the first 5 years, 100% of your export profit. For the next 5 years, 50% of export profit. And for the last 5 years, 50% of export profit or amount reinvested by you in, amount credited by you in SEZ reinvestment reserve. Now you get deduction based on your export profit. So what is an export profit, sir? Export profit is your PGBP income of SEZ unit into export ka turnover divided by total turnover. Business income into export turnover divided by total turnover. Sir, export turnover means what? Export turnover means amount received in convertible foreign currency for export within the time limit prescribed by RBI. And RBI ka time limit is within 30th September. Within 30th September you should receive. Meaning once the year is ended, within 30th September you should receive. A export profit is very important. Take the total profit of PGBP of that SEZ unit. Take the total business income of SEZ unit, multiply it by export turnover of SEZ unit divided by total turnover of that unit, SEZ unit. Now, when you are taking export turnover and total turnover, do not consider freight and insurance charges, telecommunication charges, expenses incurred for technical services provided outside India, cash compensatory support, profit on sale of duty entitled passbook, and duty drawback. Other conditions, this business should be started between the year 2005-6 to 2019-20, and no deduction is allowed if the return is filed after the due date under section 139(1). Now one more 8010AA. You have total income chapter. Once we discuss this chapter, we will do questions on the total income. Yes, sir. 2005-6 to 2019-20. 10AA. 115 JC talks about alternate minimum tax. Again, an important section, and they have tested this. They can test also, and they will test only with one question which we have solved in the classroom. That question only they are rotating and asking again and again. In every 5-6 attempt, they ask one question. Alternate minimum tax, AMT. This section is applicable to all types of assessees except company, meaning 115 JC is applicable to individual HUF, AOP, BOI, AJP. Tax to be paid by the assessee will be tax calculated as per normal provisions or alternate minimum tax under section 115 JC, whichever is high. Tax calculated as per normal provisions or alternate minimum tax as per 115 JC, whichever is high. Alternate minimum tax, AMT, is equal to adjusted total income into 18.5%. So what is alternate minimum tax, sir? Whatever your adjusted total income is there into 18.5%. What is adjusted total income? Take your total income, whatever you normally calculate, take that. Add back few benefits which I have given you. What are the benefits which you are going to add back? Take your adjusted total income, add back deductions under section 35 AD if you have taken, deduction under section 10 AA if you have taken, deduction under 80 JJ, AA, QQB, RRB. You will get some amount. From that, subtract depreciation on 35 AD ka asset. Because on this 35 AD ka asset, if you would have not claimed deduction, you would have at least got depreciation. And please note, whatever tax amount is coming on that surcharge and cess, of course, will be applicable based on your adjusted total income. Now, this is very simple. AMT, very simple. 18.5% of adjusted total income. Adjusted total income is total income. Add back 10 AA, 35 AD, QQB, RRB, JJAA. Subtract depreciation on 35 AD ka asset. This is not applicable if your adjusted total income is less than 20 lakhs and if you are opting for deferred tax regime. Now, because you will be paying extra tax, because you will be paying more taxes, what lawmakers are telling? Please note, this is only the question which they are asking in examination and they'll ask this only. And may attempt, the chances of this coming is very high. 7 marks. AMT credit. AMT credit means what, sir? AMT credit means what, sir? Because you are paying more taxes. See, normal taxes or AMT, whichever is high, I should pay. So if AMT is higher, like AMT I will pay. So AMT credit, because you are paying more taxes, that more extra tax which is paid by you over and above your normal tax will be taken as AMT credit. AMT credit, AMT minus normal tax is your AMT credit. AMT credit can be carried forwarded for 15 years. AMT credit can be utilized in the year when normal tax is more than your alternate minimum tax. It can be utilized to the extent of AMT credit which is available or difference between normal tax and AMT, whichever is less. Now, you know there is something called as 115 BSE. Now we will see the summary of 115 BSE. If I follow 115 BSE, what will I have to lose in my life? Following benefits will not be available if you follow 115 BSE. What benefits? Leave travel concession exemption under section 10(5) will not be given to you. HRA exemption under section 10(13)A will not be given to you. Allowances under 10(14), you cheat, duck hat will not be given to you except transport allowance for handicapped people, traveling allowance, daily allowance and conveyance allowance. And no deduction will be given to you under section 16 except standard deduction which will be equal to 75,000. If you are opting for 115 BSE from income from house property, if it is a self-occupied property, no interest deduction will be allowed under section 24B. And if and for LOP or DLOP, no change will be there. Whatever is normally applicable is applicable. Income from business or profession, no additional depreciation, no deduction for donation, and no 35 AD deduction. And for capital gain, there is no change. Special rate taxable. Income from other sources, 1032 exemption will not be allowed for clubbing of minor child ka income. MLA MP ka daily allowance and constituency allowance will be fully taxable. Family pension, 1/3 of family pension or 25,000 will be given to you. No deduction under chapter 6A will be allowed except 80 JJAA and 80 CCD 2. And for SCZ units, 10 AA benefit is also not allowed. Set off and carry forward. House property losses of current year cannot be adjusted with other incomes, and brought forward losses because of above reason cannot be adjusted. Income taxable under special rates, whether you are opting for default or optional, it is taxable at special rates only. And for default regime, AMT is not applicable. The time limit to shift out of default regime, if you are not having business income, every year before filing income tax return, you can shift out of default regime. If you have a business income, if you shift out of default regime, you cannot opt for default regime again till you have your business income. Okay, these are the different provisions which we have. Now we'll do question or we'll continue. When will this marathon be uploaded on YouTube? No idea. By this week we will upload, of course, because editing team has to edit and then upload. So by this week they'll upload. Under default you cannot do. That was optional regime question. Default regime, that means they'll not even ask set off and carry forward question for default people. Total income we did default. Set off and carry forward total income. You're thinking about total income, that business income question. You're thinking about total income, answering for don't drink and drive. Okay, now we'll do that question which you are talking about. He's talking about some question.
We did this business income part. Okay, we'll do the other part of this question. And we'll do some questions on total income. We'll do from model test paper. We'll do from model test paper. Advanced tax, TDS, TCS, etc. is there. You want me to discuss that also? Or we'll do questions? Because after break, I'm planning to do GST. I'll start. Yeah. So timings, I mean morning I'll do. Morning, what time you are free? Now GST to I have solved 88 questions. I mean, solved in the sense discussed and solved 88 questions that will be uploaded. It is I mean in the class only I had that will be uploaded hopefully today or tomorrow. Around 5 or 6 hours video it is that you can see. DT you attend if you want to attend, meaning DT you attend, because GST again you don't attend. Double work it will be. Okay, DT you attend if you want to attend. That will happen from day after tomorrow only I'll do. I have allotted 30 hours. So I'll do around 15 to 20 hours for DT, 10 hours for GST. So 20 hours if I take, in a day if I do 3 hours, then I'll take around 1 week. Morning time I'll do. Timing I have to decide. I have not yet decided the time. Yeah, we were discussing this question. Business related things is done, right? Correct. No, business related things are completely done. Mr. Additional information we were seeing. Mr. Yuan repaid housing loan principal 75,000 is the principal amount, 80,000 is the interest amount. So principal you can do what, sir? A principal you can claim deduction under 80C, housing loan 24B. He received rent of 3,50,000. Municipal taxes paid 40,000. And municipal taxes is paid on 30th April 26. Tell me, municipal taxes is allowed as deduction or not? Municipal taxes, he received a rent of 3,50,000. He paid municipal taxes of 40,000 for this house, and which was paid on 30th April 26. Municipal taxes is allowed on payment basis. Only if it is paid, it is allowed as deduction. If it is paid in this year, I'll allow it in this year. Correct? No. So can I say my rent is 3,50,000? Income from house property will calculate. Yeah, this is not related to house property. Income from house property. How much is my rental income? Income from house property. Rent is 3,50,000 less municipal taxes. Nothing. Why? Because paid in next year, less 24A. What is 24A? Yeah, but what is it called? Interest on loan? No, standard deduction. How much? 1 lakh? 1,05,000. 24B is? A 24B is what? Interest on loan 75. 80,000 rupees. Interest on loan is 80,000. 75,000 is principal repayment. What is this? Income from house properties. Now please note, for 15 marks question, if you do this correctly, no, you will get 2 marks for this. 15 marks question, 2 marks or 3 marks weightage will be there for this. Okay, 2 marks only because it is a very small adjustment. Okay, now he received 75,000 by premature withdrawal from deposits, including interest of 5,000 in post office time deposit eligible for deduction. Can I say 5,000 rupees is my income? Yeah, I received how much? 70. Please note, I have deposited money. I have deposited money. Now I am withdrawing that money which is deposited by me.
What will be my income, sir? Post office saving deposit. Now please note, if eligible for ATC deduction means the post office deposit is 5 years or more. Please note, if we have written one point over here, if the post office deposit is for 5 years or more, you can check your book, then you will claim deduction under section 80C. Okay, you can claim deduction under section 80C. Meaning, if I have claimed deduction under 80C, that means that year when I deposited the money, I reduced my income to such extent. Now, what is happening? What are they telling? He received 75,000 by premature withdrawal from deposit, including interest of 5,000 in post office time deposit, which is eligible for ATC deduction. Premature means I am withdrawing the money before maturity. Now, ATC ka deduction is allowed on an expectation that you will keep it for minimum 5 years. But I am withdrawing before 5 years only. So now it will be taxable. Why it will be, how much will be taxable, sir? Full amount will be taxable. Interest, definitely taxable. But this amount, which is 70,000, which is there, no, that also will be taxable. And taxable under income from other sources. He sold gold bracelet on 1/5/25 for 5 lakh rupees, which was acquired for 40,000 on 1/3/25. No problem. You cannot claim any indexation. So 40,000 you subtract. He embedded bracelet on this of 50,000. Cost of inflation index is of no use for me. Correct? Why? Gold item. So 5 lakhs minus 40 minus 50, which is 4,10,000. Income from capital gain is 4,10,000. Income from other sources is, and what is my business income under optional default regime only, you tell me. Hey, this income will be same for default regime also. No. This income will not be same for default regime. Income from house property for default tax regime will be, can I say interest will be not allowed as deduction? Hello. Add back interest amount. Huh? Now please note, I'll write my incomes again. First income is income from house property. Computation of gross total income under default tax regime. How much is my income from house property? 2,45,000. Hey, wait. Cubism you are doing. Let out property. No, I am receiving rent. Hello. Hey, let out property interest is allowed as deduction. Hello. Self-occupied property interest is not allowed as deduction. Problem happens in life. How much, sir? 1 lakh? Then income from business or profession is the second head of income. How much is the income from business or profession? 20 lakh. 20 lakhs, 23,000. Then you have, after this you have capital gain, 4,10,000. And IFOS is how much, sir? How much? 75,000. Huh? Is there any other income? Business income we have. 1 second. Business income, gross interest from saving account, that will go under other sources. Hello. So you add 75,000. With that you add. Hey, you understood what is this 15,000? The interest on saving account. So my gross total income will be 26 lakhs less deductions under chapter 6A. Therefore, my total income is 26 lakhs 88,000. 26 lakhs 88,000. Okay. Now my total income under optional tax regime. I'll start with gross total income of default tax regime, which is 26 lakhs 88,000. I will allow what I remember is scientific research ka expenses. 1,10,000. Can I say I'll also allow additional depreciation, which is how much? 12 lakhs into 20%. Correct? No, 12 lakhs into 20%. Then any other thing which I can allow, this is correct. This is also done arrangement. This is no problem. Yeah, that is a deduction. What is the total of this? Gross total income under optional regime is how much? 23 lakhs. Now subtract ATC. Can I say principal repayment, which is then 75,000 principal, 80,000 is interest. 80 TTA, that saving bank account interest. How much, sir? 10,000 rupees. Any other thing is there? First one is okay, second okay, third okay, deduction okay, 20%. 3,000? Yeah. No, but post office saving bank is 3,500. Have they given that post office saving bank account? No, they have not given. Yeah. No, that in that case, you should not claim under 80 TTA. You should subtract it while taking it under income from other sources. Can I say mother is suffering from severe disability? 80 DD will come in life. Severe 1 lakh. How much? 21,000. Default regime. What was the answer, sir? Default regime answer is 26,888 rupees. Correct? And optional regime, the answer is 21,880. Tell me the tax under both the regimes. Tell me the tax under both the regimes. See, this income will remain same. Under optional tax regime, it is 20. Don't do Goobism. Think and answer correctly.
So what's the assessment age?
45, I think. $45. Done. What is the tax? Default regime it is. So special tax rate is 4,10,000 into 12.5%, which is 51,250. Yeah. See, gold bracelet is 4,10,000 into 51,250. That will be same for default and optional. And remaining is 22,78,000. Under default up to 20 lakhs, it is 2 lakhs. On 2,78,000 into 25% due to 69,500. So 69,500 plus 2 lakhs, 2,69,500. Correct? 2,69,500 plus 3,20,750. Add health and education cess. You'll get your tax liability. Under optional regime, this is under default regime. Optional regime 5 lakh rupees. Optional regime. Optional regime. Yeah. Optional regime up to 2.5 lakhs, no tax. Optional regime income is how much, by the way? Optional regime income is how much? Go based on you are doing in life. Optional regime income is how much? 17, 20, 1 lakh 28,000 is the income. Hello, 21 lakh 28,000. On that 4 lakh 10,000, 51,250. Some gupes are calculating on same amount under optional regime and default regime. 394, 320. Sir, can we finish the pending Sir, can we finish the discussion first so that nothing is pending? Now you want me to discuss TDS, TCS, return of income and advance tax? Because it is only I talking, you listening. I mean, of course, if I discuss also, I'll discuss only the important sections of TDS. Hmm. Shall we continue with the question or shall we discuss provision? We'll discuss TDS, TCS. Advance tax. Next chapter for our discussion, very small and easy chapter. Advanced tax is an easy chapter, important chapter also from your exam point of view. Advanced tax. Advanced tax means what, sir? Tax paid in the previous year. See, normally you earn the income in the previous year, pay the tax in assessment year. But on the income which is earned by you in the previous year, if you pay also the tax in previous year, then it is called as advance tax. So whatever tax you pay till 31st of March of the previous year, that is called as advance tax. Advance tax is payable only when the advance tax liability is rupees 10,000 or more. In case of senior citizen who does not have any business income, he does not have to pay any advance tax. If you are a senior citizen who is not having any business income, you don't have to pay any advance tax. Meaning everything tax he has to pay at the time when he is filing his income tax return only. If you are a person who is opting for 44 AD or 44 ADA, meaning if you are a person who is opting for presumptive taxation, then full amount of advance tax can be paid by you in one single installment, which is 15th of March. Advance tax on following income will be payable from the date when these incomes are getting generated or these incomes are getting earned. Which income, sir? Capital gain income, casual income, and PGBP income. On this income, advance tax is required to be paid when these incomes are getting generated or when these incomes are getting earned. How do I compute the advance tax? Very simple. First, compute your total income based on which regime you follow. Whether you follow optional regime or default regime, compute your total income. That total income, of course, will not be a correct total income because you are just estimating it. You are paying the tax in advance even before the year is getting closed. So first, compute the estimated total income. On that estimated total income, depending upon which regime you are following, compute your estimated total income. On that estimated total income, compute the tax. Whatever is taxable at special rate, apply tax of special rate. Whatever is taxable at normal rates or slab rates, that you apply on slab rates. Add surcharge, cess, subtract TDS and TCS credit. When will I subtract TDS and TCS credit? If it is deducted and paid to the government within the due date under section 139(1). Now, whatever is left over, that is your unpaid money or unpaid amount of tax. That is your advance tax which you have to pay. This advance tax you have to pay in 4 installments. Is it 4 equal installment? No. 4 installment by 15th of June, 15th of September, 15th of December and 15th of March. How much should I pay, sir? By 15th of June, you should pay 15%. 15th of September, you should say pay 45%. 15th of December, you should pay 75%. And 15th of March, you should pay 100%. Now, how much is your, this is one question which is asked in the examination only. Your total tax liability is 3 lakhs. Now, TDS deductible but not deducted, meaning they are supposed to deduct but did not deduct. Can I subtract from my advance tax liability? No. TDS deducted but not remitted. They have deducted but not paid to government. I cannot subtract. TDS deducted and not paid is 80,000. Now, advance tax liability is how much, sir? 2,20,000. This I should pay in 4 equal installment, 4 installment, which is 15th June, 15th September, 15th December, 15th March, which is 2,20,000 into 15%. 2,20,000 into 45% minus whatever is paid in the previous installment. 2,20,000 into 75% minus whatever is paid in the previous installments, and 100% by 15th of March, which is 55,000. Now, important over here is in examination, you can expect a question on interest calculation only. Meaning, if you're lucky enough, this is an easy calculation. You should not forget. I mean, you should not ignore this topic. Interest calculation. Now, you have to pay interest if you don't pay the advance tax in time, if you don't pay installment in time, etc. Or if you don't pay tax at all on time, you don't file the return on time. First, interest is interest under section 234A. Interest under section 234A is applicable for delay in filing of income tax return. When is 234A applicable? If there is any delay in filing your income tax return. Normally, the due date of filing income tax return is 31st of July. And in audit cases or company cases, it is 31st of October. If you don't file your income tax return within this date, you have to pay interest. Please note, if I don't file my income tax return on time, that means I will not pay the taxes also on time. Hello. So this interest will be applicable at 1% per month or part thereof. From which date it will be calculated? Interest will be calculated from next day after the due date. So if the due date is 31st of July, it will be calculated from 1st August, and rate of interest is 1% per month or part thereof. So 1st August to what date, sir? Actual date of filing the income tax return. So from the next day after the due date of filing income tax return till the actual date of filing income tax return. Now interest shall be paid on net tax payable after taking credit of advance tax, TDS and TCS. So interest would be paid on what, sir? The net tax which you have to pay, net tax which is payable by you after taking the benefit of advance tax, TDS and TCS. Now, if you see over here, my due date is 31st of July. I have filed on 1st of December. So there is a delay. I have filed on 1st of December. Though it is one day of December, I will take it as full December. So delay is how many months? August, September, October, November, December, 5 months ka delay is there. 78,000 is my tax payable. Advance tax which is already paid by me is 23,000, and 15,000 is the TDS credit which is available. So net amount payable is only 40,000. On 40,000, I'll calculate interest at 1%. For how many months? 5 months. Why 5 months? August, September, October, November, and December. 1st of December is also treated as one full year. Then section 234B. 234B is applicable for non-payment or short payment of advance tax. If you don't pay advance tax means you should pay everything by 31st of March of the previous year. If you have not paid or short paid by this time, then 234B ka interest is applicable. How much is this interest? Interest is for non-payment or short payment of advance tax. Rate of interest is 1% per month or part thereof. 1% per month or part thereof. And this interest is levied from 1st April of the assessment year till the date of payment of tax. This interest is levied from which date? 1st April, because you should have paid it by 31st of March. Therefore, from 1st April till the date of payment of tax. Okay, whenever you pay the taxes, interest shall be levied on net tax payable after taking the benefit of TDS, TCS, and advance tax which is already paid by you. Now, interest under 234B will not be applicable to you if you have paid 90% or more of the advance tax liability within the end of the financial that particular year, previous year, not assessment year. If you have paid 90% or more of your advance tax liability. Tell me the interest under this section. Sorry, in this, for this question, you tell me what is the interest. You'll do mistake. Please be very careful. How much? 2382. Please note 1,59,400 minus how much? 79,400 is my less payment of advance tax, as well as I have filed my income tax return late. So 234 A will also come for filing income tax return late, and 234 B will come for advance tax ka this. 234 A, I should have filed my income tax return by 31st of July. I filed on 2nd of October. So August, September, October, 3 months. How much, sir? 79,400 into 3 months into 1%, which is 2000. This is under 234 A. 234 B. How much, sir? 79,400 into 1% into 7 months from 1st April till 2nd October. How much? 5,558. 5,558 and 2,382. Now, this is a different interest, and different in the sense calculation of this interest is different. Interest for short payment or non-payment of advance tax ka installment. A installment is paid by 15th of June, 15th September, 15th December, 15th March. If you don't pay this on time, then this interest is applicable. Interest for short payment or non-payment of advance tax installment. Interest is applicable at 1% per month or part thereof. Now, advance tax, first installment you should pay 15%, but if you have paid up to 12%, then this interest will not come. Second installment you should pay 45%. If you have paid up to 36%, then this interest will not come. Third and fourth installment you should pay full 75% and 100%. If not, then interest will be applicable. Now, the calculation of interest is very important. For calculating interest, what you should see is how much is your liability you should see. Meaning you should pay 15% in first installment. If you have paid up to 12%, no problem. Like for example, I should have paid, see, based on this question which we have there, which is there on top, based on that this calculation is there. I should have paid how much, sir? 23,910. How much have I paid? 25,000. Can I say I have paid more than what I am supposed to pay? So this interest will not come. Second installment, I should have paid 71,000, but by second installment I have paid totally 57,384. Sorry, I should have paid this much. If I have paid up to this amount, then interest will not come. I have paid how much, sir? 55,000. I should have paid how much? 57,384. I have paid only 55,000. Now interest will come. Interest will come on what amount? 71,730 minus 55,000, what is actually paid by me. On that difference amount, interest will be applicable. And similarly, 19,550 is my liability. I have paid how much amount payable by me? Minimum I should have paid 1,19,550. I have paid only 65,000. So difference of this interest will be applicable, or difference of this interest is applicable. Last installment I have paid only 75,000. Difference will be allowed, taken as interest. So in the first two installment, there should be, you should concentrate properly while calculating this interest. What is that I should concentrate for? In the first two installment, what will happen is there is a minimum amount which you can pay and escape from payment of interest. Tell me the answer for, and late fees. If you file your income tax return late, you have to pay late fee if your total income is less than 1 lakh or 5 lakh, then it is 1000 rupees. If it is more than 5 lakhs, 5000 rupees. 10,000 if you file the return with after 31st of December. Tell me the answer for this question. This is an exam question.
₹16,050.
All of.
This is an exam question and everyone does mistake in this question. And just 2 line ka question it is. The problem is here they have not given any information. They have told estimated tax liability is 1 lakh. Due date of filing return is 31st of July. Actual date of filing is 31st of August. Tax paid was on 30th of August. How much, sir? 1 lakh rupees. Calculate interest under section 234 ABC and late fees under 234 F. Late fees is how much? Tell me. 5,000 because tax amount is 1 lakh. That means income will be more than 5 lakhs. Common sense point. Now, interest under section 234A is easy. 1 lakh into 1% into 1 month. Interest under section 234B is also easy. 1 lakh into 1% into 5 months, meaning April, May, June. Interest under section 234C is something which people will make mistake in this question. Why, sir? Because they have not given the information about installment. That means he has not paid installment. Correct? No. First installment I should have paid 15%. I have not paid. So 15,000 into 1% for 3 months. Then 45,000 into 1% for 3 months. 75,000 into 1% for 3 months. 1 lakh into 1% for 1 month. Aste. So this 1,000 must be correct. This is correct. This you have got right answer. So 16,050 rupees is what you are supposed to play. Okay. Now TCS is the next chapter. Now before going to TCS, what are most important things under TCS? 194 Richa J. 194 RICHAJ. 194 R. 194 I. 194 C. 194 H. 194 A. 194 J. These are most important, meaning this too you should know. Definitely you should know this. Under TDS. Apart from that, what should I know, sir? Where are the amendments? Under TDS TCS, where are the amendments? So I'll show you the amendment part once. Limits have been changed, okay? Under TDS and TCS, they have changed the limits. Like under section 193, which is interest on securities, normally they'll not ask. The limit was 5,000 for some cases. 5,000. Now the limit has been increased for 10,000 for everyone. Amended limit is over here. Then 194A, interest other than interest on securities, which is an important section. Now here the limit was, if deductor is okay, 50,000, 1 lakh rupees, whatever. Now, if deductor is what, sir? Please note, who are the two persons who have to deduct the TDS, sir? One is individual and HUF if their books of accounts are subject to audit, and
any person other than individual or HUF. So if you are an individual or HUF, for you, if you are an deductor who is not an individual or HUF, 50,000 was the limit, or else the limit was 40,000 rupees. And if you are not an individual or HUF, meaning the person to whom you are paying the money, if he is a normal individual HUF, 5,000 was the limit. Now this limit has been increased to 10,000, and for them these limits have been increased by 1,50,000. Dividend limit also has been increased from 5,000 to 10,000. Mutual fund units 5,000 to 10,000. Winning from lottery betting gambling, the limit was 10,000. In total during the year, the limit was 10,000 in total. Now the limit is 10,000 for a single transaction. So if I am doing lottery, betting, gambling, etc., each case it should cross 10,000 rupees. Winning from racehorse, 10,000 was in aggregate. Now they have made it as 10,000 for single transaction. Insurance commission from 15,000 they have increased to 20,000. Lottery commission 15 to 20. Other commission 15 to 20. Rent, the limit was how much? 2,40,000 rupees in a year, which was nothing but 20,000 rupees per month, which is now increased. Very good it is, to 50,000 rupees per month. And this they may ask 194I and 194J limit is also increased. 30,000 was the limit and now it is increased to 50,000. By the way, we have discussed the amended provision only in the classroom if you have attended class. Then compensation for compulsory acquisition, TDS was applicable if the amount was more than 2.5 lakhs. Now the limit is made to 5 lakh rupees. And insurance commission, TDS was deducted at 5% for other deductees. Meaning if you are not a company deductee, if you are other deductee individual HUF, now it has been reduced to 2%. And under TCS also they have added new point. So I'll discuss only those points which are most important. And these are the TDS points which you should definitely know. 194A, general interest. If someone is paying interest, deductor is any person. Deductor can be any person other than an individual or HUF whose books are not, whose turnover does not exceed 1 crore or 50 lakh rupees. That means his turnover is not exceeding the limit because of which his books of accounts are subject to audit. Meaning, in simple words, deductor is individual or HUF or any person, individual or HUF whose books of accounts are subject to audit, and any person other than individual or HUF. Deductee should be a resident person and 10% should be the rate of deduction. Limit is 50,000 for bank, post office, 1 lakh rupees for interest paid by bank or post office to a resident senior citizen, and 10,000 rupees for all other cases. This is not applicable. This section 194A is not applicable when the interest is paid by a firm or a cooperative society of a partner. Firm is paying it to the partner, cooperative society is paying to the member. Interest paid by central government to resident, interest paid to bank or government financial corporations, etc. 194B and BB. Now here what is changed, sir? This limit is now for 10,000 rupees for single transaction. Everything else is same. Rate of TDS is 30%. 194B is an important section. TDS on lottery winnings from crossword puzzles, etc. You pay the payer can be anyone who is organizing that event. Payee can be resident or non-resident. TDS is applicable at the rate of 30% when the TDS winning amount is more than 10,000 rupees. Before it was 10,000 in aggregate. In a whole year, if I take 5 lotteries and if I win 5 times, 2,000, 2,000, 2,000 and 3,000, 11,000, 30% TDS. Now here it is single transaction. Yeah. Casual income, if they have deducted TDS when they paid, then no problem. 30% TDS they have deducted. Salary is 12 lakh rupees. If you are opting for default regime, no problem. And normally they will deduct TDS, but some cases they don't. when you don't take lottery, meaning if you go to other bookies and all. 194C is an important section. 194C, who should deduct TDS? Any person other than individual or HUF, and individual or HUF if their books of accounts are subject to audit. If the deductee, the person to whom you are paying money, is an individual or HUF, rate is 1% and 2% for all other cases. This is when you pay the money to contractor or subcontractor. Limit is 30,000 for a single transaction and 1 lakh rupees in aggregate. 194D, DA not applicable, E is not there, E is not there, commission is not there. 194H. Again, see, please note, recharge A, the person who has to deduct TDS is also same. Who has to deduct TDS under recharge A? Any person other than individual and HUF, and an individual and HUF whose books of accounts are subject to audit. So the deductor will be same. Now the rate has been reduced to 2% and the limit also has been increased to 20,000 for commission which is paid by you to anyone. So for commission, the rate of TDS is 2% and the amount threshold limit is 20,000 rupees. Rent is also important. Why, sir? Amendment is there. The limit has been increased to 50,000 rupees per month. So for TDS on rent, any person other than individual NHF and individual NHF, if their books of accounts are subject to audit, TDS is required to be deducted at 2% for plant and machinery taken on rent and 10% for land, building and furniture taken on rent. The threshold limit is 50. If the rent is not exceeding 50,000 rupees per month, no TDS is applicable. 194 IA, purchase of certain immobile property. Purchase of certain immobile property. If you are purchasing an immobile property, 1% TDS is applicable. Okay, this is fine, normal point only. Now here, payment to certain individuals and HUF not important. 194J, here also limit has been reduced. Please note here, there are totally 5 items covered. 194J, 5 items are covered: professional fees, technical fees, royalty, non-competing fees and director's salary. For professional fee, separate limit of 50,000, technical fee, separate limit of 50,000, royalty, separate 50,000, non-competing 50,000 separate. Directors, there is no limit. Director, when you pay even 1 rupee paid to director, TDS is applicable. Income compensation for compulsory acquisition of immobile property, this limit has been increased to 5 lakh. Before it was 2.5 lakhs. Everything else is same. 10% is the rate of TDS. 194M. So when you are taking any contract or any professional services, or you are paying commission to anyone for the work which is taken by you for personal purpose. See, normally anything which is done by you for personal purpose, TDS is not applicable. But if you are paying commission to someone, if you are paying contract charges to someone, or if you are paying professional charges to someone for your personal purpose, the work which is taken by you for your personal purpose, and if the amount paid by you, if it exceeds 50 lakh rupees, if it exceeds what, sir? 50 lakh rupees, then you should deduct TDS at the rate of 2%. 194N, if you withdraw the cash from the bank, 2% they will deduct if it is more than 1 crore, and 3 crores for cooperatives. No. When I'm taking for personal purpose, turnover concept only will not be there. So if I'm paying, you are an advocate giving services to me, amount paid to you is more than 50 lakh rupees, TDS is applicable. Or you are an interior designer, in that case, it is applicable. 194Q. So if you purchase goods more than 50 lakh rupees from a single person, and if you are a person whose turnover is more than 10 crores, then for you 194Q is applicable. When you make the payment, 194Q is TDS. When you make the payment to that person, you should deduct the TDS at the rate of 0.1% of turnover in excess of 50 lakhs. Only excess amount. Here it is only excess amount. This is the only case wherein on excess amount you deduct the TDS. 194R. 194R. TDS on benefit or perquisites. TDS on benefit. No, this is not 194R, I believe. Okay. 194R. Any person other than individual or HUF, individual HF if their books of accounts are subject to audit. TDS on perquisites. Perquisites means what, sir? Let us say I am seller of sari. There is a very big sari manufacturing company. I purchase saris from them. They told if you purchase more than 10 crore ka sari, they will give me some. They'll give me what, sir? They'll give me some benefit. What is that benefit called? They'll give me a car. Now that car which I am getting, that is a perquisites. So in that perquisites, if the value on the perquisite ka value, they should deduct TDS at 10%. 194T newly added section. This is a newly added section. When you are paying the money to whom, sir? Remuneration and interest is paid to partners by the partnership firm. Then the partnership firm should deduct taxes at 10% if the amount is more than 20,000 rupees. Net of salary. Now, what is the duty of the person who is deducting taxes? Now, duty is only for this attempt. All these things are applicable. After this, everything is changed. Form names and all are changed from the new under new income tax law. So TDS, you should pay the TDS amount. You should pay April to February. You should pay by 7th of next month. Meaning, if you have deducted TDS in the month of April, by 7th of next month, in the month of December, 7th of January, you should pay the TDS. But for the month of March, you should pay it by 30th of April. And for quarter ending, you should file a quarterly statement 24Q, 26Q, and 27Q. 24Q is for salary, 26Q is for all other payments, and 27Q is when you are making payment to non-resident. For first 3 quarters, it is once the quarter is over, 31st of next month. So first quarter is April, May, June, 31st of July. And for the 4th quarter, that is the last quarter, January, February, March, you should pay the you should file the TDS return by 31st of May. Then you have what, sir? You should give TDS certificate. For salaried employees, you will give something called as Form 16, and for all other people, you will give something called as Form 16A. For salaried employee, you should give it by 15th June of next year. And for other people's, once the quarter is over, after 15 days. Sir, what will happen if I don't deduct the TDS? If you late deduct the TDS, interest is at 1% from the date on which you are supposed to deduct till the date of actual deduction. If you late deposit the money, you have deducted but paying it late to the government, then 1.5% of 1.5% interest from the date of deduction till the date of actual payment. In TCS, this is important. They have added some items. Anyways, TCS for alcoholic liquor, 10 leaves, alcoholic liquor. TCS means what, sir? The seller, when he is supplying, he will collect extra money from you. That is called as TCS. If he is selling alcoholic liquor, 1%, 10 leaves, 5%, TCS will collect scrap, 1% TCS, mineral, 1%, timber of forest or any other type of timber, it is 2%. This rate has been changed from 1% to 2%. If you are giving petrol pump, if you are giving on lease any land for parking purpose, toll plaza or mine or quarry, 2% TDS is applicable. This 206C1F is important. Now that was applicable only for retail sale of motor vehicle. If you purchase motor vehicle more than 10 lakh rupees, then TDS at 1% was applicable. Now, along with motor vehicle, they have added few more items called as luxury goods. What are these luxury goods? Any wristwatch, art piece, collectibles such as coin, stamp, yacht, boat, helicopter, cannon, sunglasses, handbags, shoes, sports wear, sports equipment, horse, home theater system. So if you purchase any of these items, and if the value of these items is more than 10 lakhs, watch, you are purchasing more than 10 lakhs, you are purchasing any artwork more than 10 lakhs, then 1% TC, yes, will be applicable. Overseeing remittance, they have already asked the question in the previous attempt. So, but still, yeah, this is also something which they normally test in MCQ. Overseas remittance means you are sending the money outside India to someone, or you are purchasing a tour package for going outside India somewhere. Amount is for purchase of overseas tour package. If it is up to 10 lakh rupees, then 5% TDS is TCS is applicable. More than 10 lakh rupees, 20%. Amount remitted outside India is less than 10 lakhs, no TC. If you are sending the money, first is for tour package, second is for sending the money, less than 10 lakhs you are sending, no. No, what's a TCS is applicable. If you are sending more than 10 lakh, if you are sending more than 10 lakh, then TCS will be applicable at the rate of 5% if it is sent for education purpose or medical purpose. If you are sending it for any other purpose, TDS will be 20%. TCS will be 20%. If the amount remitted is for educational loan and aggregate exceeds 10 lakh rupees, then 0.5% on that amount in excess of 10 lakhs will be collected. TSCS on sale of goods is no more applicable. Then you have return filing. Return filing, I'll tell you what are the important points. So, what are the important points? Who should file income tax return compulsorily? These people should file income tax return compulsorily. If your income is more than basic exemption limit, if you have deposited more than 1 crore rupees in the bank current account, if you have deposited more than 50 lakh rupees in the saving account, if your expenditure is more than 2 lakh rupees for foreign travel, if you have paid electricity bill more than 1 lakh rupees in a year, if your turnover is more than 60 lakh rupees, you are doing business, and if your professional receipts are more than 10 lakh rupees in a year, or aggregate TDS deducted in your name is more than 25,000. Due date is 31st July normally, 31st October in audit cases or in case of company. And if you are a transfer pricing assessee, 30th November. Loss return means what, sir? Loss return means you are not made any profit in that year. You just made losses, but still, do you have to file your return? Yes, you have to file a return called as loss return. Why? If you file loss return, then only you can carry forward your losses. If you don't file loss return, you cannot carry forward losses. But two losses can be carried forwarded: house property loss and unabsorbed depreciation, even if you don't file your loss return. Belated return means filing your income tax return late. The belated return due date is 31st of December or before completion of assessment, whichever is earlier. If you file your return late, what are the consequences, sir? Loss you cannot set off. Current year losses cannot be set off. Interest will be applicable under 234A, and also please note this is a question which they ask in the examination. What are the consequences? Interest under section 234A and late fee under 234F will be applicable, and deductions like 80 JJAA and 10 AA deductions will not be given to you. Revised return due date is same, 31st of December or before completion of assessment, whichever is earlier. You can revise your return any number of times. Revision is possible only when original return is filed on time. Updating the return means what, sir? If you have filed your income tax return and if you have done any mistake in that income tax return, and if you want to increase your tax liability, then you can file your updated return within 24 months of original return ka filing का assessment year का end. So whenever the original return was filed, that year का assessment year ends on 31st of that year. From there 2 years, that is 24 months you have time. Now this is also a theory question which they can ask. No updated return will be allowed if updated return is a loss return. If it is decreasing your tax liability, it results in refund, or it is increasing your refund amount, or if updated return is already filed, or such other class of person as may be notified by government. Defective return, last time they asked a question for 2 marks, I think, or 3 marks. Defective return is when, sir, if you file your income tax return and if there is any mistake in that return, the department will send a notice to you telling please rectify, or intimation they will send a to rectify that defect. You should rectify within 15 days. If you don't rectify, that means your return is not filed by you at all. Tax which you have to pay on updated return. See, if you update your return within 12 months, then 25% of the total amount which you have to pay will be collected as penalty. And if you update after 12 months, but within 24 months, 50% of your tax and interest will be collected as penalty. Whatever tax you pay is tax paid by you on self-assessment basis. Now, apart from this, this is the PAN information which you have to submit and other information. That is all about this chapter called as chapter law. This 50 marks ka paper called as income tax only. Income tax, you see the difference. Income tax we took almost maybe around 2.5 days, which is equal to 6, 6, 15, 15, 16, 16 hours, or maybe 17, 18 hours. But you see, GST will complete in 6, 7 hours. Complete it in 6, 7 hours. Maja is there. That is very easy because there is no linkage. You don't have to use your extra brain. We'll take a break now. But you should study. Please note, studying is different than seeing the paper. Seeing is different, studying is different. Whatever you study, you should know everything, even a comma. That means you have studied. Okay, we will meet at what time, sir? 2 o'clock we'll meet. No, today we'll meet 2 o'clock. Welcome back, students. Welcome back. Online students. I hope I'm audible and also the screen is visible. Online students. Yes, sir. Okay, now let us start the discussion on what is that, sir? GST. GST. Huh? Constitutional provision with respect to taxation. Constitutional provision with respect to taxation. Article 265 says no tax can be levied or collected unless there is an authority of law. Article 245 says central government has the power to levy taxes for whole or any part of India. State government has the power to levy taxes for whole or any part of that particular state. Article 246 has a schedule called as schedule number 7, which talks about three lists: union list, state list, and concurrent list. Whatever is there in union list with respect to that, only the central government can make the law. Whatever is there in state list with respect to that, only state government can make the law. And whatever is there in concurrent list with respect to that, both central government and state government can jointly make the law. Now, there was not even a single article in our entire constitution which gave the power to both central government and state government to jointly come together and collect taxes. Therefore, there was an amendment made in our constitution and constitutions. 101st Amendment Act was passed. By this constitution's 101st Amendment Act, they introduced various different articles. Some of the articles important from taxation point of view is Article 246A, 269A, 279A. Now, please note, Constitution 101st Amendment Act is important because this is that particular act because of which GST came into existence, and this Constitution's 101st Amendment Act came into existence because of Constitution 122nd Amendment Bill. Article 246A gave the power to both central government and state government to jointly make the law with respect to goods and service tax, and it also said that the central government will have the exclusive power to make the law with respect to interstate supply. Now, what is concept of GST, sir? GST is a tax on value addition. In GST, continuous tax credit is available at each and every stage of supply chain. GST eliminates cascading effect, tax on tax. GST burden is on final consumer, and India follows dual GST model. Now, supply has two nature. It can be either intrastate supply or interstate supply. If it is an intrastate supply, that means location of supplier and place of supply is in same state, same union territory. If it is an interstate supply, that means location of supplier and place of supply is in two different states, two different union territory, one state and one union territory. Now, union territory means what, sir? Union territory, we have Puducherry, Delhi, Jammu and Kashmir, Andaman Nicobar, Lakshadweep, Ladakh, Diu Daman, Dadar, Nagar Haveli, and Chandigarh. These are the union territories. But there are three union territories, which is Puducherry, Delhi, and Jammu and Kashmir. They are treated as state for the purpose of GST law. And whenever you make a supply over there, CGST and SGST will be levied. Now, question number one, important question: deficiencies of existing indirect tax laws, or what was the need for GST in India? Why did GST come into existence? Or GST is a cure for all ill effects of existing indirect tax laws. So these three question answer is same. What is the answer, sir? Deficiencies of existing indirect taxes law. Existing means before GST law, whatever was there. Deficiencies of existing indirect tax laws are certain transactions were taxed as both goods and services. Multiple taxes were collected by same state government. Send VAT was not integrated with state level VAT. Then tax on services was not integrated with tax on goods, and CST, Central Sales Tax, was not VATable. Taxes subsumed with GST. There are some central taxes and there are some state taxes which got subsumed or merged with GST. What are the central taxes which got merged or subsumed with GST, sir? Central excise duty, central sales tax, service tax, CVD and special CVD, excise duty on medical and toilet preparations, and all other surcharge and cess which was collected by central government on supply of goods or services. Important question again. State taxes which got merged with GST are VAT or sales tax, entertainment taxes except collected by local bodies, tax on lottery betting gambling, purchase tax, entry tax or luxury tax, and so luxury tax is required to be added, and all other types of surcharge and cess collected by state government for supply of goods or services. Are there any taxes which did not get subsumed with GST? Definitely yes. There are some taxes which did not get subsumed with GST. Sir, which are those taxes which did not get subsumed with GST, sir? It is excise duty on alcoholic liquor for human consumption, basic custom duty, property tax, electricity duty, and entertainment taxes charged by local authority. Now there is tobacco and tobacco products on which GST as well as pre-GST taxes are collected. On opium, Indian hemp, narcotic drugs, GST as well as pre-GST taxes are collected. On alcoholic liquor for human consumption, GST can never be collected. And on HP man, GST can be collected on a future date as may be notified by government. Then advantages of GST, it's cinema, it mitigates ill effect of cascading. Advantages of GST on economy is important question. It mitigates ill effect of cascading. It provides certainty in tax administration. It is beneficial to small traders and entrepreneurs. It reduces compliance cost. It increases investment and employment. It helps in creation of unified national market. Then there is ease of doing business in it will boost Make in India initiative, and it has a automated procedure with greater use of IT. Then we have what, sir? GST Common Portal, important question. GST Common Portal is an important question. What is GST Common Portal telling? GST Common Portal is a website which is designed, developed, and managed by a company called as GSTN. GSTN is a Section 8 company, meaning GST is GSTN is a Section 8 company. It is a non-profit, not-for-profit organization. GST, how do I access this, sir? You can access it through internet. How can I access it through internet, sir? By going to a place called as gst.gov.in. Now, taxpayer can access it through internet and tax officials can access it through intranet. Now, what are the functions? Important question. What are the functions of GST Common Portal? It helps in filing of returns. It helps in filing of registration application, generation of payment challan. It acts as clearing house for settlement of IGST. It generates business intelligence. Article 269A talks about levy and collection of GST on interstate supply. On interstate supply, GST can be levied by central government. The GST which they are going to levy is called as IGST, and all the provisions, principles with respect to interstate supply will be made by that government. Which government? Central government. Important article is Article 279A. What is Article 279A talking about? Article 279A talks about what, sir? Article GST Council. Article 279A says the Constitution 101st Amendment Act 2016 had a provision with respect to Article 279A, which said that the President of India should, within 1 month from the start of this act, should form a GST Council. GST Council was formed on 15th of September 2016. GST Council consists of a chairperson, who will be the Finance Minister of India, and it will consist of members. Who are the members, sir? Union Ministers in charge of Revenue and Finance. Then Finance Minister of State, Taxation Minister of State, and any other person nominated by the state government. They will be the members. and these members shall elect one among themselves to be the vice chairperson. Then GST Council gives a recommendation on taxes, duties, and surcharge, and cess which are required to be subsumed or not required to be subsumed with GST. GST rates for different goods and services. Goods and services exempted from GST. Principles for determining the nature of supply. Classification of different goods and services. Threshold limit for taking registration under GST law. Persons who are exempted from taking registration under GST law. What are those, who are those persons who are exempted? What are the special provisions which I am going to apply for special category states? There are totally 11 special category states. Yes, Nagaland, ma'am, through Michael Jackson. Sikkim, Nagaland, Uttarakhand, Sikkim, Nagaland, Manipur, Meghalaya, Sikkim, Nagaland, Manipur, Assam, Arunachal Pradesh, Meghalaya, Tripura, Himachal Pradesh, Uttarakhand, Mizoram, and Jammu and Kashmir. And applicability of GST on HP man also will be notified by them. Meeting what, sir? Meeting will be happened, the GST council is going to decide everything through meeting, and meeting quorum should be there in the meeting. Quorum of the meeting is half of total number of members. Decision in GST council will be taken by meeting. How will they decide in the meeting, sir? By majority of not less than 3/4 of weighted votes of members who are present and voting. Weight assigned to central government is 1/3, weight assigned to state government is 2/3. In chapter number 1, which is this chapter, deficiencies, important question. Advantages for economy, important question. Then GST council, important question. Then taxes which are subsumed with GST is an important question. With the MCQ point of view, this is an important question. Now the actual GST start from a topic called as supply under GST. Hardly it took how much, sir? 11 minutes for completing chapter number 1. Maja is there. Please come, sir. Please come. Yeah, I know. Now the main chapter, main GST starts with what, sir? Supply under GST. Supply under GST. Supply under GST. A supply means what? It is a taxable event under GST law. Now you have to pay GST because of some reason. That reason is this reason. Which reason, sir? Supply of goods or services. The taxable event means the reason because of which you are paying the taxes. Under GST law, the taxable event is supply of goods or services or both. Now, section 1 of CGST Act talks about title extent. Now, in your examination, majorly which act is applicable to you? CGST Act. All other acts are not applicable, but there is one chapter called as place of supply. Only for that chapter called as place of supply, you also have to see IGST Act, which is IGST Act. Yeah. Now, please note this GST, there are questions already uploaded. Uploaded meaning they'll upload it maybe in 1 or 2 days. It is already ready. Okay, that refer those questions. Nice questions we have discussed over there. And PDF, I'll try to add the link over there only. I mean, because they upload, I will, as a comment, I will share the link. Okay, for PDF. Section 1, title, extent, and commencement. Title of this act is Central Goods or Services Tax Act. And this extends to whole of India. And it has commenced from 1st of July 2017. Definitions are given in section 2, which are not, meaning which whenever it is relevant, whichever topic it is relevant, we will discuss at that time. Then section 3 to section 6 talks about officers under GST law, their hierarchy, their powers, roles, and responsibilities, which is not there in our syllabus. So the main topic which we are going to see in this chapter is with respect to what, sir? Section number 7, which is supply under GST. Section 7 talks about supply under GST. Section 7, subsection 1, clause A, B, C, AA. Schedule section 7(1)(c) read with schedule 1, 7(1) capital A read with schedule 2, 7(2) with 3, and 7(3) are the different sections which are there in this chapter. Section 7(1) capital A says supply includes. Now, what do you mean by supply includes? That means whatever you normally understand by the word supply is a supply. Apart from that, supply shall include these things which we are going to study. Supply includes all form of supply of goods or services or both, such as sale, transfer, barter, exchange, lease, license, rental, disposal, which is made or agreed to be made by a person for a consideration in the course or furtherance of business. Supply includes all the forms of supply of goods or services or both, such as sale, transfer, barter, exchange, lease, license, rental, disposal, made or agreed to be made, says by a person for a consideration in the course or furtherance of business. Meaning, if I want to call something as a supply as per 7(1), A, 5 things should be there. What are those 5 things? Supply should be of goods and services. That supply should be made or agreed to be made by a person for a consideration in the course or furtherance of business. Now, what do you mean by goods? Goods means every kind of mobile property other than money and securities, but includes activity in relation to use of money or its conversion, for which a separate consideration is charged. Sir, what do you mean by consideration? Consideration means payment in money or otherwise by the recipient or any other person, but consideration shall not include subsidy given by central government or state government. Then we have recipient. Okay, by the way, I am showing the definition of goods and services. First, goods means what, sir? Every kind of mobile property other than money and securities, but includes activity in relation to, but includes actionable claims, growing crops, things attached to or forming part of land. Important is actionable claims. Actionable claims are treated as goods. Services means anything other than goods, money, and securities, but includes activity in relation to use of money or its conversion, for which a separate consideration is charged. Now, consideration means what, sir? Consideration includes payment in money or otherwise by the recipient or any other person, but it shall not include the subsidy given by central government or state government. Monetary value of any act or forbearance by the recipient or another person, but it shall not include subsidy given by central government or state government. Further, proviso says refundable deposits shall not form part of consideration unless they are adjusted as consideration. Unless they are adjusted as consideration. A refundable deposits will not form part of consideration unless they are adjusted as consideration. Recipient, consideration is there or consideration is not there. If for a particular transaction of supply of goods and services, if consideration is there, then for recipient is the person, for both supply of goods and services, recipient is that person who is paying such consideration. If consideration is not there for supply of goods, the person to whom the goods are delivered, and for supply of services, the person to whom the services are rendered will be taken as recipient. Section 7, subsection 1, clause B talks about what, sir? Section 7, subsection 1, clause B talks about importation of services. Very important. Importation of services. Importation of services says what? Supply includes importation of services for a consideration whether in the course of business or not. So if you are importing any services, whether that services is imported by you for your business purpose or for your personal purpose, it will be treated as supply. If you are importing services for a consideration, if you are importing services by paying money, whether it is for business purpose or personal purpose, it is a supply. Now, what is importation of services? I will call a particular activity as importation of services if the supplier of that services is located outside India, recipient of services located in India, and the place of supply is also in India. Supplier is outside, recipient is in India, place of supply is in India. 7(1)(c), activities specified in schedule number 1, they shall be treated as supply even if there is no consideration. Meaning, there are few activities which are listed in which, sir? Schedule number 1. All these activities are treated as supply even if there is no consideration. What are those activities listed over here? Permanent transfer or disposal of business asset, provided that input tax credit has been availed on such business asset. If you are permanently transferring or disposing a business asset on which you have claimed input tax credit, meaning if there is any business asset on which you have while purchasing that business asset, if you have taken input tax credit, now you are transferring it permanently or transferring it or disposing of it off without any consideration. Though it is there is no consideration, I will call it as supply. Why, sir? The only reason is because you have taken input tax credit on this particular asset. Supply of goods or services or both between related person or between deemed distinct person referred to in section 25(4) or 25(5) if it is made in the course or furtherance of business. Meaning, if you are supplying any goods or services or both, between whom are you supplying them? Between your related person or between your deemed distinct person, and that supply is as per 25(4) or 25(5). And if that supply is made in the course or furtherance of business, then it will be treated as supply even if there is no consideration. Now, what is important is related person. Now, related person, there are a lot of things in related person, but one is employer and employee is related person. Partners of the partnership firm are related person. But more than these two people, who is a related person? For me, my family members are related person. If we are members of same family, we are related person. Now, who is a family for Dilip? Here, you should not apply your income tax logic. Here, for me, my family is my spouse and my children's. Avadada. Who is my family, sir? For me, my family is my spouse and my children's. My spouse and my children's. Only two people are my family. My father, mother, brother, sister will be my family if they are dependent on me. Okay. Who is my family? My spouse and my children's are my family. My father, mother, brother, sister, they will be my family if they are dependent on me. Very important. Many people will make mistake in life over here. Supply of goods or services or both between related person. Between whom, sir? Between related person. Or between deemed distinct person referred to in section 25(4) or 25(5) if it is made the course or furtherance of business. Now, what is this deemed distinct person? Section 25(4) and 25(5) talks about deemed distinct person, meaning you are not a different person, but I am going to assume that you are a different person. Who are those people? Section 25(4) says where a person has obtained more than one registration, whether in a state or a union territory or more than one state or more than one union territory, he shall, in respect of each of those registration, shall be deemed as distinct person. So if I have obtained more than one registration, then I will be deemed as distinct person for each of those registration. So basically 25(4), the criteria for differentiation is what, sir? Your registrations. For section 25 subsection 4, the criteria for your distinction is your registration. Then section 25(5) says where a person has an establishment registered in a state or an union territory, and he also has another establishment in another state or another union territory. So if I have an establishment in a state or union territory, and if I also have another establishment in another state and union territory, then he will be deemed as, he shall, in respect of each of those establishment, be deemed as distinct person. The difference between 25(4) and 25(5) is, in case of 25(4), every registration I have is different. In case of 25(5), I have an establishment in a state which is registered, and I also have another establishment in another state or union territory. Now that other establishment which is there, that may or may not be registered. Please note, this is important. This is important. Because of this, what will happen, let us say Dilip is registered and has branches at Kormangla, Jayanagar, Malleswaram, and Indranagar. Okay, I have 4 Priya Sarees ka branches, and all the 4 Priya Sarees are in same state of Karnataka in Bangalore. Now they all have taken one single registration. Now whatever I supply from one branch to another branch for free, it is not a supply. It is not a supply. Whereas if I have taken separate registrations for all of them, then they are deemed as distinct person. As per what they are deemed as distinct person? As per section 25(4), because they are all registered separately. Okay, yeah. Then Dilip has Priya Sarees in Bangalore, Priya Sarees in Chennai, Priya Sarees in Coimbatore. Bangalore to Chennai, if I am supplying, see, Bangalore is registered, Chennai, Coimbatore is not registered. Bangalore to Chennai, if I supply, it is treated as supply. Why, sir? Because we are deemed as distinct person. How are we deemed as distinct person as per section 25(5)? Why, sir? 25(5)? One establishment is registered, another is not registered. Are you understanding? You should say, yes, sir. Yes, sir. Which one? Section 25(5) says you have two establishment and both are at separate state or union territory. One of them is registered, other is not registered. These both are people are also treated as distinct person. If both these establishment are registered, then they are distinct as per 25(4). If one is registered, one is not registered, distinct as per 25(5). Then supply of goods by principal to his agent or vice versa, wherein the agent is undertaking to further supply those goods. A supply of goods by principal to his agent or vice versa. Supply of goods by principal to his agent or vice versa, wherein the agent is undertaking to further supply those goods on behalf of principal in his own name. Whose name? Agent's own name. Supply of goods by principal to his agent or vice versa, wherein the agent is undertaking to further supply those goods on behalf of principal in his own name, agent's own name, then that will be treated as supply. So whatever I give to my agent for free, if that is supplied by agent to the customers in the name of the agent only, then whatever I have given for free is a supply for me. But if agent gives the invoice to customers in my name, or if I give directly invoice to the customers, then whatever I gave to agent for free is not a supply. Important. Importation of services is most important point in your chapter number 1. Importation of services. Importation of services by a person from his related person located outside India or from his another establishment located outside India, if it is made in the course or furtherance of business. If you are importing any services from your related person outside India or from your another establishment, meaning your branch office outside India, and if that services are imported by you for free, I will call it as a supply. When will I call it as a supply? If those services are imported for my business purpose. 71AA, notwithstanding to anything, not that relevant section, you can ignore. Notwithstanding to anything contained under any other provisions of the Act or any other law for the time being in force, activities or transaction by a person other than individual to its own members for a consideration shall be treated as supply. Section 7(2) talks about negative list of supply. Negative list of supply, important. There are two new additions in this negative list of supply. Section 7(2), negative list of supply or activities which are neither treated as supply of goods nor treated as supply of services, which are not supply at all. Section 7(2). Government has notified two activities. One is activities performed by Panchayat or municipality under Article 243G or 243W and grant of liquor license by state government. Schedule 3 also gives the list of some activities which are not treated as supply. What are those activities which are given in schedule number 3 which is not treated as supply, sir? Services given by employee to the employer in the course of employment. Services by court or tribunal except arbitral tribunal. Services by MLA, MP, President, Prime Minister and Chairperson of GST Council, etc. Please note, all these transactions are not treated as supply. All these transactions are not treated as supply. Services by court or tribunal, services by MLA, MP, President, Prime Minister, Chairperson of GST Council, services by way of funeral, burial, cremation, mortuary, including transportation of deceased, sale of land, and sale of building subject to para 5B of Schedule 2, actionable claims except specified actionable claims. Now, what are the specified actionable claims? Meaning, if you deal in this specified actionable claims, then it will be treated as supply. Lottery, betting, gambling, online money games, casino and horse racing. Services given by court or tribunal. Now, if I want to go to the, if I want the court to hear my case, then I will have to go to the court and pay them something called as hearing fees. On that hearing fees, they will not charge any GST. They will not charge any GST on that hearing fees. Then, so if you are dealing in specified actionable claims, then it will be treated as supply. Now, sale of land is never treated as supply, but sale of building may be treated as supply subject to para 5B of Schedule 2. Para 5B of Schedule 2 says what, sir? If the consideration for the sale of building is received before issuance of completion certificate or before first occupancy, I'll call it as supply. If the consideration for the sale of building is received before completion certificate or before first occupancy, then I will call it as a supply. If the consideration is received after completion certificate or after first occupancy, then it is not a supply. Now, the two new activities, please see this carefully. Activities of apportionment of co-insurance premium by lead insurer to co-insurer for insurance services rendered supplied jointly by them to the insured is not a supply, subject to a condition that lead insurer has paid GST on the entire insurance premium. Now what happens is, you know that there is something called as co-owned property, correct? No. Just like your co-owned property, we have concept called as co-insurance. Sir, what happens in co-insurance? For a single property, there are more than two owners is co-ownership. Similarly, if for a single asset, if more than one person is giving insurance services, then it is called as co-insurance. Now, what happens is, let us say I have a factory and the value of my factory is around 100 crores. Now, I went to a general insurance company. I went to the general insurance company and I told them, sir, I have this factory which is worth 100 crores. I want to take insurance on this factory. So general insurance company told, sure, sir, we will give you the insurance, but you will have to pay me an insurance premium of 10 lakh rupees. I said, no problem. I'm ready to pay 10 lakh rupees insurance premium. Now, general insurance company, can I say, is the service provider? I am the service recipient. Hello. General insurance company is the service provider. I am the service recipient. Now, general insurance company felt that risk is too high. I will have to pay Dilip 100 crores if something happens. So what general insurance company thought? Let me share my risk with someone. Let me share my risk with someone. Therefore, it found whom, sir? Another insurance company called as HDFC Insurance Company. And the general insurance company told HDFC Insurance Company that, see, are you ready to take some risk? Because I have taken insurance from, I have given insurance to Mr. Dilip for his factory worth rupees 100 crores. So let us say HDFC told, yes, I agree to share 30% of the risk. So now 30% of the risk will be shared by whom, sir? HDFC. Now HDFC is going to receive insurance premium. Hello. Who will pay the insurance premium? General insurance company will divide its insurance premium and give, let us say, around 3 lakh rupees to them. Now here, I am a person who never knew about HDFC. For me, I went to general insurance company. It was general insurance company who found HDFC. So general insurance company over here will be treated as lead insurer and HDFC will be treated as co-insurer. Please see, general insurance company is giving the services to me. HDFC is giving services to whom? General insurance company. Because I have no idea at all who is HDFC. Correct? No, because I have met only general insurance company. Now, when HDFC gives services to general insurance company, HDFC will charge premium. Hello. On the premium which is charged by HDFC, no GST is applicable. When is no GST applicable? If general insurance company had paid taxes on full 10 lakh rupees of premium, meaning co-insurer does not have to, the services given by co-insurer to the lead insurer is not a supply if the lead insurer has paid GST on entire insurance premium amount. Do you understand this?
Yes.
Simple, not it's simple. Did you understand everyone?
They cannot get enough to be selected.
See this line. Service number 1. Who is giving service? Company, general insurance company is giving the services to Priya Saris. Here the premium is how much? 10 lakh. Is it a supply? Yes, it is a supply. Second is service number 2. HDFC is giving services to general insurance company, and for which the premium charge is how much? 3 lakh rupees. This is not a supply if general insurance company has paid premium on full 10 lakh rupees ka GST amount. Services given by insurer to reinsurer for which ceding commission or reinsurance commission is deducted. Services given by whom, sir? Insurer to reinsurer for which ceding commission or reinsurance commission is deducted from reinsurance premium paid by the insurer to the reinsurer is not a supply subject to a condition that GST is paid by the reinsurer on the gross reinsurance premium payable by insurer to the reinsurer. Very simple, just like this only. This is you dividing your insurance between two people. You are sharing your risk between two people. Whereas reinsurance means what, sir? I have, let us say this company, I have taken insurance from this company. This company takes insurance from some other company. That is reinsurance. In case of reinsurance, full risk is transferred to someone. Co-insurance, I am sharing my risk with someone. Now let us say there is a company called, now please note, normal, how is normal life working in? Normal life says what, sir? There is an insurance company. I give services to insurance company. I am an insurance agent. I give services to insurance company, so therefore insurance company will pay me commission. On that commission, GST is applicable. Okay, correct? And who has to pay GST? Whatever. I mean, RCM is applicable in this case, but we'll ignore that point for the time being. So I am giving services to insurance company for which insurance company will pay me commission. On that commission, GST is applicable. Correct? No, insurance company will pay me commission for selling their product. Now, there is a company called as Air India, which has taken insurance worth rupees 3,000 crore from whom, sir? Tata Group. Okay, from Tata Group, they have taken insurance. Now, what Tata Group has done, sir? Tata Group has taken insurance on this insurance. They have transferred this risk to HDFC Insurance Company, meaning they have taken reinsurance. Now, for which HDFC is charging a reinsurance premium of 50 crore rupees. On this 50 crore rupees, now, please see now. Can I say there will be a customer whom I am going to help to take insurance from this insurance company? Therefore, insurance company is giving me commission. Hello. Can I similarly say in this case, Air India wants insurance. Tata Group is finding HDFC so that HDFC can give insurance to Air India. Correct? No? Hello. Can I say Tata Group is acting as a agent over here? Hello. Tata Group is acting as an agent over here. Now, because Tata Group is acting as an agent, don't you think this HDFC will give some commission to Tata Group? That commission is called as ceding commission or reinsurance commission. On this ceding commission or reinsurance commission, GST is not applicable. It is not treated as supply. If HDFC has paid GST on the entire reinsurance premium. If HDFC has paid GST on entire reinsurance premium. You okay, not okay? Now I'll repeat. Air India went to Tata Group. Tata Group went to HDFC and took reinsurance, and for which reinsurance premium was paid is 50 crores. Now the ceding commission or reinsurance commission agreed to be paid was 20% of this insurance amount, which is 10 crore. On this 10 crore rupees, no GST shall apply on 10 crore ceding commission if GST is paid by HDFC on full 50 crore rupees. These are the two newly added points. Section 7(1) capital A. Activities or transaction which will be treated as supply of goods or supply of services. Section 7(1) capital A of CGST Act classifies certain activities into which will either be constituting supply of goods or supply of services. Meaning what it says is, I have given something called as schedule number 2. In schedule number 2, whatever is there, they are all supply. But I am going to tell you whether it is supply of goods or supply of services. Point number 1, transfer of title in goods. If I am transferring the title in goods, then it is treated as supply of goods. Transfer of title in goods under an agreement which stipulates that the property in the goods will be transferred on a future date, supply of goods, meaning hire purchase system. Transfer of right in goods, I'm not transferring the good ownership of the goods or title of the goods, I'm just transferring the right in goods. Transfer of right in goods, supply of services. Transfer of share in undivided, transfer of share in goods without transfer of title is also supply of services. Land or building, you are giving land or building on lease, tenancy, easement, or license to occupy a land, supply of services. You are leasing or letting out any building, including for business purpose or commercial purpose, it is supply of services. Any treatment or process applied on goods belonging to another person, supply of services. Now, one question which we saw, that is this question. Goods forming part of business is goods forming part of asset of any business carried on by the person who ceases to be a taxable person shall deem to be supplied by, no, not this one, this part. Goods forming part of business are transferred or disposed of by or under order, by or under the direction of the person who is carrying on the business, no longer has to form part of those assets. This transaction is supply of goods. Goods which is used for business are put to use for any purpose other than business under the direction of person who is carrying on business is supply of services. You are just changing the use of that goods. Here you are actually giving the goods to someone. Here you are just changing the use of the goods. Then goods forming part of asset of goods forming part of asset of any business carried on by a person who ceases to be a taxable person shall deemed to be supplied by him in the course or furtherance of his business immediately before he ceases to be a taxable person. This transaction is treated as supply of goods, meaning if I am closing my business, at the time of closure of business, there may be some goods which are left over. Those goods will deem to be supplied by me. Those goods will be deemed to be supplied by me at the time when I have closing my business. Though I am not selling them, lawmaker says we are going to assume that those goods are supplied. No, no. See, this is either, let us say I have a car, or I give an example. Okay, let us say in my company I have a employee. Now employee wanted to take the sari for his wife. I told you take it for free. Now this item which is given by me is a sari. So goods forming part of business are transferred under the direction of person carrying on the business, and they will no longer form part of those assets, or what you said, scrap. Goods forming part of business are disposed of under the direction of person who is carrying on business and will no longer form part of that particular business. Now, this point, last point, is not applicable, meaning when you are closing your business, whatever its assets are left over with you at the time of closure of business will deemed to be supplied by you. But however, this deemed supply provision will not be applicable if you are transferring the business as a going concern, or if the business is carried on by the personal representative who will deem to be the taxable person. Either you transfer your business to someone as a going concern, or your business will be carried on by your personal representative. Supply of services. Renting of immobile property, construction of complex building, civil structure, they are all treated as supply of services. You are giving an immobile property on rent. There is a construction of complex or a building or a civil structure or part thereof, including a complex or a building which is intended for sale to a buyer, wholly or partly, except where the entire consideration has been received after issuance of completion certificate or after first occupancy, whichever is earlier. Meaning, renting is supply of services, construction is also supply of services, even if your business is to construct and sell. But if consideration is received before completion certificate or before first occupancy, supply of services. Afterwards, not a supply at all. Temporary transfer or permitting to use or enjoyment of intellectual property right. So if you have any type of intellectual property right which you are transferring to someone temporarily, supply of services. Development, design, programming, customization, supply of services. Agreeing to an obligation to refrain from an act or to tolerate an act or to do an act or situation, it is supply of. I am agreeing that I will not do something. I am agreeing that I am going to tolerate this particular thing, or I am agreeing that I will do something. All these things are treated as supply of services. Now we have section 8, which talks about taxability of composite supply and mixed supply. Composite supply and mixed supply. Composite supply means supply of two or more taxable goods or services or both, which are naturally bundled in ordinary course of business, supplied in conjunction with another, one of which is principal supply. Mixed supply means supply of two or more individual goods or services or both, which are not naturally bundled in ordinary course of business and which are supplied in conjunction with another for a single price and which is not a composite supply. So here they are naturally bundled, here they are not naturally bundled, and here they are supplied for a single price. If it is a composite supply, it is taxed at the rate of principal supply, and mixed supply are taxed at highest rate. Charge under GST. Actually, question bank is there in this thing. Charge under GST. Charge under GST. You are paying GST because of this particular section. Not a supply. After completion certificate. Not a supply at all. No. You are telling whether that will become goods. No. They are all goods. Charge under GST. Section 9 of CGST Act is the charging section of CGST law. Just like that, we have Section 9 of SGST Act, Section 7 of UTGST Act, and Section 5 of IGST Act, which are charging section of those respective acts. Now, under GST law, sales are also called as outward supplies. Purchases are also called as inward supplies. Payment of tax under GST law can be done in two ways. One is forward charge, one is reverse charge. Forward charge, what will happen? The supplier of goods and services will make the payment of taxes to the government, whereas in case of reverse charge, the recipient of goods and services will have to make the payment of tax to government. Section 9, subsection 1. is the charging section. Now here there is one addition which they have made. There is an amendment. Tuck, 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 yeah. Subject to the provision of subsection 2, there shall be levied a tax. Meaning, consider what is given in section 9 subsection 2. After that, whatever I am telling is final. Subject to the provision of subsection 2, there shall be levied a tax. I am going to levy a tax. What tax are you going to levy? I am going to levy a tax called as Central Goods and Services Tax. When, sir? On all the intrastate supply of goods or services or both, except on, so whenever you are making intrastate supply of goods or services or both, I am going to levy a tax called as CGST, except on alcoholic liquor for human consumption. I will levy this on all goods and services except on what goods and services are, except on alcoholic liquor for human consumption on a value determined under section 15. I will levy on this on what values are? On that value which is determined under section 15 and at such rates as may be notified by government, not exceeding 20%. And I will levy them at that rate which is notified by the government and which is not exceeding 20%. It shall be collected in such manner as may be prescribed and it shall be paid by taxable person. Now, in this exception, they have added two more items. Undenatured, extra neutral alcohol or rectified spirit which is used for making alcoholic liquor for human consumption. Now please note what was already there. Alcoholic liquor for human consumption was already there. Now two things which are added are undenatured, extra neutral alcohol or rectified spirit which is used for making alcoholic liquor for human consumption. Rectified spirit used for making alcoholic liquor for human consumption. Undenatured, extra neutral alcohol or rectified spirit which is used for making alcoholic liquor for human consumption. Now, there shall be levied a tax called as CGST on intrastate supply of goods or services except on alcoholic liquor for human consumption on a value determined under section 15 at such rates as may be notified by the government not exceeding 20%. It shall be collected in such manner as may prescribed and paid by taxable person. Who should pay the taxes, sir? Taxable person has to pay the taxes. Who is a taxable person? Taxable person means a person who is registered or who is liable for registration under section 22 or section 24. So if you are a person who is registered, you are always a taxable person. But even if you are an unregistered person, if you are liable for registration, you will be taxable person. Now please name. Who has to pay the taxes? Taxable person has to pay the taxes. Unregistered person means someone who is not registered at all. Correct? Unregistered person, someone not registered at all. Registered is someone who is registered under GST law. But tax has to be paid by whom, sir? Taxable person, meaning either you are registered or you are liable for registration. Section 9 subsection 2 says CGST on intrastate supply of HP man shall be levied from the date notified by the government on the recommendation of council. CGST on intrastate supply of HP man shall be levied from the date notified by government on the recommendation of council. Section, so that as of now it is not levied and not recommended also. So you can ignore what is that on HP man, which date we don't know. Section 9 subsection 3 CGST on intrastate supply of notified goods or services or both shall be paid by the recipient of such goods and services under reverse charge. 9.4 CGST on, so this talks about RCM. What are the items covered under RCM? Notification number 13/2017 will give that list. So that is important list. 9.4 CGST on intrastate supply of notified goods or services or both received from an unregistered person by a notified registered person shall be paid by notified registered person under reverse charge. Important is this section, and there is also an amendment in this section. Section 9 subsection 5 supply through e-commerce operator. What does it say? If notified services are supplied through e-commerce operator, if notified services are supplied through e-commerce operator, then the tax on that supply, the tax on such supply shall be paid by e-commerce operator. If notified services are supplied through e-commerce operator, the tax on that supply shall also be paid by e-commerce operator, provided that if the e-commerce operator does not have physical presence in taxable territory, that is India, any person representing such e-commerce operator in taxable territory shall pay the taxes. Provided further that if e-commerce operator does not have physical presence in taxable territory and if there is no representative of e-commerce operator in taxable territory, then he shall appoint a person in taxable territory to pay the taxes. Now, what is important is the services notified under 9.5. They have added some services. What are those services, sir? If you are a person who is involved in the business of transportation of passenger, or if you are a person who is involved in the business of accommodation in hotel, in guest house, if you are in the business of housekeeping services, restaurant services, or newly added services by way of local delivery. Now, on these 4 points, except the transportation of passengers point, on the other 4 points, if the service provider is registered under GST law, service provider has to pay the taxes and not the e-commerce operator. Services by way of local delivery. Services by way of local delivery means who, sir? Dunzo, Zomato, Zepto, local delivery they do. The porter is there. No, Zepto, they take parcel from you and they deliver. I don't know. Hey, that is passenger transportation. No, they do. I don't know. Nowadays, maybe they will do. But mainly started companies are Dunzo and Porter. So local delivery is the new services added. And please note, if the service provider is registered, service provider has to pay the taxes. Correct. For all 4 except passenger transportation. And for passenger transportation through omnibus, there is a clarification. In case of transportation of passengers through omnibus, if the services is provided by a body corporate who is registered under GST, then section 9 subsection 5 shall not apply to him. In such cases, the body corporate shall pay the taxes and not the e-commerce operator. Now the services taxable under reverse charge. Services taxable under reverse charge covered under section 9 subsection 3. These are given in notification number 13/2017. What are the services covered? First, GTA giving services to 7 notified persons. Those 7 notified persons will have to pay taxes under reverse charge. Who are the 7 notified persons? Factory, society, cooperative society, body corporate, registered person, firm including LLP, and a casual taxable person. Okay. If a GTA gives services to these people, then these people will have to pay taxes under reverse charge. 7 notified person will have to pay taxes under reverse charge. And these 7 notified persons should be located in taxable territory. In these 7 notified person, factory, society, cooperative society, body corporate, partnership firm, including LLP, they need not be registered. Meaning, even if they are not registered under GST law, they have to pay tax under reverse charge. Now, the definition of GTA is also changed. The definition of GTA is also changed. GTA means what, sir? Goods Transport Agency. Of course, this definition is there. They have added one extra line for it. GTA means what, sir? Any person who is involved in the business of transportation of goods by road and who issues a consignment note. Who is a GTA? Any person who is involved in the business of transportation of goods by road and who issues a consignment note, but it shall not include an e-commerce operator by whom local delivery services are provided, and it shall not include an e-commerce operator through whom local delivery services are provided. See under 9.5, services by way of local delivery, except where the person supplying such services is through e-commerce, except where the person supplying services through e-commerce operator is registered. That, I mean, that point is there. Now, GTA definition has changed. What is the GTA definition telling? A goods transport agency means any person who is liable, who provides services in relation to transportation of goods by road and who issues a consignment note by whatever name called. And it shall not include an e-commerce operator by whom local delivery services are provided. It shall not include an e-commerce operator through whom local delivery services are provided. So this is the new point which is added. Pencil factory law. Okay. Now RCM. Now in RCM, there are two changes. One is that GTA. Now we don't have the rate of 12%, etc. Okay, so wherever, so we have only two rates now, 5% and 18%. Wherever it was 12% before, they have changed it to 18%. Okay, so GTA can either pay tax at 5% or it can pay tax at 12%. Now that 5% is same, but 12% category has been changed to 18%, but there is no impact for us. I mean, in our book, there is no impact. Impact will be on person who is involved in the business of renting of motor vehicle. That 5% is same 5%, but 12% has been changed off to 18%. Okay, now I'm coming back to which provision, sir? RCM provision. RCM provision. So GTA gives services to 7 notified. I know. GTA giving services to 7 notified person. Those 7 notified person has to pay the taxes under reverse charge. Who has to pay, sir? 7 notified persons have to pay the taxes under reverse charge. Now those 7 notified person, even if they are not registered, they will have to take registration and pay the taxes. Now GTA also has an option to pay tax under forward charge. GTA also has an option to pay tax under forward charge, for which GTA will have to take registration. It will have to inform the supplier, the recipient, that I am going to pay taxes under forward charge, and it will also have to issue something called as tax invoice. Legal services given by advocate. If legal services is given by advocate to a business entity, the business entity will have to pay tax under reverse charge. Advocate is giving what, sir? Legal services. To whom is advocate giving legal services? To any business entity. Then that business entity to whom advocate is giving legal services, that business entity has to pay the taxes under reverse charge. Arbitral tribunal. Arbitral tribunal is giving services to whom, sir? Arbitral tribunal is giving services to business entity. Then that arbitral tribunal has to, that business entity who is taking services from arbitral tribunal has to pay taxes under reverse charge. Sponsorship services, sponsoring any event. Yeah, business entity only. Yeah, not arbitral. Sorry. Arbitral tribunal giving services to business entity, the business entity has to pay taxes under reverse charge. Now, with respect to legal services and arbitral tribunal services, once you study this chapter along with your exemptions chapter, you will understand that legal services given by an advocate to government is exempt, to non-business entity is exempt, to another advocate is also exempt. But if legal services is given by advocate to a business entity, and if the turnover of business entity is less than the registration limit, which is 10 lakhs, 20 lakhs or 40 lakhs, then it will be exempt. So if the advocate is giving legal services to a business entity, if the advocate is giving legal services to a business entity, and that business entity ka what, sir? Turnover is within the limit for taking registration, which is 10 lakhs, 20 lakhs or 40 lakhs, then that business entity need not pay the taxes under reverse charge, even if you are not registered. That's what, sir. If you are a business entity whose turnover is less than that limit, you don't have to take registration. Therefore, you don't have to pay taxes under reverse charge. Same is applicable for arbitral tribunal. Sponsorship services. Sponsorship services given by any person other than body corporate to a body corporate or a partnership firm. This is also important because there is a change in this. This point is changed. Sponsorship services given by any person other than body corporate. Sponsorship services given by any person other than body corporate. To whom is the sponsorship services given? To a body corporate. Then the body corporate has to pay the taxes under reverse charge. Body corporate or partnership firm has to pay taxes under reverse charge. Services given by government, important services. Services given by government, government means central government, state government, union territory and local authority. Services given by government to a business entity. Services given by government to a business entity, then that business entity has to pay the taxes under reverse charge. Any services given by government to a business entity except renting of motor vehicle services, services renting of immovable property services, services of Department of Post, services given by Indian Railway, services in relation to aircraft and vessel, services of transportation of goods and transportation of person. In these cases, forward charge is applicable. Which, sir? Renting of immovable property, services given by Department of Post, services given by Indian Railway, services in relation to aircraft and vessel, services of transportation of passenger and transportation of goods. Then renting of motor vehicle services given by government to a renting of immovable property. Motor vehicle is coming in my mind. Renting of immovable property, because renting of motor vehicle change is there, no, so that is only coming in mind. Yeah. Renting of immovable property services given by government to a registered person. That registered person has to pay the taxes under reverse charge. Renting of residential dwelling to a registered person. Renting of what? residential dwelling. To whom, sir? A registered person. The registered person will have to pay tax under reverse charge. Renting of residential dwelling to a registered person. The registered person will have to pay tax under reverse charge. Renting of residential dwelling. If the residential dwelling is rented to a registered person for residential use, taxable under reverse charge, or commercial use, also taxable. Meaning, if you are renting residential dwelling to a registered person, always taxable. If it is rented to an unregistered person, then check its use. If it is residential use, not taxable, it is exempt. If it is commercial use, then it is taxable under forward charge. Renting of residential dwelling to a registered person. Now, in exemption, there is a line telling renting of residential dwelling for residential use, except where it is rented to a registered person, will be exempt. So, if it is rented to a registered person, it is taxable and taxable under reverse charge. Renting of immobile property by unregistered person to any registered person. This is newly added point. Renting of immobile property other than residential dwelling, because residential dwelling we already discussed. Renting of any immobile property by unregistered person to any registered person. Renting of immobile property by unregistered person to a registered person. By unregistered person to a registered person. Except a composition dealer, that registered person will have to pay taxes under reverse charge. Services by director of the company to the said company. The director of the company is giving services to the company. That company will have to pay taxes under reverse charge. Now, director can be of two types. One is an employee director. Another one is a non-employee director. If you are an employee director, whatever services are given by employee to the employer is not a supply. Therefore, no GST will be applicable. If you are a non-employee director, then whatever services are given by employee to the employer is a supply. Therefore, GST will be applicable, and GST is applicable under reverse charge. Now, if you are an employee director, the money which you get on that TDS is deducted under 192. If the TDS is deducted under section 192 of income tax law, that means it is a salary. If TDS is deducted under section 194J, that means it is a professional charges which is paid to you. So, if you are an employee director and if TDS is deducted under 192, that means it is a salary. Therefore, no GST is applicable on that payment. If the TDS is deducted under section 194J, then it is professional charges. That means it is not a salary. If it is not a salary, it is a supply. If it is a supply, it is taxable under reverse charge. Company will have to pay tax under reverse charge. If you are a non-employee director, whatever amount is given to you on that, company has to pay taxes under reverse charge. However, any services given by any type of director, whether it is in his, if it is in his personal capacity, then it is always taxable under forward charge. Then services given by insurance agent, recovery agent to that respective insurance company or a banking company, financial institution is taxable under reverse charge. Services given by music composer, photographer, artist to a promoter, producer, that promoter or producer has to pay taxes under reverse charge. Services given by an author with respect to original literary work to any publisher, the publisher has to pay taxes under reverse charge. Now, author also has an option to pay taxes under forward charge, for which he will have to take registration and he'll have to maintain books of account. Supply of services by members of overseeing committee. If members of overseeing committee are giving services to RBI, RBI has to pay the taxes. If individual direct selling agent is giving services to a banking company or a financial institution, the banking company or financial institution has to pay the taxes under reverse charge. If a business facilitator or a business of a banking company is giving services to the banking company has to pay taxes and reverse charge. Agent of business facilitator or business correspondent is giving services to a business correspondent, then the business correspondent will have to pay taxes under reverse charge. Security services given by any person other than body corporate to a registered person. The registered person has to pay the taxes under reverse charge. But if that registered person is a composition dealer or central government, state government who has taken registration only for the purpose of deducting taxes, then RCM is not applicable. Services of renting of motor vehicle given by any person other than body corporate who supplies services to a body corporate and does not issue the invoice charging CGST at instead of 6%, now it is 9%. So renting of motor vehicle services, because 12% in all is not there, it is only 5% and 18%. Renting of motor vehicle services given by any person other than body corporate to a body corporate, the body corporate has to pay taxes under reverse charge. Lending of securities by lender to the borrower, borrower has to pay taxes under reverse charge. Tell me the answer for this question. Question number 6. Read it slowly, one by one. Tell me the answer. Suleka manufacturers have a factory in Delhi and depot in Mumbai. Both of these establishments are registered in respective states. Finished goods are sent from factory in Delhi to Mumbai depot without consideration so that it can be sold over there. Yes, what? Yes. What is supply? Whatever is supplied free of cost by? Whatever is supplied free of cost from Mumbai unit to from Delhi factory to Mumbai depot is supplied. Raman is an architect in Chennai. His brother is who is settled in London is a well-known lawyer. Raman has taken legal advice from him free of cost for his family dispute. Not a supply, family dispute. What if, would your answer change if Raman has taken the legal advice for business unit in Chennai? What will your answer be? Both the cases not a supply. Brother is not a related person. I told you to make mistake in life. You are making that mistake, no problem. A, if you take for business purpose also not a supply, because related person means me, my spouse and children. Father, mother, brother, sister, if they are dependent on me. If you are a well-known lawyer, you will not be dependent on me. I am dependent on you. Tell me the answer for this question. Question number 1. Sahib. Now till here there is one question. After that, the second question will start.
What is the applicable?
First one you are telling not a supply. Then Sahib sells an AC dealer in Delhi, needs 4 AC for his newly constructed house in Priya Enclave. Therefore, he transfers 4 AC on which ITC was already availed from his stock for the said purpose. Is it a supply? Yes, it is a supply. Supply without consideration. Permanent transfer or disposal of business asset on which input tax rate has been availed. Further, Delhi resident Akash approached Sahib Sales. He sold an AC to Sahib Sales for 5,000 rupees. Akash has bought the AC 6 months before for his residence. Does sale of AC by Akash to Sahib Sales amount to supply? Why not a supply? 5,000 is the consideration. How come you say consideration is not given? Seven one A is applicable over here. Section 7, subsection clause A says supply should be by a person for a consideration in the course or furtherance of business. This is not in the course or furtherance of business. Akash business is not to supply ACs. Tell me the answer for question number 7. Not a supply, one answer I have received. Supply, one more answer I have received. First point says what, sir? Glory Limited is engaged in manufacturing and selling cosmetic products. Seva Trust, a charitable organization, approached Glory to provide financial assistance for its charitable activities. Glory Limited donated a sum of rupees 2 lakh to Seva Trust with a condition that Seva Trust will place a holding at entrance of trust premises displaying the pictures of the products of Glory. Now, is it a supply? Now here, when I am displaying your products, that means when I am displaying your products, that means what, sir? There is a consideration involved. Hello. When I am displaying your products, that means there is a consideration involved. Correct? No. Now, when there is a consideration involved, it is a supply, as simple as that. When I am displaying your products, that means there is a consideration involved. When there is a consideration involved, it is a supply. Do you understand what is this point telling? Hello. Yeah, donation is, I am giving donation to them for which I am getting advertisement services from them. Then Mr. Swami of Chennai is working as a manager with ABC Bank. He consulted Jacobs and Company of London and took its advice for buying a residential house in Mumbai, and he paid them consultancy of £200. Is it a supply? Are you sure is it a supply? Why do you say yes, it is a supply? Sir, because in this case, what has happened, sir? I imported services for a consideration. Because I imported services for a consideration, it is yes, a supply. Who is the person liable to pay tax? Services provided by arbitral tribunal to a business entity. Business entity has to pay the taxes under reverse charge. Then next point is arbitral tribunal giving services to business entity has to pay taxes under reverse charge. Sponsorship services given by company to an individual. Company, forward charge is applicable. Renting of immovable property services provided by central government to registered person. The registered person has to pay the taxes under reverse charge. Services supplied by insurance agent to insurance company. Insurance company will have to pay the taxes under reverse charge. Then recovery agent giving to car dealer. Recovery agent only has to pay the taxes. Recovery agent giving the services to whom? Banking company or financial institution, then RCM is applicable. Security services supplied to a registered person. Registered person has to pay the taxes under reverse charge. Legal fees is received by Jolly, an advocate, from Salman Driving Company. From Salman Driving Company of rupees 50 lakhs in preceding financial year. Who is liable to pay the taxes? Who has to pay the taxes? The turnover of Salman Driving Company is 50 lakhs in the preceding financial year. Think and answer. Think and answer. Now please see, advocate is giving services to a business entity. Salman Driving Company. It says I am a driving company. That means I am what, sir? A business entity. So who has to pay the taxes? The business entity has to pay the taxes under reverse charge. Now the second question is, what if the business entity ka turnover? What if the business entity ka turnover is 18 lakhs? Then RCM shall not apply. If we just now wrote a note, right? Sanjay of New Delhi made a request to whom, sir? Sanjay of New Delhi made a request. Sanjay of New Delhi. Sanjay of New Delhi made a request to motor cab. Request for a motor cab to super ride for traveling from New Delhi to Gurgaon. After Sanjay pays the cab charges using his debit card, he gets details of driver Mr. Joravar Singh and cab registration number. Super Ride is a mobile application owned by a company called owned and managed by a company called as DT Limited. The application Super Ride facilitates potential customer to connect with the person providing cab services under the brand name of Super Ride. DT Limited claims that cab services are provided by Joravar Singh, and hence he is liable to pay GST. With reference to the provision of IGST Act, who is liable to pay GST? You are supposed to tell. Who is liable to pay GST? DT Limited or Joravar Singh? DT Limited or Joravar Singh? DT Limited. Yes, sir. DT Limited. Why, sir? Section 9, subsection 5. IGST Act, it is section 5, subsection Fine. Would your answer be different if DT Limited was in New York? What would your answer be? If DT Limited is in, then who has to pay the taxes, sir? Any person who is representing DT Limited in India should pay the taxes. Also state the provisions briefly. If they don't have representative, they should appoint someone to pay the taxes. ABC Limited is a registered person with an aggregate turnover up to 4 crores. It has received the following services from different person during October 23. Discuss the tax applicability on reverse charge. Services given by Department of Post by way of speed post. RCM applicable, not applicable? Hey, RCM applicable, not applicable? RCM not applicable. Then services of transportation of goods. Services given by way of transportation of goods. ABC Limited paid 50,000 to Indian Railway. I am giving services to Indian Railway. RCM is not applicable. Sorry, I am taking services from Indian Railway. Can I say RCM is not applicable? Services given by Department of Post. This is an ABC Limited has taken manpower supply services from XYZ Limited. Manpower supply services means what, sir? A manpower supply services means what? Manpower supply services. Security services. Security services is manpower supply services. In this case, not applicable. Why? Body corporate is giving the services. Will your answer be different if service is provided by Mr. A? Yes, it will be different. What will be the answer if it is given by Mr. A? Then RCM will be applicable. Renting of immovable property services provided by central government to ABC Limited, a registered person. Can I say registered person has to pay the taxes under reverse charge? Hello? Registered person has to pay the taxes under reverse charge. ABC Limited paid 1 lakh rupees to independent director. RCM is applicable because independent director. Government has provided business support services to ABC Limited. ABC Limited has to pay the taxes under reverse charge. ABC Limited rented motor vehicle to XYZ Limited, who is not paying taxes. So if services are given by any person other than body corporate to a body corporate, only then that provision is applicable. This time this provision is not applicable. Tiger Security Services is Tiger Securities Bangalore is a firm providing services by way of supply of security personally to Katrina Private Limited. The value is 15 lakhs. RCM applicable, not applicable? You are giving services to Katrina. RCM applicable, not applicable? You are giving services to Katrina. RCM applicable, not applicable? Hey, RCM applicable, not applicable? Why RCM is not applicable? Services are given. Private limited company, security services are given by any person to a registered person. Security services are given by any person other than body corporate to a registered person. Katrina Private Limited is a registered person. So RCM applicable, not applicable? Why not applicable? Tiger Securities is not a body corporate. It is a firm they are telling. No, Gubes. Tiger Securities. I understand. So only I took this topic because the sometimes something happened in life. Yeah. And I have one more class to take. So there I don't want to lose my energy. Yeah, Maja is there. Huh? Yeah. Power saving mode. Go away. Okay, what are we discussing by the way? Tiger Security Services to Katrina Private Limited. Yes, taxable under RCM. Tesla Inc. USA. RCM applicable, not applicable? If it is given to Tesla Inc. What is Tesla Inc., sir? Is RCM applicable if it is given to Tesla Inc.? No, because recipient is outside India. Mahila Cooperative Society, which is not registered, no RCM. Atli, a person registered under Section 10, no RCM. Salman has 3 flats, 1 shop at Mumbai. He has given them on rent. Shop is given on rent to DMart, who is running grocery store. RCM applicable, not applicable? Is RCM applicable, not applicable? Renting of immovable property given by unregistered person to a registered person. DMart, we are assuming that he is a registered person. 1 flat to Aishwarya, an actor by profession, for her residence. Can I say not applicable because it is for residence? Flat to Jacqueline Private Limited, a registered person, RCM is applicable. For residence purpose, guest house purpose, yes, RCM is applicable. Flat 3 to Katrina, a company secretary who is not a registered person, using for her office purpose. Forward charge is applicable. RCM though is not applicable in this case. Why? Because recipient is not registered person. Now, Priyam is a director of Sun Moon Company Private Limited, provided services to the company for remuneration of 1,25,000. Briefly answer whether GST is applicable in the below mentioned independent cases. If yes, who is liable to pay tax? Priyam is an independent director of Sun Moon Private Limited and not an employee. Can I say yes, GST is applicable and applicable under reverse charge mechanism? Priyam is an executive director of an employee of Sun Moon Private Limited. Out of the total remuneration amounting to rupees 1,25,000, 60,000 has been deducted as salaries in the books of Sun Moon Company Private Limited and subject to TDS under 192 of Income Tax Act. However, 65,000 has been declared separately other than salaries in Sun Moon Company Private Limited, subject to TDS under 194J. Can I say 60,000 no TD, no RCM, 65,000 yes RCM because 194J? Yeah, that's what. No supply. In the following independent cases, who is liable to pay the taxes? We transport registered GTA paying IGST at 18%. Okay, now it is no more 12%. Transported goods by road of Dilip and Company, a sole proprietary firm, who is not registered. Now, when you are opting for 5%, then only RCM provision is applicable. When you are opting for 18%, RCM provision is not applicable. So here forward charge is applicable. Kamal Jain, an unregistered famous author, received 20 lakh rupees consideration from PQR Publications for supply of services of temporary transfer of copyright under Section 13, subsection 1, clause A of Copyright Act relating to original literary work. Now, who should pay, sir? Publisher has to pay the taxes under reverse charge. Now, this is exam question. Mr. Vicky Chadda, an unregistered famous author, received 3 crore rupees of consideration from Shiv Bhavan Publications located in Indore for supply of services by way of temporary transfer of copyright covered under Section 13, subsection 1, clause A of Copyright Act 1957 relating to original literary work of his new book. He finished his work and made available the book to the publisher but has not yet raised the invoice. Vicky Chadda is of the view that Shiv Bhavan Publication is liable to pay GST under reverse charge for the services provided by him. Shiv Bhavan Publications does not concur with his view and is not ready to deposit the tax under any circumstances. Examine whether Vicky Chadda view is correct. Can I say yes, Vicky Chadda is correct? Shiv Bhavan has to pay the taxes. Further, if Vicky Chadda is correct, what is the recourse available with him to comply with the requirement of GST law, as Shiv Bhavan Publication has completely refused to deposit the tax? Now, because you have refused to deposit the taxes, I will have to take registration under GST law and I will have to give a tax invoice to you and pay the taxes under forward charge. Decide who is the person who is liable to pay GST. Mr. Raghu provided sponsorship services to Vivin LLP. Vivin LLP has to pay the taxes under reverse charge. Safe Trans, a GTA transported goods of Kapil and Company, a partnership firm not registered under GST law. Partnership firm has to pay the taxes under reverse charge. Under GST, taxes on taxable services supplied by central government or state government to a business entity in India are payable by the recipient. State exception. Yes, they are payable by recipient. Exceptions are, what are the exceptions, sir? The exceptions are what, sir? Where tax on, what are the exception? RIP gap, renting of a normally government giving services to business entity has to pay the taxes under reverse charge, except RIP gap. What are RIP gap? Renting of immovable property services given by Department of Post or Indian Railway, services in relation to aircraft and vessel, services of transportation of goods and transportation of persons. Other things we will see tomorrow. Let us meet tomorrow, same time. Till then, bye bye, take care, enjoy. No timing, I don't know. They'll message you. Message me, okay? I also don't know what is the time. Online students will meet tomorrow, same time. Anyone has any question, you can ask me. Bye, 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 bye. Very good morning to you all. Very good morning, online students. I hope I'm audible and also the screen is visible. So we were discussing GST. We discussed till the topic called as charge under GST RCM. Next is composition scheme. Section 10 talks about composition levy. Section 10 subsection 1. See, by the way, once your aggregate turnover crosses 20 lakhs, you have to take registration under GST law. And you can take registration as either a composition dealer or as a regular dealer. Composition dealer, if you take registration as a composition dealer, you have to follow only one section, which is section number 10. But if you take registration as a regular dealer, you will have to follow section, all the section except section 10. Composition dealer has to file only one return in a year, and he has to pay tax on quarterly basis, and rate of tax is also very less, 1%, 5% or 6%, depending upon what you are. But as a regular dealer, you will have to file 2 returns in a month and pay tax on monthly basis, and also do what, sir? Also pay tax at regular rates. Now, section 10, subsection 1, LD, important section. I mean, because they have not asked in the previous attempt, which you saw yesterday, question paper. Chances are high that they'll ask. But if they have, of course, asked in MCQ, then we cannot say whether they'll ask or not. Section 10, subsection 1, eligibility. Yeah. Eligibility, no problem. Charging is important, sir. Education is not important at all. After 6 months again, or 3 months again, exam will come. Sorry, sir. In online face color, there is some change. Looking like alien is fine. Online, anyone check once? How am I looking? They are telling I'm not looking. But how does it matter?
Now, eligibility. Section 10, subsection 1. Who is eligible to become a composition dealer, sir? Every registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crores. He may opt to pay tax at composite rates instead of paying tax at regular rates. Meaning, if your aggregate turnover is up to 1.5 crores, then you have an option. You have an option. No problem. Continue. No problem. Yeah. A registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crores, they may opt to pay tax at composite rates instead of paying the tax at regular rates. Now, normally the limit for you to become a composition dealer is what, sir? 1.5 crores, but this limit will be 75 lakhs in case of 8 special category states. There are totally 11 special category states in India, but only for 8 special category states, the limit will be taken as what, sir? 75 lakhs. Which are these 8 special category states? Num must. Num must means what, sir? Nagaland, Uttarakhand, Manipur, Meghalaya, Mizoram, Arunachal Pradesh, Sikkim, and Tripura. If you are doing business at these places, then for you, instead of 1.5 crores, the limit of 75 lakhs will be applicable. Nagaland, Uttarakhand, Manipur, Meghalaya, Mizoram, Arunachal Pradesh, Sikkim, and Tripura. Now, if you are eligible to become a composition dealer, you will have to pay tax at what rate? Composite rates. What are the composite rates applicable to you? If you are a manufacturer, it is 0.5% of turnover in the state. And if 0.5% means what, sir? 0.5% CGST, 0.5% SGST, effectively it is 1%. If you are a restaurant or outdoor catering service provider, then it is 2.5% of turnover in the state. 2.5% CGST, 2.5% SGST. And if you are any other dealer of goods, meaning this 10.1 is not applicable for service provider. If you are any other dealer of goods, then it is 0.5% of taxable turnover in the state. There is a difference. Please note, these are turnover in the state and this is taxable turnover in the state. Meaning what? Turnover in the state will include all types of supply made by you. Whether that supply is a taxable supply or exempt supply, it does not matter. But if you are any other dealer of goods like trader, wholesaler, retailer, etc., then for you it is taxable turnover in the state. Taxable turnover means what, sir? Only the taxable supplies will be taken. Whatever taxable supplies you are making, only those will be taken, provided that the government may increase this limit up to 2 crores. Right now, the limit is 1.5 crores, and right now that is what you are supposed to study also. But government has the power to increase this limit. Have they increased the limit? No, but they have the power to increase the limit up to 2 crores. Up to 2 crore rupees, they can increase the limit. Now, normally, the limit for taking registration as a composition dealer is up to 1.5 crores, meaning if your turnover is up to 1.5 crores, you can become a composition dealer. However, for 8 special category states, the limit is 75 lakh. Now, the question is, sir, what if I have my business in special category states and normal states? Meaning, I am doing business in Karnataka as well as I am doing business in Nagaland. So, the question is, sir, whether the limit of 75 lakhs will be applicable or 1.5 crores will be applicable. Lawmaker says, if the registered person has a place of business in special category states, if you have your place of business in special category states, that the limit of special category states will apply to entire India. If you have a business at which location, sir? Special category states, then for the entire India, the limit of special category states will be applicable to you. The limit of special category states shall apply. Now, first, we should see what, sir? We should see the aggregate turnover to check whether you are eligible to become a composition dealer or not. Now, what do you mean by aggregate turnover? Aggregate turnover means aggregate value. What do you mean by the word aggregate value? The total value. Aggregate turnover means the aggregate value. Aggregate value means what, sir? The total value. Total value of what? Total value of all taxable supplies made by you. Total value of all exempt supplies made by you. Total value of all export of goods and services which is made by you. And it will include interstate supply to a person having same PAN. A. Aggregate value. Total of all taxable supplies made by you, whether you have made the taxable supplies within your own state or to a different states. Total value of all exempt supplies made by you, whether that exempt supply is made within the state or different state. Then export of goods or services, whatever supplies are made by you to other country. And interstate supply to a person having same PAN.
If you have a branch office in other state, or if you have another type of business which you are doing in another state under your own PAN, meaning under my PAN, if I have multiple types of business or multiple registration, and if they are in different state, then that will also be taken into consideration. Interstate supply to a person having same PAN. Please note, many times in question they will also give about intrastate supply to a person having same PAN. That should not be included while calculating aggregate turnover. I should include only interstate supply to a person having same PAN. Now, aggregate turnover means what, sir? Aggregate value of all taxable supplies, whether it is within state or different states. Aggregate value of all exempt supplies. Exempt supplies means what, sir? Supplies which are nil rated, supplies which are wholly exempt, and it includes non-taxable supplies. Exempt supply includes what, sir? Non-taxable supplies. So aggregate value of all taxable supplies, aggregate value of all exempt supplies, aggregate value of all export of goods or services, and interstate supply to a person having same PAN. Interstate supply to a person having what, sir? Same PAN. And this aggregate turnover, what do you mean by exempt supply? Exempt supply means supplies which are nil rated, wholly exempt, and includes non-taxable supply. Non-taxable supplies means those supplies on which GST is not leviable. What are non-taxable supplies? Alcoholic liquor for human consumption, HP man, high-speed diesel, petroleum crude, motor spirit, etc. Then this aggregate turnover, you should compute it on all India basis. Aggregate turnover should be computed on all India basis, and it shall not include taxes under GST and inward supply liable for reverse charge. It will not include two things. What are these two things, sir? The taxes under GST law and the inward supplies liable for reverse charge. Whatever purchases you are making from different states on which you have to pay tax under reverse charge. Now, please note, they say that aggregate turnover should be computed on all India basis. When they say all India basis means what, sir? Whatever supplies you are making in the entire India, whatever supply, whatever number of registrations you have in the entire India, or whatever different types of businesses you are doing in the entire India under one single PAN, they should all be taken into consideration while computing your aggregate turnover. Now, sir, you said aggregate turnover shall not include taxes under GST. Meaning what, sir? CGST, SGST, IGST, UTGST, GST compensation cess, they will not be included while calculating your aggregate turnover. And you also said inward supply liable for reverse charge shall not be included. Inward supply liable for reverse charge means what, sir? Some of the purchases on which you as a recipient have to pay the taxes under reverse charge. Correct? No, sir? Correct. But sir, what if my sales are taxable under reverse charge? Meaning I'm a person who is supplying goods or services on which the recipient has to pay the taxes under reverse charge. Lawmaker says outward supplies taxable under reverse charge will be included in your aggregate turnover. What will be included? Your sales or outward supply on which you as a recipient have to pay tax under reverse charge. Now, one very important thing you should note is export of goods or services has one more name. Export of goods or services is also called as zero rated supply. Please note, zero rated supply does not mean that supply for which the rate of tax is 0%. Then what is zero rated supply, sir? Zero rated supply means those supply which are export, or it is a supply to an SEZ unit or SEZ developer. Zero rated supply does not mean that supply which for which the rate of tax is 0%. What is zero rated supply? Those supply for which are made outside India, that is export of goods or services, or a supply made to an SEZ unit or SEZ developer. Now see, aggregate turnover. I have Priya sarees in Bangalore, Kerala, Tamil Nadu, and I have Priya sarees in Andhra Pradesh. So what is my aggregate turnover if I ask you? And all these businesses I have are doing business in my name. They are all doing business in my name, meaning using my PAN, they are all doing business. Now, if I ask you what is the aggregate turnover of Priya sarees, aggregate turnover will be 1, 2, 3, 4. How much, sir? 60 lakh rupees. Now, if I specifically ask you what is the aggregate turnover of Priya sarees Tamil Nadu, then also the answer will be same 60 lakhs, because aggregate turnover should always be calculated on all India basis. But see, for checking the limit whether you are eligible for composition scheme or not, I will see the aggregate turnover. Correct? Now, Aggregate turnover is only seen for checking the limit whether he is eligible or he can become a composition dealer or not. But for paying the taxes, I will take turnover in the state or union territory. So if you want to know how much tax you have to pay, what is the law telling? 0.5% of turnover in the state. Now, what is turnover in the state? Aggregate turnover is total of all the turnover in different states. Turnover in the state means turnover of that particular state only. Now, in Tamil Nadu, if I have to pay tax, I will not take aggregate turnover for paying the taxes. I'll take turnover only of that state of Tamil Nadu. Did you understand this? Now, one very important point. One very important point. When you are calculating your aggregate turnover, okay, or when you are calculating your turnover in the state or taxable turnover in the state, etc., you should not include one thing. You should not include interest income. Interest income should never be included while calculating your aggregate turnover or while calculating your turnover in the state or union territory. Whenever you are calculating your aggregate turnover or turnover in the state or union territory, please do not include interest income. Please do not include interest income. Now, section 10 subsection 2 talks about conditions. Now, I know who is eligible to become a composition dealer. Now, we will see what are the conditions which he has to fulfill so that he can become eligible for composition scheme. A registered person shall be eligible to opt for composition scheme if he is not engaged in supply of services except those mentioned under section 10 subsection 1. Meaning, if I want to become a composition dealer, I should not supply services. If I want to become a composition dealer, I should not supply services. So if I supply services, I will not be eligible to become a composition dealer under section 10(1). So first important condition is a composition dealer cannot be a service provider, or a service provider cannot be a composition dealer under section 10(1). It does not mean that he cannot become composition dealer at all, but under section 10(1), a service provider cannot become composition dealer. Yeah, but there is one service provider who can become a composition dealer under 10(1). Who is that? Restaurant or outdoor catering service provider. They are eligible to become composition dealer. Hey, who is eligible under 10(1)? Manufacturer, restaurant and outdoor catering, or any other dealer of goods. Apart from that, any other type of service provider. Let us say Dilip as a chartered accountant. Can he become a composition dealer under 10(1)? No. I have Priya Saris and I also have a house which I have given on rent. Now from Priya Saris, I will be earning, this is my supply of goods, but I also have a house which I have given on rent. Because I am earning rental income, can I say I will not be eligible to become composition dealer? Hello? But renting is not my main business. But still lawmaker says, if you are engaged in supply of services, you cannot become composition dealer. Now they say, except those mentioned in 10(1). Now what is mentioned in 10(1)? Restaurant and outdoor catering. Apart from that, there is a proviso in 10(1). There is a proviso in 10(1), which is a very important provision. Many times they test on this proviso. What is this proviso telling, sir? This proviso says, if a registered person who is otherwise eligible to pay tax under section 10(1), meaning if you are otherwise eligible to pay tax under 10(1). Otherwise eligible to pay tax under 10(1) means what, sir? Meaning, if that supply of service condition is not there, if that supply of service condition is not there, then you will be eligible to become a composition dealer. Correct? No? If that supply of service condition is not there, then you will be eligible to become a composition dealer under 10(1). Now, if you are otherwise eligible to become a composition dealer, then you can supply services. Meaning, if that service was not there, I was eligible. In such cases, I can supply services up to 10% of turnover in the state or union territory, or 5 lakhs, whichever is higher. In simple words, if you are eligible to become a composition dealer under section 10 subsection 1, then you can supply services. How much services can you supply? 10% of turnover in the state or union territory. Not 10% of aggregate turnover. No, 10% of turnover of that particular state or union territory, or 5 lakh rupees, whichever is higher. Or 5 lakh rupees, whichever is higher. 10% of turnover in the state or union territory, or
5 lakh rupees, whichever is higher. And while calculating the value of services, under the second proviso, do not include interest income. Do not include interest income while calculating the value of services. Now, section 10(2), conditions. A registered person shall be eligible to opt for composition scheme under section 10(1) if condition number 1 was what, sir? He is not engaged in supply of services other than those mentioned in section 10 subsection 1. He is not engaged in making non-taxable supplies. You should not make those supplies which are not taxable. You should not be engaged in making non-taxable supplies. Meaning, you should not supply alcoholic liquor for human consumption. You should not supply high-speed diesel, petroleum, crude, motor spirit, etc. So, can Priya Petroleum become a composition dealer? No. Can Priya Bar and Restaurant become a composition dealer? Then he should not be engaged in making interstate outward supply. One more condition for composition dealer is that a composition dealer cannot supply to other states. The composition dealer cannot make interstate outward supply. Sir, can he purchase from other states? Yes, a composition dealer can always make interstate inward supply, but he cannot make interstate outward supply. He is not engaged in making supply through e-commerce operator who is required to collect taxes under section 52. We have a section called as section 52, which talks about TCS under GST law. Now, what is section 52 telling? There is Flipkart, there is Priya Saris, and there is a customer. Now, Flipkart has listed its product on, Priya Saris has listed its product on Flipkart. Customer sees the product, customer places the order, Flipkart gives the information to Priya Saris sends the goods to customer makes the payment to Flipkart, and Flipkart will make the payment to Priya Saris. Now, what is happening under this case? In this case, there is a supply. Priya Saris is making a supply through e-commerce operator, and payment is also coming through e-commerce operator. Priya Saris is making a supply through e-commerce operator, and payment is also coming through e-commerce operator. In this case, this condition is applicable. What is applicable? Section 52 is applicable. When is 52 applicable, sir? If I list my product on some e-commerce website and I supply it to customer through e-commerce website, and the payment is coming to me through e-commerce operator, then I cannot become a composition dealer. Now here, because Priya Saris is supplying to an e-commerce operator who is required to collect taxes, Priya Saris cannot become a composition dealer. Priya Saris cannot become a composition dealer. Okay, not okay. Priya Saris in the present case cannot become a composition dealer. He is not a casual taxable. No. Before this we have. He is not engaged in manufacturing notified goods. Can a manufacturer become composition dealer? Yes, a manufacturer can definitely become a composition dealer, but he should not manufacture what, sir? Notified goods. Manufacturer can become a composition dealer. For him, the tax rate is what? 0.5% of turnover in the state. But he should not manufacture pan masala, aerated water, tobacco products, ice cream, bricks, roofing tiles, etc. Can a manufacturer become a composition dealer? Of course, yes, sir. A manufacturer can become a composition dealer, but he should not manufacture notified goods. Which are the notified goods? Pan masala, aerated waters, tobacco products, ice cream, bricks, roofing tiles, ashes, etc. Then trading in this is allowed. Please note, I can trade in pan masala. I can trade in ice cream. I should not be quality walls. I can be a store which is selling quality wall ice cream. He is not a casual taxable person or non-resident taxable person. Meaning, casual taxable person means a person who is occasionally undertaking the activity of supply of goods or services or both. Who is a casual taxable person? A person who is occasionally undertaking the activity of supply of goods or services or both at a place which is not your usual place of business. So if you are going somewhere which is not your normal or usual place of business, and if you occasionally over there you undertake the activity of supply of goods or services or both, you will be called as
casual taxable person. Meaning Priya Saris is normally doing business in Karnataka. Now I go to Mumbai. Normally my business I am doing in Bangalore. Now there is an exhibition which is happening in Mumbai, and that exhibition is for, let us say, 10 days. I go to that exhibition in Mumbai and I sell my goods over there in the exhibition. So I will be called as what? Casual taxable person at Mumbai. He is not a casual taxable person, or he is not a non-resident taxable person. He should not be a casual taxable person, or he should not be a non-resident taxable person. Sir, who is a non-resident taxable person? Say, casual taxable person is an Indian who is going to a different place and doing business there occasionally. Non-resident taxable person means what? Any person who is coming from outside India to India and doing business activity in India occasionally. So if you are a casual taxable person and non-resident taxable person, you cannot become a composition dealer. Provided that where there are more than one registered person under same PAN. If there are more than one persons who are registered under same PAN, and if one is opting for composition scheme, others also should opt for composition scheme. Meaning, let us say I have two registrations under GST law. Okay, I have two registration. Now, one registration I want to opt for composition scheme, other registration I want to opt for regular scheme, not allowed. So if you have more than one registration, either everyone should become a composition dealer or everyone should become a regular dealer. For example, I have Priya Saris in Chennai and Coimbatore. Chennai I want to become a composition dealer, Coimbatore I want to become a regular dealer, not allowed. Both composition allowed, both regular allowed. Sir, what if these are in two different states? What if it is in Karnataka and Tamil Nadu? Then also same will apply. Meaning, if you have more than one registration under a single PAN is important. Here you don't, what is not important, which state you are, where you are doing business, that is not important. Registration should be under same PAN. What is important over here, sir? Your PAN is important. If there is more than one registration under same PAN, then either everyone become composition dealer, everyone become regular dealer. Okay. Now PAN, my PAN, let us say Priya Saris is a partnership firm. Now partnership firm will have a separate PAN. When you are calculating turnover of partnership firm, do not include the turnover of partners. Meaning Priya Saris is a partnership firm. It has two partners, Dilip and Priya. Now Dilip has in his PAN, he has a separate business called as Priya Electronics. So the question is, Priya Saris ka turnover is 50 lakhs, Priya Electronics ka turnover is 30 lakhs. Now the question is whether Priya Saris ka turnover will also include the turnover of Mr. Dilip, which is Priya Electronics ka turnover. No. Why? Because partnership firm will have a separate PAN under GST income tax law, and individuals will have a separate PAN. Okay, please note. You remember definition of person under income tax law? Individual, HUF, AOP, BOI, AGP, etc. What does that mean? They are all different types of or categories of persons. They are all different types of categories of persons. Dilip, under Dilip's PAN, I have Priya Electronics, Priya Chudidars, Priya Saris, and they have a total turnover of combined together 75 lakhs. Can I become composition dealer for everyone? Yes. Can I become composition dealer for saris and regular dealer for others? No. So whether you have same business or you have different business, if they are all under same PAN, if one is opting for composition scheme, others also should opt for composition scheme. Did you understand this point?
Previous first time should not be outwards of that. But secondary,
No, meaning if I want to become composition dealer, I should not do that.
we should check the previous one. Previous, but connecting to the
Why should I check previous year?
for checking whether
That is only turnover. Last year ka turnover should not be more than 1.5 crores. In that turnover, you can have interstate supply, intrastate supply, anything. But once you eligible to become a composition, or once you apply for composition scheme, then only conditions are applicable. Please note, whatever rules are there at Arivu is not applicable to all the CA students. They are applicable only to those students who are studying at Arivu. Correct? No? But ICAI ka rules will be applicable, can I say, to everyone? ICAI ka rules will be applicable to everyone. Each one of you will have to follow what ICAI is telling you to do. Correct? No? Provided that this is an, yeah. Section 10.2a. Section 10.2a is composition scheme for service providers. Section 10.2a is what, sir? Composition scheme for whom, sir? Service providers. Section 10.2a, composition scheme for service providers. What is section 10 subsection 2a telling? Who is eligible under section 10.2a? A registered person who is not eligible to apply for composition scheme under section 10 subsection 1 and whose aggregate turnover in the preceding financial year did not exceed 50 lakh rupees and who is exclusively supplying services other than those services mentioned under section 10.1. To whom is this section applicable? If you are a registered person, who is not eligible to apply for composition scheme under section 10.1. Who is not eligible under 10.1? If you are a service provider, correct? No. If you are a dealer of goods, you are anyways available. If you are a service provider, you are not eligible over there. So, composition scheme for service provider, a registered person who is not eligible for composition scheme under section 10 subsection 1 and who is not eligible under section 10 subsection 1 and whose aggregate turnover does not exceed 50 lakh rupees. So here what is the limit for turnover? 50 lakh rupees. You are not eligible under section 10 subsection 1 and your aggregate turnover in the preceding financial year did not exceed 50 lakh rupees and you are exclusively supplying services other than those services mentioned in section 10 subsection 1. Then this section is applicable to you. This section is applicable to whom, sir? Those service provider, those people who are not eligible under 10.1, then whose aggregate turnover did not exceed 50 lakh rupees and who is exclusively supplying services other than those mentioned under 10.1. Now, what is the composite rate applicable to you? 3% of turnover in the state or turnover in the union territory. 3% is CGST, 3% is SGST. Effective rate applicable to you is 6% of turnover in the state. Now, are there any conditions applicable to you? Yes. All the conditions applicable to a normal composition dealer shall also apply to you except the condition of supply of services. So, whatever conditions are applicable to whom, sir? A normal composition dealer will be applicable, meaning he should not make interstate outward supply, he should not be a casual taxable person or non-resident taxable person. All those conditions will be applicable except the first condition which talks about supply of services. Except the supply of service condition, all other condition will be applicable to them. Section 10.3. Section 10.3. This is important section. Section 10 subsection 3 says composition scheme shall lapse. 10.3 says your composition scheme shall lapse. Lapse means not be applicable to you anymore. Composition scheme shall end. When, sir? If in the current financial year, if your aggregate turnover crosses the specified limit. In the current year, if your turnover crosses the specified limit, what is the limit? 1.5 crores, 75 lakhs or 50 lakhs. In the current financial year, if your aggregate turnover crosses the limit of 1.5 crores, 75 lakhs or 50 lakhs, then your composition scheme shall lapse. You will no more be eligible to become a composition dealer. Composition scheme shall lapse in the current financial year if your aggregate turnover crosses the specified limit of 1.5 crores, 75 lakhs or 50 lakhs. Sir, let us say I started my business on 1st of April. When I started my business, I took registration as a composition dealer. Now, I was doing my business. When I was doing my business on 10th of December, my turnover crossed 1.5 crores. Because my turnover crossed 1.5 crores, can I say my composition scheme is now lapsed? Hello? Because my turnover crossed 1.5 crores, can I say my composition scheme is lapsed? If my composition scheme is lapsed, with effect from this date, I will be called as a regular dealer. With effect from which date, sir? With effect from 10th of December, I will be called as a regular dealer. And now whatever supplies I am making, those supplies will be taxable at normal rates. Sir, what about the supplies made before this date? All the supply made by you before this date, they will be taxable at composite rates. Supplies made after this date will be taxable at regular rates. Now, because there is a lapse of the scheme, see, you have to file the return once in a year. So unless until you file the return, the officer will not come to know whether composition scheme has lapsed or not lapsed. So once your aggregate turnover crosses the limit of 1.5 crores or 75 lakhs or 50 lakhs, as the case may be, depending upon who you are, then you will have to file something called as GST CMP 04 to intimate them, to tell them that your composition scheme has lapsed. This form you have to file, why sir? To inform them that your composition scheme has lapsed. And this is record we filed by you within 7 days of lapse of scheme. Hey, this is important. Okay, please note, till the date you were a composition dealer, you will have to pay tax at what rate? Till the date you were a composition dealer, you will have to pay tax at composite rates. After that, you will have to pay tax at regular rates. Section 10(2). Section 10(2) talks about what, sir? Section 10(2) talks about 10(4), sorry. 10(4) talks about composition scheme for a composition dealer cannot issue tax invoice, meaning he cannot collect taxes on his supply. Whatever supply a composition dealer is making, on those supply he cannot collect taxes. He cannot collect any taxes from the customer, meaning whatever sales I am making as a composition dealer, on all the sales which I am making as a composition dealer, whatever tax is applicable, no, I should collect from my customer. No. I should pay from my own pocket. I cannot issue tax invoice. I cannot issue tax invoice means whatever tax is there on my sales, all those taxes I will have to pay from my own pocket. I cannot issue a tax invoice. And a composition dealer cannot claim input tax credit. A composition dealer cannot claim input tax credit, meaning whatever tax he has to pay, that 1% or 5%, the tax he has to pay from his own pocket. This is not that important. Section 10(5). Notice will be issued by the proper officer. To whom the notice will be issued? The notice will be issued to a composition dealer. When will the notice be issued? If the proper officer has a reason to believe that a taxable person has opted for composition scheme, though he was not eligible. Though you are not eligible to opt for composition scheme, you have opted for composition scheme, then a notice will be sent to you, and such person will have to respond to that notice. Now that reply to the notice, if it is satisfactory, meaning you reply to the notice and whatever reply you have given, officer is happy with that reply. If that reply is satisfactory, then no further action will be taken. But if the reply is not satisfactory, officer is not happy with your reply, then you will have to pay tax at normal rates, and also the provisions of 73 and 74 may apply. Now that is all about section number 10. There are some rules applicable for composition dealer. First rule is rule number 3 and rule number 4. Opting for composition scheme or effective date of composition scheme. Now, if I want to opt for composition scheme, I will have to tell them. I'll have to make the intimation. When will I have to make the intimation? It depends on who I am. If I am taking a new registration, then while filling my registration application का name is form GST REG 01. When I fill my registration application, which is form GST REG 01, I should make an intimation. So this GST REG 01, which is the registration application, has two parts, part A and part B. When you fill your part B of registration application, at the time of filling part B of registration application, you need to intimate to opt for composition scheme. You need to intimate them that you want to opt for composition scheme. And if you are already a registered person, that means you are registered as a regular dealer. Now you want to become a composition dealer. If you are already a registered person, then you can and you want to opt for composition scheme, then you will have to intimate them before the beginning of next financial year, before the new year is starting. Meaning, if I wanted to apply for composition scheme with effect from 1st of April 26, I had to tell them before 1st of April 26. Normally, in the month of March, that window will be opened. So he can opt for composition scheme before the beginning of the next financial year by making an application in a form called as form GST CMP 02. So you have to just file this form GST CMP 02 before the start of the next financial year. And with effect from first day of next financial year, you will become composition dealer. See, when you apply for a registration, from the date when the registration is granted to you, you will be a composition dealer. But if you are already a registered person and if you want to become a composition dealer, you can apply before the start of new year and the composition scheme will be applicable to you from the new year. Then rule number 6 talks about what are the other conditions a composition dealer has to follow. A composition dealer has to mention the word composition taxable person on his name board and sign board. So whatever name board will be there, no, on that name board and sign board, he should mention the word composition taxable person. And composition dealer cannot issue tax invoice. So for his supplies, he will issue a document called as bill of supply. He will issue a document called as what, sir? Bill of supply. In that bill of supply, he should mention the word composition taxable person not eligible to collect taxes on supply. On the bill of supply, what should he mention? That he is a composition taxable person and he is not eligible to collect taxes on his supply. He shall pay the tax at normal rates for inward supply liable for reverse charge. Please note. Composite rates are applicable only for your outward supply or your sales. Composite tax rates are applicable only for your sales, but your purchases will always be taxable at normal rates. Okay, Priya Saris makes sales, that is outward supply. On outward supply, I have to pay tax at composite rates, but on all the purchases which I am making, I'll have to pay tax at normal rates. Apart from that, composition dealer has to file a return annually. The return which he has to file is called as GSTR 4. Due date of filing this return is 30th June of next financial year. And he shall pay the taxes on quarterly basis by using the form called as form GST CMP 08. And the due date of paying the tax is what, sir? 18th of next month following the quarter. And what is a quarter? Quarter is a period of 3 months starting from with effect from first day of calendar year. Tell me in this case for the second one, what is the second one? The third question, tell me the answer. Tell me the answer for question number 3.
That calculation. That calculation.
6 lakhs, sir. How, sir? Now, please note, these amounts which they have given is including GST. So, I have business at different states and they have asked you to find your aggregate turnover. So, what is my aggregate turnover? First, what is the total of all these supplies? What is the total of all these things? 30? 37 lakh 76,000. Now, this is including taxes. So, into 100 divided by 118. 32 lakhs is my aggregate turnover. Tell me the answer for question number 6.
Twenty-two lakh, 35 lakhs.
35 lakhs, 32 lakhs, 40,000. This is an exam question. 32 lakh 40,000. Aggregate turnover, they are asking. Interstate outward supply, will it be included in aggregate turnover? Yes. Then interstate exempt supply, yes. Turnover, export, yes. IGST, no. CGST, SGST, no. Custom duty, yes. Payment for availing. Availing means taking. So no. So what is the total? 32 lakh 40,000 is the aggregate turnover. Now, tell me the answer for this question number 11. Yeah, intra and inter, both they have told Sundri. Prem is running a consulting firm and also a fancy store registered under same PAN. So he has a consultancy firm and a fancy store, both are registered under one single PAN. Turnover of fancy store is 65 lakhs and turnover of consultancy firm is 10 lakhs in the preceding financial year. You are required to provide answer with supporting explanatory note for which of the following question. For each of the following question. Is frame eligible for composition scheme under CGST Act? Is he eligible for composition scheme under CGST Act? Can I say no? Why? Because he has services also. Now see 10.1 is not applicable to him. Why? 10.1 says your aggregate turnover should be up to 1.5 crores and the value of services should be 10% of turnover in the state or 5 lakhs, whichever is higher. Now 10% of turnover in the state, if I do 75 lakhs into 10%, if I do 7.5 lakhs, it should be, or 5 lakhs, whichever is higher is 7.5 lakhs. Can I say 10 lakhs is more than 7.5 lakhs? Therefore not applicable. Whether it is possible for Prem to opt for composition scheme only for fancy store? Answer is again no. Why? Section 10.2 has a proviso which says if you have more than one registration under same PAN, if one is opting for composition scheme, all others also should opt for composition scheme. Then what is this point telling? If Prem is running a restaurant with a turnover of 65 lakhs instead of consultancy firm as well as a fancy store, would he be eligible for composition scheme? Now, what is this point telling? He is running a restaurant instead of fancy store. Now, will he be eligible for composition scheme, sir? Yes. Why, sir? Because 65 lakhs plus, sir. 65 lakhs limit is 1.3 crores. The turnover will be 1.3 crores. And because which state he is in? Not given, then 1.5 crores limit will be applicable to him. Therefore, will he be eligible to become a composition dealer, sir? Yes, because he can become composition dealer for both of them under one single section, which is section 10 subsection 1. Tell me the answer for question number 12.
26,000. Second, 12,000.
We'll see.
$26,000.
26,000 and 12,000. 12,500. They have told total GST without bifurcation. You're telling only half. Gokule and Sons is registered in Karnataka and paying GST under composition scheme provides you the following information. Taxable supplies made by them, exempt supplies made by them, so total supplies made them are 52 lakhs. Calculate the total GST without bifurcation between CGST and SGST to be paid to Gokul and Sons for the tax period 31st ended 31st December. So if you are a manufacturer, you have to pay tax on turnover of the state. This into 1% because they have told don't give bifurcation to me. So it is 52,000. And if you are a trader, you have to pay tax on taxable supplies, which is 25 lakhs into 1%, which is 25,000 rupees. Okay, yeah. This is a very nice question. Tell me the answer for this. Very nice question. This is. 18%. 18% is IGST rate. Five lakh 40,000. See, Chanchal started providing beauty and grooming services, inaugurated Care and Care Beauty Center in Janakpuri, Delhi on 1st of April 2023. She opted to pay tax under section 10(2)(a). 10(2)(a) means what is the rate, sir? 6%, which is nothing but 3% CGST, 3% SGST. The aggregate turnover for the turnover of Care and Care Beauty Center for the quarter ending so for the first quarter ending what, sir? 30th of so April, May, June. For April, May, June, for the quarter ended this period, what is our aggregate turnover, sir? For quarter ended this period, her aggregate turnover is 20 lakhs. Then further for the half year ended 30th September, her turnover reached to, so for this period, April, May, June, July, August, September, her turnover reached to 50 lakhs. That means for this 3 months ka period, her turnover was only 30 lakhs, correct? No. Further half year ended is this much, recorded a rapid growth. Further, for the half year ended 30th September 2003, the turnover reached 50 lakh rupees. Care and Care Beauty Center recorded a rapid growth in the turnover and reached 70 lakhs by end of October. So next one single month, her turnover was 20 lakhs. So can I say on this date, because the turnover reached 50 lakhs, section 10 subsection 3 is applicable, and section 10 subsection 3 will tell that your composition scheme is lapsed. Now if your composition scheme is lapsed, that means what is the rate applicable to you? Hello. After this date, you have to pay tax at 18%, which is the regular rates, and before this date you will have to pay tax at composite rates. So what is the composite rate applicable? 6%. 6% means for first, so for April, May, June, I'll pay how much, sir? 20 lakhs into 6%, which is 1,20,000. For July, August, September, I'll pay how much? 30 lakhs into what is happening? 6%. 1,80,000. And for October month, I'll have to pay 20 lakhs into 18%, which is 5 lakh, 3 lakh 60,000. So this is the tax which she has to pay. Who has to pay? She means Chanchal. Okay, determine the total tax. Care and Care Beauty Center wishes to opt for composition scheme under section 10(1) for the next financial year. Can I say not applicable? Sultan Sons is okay. This is fine. Okay. Next topic for discussion is called as what, sir? Time of supply. Time of supply means what, sir? At what point in time did the supply actually take place? This is important because only when the supply happens, I have to pay the taxes. So time of supply is very important because I have to know what is that point in time when I have to pay the taxes. So due date to issue invoice under section 31. For goods, check whether supply involves movement in goods or supply does not involve movement in goods. If supply involves movement in goods, then the due date to issue invoice is on or before removal of that goods. This is due date to issue invoice. If the supply involves movement in goods on or before removal, supply involves movement means what's up? Normally, if I'm supplying any goods, if I supply this calculator to someone, then the supply which I'm going to make will involve movement in goods. So in such cases, what is the time of supply? On or before removal of that goods. If the supply does not involve movement in goods, whatever supply I'm making, it does not involve movement, then on or before delivery of such goods, on or before delivery of such goods. If it is a case of continuous supply of goods means what, sir? Goods are supplied on continuous basis or on recurrent basis. If it is a case of continuous supply of goods, then successive statement date or successive payment date, whichever is earlier. And if it is a case of sale on approval basis, if it is a case of what, sir? Sale on approval basis, date of approval or 6 months from the date of removal, whichever is earlier. Date of approval or 6 months from the date of removal, whichever is earlier, will be due date to issue invoice. Normally, if nothing is specified in the question, that means it is a case of supply involves movement in goods. Because goods means every kind of movable property. So if nothing is specified in the question, whether it is no movement or continuous supply or sale on approval, then you should always go for movement in goods, and invoice should be issued on or before removal. For services, when should I issue the invoice, sir? For services, invoice should be issued on or before completion. Completion means on the date when the services are completed, provided by you, or anytime before the date. And for services, you can issue the invoice afterwards also, later also. If you are issuing invoice afterwards, you should issue it within 30 days from the date of completion. If for services, invoice should be issued on or before completion or within 30 days from the date of completion. Within 30 days from the date of completion. Now this 30 days will be replaced by 45 days in case of banking company, financial institution and NBFC. If you are a banking company or a financial institution or an NBFC, instead of 30 days, I'll take how many days? 45 days. Now, if it is a case of, this is also important, if it is a case of continuous supply of services. In case of continuous supply of services, check whether the due date of payment is ascertainable or not. What do you mean by due date of payment? The date when you see, in case of continuous supply of service means what? Service will be supplied continuously. Services will be supplied continuously. When the services are supplied continuously, you should check for some important points. What are those important points? Whether due date of payment is ascertainable or not. Meaning, because I'm going to supply the services to you on continuously for more than for a period more than 3 months, we are going to enter into a contract, and the contract will tell us when I am supposed to make the payment. Because services are supplied continuously, if I pay you after the end of services, it may take longer period of time. Let us take an example: construction of this building. If I pay you the money after the construction is completed, then for you it may be a huge waiting. You have to wait till the construction is completed. So in such scenarios, what happens is we will enter into a contract. Okay, we will enter into a contract, and in the contract, if the due date of payment is mentioned, that this is the date when you are supposed to make the payment. If the due date of payment is ascertainable from the contract, then on or before the due date of payment, you should issue the invoice on or before due date of payment. If the due date of payment is not ascertainable, on or before receipt of payment, meaning the contract which we have not mentioned any payment date, then on or before the date of receipt of payment. If the payment is linked to completion, then on or before completion. Now, time of supply of goods. Section 12, subsection 1 says The liability to pay tax in case of supply of goods shall be the time of supply as determined under section 12. So if you want to know when you are liable to pay tax in case of supply of goods, then you will have to go refer the provisions of what? Section 12. Section 12. You will have to go refer the provision of section 12. The liability to pay tax in case of supply of goods shall be the time of supply as per section 12. Section 12 subsection 1. This is not applicable anymore. We have a notification called as notification number 66 bar 2017. So always time of supply of goods, if question is there, then start with notification number 66 bar. So main answer only should start like this. So as per notification number 66 bar 2017, in case of supply of goods, if any money is received before making the supply, then the date of receipt of such amount shall not be taken as time of supply. Therefore, in case of supply of goods, the time of supply will be date of invoice or last day to invoice, whichever is earlier. So for supply of goods, it will be date of invoice or last day to issue invoice, whichever is earlier will be taken as time of supply. Now, date of invoice is the date which is mentioned in the invoice. Last day to issue invoice is which date? The time limit within which invoice is required to be issued. That is the last day to issue invoice. Date of invoice or last day to issue invoice, whichever is earlier. Now, this is applicable for all the different types of goods except what, sir? Specified actionable claim. This is applicable to all types of goods except what, sir? Specified actionable claims. So date of payment can never become time of supply of goods for supply of goods except specified actionable claims. Section 12 subsection 3, time of supply of goods in case of reverse charge. Now here there is an amendment, so this is little important. Amendment is for services, okay, not for goods. Anyways, goods also it is applicable. Time of supply of goods under reverse charge. Now for goods, the time of supply under reverse charge is not applicable to us. Why? Because what are the goods taxable under reverse charge is not applicable to us. Okay, so you can ignore this section completely. So date of receipt of goods, but time of supply of services under reverse charge, very, very important. Section 13 subsection 3. Date of receipt of goods, meaning the date. Reverse charge means what, sir? Recipient has to pay the taxes. So when will recipient have to pay the taxes? On the date when the recipient is receiving the goods. The date of receipt of goods. If date of receipt of goods is not available, then date of making the payment. If that is also not there, date following 30 days. Date following 30 days means 31st day from the date of invoice or any other document issued by supplier, whichever is earlier. Then vouchers, this section 12.4 is completely removed only from your syllabus. And for section 12.4, they have given very good circular or clarification, which is there in your topic number 1. Section 12 subsection 5. Section 12 subsection 5 talks about residual cases of services. Residual cases means if you are not able to determine time of supply as per 12.2, 12.3, then 12.5 is applicable. Are you a person who is liable to file return? Yes. Then the due date of filing return will be taken as time of supply. If you are not liable to file the return, then the date when you are making the payment of tax. Section 12.6. The time of supply in case of interest, penalty, late fee for delay in payment of consideration. The time of supply for that will be the date of receipt of such amount. Date of receipt of such amount. Time of supply for services. Section 13 subsection 1. The liability to pay tax in case of supply of service shall be the time of supply as determined under section 13. Section 13 subsection 2. Time of supply of service in case of forward charge. In case of forward charge of services, very important, forward charge of services. Check whether the invoice has been issued within the due date specified under section 31. If yes, then the date of invoice or date of payment, whichever is earlier. I hope you know what is the due date of issuing invoice. On or before completion or within 30 days from the date of completion. If the invoice is not issued within the due date under section 31, then the date of completion or date of payment, whichever is earlier. Date of payment will be
the date on which entry has been made in the books of account, or the date on which the amount is getting credited to the bank account, whichever is earlier. The date on which the entry has been made in your books of accounts, or the date on which the amount is getting credited to the bank account, whichever is earlier. Please note here, you don't take the last date, you take the date of completion. Now for services, we have a proviso which says if you receive any amount up to ₹1,000 in excess of invoice value. So many times what may happen is the recipient of the services may pay some extra money to you over and above the invoice value. So what are they telling? If you receive any amount, where you receive any amount up to ₹1,000 in excess of the invoice value, then the time of supply for such excess amount at the option of supplier shall be the date of issue of invoice for such excess amount. Section, this is important section, most important section for this attempt. Section 13 subsection 3. Section 13 subsection 3 talks about what, sir? Section 13 subsection 3 talks about time of supply of service under reverse charge. So for time of supply of services under reverse charge, the time of supply for services under reverse charge will be date when you are making the payment, date of making the payment. Sir, if date of making the payment is not available, then date following 60 days from the date of invoice or any other document issued by the supplier. First preference is date of making the payment. That is not there, sir. Date following 60 days, which is nothing but 61st day from the supplier invoice. Only when the supplier has issued the invoice, you will have this information. Sir, what if supplier has not issued the invoice at all? Now, section 31 says, if supplier has not issued the invoice, you as a recipient should issue an invoice to yourself. So in such cases, date of issue of invoice by recipient, where recipient has issued the invoice, meaning supplier has not issued the invoice, therefore you have to issue the invoice. In that case, what is the date when you have issued the invoice? And when should I issue the invoice, sir? You should issue the invoice within 30 days from the date of supply of goods or services. Where the recipient is liable to issue the invoice for supply taxable under reverse charge under 9.3 or 9.4, then such invoice should be issued within 30 days from the date of supply of goods or services. This is important section, very important section. So for services reverse charge, date of making payment or 61st date from the date of supplier invoice, whichever is earlier. Sir, supplier invoice date is not there, no problem. Date of making the payment, compare that with date of issue of invoice by recipient, whichever is earlier. And recipient has to issue the invoice within 30 days of receipt of goods or services. Then in case of importation of services, for importation of services, check whether recipient has in case of importation of services, who has to pay the taxes? The recipient, the receiver has to pay the taxes. Hey, when you're importing services for a consideration, 7.1b says it is a supply. 7.1c read with para 4, schedule 1 para 4 says if you are importing without consideration also you have to pay the taxes. Correct? No, it is a supply. So if it is a supply, who has to pay the taxes, sir? The recipient has to pay the taxes. So in case of importation of services, recipient has to pay the taxes under reverse charge. And the time of supply of services received or imported from associated enterprises shall be the date of making the payment or the date of entry in the books of accounts, whichever is earlier. Okay. So recipient has to pay the taxes. So if I import any services from my own associated enterprises, if I import services from whom, sir? My own branch office located outside India, for the services imported by me from my own branch office located outside India, the time of supply will be what, sir? The time of supply will be date of making the payment to them or the date of entry in the books of accounts, whichever is earlier. For an advocate, one of the example I'm taking, advocate is giving legal services to Priya Saris. Priya Saris as a business entity has to make the payment under reverse charge. Advocate gave the services on 10th of April. Advocate gave the services to Priya Saris on 10th of April. So what is the time of supply? Time of supply will be date of making the payment or 61 days from the date of supply invoice, whichever is earlier. So I made the payment on 26th of May. 61 days from 10th of April is 20 days of April, 31 days of May, and 10 days of June, 10th of June. So who is early? 10th of June is early. Now, what if he has not given the invoice?
What will be your answer if the supplier has not given the invoice? Then when did you receive the services? 10th April. Within 30 days, you should issue the invoice. So what will be our answer if the supplier has not given the issued the invoice? Then recipient shall issue the invoice within 30 days, which is 10th of May. So date of invoice or date of payment, whichever is earlier, which is 10th of May. For services also, voucher has been removed. Residual cases. Residual cases means for all other cases of services, same provision as you have studied for goods. What is the same provision, sir? Are you a person who is liable to file return? Yes. Due date of filing return. In all other cases, date of making the payment of tax. And then section 13 subsection 6, time of supply for what, sir? Interest, penalty, late fee for delay in payment of consideration. Date of receipt of such amount will be taken as time of supply. Yes, sir.
Previous was in RC, like composition dealer, then he shifted to regular scheme, sir, but they took that limit starting. Registration limit as nil.
No, but he was registered in that case. Chanchal, I understood your question. There is one more question in the same this thing.
Yeah, so it wasn't needed.
Ajay question. There is one more question. In this case, he was not registered at all. So his question is, sir, the Chanchal question which we did know, sir. What happened in Chanchal question? First 3 months it was 20 lakhs, then 30 lakhs, then 20 lakhs. So in Chanchal question, first 3 months, Chanchal was, because your turnover has crossed 20 lakhs on this date, then only I will take registration. Hello. So for this period, because I was not liable for registration, I don't have to pay any tax. Correct? No. I was not liable for registration, assuming I have taken exemption. Please note, Chanchal is already registered as a composition dealer. She has to pay the tax on 20 lakhs. Already registered as a composition dealer, she has to pay the taxes. Chanchal is not registered when she started the business on first. No problem. Now the turnover crossed over here. Now she has to take registration. She took registration. She took registration as what? Composition dealer. Now whatever supply she has to make, on this supply she has to pay no taxes. Correct? No. Why? She was not registered. When did she apply? When her turnover crossed 20 lakhs. So when her turnover crossed 20 lakhs, for the next quarter, her turnover was 30 lakh rupees, on which she'll have to pay tax of what, sir? Whatever, that 6% tax she has to pay. And now here the scheme got lapsed. For the future period, she'll pay a tax of 18%. Did you understand this point? If she is not registered, then this. If she is already registered, then you have to pay tax on even 1 rupee sale you make from this particular date. Okay, we have one more question like this. See this one. So in examination, they had asked that question, wherein that person was not registered. Whatever you were asking me, no, that case. Anyways, we were seeing question on this point. Tell me the answer for question number 6. You should do enter, sir, not see enter. In examination, what will you see, sir? We'll see. Yes, Sundari. Okay, now please see. 8th September, community hall was booked, and at that time, they agreed that 1,20,000 you will have to pay for community hall. 20,000 rupees was already recorded on the invoice, and 10th of September, advance got credited. So advance was received on 8th September, and it got credited to the bank account on 20th September. So can I say for 20,000 rupees, the date of payment is 8th of September. 2nd November, date of completion, the marriage was happened on 2nd of November. They issued the invoice on 18th December, which is not within time limit, within 30 days. So if you are not issuing the invoice within 30 days, then date of invoice or date of payment, whichever is earlier, date of invoice is, date of completion or date of payment, whichever is earlier, 2nd November, or date of payment is what, sir? 8th of September, and for this it is 22nd of December. So 20,000, 1 lakh, 1,20,000. So can I say time of supply will be for 20,000, for 20,000 time of supply will be 8th of September, and for 1 lakh rupees it will be 2nd of November. Okay. Hello. Is this clear? Tell me the answer for question number 8. An order is placed to T and Company Solapur on 18th of August. Date of order is not relevant for us. To make garments, company delivered fabrics on 4th of September. Date of delivery. After completion of order, issued the invoice on 15th of September. The payment was received on 30th of September. Determine the time of supply. So can I say invoice is not issued within the due date? Time of supply is date of removal, which is 9th of September. Date of payment will not be considered by sir. It is anyways late. H Limited engaged in supply of supply of services of transporter of goods. H Limited engaged in the services of transporter for road transportation of consignment of 20th May. However, the consignment could not be sent immediately because of strike, and instead it was sent on 20th of July. The invoice was issued on 20th of June from transporter, and the payment was made on 25th of August. What is the time of supply? Now he has issued the invoice. Time of supply will be date of payment or no, 61st date. Yeah, I know. 61st date from this RCM for services. 61st date from this is, can I say 10 days plus July plus 10, which is 10th of August or 25th of August. 10th of August is the time of supply. Now I feel this attempt, I feel this attempt, if they ask, they'll ask a question on 13 subsection 3 on time of supply, and that also they may text in MCQ. Apart from that, they may not ask question because in last attempt they had asked a good question for 5 marks on time of supply. Did you understand what I told? That is what my feeling is. My feeling may be wrong, okay? See, date of ordering is not relevant. Date of delivery is this. Date of delivery is nothing but date of removal. We'll take that date. So date of removal is 4th. After completion of order, issued the invoice on 15th of September. So date of invoice, can I say, is after delivery or removal? Therefore, I'll ignore the date of invoice. Why? Because it is not within the due date. So date of removal, compare that with date of payment. Who is early? Value of supply, another one small chapter but important chapter. Section 15 talks about value of supply. Value of supply means what, sir? At what point in time, what is the amount on which you have to pay GST? That is what this value of supply topic is going to tell you. Value of supply is transaction value. What is value of supply? Value of supply is transaction value. Transaction value means the price which is actually paid or which is payable for supply of goods or services or both, where the supplier and the recipient are not related, and the price which you are paying, it is the sole consideration or only consideration. So two condition, time of supply in case of value of supply, in case of value of supply is transaction value. What is transaction value? Price which you are actually paying or which becomes payable for supply of goods or services or both, where the supplier and the recipient are not related, and the price which you are paying, it is the sole consideration or it is the only consideration. Then inclusions in value of supply. What can be included in value of supply? Lawmaker says inclusions in value of supply include all taxes except the taxes under GST law. If they are charged separately, then any payment made by the recipient which the supplier had to incur, then incidental expenses for anything done to make the supply, interest, penalty, late fee for delay in payment of consideration. Please note what are supposed to be included in value of supply. Point number 1 which you have to include in value of supply is all taxes except the taxes under GST law. So whatever different types of taxes the supplier is charging from you, that should be included in value of supply except the taxes under GST law, except CGST, SGST, IGST, UTGST. All the other types of taxes you should include if they are charged separately. Now here there is a clarification given. TCS collected under income tax law. Now when I sell goods more than 10 lakh rupees etc., TCS will be collected. Should the TCS be included while computing value of supply, sir? Lawmaker says no. TCS, though the customer is charging the TCS from you, the TCS shall not be included in value of supply. Then any payment made by the recipient which the supplier had to incur. Now you as a supplier had to incur some expenditure, but that expenditure you as a supplier had to make some payment, but that payment is made by the recipient. So because you did not make and the recipient made, include that in value of supply, increase your value of supply, but by such amount. Incidental expenses for anything done for making the supply. Incidental expenses for anything done for making the supply means what, sir? For making this particular supply, whatever incidental expenses are incurred by you, any incidental expenses incurred by you for making the supply. Incidental expenses means what? Like transportation charges, packing charges, insurance charges. To make the supply, what are the extra additional expenses incurred by you? Then interest, penalty, late fee for delay in payment of consideration. Interest, penalty, late fee for delay in payment of consideration will also be added in value of supply. So I sold goods to Karina and I told Karina to make the payment within 30 days. If you don't make the payment within 30 days, I will levy a penalty of 10,000 rupees. Now on the date when I am making the sale to Karina, do I know whether Karina will make the payment to me within 30 days or not? No, sir. Now Karina made the payment to me within 30 days. How much will she pay me? 1 lakh rupees. Karina did not make the payment to me within 30 days. How much she will pay me? 1 lakh 10,000. Meaning she will pay the money to me including penalty amount. Correct, not correct? Including the penalty amount, she'll make the payment to me. Now, here, what is important is reading the question carefully is very important. Now, normally what will happen? Karina will pay me only 10,000 rupees. Okay, which is the penalty amount. She may not pay GST on this. Hello. Karina will pay me only 10,000 rupees. She may not pay GST on this. So reading question is very important over here. How's a reading question is very important. Check whether the question specifies that she has paid extra taxes on this, or the question says that she has paid only 10,000 rupees, nothing more. If the question says she has paid 10,000 rupees penalty, then while adding in value of supply, no, add amount excluding GST because this will be treated as including GST. Sir, I did not understand. I sold the goods to you. Now, if you don't make the payment to me within 30 days, I will collect penalty from you. Now, penalty, how much will I collect? I say you make the payment to me within 30 days. If you don't make the payment to me within 30 days, I'll collect penalty from you. 10,000 rupees penalty I will collect. Now, let us say you did not pay within 30 days. So that means you'll pay a penalty of 10,000. Now tell me, if I ask you to pay 10,000 plus 18% GST, will you pay me? Correct? Are you understanding? So in practical life, what will happen, sir? That person may not pay additional GST on that penalty amount. So this penalty amount should always be assumed to be inclusive of GST. And when I'm adding in value of supply, I should add what, sir? Into 100 divided by 118, whatever amount comes. 878475. Next is subsidy directly linked to the price, excluding the subsidy given by central government or state government. Subsidy which is directly linked to the price, excluding the subsidy given by central government or state government. What is important over here is subsidy should be directly linked to the price. What do you mean by the word directly linked to the price? Subsidy should be directly linked to the price means because of that particular subsidy, the price which is charged by you should either increase or decrease. Because of that particular subsidy, the price which is charged by you is either increasing or decreasing. Meaning that subsidy is affecting my price. If that subsidy is affecting my price, that means it is directly linked to the price. But because of that subsidy, my price is not changing at all. I don't care how much money is charged. Whether the subsidy amount is increasing or decreasing, it does not matter for me to check what is the price, meaning it does not affect the price at all, then it is not directly linked to the price. So we should check whether the subsidy is directly linked to the price or not directly linked to the price. Then exclusions from value of supply. Sir, can I exclude something from value of supply? Yes, you can exclude only one thing, which is discount. You can exclude discount from value of supply. Now discount can be given either before making the supply or at the time of making the supply. So if the discount is given before making the supply, then exclude it from value of supply if it is shown separately on the invoice. And if the discount is given after making the supply, then exclude it from value of supply if these three conditions are satisfied. A discount given before or at the time of supply, exclude it if it is shown separately on the invoice. Before supply means what, sir? Before selling the product to you, you know that if I purchase this, 40% discount is there. At the time when you are purchasing, at the time of billing, they told that, sir, you will get a discount of this much. After supply means sales is already made to you. Now they are going to give the discount to you. So discount given after supply can be subtracted only if three conditions are satisfied. What are these three conditions? Condition number one, it should be agreed between supplier and recipient. It means the discount should be agreed between supplier and the recipient. It should be linked to specific invoice. It means the discount amount which is there, it should be linked to specific invoice. It cannot be a general invoice. Let us say as it cannot be a general discount against any of the invoice. It should be linked to some specific invoice. Let us say I sold you 10-15 products, and all the products are sold at on a different invoice. All these products were sold at a different invoice. Now I gave you a discount of 10,000 rupees. Against which invoice? Nothing mentioned. Cannot be subtracted from value of supply. This kind of discount will be given by issuing something called as financial or commercial credit note. For issuing general discount, one question, I think last attempt I had asked one question, last line if you would have remembered, can I issue credit note for discount? Some question like this they had asked, can I issue the credit note for secondary discount? Secondary discount was the word which is used by them. Can I issue a credit note for secondary discount? Answer is no, you cannot issue a credit note for secondary discount. Second discount means what, sir? Those discounts which are given by you after the supply has been made. For that, can I issue a credit note, sir? Answer is no, credit note cannot be issued for that. Why? Because they are not linked to any specific invoice. So those types of credit notes which are there, they are called as financial credit note or commercial credit note. It is not GST credit note. Now, first condition number one, that discount should it should be agreed between the supplier and the recipient. It should be linked to specific invoice, and ITC on the discount should be reversed by the recipient. Question number 7, tell me the answer. Machine India Limited is engaged in manufacture of machines. It supplied one machine to Z company with following details. Determine the amount of GST payable thereon. So this is will price of the machine, it will be included in value of supply. Installation charges included, packing charges include, Then design charges include, pre-delivery inspection charges also include. Cash discount of 2% on the price of machinery is allowed as per the terms of contract because he made the payment. So 2% of this is how much? 16 or 17,000 rupees is the discount. Bought out accessories worth rupees 8,000 supplied free of cost with the machinery, include it in value of supply. Bought out accessories means he purchased few extra things and supplied free with machinery. Machine is supplied with durable and returnable packing worth rupees 50,000. Durable and returnable packing should not be included because they are durable, meaning its life is good, and they are returnable. Returnable means that person is going to return that. So don't include. GST rate is this much. What is the total? 8,88,500. Tick, 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 tick. Tell me the answer for this question. Kamal Book Depot. Twelve lakh 14,500. Kamal Book Depot, a wholesaler stationery registered in Mumbai, has received order of 20,000 stationery product from local Mehta Book Depot. Packing stationery worth rupees 2 lakhs. So 2 lakh rupees I'll take value of stationery. He incurred packing charges of 5,000, include freight charges, include. How did you tell 12,000? I added only these things, sir. Then 1,500 transit insurance, design engineering charges 6,500 rupees, taxes. Goods were delivered to Mehta on 14th November. Since Mehta was very happy with the quality, he made payment of the goods on the same day, and simultaneously another order was placed worth rupees 10 lakh to be delivered on 23rd of December. On receipt of second order, he allowed a discount of 20,000 on the first order. Will it be subtracted in value of supply? Compute the GST liability 18%. So what is the total first? 2 lakh? Exactly, yeah. 2 lakh 15,000 is the value of supply and GST is accordingly applicable. Tell me the answer for this question. Monty Jonty. 20? Okay. Jaunty India Limited, a manufacturer of heavy machines registered at Jaipur, supplied one machine to D Limited of Udaipur on 5/2/24 under an invoice on the same day. Using the information given below, value of supply you should calculate. The base price of the machine, which is 28 lakhs 50,000. Trade discount at 3% of base price. They have given the amount directly, so I'll subtract trade discount from this price. Then secondary packing charges for safe transportation of machine at the request of customer. Secondary packing charges customer has requested, but I don't care because I have charged. I will add it to my value of supply. Design and engineering charges 90,000 rupees also will be added to value of supply. Taxes levied by municipal authority will also be added in value of supply. Subsidy received by supplier worth rupees 80,000 to encourage the manufacture of machinery. Subsidy received by the supplier from the state government to encourage manufacture of the machinery. Tell me whether directly linked to the price or not. Hello. Hello. Yes, sorry, state government it is received. Sorry. State government it is received. By the way, it is directly linked to the price or not? Is it directly linked to the price? No, sir. Pre-delivery inspection charges is pre-delivery inspection charges paid to an independent agency as per the terms of agreement. Amount is paid by D Limited. It does not matter. But because this is expenses required to be incurred by supplier, which is incurred by recipient. Pre-delivery inspection means at the time of delivery, you please inspect whether the machine is working properly or not. So that is pre-delivery inspection charges. And interest amount paid by D Limited for delay in payment of consideration. Now this interest amount, as I told you, should not be taken completely. You can take it, which is 170. Yeah. Now this you please be very careful. Read the question carefully. What point they have given the question, based on that this adjustment should be decided by you. Tell me. 29 lakhs is the answer. Next, one of the beautiful chapter, simple chapter, important topic for this examination, place of supply. IGST Act 2017. So this is the only chapter which you are going to see from IGST Act. Section 7 of IGST Act talks about Section 7 of IGST Act talks about what's a interstate supply. What is Section 7 of IGST Act telling? Interstate supply means location of the supplier and the place of supply is in two different states, two different union territory, one state and one union territory. Interstate supply we are talking about. Supply between two different states, two different union territory, or one state and one union territory. Now, what should I see between two different state, two different union territory? I should see location of the supplier and the place of supply is in two different states or two different union territory or one state and one union territory, or it is a case of importation of goods or services, or it is a case of export of goods or services, or it is a case of supply made to an SEZ unit or SEZ developer. Now, SEZ unit may be in your own state, but still it will be treated as interstate supply. And all other types of supply which is not an intrastate supply will be treated as interstate supply. Interstate supply means location of supply, place of supply is in two different states, two different union territory, one state and one union territory, or it is a case of import of goods or services or export of goods or services. Section 8 of IGST Act 2017 talks about intrastate supply. Intrastate supply means that supply where the location of the supplier and the place of supply is in same state or same union territory. Now, what will happen? What will be the location of the supplier and what will be the place of supply whenever the supply is made in territorial waters, where the location of the supplier is in territorial waters or where the place of supply is in territorial waters, then the location of the supplier and the place of supply shall be the nearest coastal area. It shall be the nearest coastal area. A location of supplier is if he has taken registration, location where he has taken registration. If he is not a registered person but having a fixed establishment, meaning a place from where he is doing business, location of that fixed establishment. If he has more than one fixed establishment, then location where the supply is more directly concerned to, meaning if you have more than one branches, then from which branch have you made the supply? If nothing is available, your usual place of residence. B2B transactions means registered person to another registered person. B2C means registered to unregistered person. Next, section 10 is our first section for discussion. Section 10 talks about place of supply of goods where supplier as well as the recipient, both of us are in India. Section 10 subsection 1a, supply involves movement in goods. If the supply which you are making, if it involves movement in goods, place of supply is location where the movement is terminating or ending. Section 10 1a, supply involves movement in goods. Place of supply will be location where the movement is terminating or ending. Section 10(1)(b), movement is caused by third person. If the movement is caused by someone else, that is the third person, place of supply will be principal place of business of that third person. Principal place of business of that third person. Meaning what, sir? PC. If Priya Saris is supplying goods to Karina Saris, Priya is in Bangalore, Karina is in Mumbai. This is a supply which I am making, and this supply involves movement. Goods will go from Bangalore to Mumbai. So where is the movement going to end? Movement is going to end at Mumbai. Place of supply is Mumbai. Movement is caused by third person. Movement is caused by third person means what, sir? Principal place of business of third person. Meaning Priya Saris is in Chennai, Karina Saris is in Mumbai, and Nayantara Saris is in Coimbatore. Now Karina is telling Priya to supply 100 Mysore silk saree to Nayantara. Who is telling? Karina is telling Priya to supply 100 Mysore silk saree to Nayantara. Now, for me, my customer is Karina. I will give invoice to Karina, but the goods are going to Coimbatore, which is Nayantara. Can I say normally place of supply should be location where the movement is terminating? But here, if I take location where movement is terminating, then it will be within the same state, but the Karina is located in a different state. Correct? No. So here, what is the case happening, sir? Here, I am moving the goods to Nayantara because Karina told me to move the goods to Nayantara. So here the movement is caused by on the direction of third person. Then principal place of business of that third person will be taken as time of supply. Principal place of business of that third person will be taken as time of supply. 10(1), see, supply does not involve movement in goods. I am making a supply, but that supply does not involve any movement in goods at all. There is no movement at all. I am just making a supply, but no movement is there. In such cases, place of supply will be location of the goods at the time of delivery. You are coming to Priya Saris and purchasing a sari at Priya Saris. No movement will be there. So place of supply will be Priya Saris. 10(1) CA, supply of goods to an unregistered person. 10(1) CA is a newly added section. What is this section telling? Supply of goods to an unregistered person. If you are making a supply to an unregistered person, meaning whenever you come to Priya Saris, you will be an unregistered person. In such cases, am I recording your address on the invoice? If you ask me for invoice, I will record your address on the invoice. If I am recording your address on the invoice, place of supply will be address as per that particular invoice. But if unregistered person ka address is not recorded on the invoice, place of supply will be location of supplier. Did you understand address recorded, not recorded? So whenever you go to any place to purchase something for you, are you asking him to give the invoice? Yes. With that, are you asking him to record your address? Yes. If address is recorded, whatever address is recorded. If address is not recorded, supplier's ka location will be taken as place of supply. Clarification on e-commerce transaction. If supply is made through e-commerce operator to an unregistered recipient, and if the billing address and delivery address is two different locations, the place of supply will be delivery address. Sir, I did not understand this part. Let us say I am making supply to someone who is not a registered person. I am making supply to someone who is not a registered person, and I'm making supply through what, sir? E-commerce operator. In simple words, you are purchasing something from Flipkart. You're all unregistered person, but you are purchasing something from Flipkart. Now, the person who has ordered and the person to whom the goods are sent are at two different locations. The person who has ordered is in, let us say, Karnataka. The person who is going to receive the goods, let us say, he is in Hyderabad. Now, the question is, what is the place of supply, sir? Karnataka, that is Bangalore, or Hyderabad? Lawmaker says, in such cases, when you are an unregistered person and your delivery address and billing address is different, then delivery address will be taken. Because location of, it does not matter where the supplier is located. Only what we care over here is where is the billing address and delivery address. So if the supplier is in Karnataka, then it will be CGST, SGST. If it supplier is in Karnataka and if shipping address is in Hyderabad, IGST. 10(1)D. Place of supply in case of installation and assembly. Installation and assembly means what? There are few products which are required to be installed at some location or assembled at some location. For those items which are required to be installed or assembled at some location, place of supply will be location where the installation is happening. Like for example, AC is installed at one location. Windmill will be installed at what location? Place of supply for AC windmill will be location where that installation is happening. 10(1)E. Supply on board a conveyance. Supply on board a conveyance means what, sir? The supply is made to a person when the goods are, meaning when you are on in a train or in a aeroplane. This is important. Supply on board a conveyance. Place of supply will be location where the goods are taken on board. Place of supply will be what, sir? Location where the goods are taken on board. Meaning, if the goods, you are in an aeroplane and you purchase some goods when you are in the aeroplane, what is the place of supply? Location where the goods were taken on board. Meaning, at which location was the goods loaded into the aeroplane. Goods were loaded in Hyderabad, place of supply is Hyderabad. It does not matter where you are boarding the aeroplane. It does not matter where you are boarding the aeroplane. Where are the goods loaded? Section 11 talks about place of supply of goods where either supplier or recipient, any one among them, is outside India. So either it can be import of goods or it can be export of goods. In case of import, it is location of importer. In case of export, it is place outside India. Section 12, important section, place of supply of services. See, anything related to services is important under GST. Section, because goods are movable, therefore you can know where whatever is happening. But in case of services, you will not be knowing. Now, if I give this water bottle to someone, we know that I have given the water bottle to someone. Correct? No. Whom I am giving the water bottle is also known. But I am teaching you. Can I say it is service? Now, how many of you are actually listening to me? How will I come to know? How many of you are actually understanding? How will I come to know? But if I give this water bottle to someone, I know that this person is actually getting the water bottle. So service is very important because you cannot identify whether the recipient has actually received it or not. Okay, section 12 subsection 2. Section 12 subsection 2. General rule. This is important. General rule. Generally for services, this is what is applicable. Generally for services, what is the place of supply, sir? If the supply is made to a registered person, place of supply is principal place of business of that registered person. Principal place of business of registered person means what, sir? Location where he has taken registration. Location where he has taken registration. If the supply is made to an unregistered person, I am making the supply to whom? That person who is not registered. Then check whether you have the address of that unregistered person or the address of that unregistered person is not available with you. If the address of that unregistered person is available with you, place of supply will be the address which is available with you. No, sir, address of that unregistered person is not available with me. In case address is not available, location of the supplier will be taken as place of supply. Location of supplier. Please note, if supply is made to a registered person, wherever the registration has been taken. If it is to an unregistered person, address is there, address is not there, location of supplier. Now, how do I present the answer on place of supply question, sir? So, place of supply question will be 5 marks question, 2 questions, or 6 marks question, 2 question, or 4 marks question, 2 question. They'll ask like this. Or normally it is 5 mark question, 2 questions, 2.5, 2.5, or 4 mark question, again 2 question, 2 marks, 2 marks. So, how should I answer this, sir? First, you should write the provision, then you should give your conclusion. As simple as that. Let us say Dilip is a chartered accountant who is filing income tax return of Infosys, who is a registered person. Now, this falls under section 12 subsection 2. If you know the section number, very good. But if you don't know the section number, what will I write, sir? I'll start from this point. As per section 12 subsection 2. Sir, I don't know the section number, no problem. As per the provisions related to place of supply under IGST law or IGST Act, as per the provisions related to place of supply under IGST Act. Don't write CGST over here. Goobism will happen in life. Okay. If you don't know that line also, you ignore. Where any services are supplied by, to a registered person, the place of supply shall be the principal place of business of such registered person. Place of supply will be what, sir? Principal place of business of such registered person. So in the present case, services are supplied to Infosys, who is a registered person in Bangalore. Therefore, the place of supply will be Bangalore. Aste, 2 marks question. Now, if it is 2.5 marks question, one more line you should add. Since the location of supplier and place of supply is in same state, it is an intra-state supply. Section 12 subsection 3. Services directly related to immobile property. Services directly related to immobile property. Sir, what do you mean by directly related to immobile property? Any services given in relation to this immobile property. Classroom, let us say. Example, renting, leasing, hiring, or construction of immobile property, interior decorator services, or architect services, renting of hotel rooms or boathouse, etc. They all fall under the category of immobile property. The place of supply in this case will be where immobile property is located or intended to be located. What is the place of supply, sir? Place where immobile property is located or intended to be located. Now, I am giving services with respect to an immobile property which is there in Mumbai. Place of supply will be Mumbai. A place of supply will be what, sir? Place where immobile property is located or intended to be located. Sir, what if immobile property is located? What if immobile property is located outside India? I am from Bangalore. I have a house in Chennai. I have given this house to on rent to someone who is in Delhi. What is the place of supply? Chennai. Why immobile properties in Chennai? I am asking Prestige Builder of Bangalore to construct a house for me at Mumbai. What is the place of supply? Mumbai. Now, I have what, sir? I have a land in Dubai. I ask Prestige Builder of Bangalore to construct a mini Burj Khalifa in Dubai for me. What is the place of supply? Bangalore, location of recipient. Now, if the immobile property is located at more than one place, 60% is in Karnataka, 40% is in Tamil Nadu, then proportionately each of that state. So, provided that where the supply and recipient both are located in taxable territory and the place of supply by applying the above provision is outside India, Then the place of supply will be location of recipient, provided for that where the immovable property is located at more than one state or union territory, then the place of supply shall be taken proportionately. Section 12(14). Section 12(14) talks about what, sir? 12(4), sorry. Performance-based services. Performance-based services means what? There are some services which are required to be performed. So for those services which are required to be performed, the place of supply will be wherever the performance is happening. Example, restaurant services. They are supposed to cook the food for you. Outdoor catering services, you are hiring someone for your marriage function, college inauguration function, etc. Personal grooming services, fitness services, health fitness services, beauty treatment services, or healthcare services. All these cases, for all these cases, the place of supply will be location where the services are performed. Location where the services are performed. Now, this is an exam question. Let us say the Mukesh Ambani is taking, Mukesh Ambani will ignore, new latest couple will take. Vijay Devarkonda is booking Udaipur Palace for his marriage purpose, and he asked Rameshwaram Cafe of Bangalore to supply dosas over there. Okay, so he's taking two services over here, renting of Udaipur Palace and taking dosa services from Rameshwaram Cafe. What is the place of supply? For renting, it will be Udaipur because location where immovable property is located or intended to be located. And for Rameshwaram Cafe, also it will be Udaipur because they will not prepare dosa over here and supply there. They'll prepare their own, Section 12, subsection 5. Section 12, subsection 5 talks about what, sir? Training and performance appraisal services. My services falls under this category because I am training you. Or performance appraisal services means many company will take services from company to evaluate the performance of their employees, to check whether the employee's salary should be increased or not increased, etc. For training and performance appraisal services, if the services are provided to a registered person, the place of supply will be principal place of business of registered person. But if the services are provided to an unregistered person, the place of supply will be location where the services are performed. What are we talking about? Training and performance appraisal services. If it is to a registered person, location of registered person. If it is to an unregistered person, location where it is performed. This is important section. And also organization of an event is there. That is important section. Now Dilip is giving training to employees of Hyderabad. Employees of Infosys who are located either Hyderabad, and I'm giving services to them at Hyderabad. What is the place of supply? Infosys is registered in Bangalore. Place of supply will be Bangalore. Training is given to students. You are all unregistered person. Place of supply will be wherever I am teaching you. For online students also, where I am teaching you, whoever is going to watch the recording on YouTube, where did I perform this? Here in Bangalore. Admission to an event. Admission to an event means they're talking about entry ticket price for going to any event. Admission to an event or an amusement park, location where the event is held or the place where the park is situated will be taken as place of supply. So if you go to Wonderla, place of supply is Wonderla. Now, CSK versus RCB match happened. When, sir? On 5th of April, there was a match between CSK and RCB. Now, this match was supposed to happen at Chepauk Stadium. It was supposed to happen in Chennai, but on 3rd of April, they told that there may be heavy rains in Chennai. Therefore, the match will happen in Bangalore Chinnaswamy Stadium. What is the place of supply? What is the place of supply? Bangalore Chinnaswamy Stadium will be taken as place of supply, location where the event is held, though it was supposed to happen at Chepauk. Then very important is organization of an event. Organization of an event means what, sir? You are hiring someone for conducting an event for you. For organization of an event, check whether services are provided to a registered person or the services are provided to an unregistered person. If the organization of an event services are provided to a registered person, place of supply will be principal place of business of such registered person. If it is given to an unregistered person, wherever the event is held. If it is given to a registered person, principal place of business of such registered person. If it is given to an unregistered person, location where the event is held. Proviso is also there, provided that where the supplier and the recipient both are located in taxable territory, and if the place of supply is outside India, then the place of supply will be location of recipient. And if the event is happening at more than one location, then the place of supply will be taken proportionately. Example, Priya Saris is a registered person in Bangalore. It is asking an event management company in Bangalore to conduct a sari exhibition in Delhi. What is the place of supply? Place of supply will be Bangalore because it is to a registered person. What if Priya Saris is not a registered person? Place of supply will be Delhi, location where event is happening. Priya Saris registered person asking an event management company in Bangalore to conduct a sari exhibition in Singapore. What is the place of supply? Bangalore. Why, sir? Because I am a registered person. Wherever I am registered. Now, what if I am not a registered person? Then also Bangalore. Why? Location of recipient. If the place of supply is coming as outside India, location of recipient. Maja is there. Priya Saris is in Bangalore. Event management company of Mumbai, and I am asking them to conduct sari exhibition at different states in India. What is the place of supply? Location is Priya Saris, Bangalore. Why, sir? I am a registered person. You are understanding how make mistakes you are going to make in life? No problem. Make mistake. What if I am not a registered person? Proportionately each of that state. Section 12, subsection 8. Transportation of passenger services. Transportation of passenger services. Sorry, transportation of goods services. If transportation of goods services are given to a registered person, principal place of business of such registered person will be taken as place of supply. Principal place of business of that registered person, meaning location where he is registered. If transportation of passenger is given to an unregistered person, location where he is embarking the conveyance, wherever you are getting into the aeroplane or a bus or a train. Sorry, this is goods. Embarking the conveyance is passenger. For goods, if the services are given to an unregistered person, location where he is handing over the goods for transportation. Where am I handing over the goods for transportation? Transportation of goods, if it is given to a registered person, principal place of business of such registered person. If it is given to an unregistered person, then location where the goods are handed over for transportation. Location where the goods are handed over for transportation. Transportation of passenger services. Transportation of passenger services. If it is given to a registered person, principal place of business of such registered person. If it is given to an unregistered person, location where the passenger is embarking the conveyance for continuous journey. Meaning passenger transportation means what, sir? I am traveling somewhere. If I am traveling somewhere, that is a passenger transportation services. Now these services are given to a registered person or to an unregistered person. If it is given to a registered person, wherever I am taken registration. If it is given to an unregistered person, then wherever I am boarding that particular bus or train or aeroplane, location where the passenger embarks the conveyance for continuous journey. Now, this provision is not applicable for right to passage. Right to passage means what? Metro card, bus pass. For those things, this provision is not applicable. For those things, this provision is not applicable. Then what is applicable, sir? Your general rule will be applicable. Section 12.10. Section 12.10 talks about services given on board a conveyance. Services given on board a conveyance means what? When you are on board, let us say you are in an aeroplane, and when you were in an aeroplane, you took the services. In such cases, place of supply will be first scheduled point of departure of that conveyance. What will be the place of supply? The first scheduled point of departure of conveyance. Let us say there is an aeroplane coming, starting its journey from Chennai, then going to Bangalore, Hyderabad, Mumbai, Delhi, Kolkata, and Jaipur. I boarded the flight at Bangalore. So for passenger transportation services, what is the place of supply? Bangalore, location where the passenger is embarking the conveyance. There were goods loaded into the ship in the aeroplane at Hyderabad. When the flight was somewhere in between Mumbai and Hyderabad, I purchased some wallet in the ship. What is the place of supply for this wallet? Hyderabad, location where they are loaded. And I took some movie watching services when the flight was somewhere between Kolkata and Jaipur. What is the place of supply for that? Movie watching services? Chennai, the first scheduled point of departure of conveyance. Not where I am boarding the conveyance, but where the conveyance started its journey. Telecommunication services, if it is a fixed line, location where it is fixed. Postpaid connection, then your billing address. Prepaid collection, location where the vouchers are sold, that is location of supplier. And online also is your billing address. If bank is giving services, bank or NBFC or any stock broker is giving services, if the location of recipient is available, location of recipient. If location of recipient is not available, location of supplier. And insurance services, if it is given to a registered person, principal place of business of registered person. Unregistered person, of course, they will have your address. Therefore, address as available with the supplier. Advertisement services will be as per rules. ASA Enterprises, supplier of sieving machine is located in Kota, Rajasthan, and registered person in the said state. It receives order from deep traders located in Jalandhar, Punjab, registered for the purpose of GST. The order is for supply of 100 sieving machines with an instruction to ship the sieving machine to Jyoti Sons located in Patiala, Punjab, and registered in the said state for the purpose of GST. Jyoti Sons is a customer of deep traders. Sieving machines were shipped in a lorry by Asha Enterprises. What is the place of supply? Think and answer. Of course, Punjab only, but Jalandhar, Punjab or Patiala, Punjab? Why Jalandhar, Punjab? Can I say this is bill to ship to cases, Karina, Nayantara, something like this is applicable? In this case, what is the place of supply, sir? What is the place of supply? Location of the person who is asking you to move the goods. So, principal place of business of that third person, which is Jalandhar, Punjab, deep traders. Determine the place of supply for following independent cases. Grand Gala Events, an event management company at Kolkata, organizes 2 award functions for Kalyan Jewelers of Chennai at New Delhi and Singapore. Okay, what is the place of supply for this? Chennai, because Kalyan Jewelers is registered person. Perfect Planners is hired by Dr. Kevin, who is an unregistered person, to plan and organize his son's wedding at Mumbai. What is the answer? Son's wedding I am hiring for. Personal purpose I am taking. No problem. Place of supply will be location where the event is held. What if the event is held at Malaysia? If the event is held at Malaysia, then Kochi. Why, sir? Location of recipient. Read the question carefully. Don't answer because you want to answer. Answer because they want to correct your paper. Mr. Murthy, an unregistered person and a resident of Pune, hires services of Sun Limited, an event management company in Delhi, for supply of event management company for organizing new product launch at Bangalore. Determine the place of supply of Sun Limited for services provided by Sun Limited. Why Bangalore, sir? See, the services are taken by an unregistered person. The place of supply will be location where the event is held. Would your answer be different if the product launch happened in Bangkok. If the product launch is happening in Bangkok, then the place of supply is Pune, where the event is, sorry, where the recipient is located. What would your answer be in case Murthy is registered person and product launch takes place in Bangalore and Bangkok? Wherever you are registered. Quick Deal Enterprises, Ahmednagar, Gujarat, opens a new branch at Hisar, Haryana. It purchases a building for office from Rouhani Builders, Hisar, along with pre-installed office furniture and fixture. Determine the place of supply for that pre-installed office furniture and fixture. What is the place of supply for that pre-installed office furniture and fixture? Hisar, wherever that location of goods at the time of delivery. Supra Event, an event management company at Delhi, organizes award function for Chirag Diamond Merchant at Mumbai, who is registered in UP. Determine the place of supply. UP, Varanasi, registered person. Will your answer be different if award function is organized at Mauritius instead of Mumbai? Still, because it is registered person, location of registered person. Question number 5, determine the place of supply. Sumit has permanent residence at Ahmedabad. He has a saving bank account with Ahmedabad branch of Safe and Sound Bank. On 1st April 2018, Sumit opened safe deposit locker with the Ahmedabad branch of Safe and Sound Bank. Sumit went to US for official work in December 2018 and has been residing there since then. Sumit contends that since he is not a resident during the year, in terms of income tax law, GST cannot be levied on locker charges. Is he correct? So his point is that he opened an account in Ahmedabad, but now he is staying outside India. Now he is not a resident of India. Now, because I am not a resident of India, should I pay tax in India is the question. Now, please note, for this particular services, what is the place of supply? Bank only, meaning location of supply will be taken as place of supply. X Limited agrees to provide technical inspection and certification services in respect of newly developed product of an overseas firm for newly launched motorbike which has to meet emission standards in different states and countries. The overseas firm has provided its newly developed product to X Limited for the purpose of testing. The testing is carried out at Delhi, 15%, Assam, 35%, and 50% it is in Sweden. What is this, by the way? Now, please note, where is the service provider from? X Limited is the service provider. Who is the service recipient over here? Overseas firm, meaning someone who is located outside India. Correct? No. Now, the services are provided in India, different places in India. Place of supply shall be taken proportionately, different states in India. Movie on demand is provided as onboard entertainment during Kolkata Delhi leg of Kolkata Delhi leg means that person is going from Kolkata to Delhi of Bangkok Kolkata Delhi flight. So what is the place of supply for that movie services which I am taking? Bangkok. First schedule point of departure. Nitin, an unregistered person, resides at Rewa, Madhya Pradesh, books two-way journey ticket from Prayagraj Uttar Pradesh to Jaipur, Rajasthan on 6th September and back. He leaves Prayagraj on 11th September in the morning flight and landed in Jaipur on the same day. He leaves Jaipur on 15th September in a late night flight and lands Prayagraj next day. What is the place of supply? Because he's unregistered person, from Prayagraj to Jaipur, it is Prayagraj. From Jaipur to Prayagraj, it is Jaipur. Rimjim Private Limited, located at Lucknow, purchases a manufacturing machine from Manav Steel, located in Jaipur, installed in factory of Haridwar. Can I say Haridwar? Mr. Joy, an unregistered person of Kolkata, West Bengal, sends courier through Kolkata, West Bengal based Mohan cargo to his sister at Mumbai. Can I say location where he is handing over that particular goods, which is Kolkata, West Bengal? An unregistered person, Papan from Faridabad, travels by Air India from Pune to Delhi and gets travel insurance in Pune. What is the place of supply for insurance? What is the place of supply? Papan is from Hyderabad. Papan from Faridabad travels, yeah. Place of supply is Faridabad because they will have your address. LP Refineries gets a contract to Bansal Limited to supply machine which is required to be assembled in Gujarat. So Kutch, Gujarat is the place of supply. An event management company provides services for organizing. So event we have done. We'll discuss other things after a short break of 10th, 11:30 we'll meet. Next topic is exemption. Exemption will discuss important points. Exemption section 11 talks about exemption. What are the different things which are exempt under GST law is given in section 11. Goods exempt from tax are not applicable for us, but services. So some of the goods, let us just see. Unbranded items like unbranded maida, unbranded atta, unbranded besan, unpacked food grains, milk, curd, lassi, fresh vegetables are some of the items which are exempt. Fish is exempt, potato, grapes, milk, tender coconut, live animals, except horses, puja samagri, Indian national flag, newspaper, they are all exempt items. Now, the services which are exempt, they are all exempt as per notification number 12/2017. Okay, services are all exempt as per section 12/2017. Which are the services which are exempt, sir? The services which are exempt are services given by entity registered under section 12W of Income Tax Act or section 12AB of Income Tax Act by way of charitable activities. Services given by entity registered under section 12W of Income Tax Act or entity registered under section 12AB of Income Tax Act by way of charitable activities. Charitable activity means what, sir? Papa. Papa means activities related to public health, advancement of religion, spirituality, yoga, advancement of educational program, or preservation of environment. Okay. Public health with respect to what? With respect to caring and counseling terminally ill person or person with severe and physical or mental disability, person addicted to dependence forming substance such as narcotic, drugs, alcohol, etc. Public awareness on preventive health, family planning, or prevention of HIV. Advancement of spirituality, religion, yoga. Advancement of educational program or skill development program relating to abandoned children, orphaned children, and homeless children, physically or mentally abused or traumatized persons, prisoners, and persons over the age of 65 years who are residing in rural area. Persons over the age of 65 years. Over the age of 65 years means person whose age is more than 65 and who are residing where, sir? In rural area. And preservation of environment, including watersheds, forest, wildlife, etc. Services by way of training and coaching and recreational activity relating to art and culture. If art and culture training is given by individual, then it is exempt. If the training is with respect to sports, then the training should be given by whom, sir? If training is with respect to sports, the training should be given by charitable entities. Services by way of training and coaching in recreational activity relating to art and culture by an individual, and sports by an entity registered under section 12W of Income Tax Act. Services by an old age home which is run by central government, state government, or an entity registered under section 12W of Income Tax Act, to whom they are giving the services to their own resident. Who are the residents of these companies, sir? The residents of these companies are people above the age of 60 years. People above the age of what, sir? 60 years. People above the age of 60 years. And the consideration for the services should be up to 25,000 per month per member, provided that the consideration charge is inclusive of charges for boarding, lodging, maintenance, etc. Services by a person by way of conduct of religious ceremony or renting of portions of religious premises which are meant for general public, which is owned and managed by an entity registered under section 12W of Income Tax or Act, or section 12AB of Income Tax Act, or section 1023C of Income Tax Act, or section 1023 BBA of Income Tax Act. However, nothing contained in this entry shall be applicable if the rooms are 1,000 rupees or more, if rooms are rented for 1,000 rupees or more, if community hall, the premises or open area Kanana Mantapa are rented for 10,000 rupees or more per day, if renting of shops or other places is for rupees 10,000 or more per month. Services by way of services provided by specified organization. In this, what is important? These limits are very important. Wherever there is a limit, there are very high chances that they will ask question in the examination. If there is a limit, there are very high chances that they will ask question in the examination with respect to that particular limit. Services by an old age home which is run by central government, state government, or an entity registered under section 12W of Income Tax Act to its residents. To whom are they giving the services? To its residents, against a consideration up to 25,000 rupees per month per member, provided that the consideration charged should be inclusive of boarding, lodging, and maintenance. Services by a person by way of conduct of religious ceremony or renting of persons of religious premises which is meant for general public, which is owned and managed by an entity registered. And so these points are important, and here this point is important. Now, arranging yoga camps. So some people, what they do is they arrange yoga camps. Yoga camps means where you have to go learn yoga, stay over there, sleep over there, etc. So in that cases, for arrangement of yoga camps, they will charge a single money for that entire thing. They'll charge some single money. Whether, let us say, for example, like we have ICU batch, you stay here, eat here, study here, just like that. Yoga camps will be conducted where you have to learn yoga over there only. You have to stay there only. You have to eat food also over there only. Whether this yoga camp, whatever money they are charging, whether it will fall under the category of advancement of religion, spirituality, yoga, lawmaker says yes, they will fall under the category of advancement of spirituality, religion, yoga. Well, sir, if when will they be treated as? If the money is for, if the main activity is what, sir? If the principal, you remember principal supply and composite supply, if the principal or primary and predominant activity or objective is that advancement of spirituality, religion, yoga, then only they will be treated as, what, sir? Exempt. If the main activity or predominant activity is accommodation, then they will not be exempt. Then services related to what? Services relating to cultivation of plants and rearing of all life form of animals except rearing of horses. Why are you cultivating plants or rearing all life form of animals? For food, fiber, fuel, raw material, or any other similar product. Or services relating to agricultural produce by way of agricultural operation directly related to production of agricultural produce, including cultivation, harvesting, threshing, plant protection or testing, supply of farm labor, then process carried out at agricultural farm which do not alter the essential characteristics of agricultural produce, renting or leasing of agro machinery or vacate land, loading, unloading, packaging, warehousing of agricultural produce, services by way of agriculture produce marketing committee given by whom, sir? Commission agent for sale or purchase of agricultural produce. Now, please note important, this services of fumigation of warehouse of agriculture produce is no more there. That is no more there. Services of fumigation of warehouse of agriculture produce is now taxable. No more there means now it is taxable. Now, agriculture produce marketing committee or any commission agent, if he gives services, if commission agent if commission agent or any APMC is giving the services, then that services should be completely exempt. For sale and purchase of agricultural produce, please note rice is not an agricultural produce. Services by way of loading, unloading, packaging and warehousing of rice is exempt, though rice is not an agricultural produce. Please note, if rice would have been agricultural produce, it would have been covered over here only. Carrying out intermediate production process as a job work in relation to cultivation of plants and rearing of all life form of animals, except rearing of horses for food, fiber, fuel, raw material, or any other similar product. Then artificial insemination of livestock is also exempt. Preconditioning, pre-cooling, ripening, waxing, retail packing of fruits and vegetables. If they do not change the essential characteristics of agricultural produce, they are all exempt, like stickering, packing properly, etc. Healthcare services is exempt if healthcare services are given by clinical establishment, if healthcare services are given by clinical establishment, if healthcare services are given by authorized medical practitioner, which is nothing but doctors. Clinical establishment is hospital, authorized medical practitioner is doctors, and paramedics means what, sir? Paramedics means the nursing staffs who are there. So healthcare services given by these people will be completely exempt. However, nothing contained in this entry shall apply to services provided by clinical establishment by way of providing rooms on rent having room charges more than 5,000 rupees. So if any healthcare services are given, if any healthcare services are given by clinical establishment, authorized medical practitioner and paramedics, that will be exempt. However, if that clinical establishment, authorized medical practitioner and paramedics is giving rooms on rent, if it is giving rooms on rent and the room charges are more than 5,000 rupees, then it will be taxable. However, if those rooms are ICU, CCU, ICCU, NICU, then it will be exempt. Services provided by way of transportation of patient in an ambulance other than those specified above. So transportation of patient services given by any person, that will be exempt. Now, what do you mean by healthcare services? Healthcare services means DTC of double iPad to recognize system of medicine in India. DTC of double iPad means what, sir? Diagnosis, treatment and care of illness, injury, pregnancy, abnormality, deformity. Diagnosis, treatment and care of illness, injury, pregnancy, abnormality and deformity through any recognized system of medicine in India. What are recognized system of medicine in India? Why Anusha? Why Anusha means yoga, Ayurveda, naturopathy, Unani, Siddha, homeopathy and allopathy. Now, healthcare services shall not include hair transplantation, cosmetic surgery, plastic surgery, except where that cosmetic surgery, plastic surgery, or hair transplantation has been undertaken to restore or reconstruct an anatomy or a function of a body which is affected due to congenital defects or development abnormality, injury, or trauma. Services given, see, if the hospital is giving shops on rent, auditorium on rent, etc., they will all be taxable and GST will be applicable. Advertisement space they are giving, etc. Services given by veterinary clinic in relation to healthcare of animals is also, animals or birds is also exempt. services provided by rehabilitation professionals regarding services given by rehabilitation professionals who are recognized under Rehabilitation Council of India Act 1992 by way of rehabilitation, therapy, or counseling and such other activity as covered by the said act at medical establishment, educational institution, rehabilitation centers established by central government, state government, union territory, or entity registered under section 12W of Income Tax Act. Now, rooms are rented to patient. If the room charges are more than 5,000, it is taxable. Senior doctor giving services to the hospital, whatever services are given by senior doctor to the hospital is also exempt. Senior doctor are giving services to the hospital, services given by senior doctor to the hospital is exempt. In that hospital will charge the money from customers, meaning from the patient, and keep some amount with themselves and pay balance amount to doctors. Let us say there is a hospital and there is a doctor. This doctor is not an employee of the hospital. If he is an employee, then services given by employer to the employer is exempt. This doctor is not an employee. If you are not an employee, that means services of employer, that negative list is not applicable to you. This doctor is giving healthcare services to hospital. Is this services exempt, sir? Yes, it is exempt. Now, hospital charges money from the patient. It, let us say 10,000 hospital is charging, hospital keeps 2,000 rupees and balance 8,000 rupees hospital is giving to the doctor. Whether this particular activity which is done by the hospital retaining 2,000 rupees, whether that retention of 2,000 rupees, whether it is exempt or not, lawmaker says yes, that retention money is also exempt. See, senior doctors or consultants or technicians are hired by hospitals independently and no direct contact with the patients will be there. Whether they are employees or not, their services will be treated as healthcare services. Whether that doctor is an employee or not an employee, it does not matter. His services will be treated as healthcare services and therefore exempt. Food supplied to inpatient is exempt. Outpatient or visitor is taxable. A non-health care services given by hospitals like renting of shops, auditorium, displaying advertisement, they are all taxable. Art or IVF facilities also falling under the definition of healthcare services, therefore that will also be exempt. Educational services. So education service is also an important services. Services provided by an educational institution to student, faculty, staff is exempt. Services given by educational institution. What services? They are not mentioning that. So any services given by educational institution to its student, faculty, staff is exempt. Any services given by educational institution to student, faculty, staff is exempt. And services provided by an educational institution by way of conduct of entrance examination. Services given by educational institution by way of conduct of entrance examination, for which consideration they are charging in the form of entrance fee, that is also exempt. Even if that entrance examination is not conducted for whom, sir? Even if that entrance examination is not conducted for student, faculty, staff. Now, what do you mean by educational institution? Educational institution means institution providing services by way of preschool education or education up to higher secondary school or equivalent, education as a part of curriculum for obtaining a qualification which is recognized by law in India, then education as a part of approved vocational courses. A preschool, education institution means what, sir? From nursery to 12th standard, then degree colleges, then any institution which is providing approved vocational educational courses. Services provided by an educational institution to its student, faculty, staff, or services provided by education institution for conduct of entrance examination. Now, what is important is services given by educational institution to its student, faculty, staff, it does not matter what services it is. Any services given by educational institution to student, faculty, staff is exempt. Any services given by educational institution to its student, faculty, staff, any type of services given by educational institution to student, faculty, staff is exempt. But when you are taking services, when the educational institution is taking services, only 5 services are exempt. What are these 5 services? Services of transportation of student, faculty, staff, services of catering, including midday meal scheme sponsored by central government, state government, or a union territory, or security services, cleaning services, housekeeping services performed in such educational institution, services relating to admission to or conduct of examination by such institution, supply of online educational journals or periodicals. Sir, repeat, sir. If educational institution is taking services, see, educational institution is giving services, any services given to student, faculty, staff is exempt. If it is giving services, then by way of conduct of entrance test, that is also exempt. But when you are taking services, when educational institution is taking services, then only 5 services. Which are these 5 services? Chote services. Chote means catering, housekeeping, online education journals, transportation, and examination. Okay, only these services will be exempt. Now here also there is some important point. When you are giving services to educational institution, they say, however, nothing contained in entry number 1, 2, and 3 of item B, whatever is there in entry number 1, 2, 3 of item B shall apply to educational institution other than institution providing services by way of preschool up to higher secondary school, meaning 1, 2, 3. These things will be applicable only for nursery up to what, sir? 12th standard. It will not be applicable to degree college. It will not be applicable to approved vocational institution. Which will not be applicable? Transportation of student, faculty, staff, catering services, and what, sir? Security services. This will not be applicable to more than 12th standard, that is degree colleges, etc., and approved vocational courses. Services of right to admission to, then second point says, nothing contained in item number 5, which is online educational journal, shall not apply to nursery up to 12th standard, and it shall not apply to approved vocational courses, meaning online educational journal will be applicable only for degree colleges. Then affiliation services provided by CBSC or central boards or state boards to schools established and controlled or owned by central government, state government, union territory, local authority will be exempt. Please note, this is important. And I think there is this 88, is that uploaded on YouTube? That 88 questions, something like this. It is uploaded. Huh. Now you see in this, there is one questions also uploaded on YouTube called as, now these questions, whatever 88 questions on GST, 88 GST questions, etc. Now in these questions I have discussed, there is one question, beautiful question asked on this point. See, CBSE, like you would have seen in many schools and colleges, which says what, sir? There are many schools and colleges which says I am affiliated to state board, I am affiliated to central board, something like this you would have seen. Correct? No. Now affiliation services are given. Who is giving the affiliation services? Affiliation services are given. Who is giving affiliation services? State board, central board, etc. They are all giving affiliation services. Now the affiliation services given by central boards and state boards, they are exempt only if the services are given to any school which is established by or controlled by central government, state government, union territory, local authority, or government entity. So if affiliation services are given to any school which is controlled by these people, then only it will be exempt. If it is not controlled by these people, then it will always be taxable. Okay, affiliation services given to the schools which are run by only these people will be exempt. Government. So if affiliation services are given to me, I am running a private school, it will be taxable. Next, passenger transportation services. Passenger transportation services are there. Passenger transportation services. If the passenger is transporting through railway in any class other than AC class or AC class or first class. If the passenger is getting transported in any class other than AC class or first class, then exemption is available. If passenger is getting transported in AC class, taxable. First class, taxable. If the passenger is getting transported in metro, monorail, tramway, which is normally used for public transportation, then also it is exempt. If you're traveling in sleeper class, general class, exempt. If you're traveling in AC, 2-tier AC, 3-tier AC, whatever tier AC, etc., it is always taxable. If you're traveling in metro, monorail, tramway, exempt. If the passenger is transporting, passenger means you and me, we are traveling in road. If you are if you're traveling by road transportation, it can be either stage carriage or it can be contract carriage. Stage carriage means the bus which stops at every bus stop. Correct? That is called as stage carriage. Contract carriage means bus will start the journey at one place and end its journey at the end place. Correct? Like Bangalore to Mysore, non-stop buses are there. They are contract carriage. Bangalore to Mysore, there are buses which will stop at every district in between. They are stage carriage. So if it is a contract carriage or a stage carriage, it does not matter whether it is contract carriage or stage carriage. If it is AC contract carriage and AC stage carriage, it is taxable. If it is non-AC contract carriage and non-AC stage carriage, it is exempt. For others, like Ola, Uber, etc., it is always taxable. Auto rickshaws, roadside we have e-rickshaws, we have metered cab, metered taxis or metered cab we have, that is all exempt. Then if you are taking any vehicle, whether it is contract carriage or stage carriage, for what, sir? Conducting any tour or for your tourism purpose, you are taking any vehicle on rent, then it will always be taxable. Then if you are traveling by air, normal it is taxable. Normally, if you are traveling by air, it is taxable. However, normally if you are traveling by aeroplane, it is always taxable. However, any passenger who is embarking from or terminating to northeastern states, who is embarking from or terminating to, embarking means coming from, terminating to means going to northeastern state, then he will get exemption. Now, water transportation, if it is inland waterways, then it is always exempt. If it is public transportation in a vessel, vessel means ship. Inland waterways means from one place in India to another place in India, transporting through, meaning like for example, river will be there in between. Correct? No, from one this part of the river, that part of river, that is inland waterways. And vessel means you're traveling in a ship. If that vessel is for public transport, then exempt. If it is for tourism purpose, then it will be taxable. Transportation of passenger, transportation in case of goods, passenger transportation, goods transportation, important. You may get, I mean, please note, exemption, they will not ask a specific question on one single exemption. They'll merge it with 2-3 exemptions and one single question they'll create. And every attempt question will come. Exemption is one of the easiest chapter. Very big chapter, I understand, but easy chapter because you don't have to by heart anything. You just have to know whether something is exempt or not. If it is exempt, write that it is exempt as per notification number 12/2017. That is the only thing which you have to write over here. Services by way of transportation of goods by road, except the services of GTA or courier agency. So if you're transporting any goods by road, if you're transporting any goods by road, it will be exempt. However, if you're transporting the goods by GTA or through courier agency, then it will be taxable. If you're transporting goods through inland waterways, then also it will be exempt. Then services of transportation of services by way of transportation by railway or vessel from one place in India to another place in India of following goods. If you're transporting through what, sir? Railway, or if you're transporting through vessel. What are you transporting through railway or vessel? You're transporting through railway or vessel only these goods. Which goods, sir? Dr. Namo. If you're transporting through train or you're transporting through ship, What are you transporting through train or what are you transporting through ship, sir? Dr. Namo. Dr. Namo means defense material, relief material, N for newspaper, A for agricultural produce, M for milk, salt, food grain, and O for organic manure. So if you're transporting goods, which goods? Dr. Namo by railway or vessel, then it will be exempt. Now you are doing transportation through GTA. Normally, if you transport anything through GTA, it will be taxable. But if you're transporting through GTA, what are you transporting through GTA? You are transporting through GTA. What's a Dr. Namo? Then it will be exempt. Defense material, relief material, then newspaper, agricultural produce, milk, salt, food grains, and organic manure. Then it will be exempt. Then second exemption is when GTA is giving services provided by GTA to an unregistered person. Services are given by whom, sir? A GTA is giving services to an unregistered person, including unregistered casual taxable person other than following recipient, meaning following people, even if they are unregistered, GTA services will be taxable. See, normally GTA giving services that will be exempt. Normally GTA giving services will be exempt except these people. Except where the GT is giving services to a factory, a society, cooperative society, body, corporate, partnership firm, or casual taxable person. These people, if GT is giving services to these people, then it will be taxable and taxable under reverse charge. Then, if a GT is giving services to central government, state government, union territory, local authority who has taken registration only for the purpose of deducting TDS and not making any taxable supply, then also exemption will be applicable. Services by way of giving on hire. I am giving on rent. This is also something which they normally test. Okay. So services by way of giving on hire. Giving on hire means I am giving on rent. What am I giving on rent? Services by way of giving on hire to a state transport undertaking a motor vehicle which is meant for carrying more than 12 passengers. So if you are giving on hire, what, sir? To a state transport undertaking, if you are giving on hire a motor vehicle which is meant for carrying more than 12 passengers, then it will be exempt. Services by way of giving on hire to a local authority, you are giving electrically operated vehicle which is meant for carrying more than 12 passengers. So if you are giving on hire to whom? Local authority. What are you giving? Electrically operated vehicle, EV, you are giving, which is meant for carrying more than 12 passengers. Services by way of giving on hire to a goods transport agency, a means for transportation of goods. You are giving to a goods transport agency. What are you giving to a goods transport agency? A vehicle which can be used for transportation of goods. Services by way of giving on hire, please note this is something which they test. Normally these 2 points they test. Services by way of giving on hire a motor vehicle for transportation of student, faculty, staff. So you are giving a motor vehicle. Why are you giving the motor vehicle? For transportation of student, faculty, staff. To whom are you giving that motor vehicle? To a person who is involved in the business of transportation of student, faculty, staff to an educational institution which is providing services by way of preschool education up to higher secondary school. Then advocate related services. Now advocate, normal, if you are an advocate or you are an arbitral tribunal, for both of you it is same, advocate or arbitral tribunal. You can be an individual advocate or a partnership firm of advocate, or you are an arbitral tribunal. For you, what is the provision telling, sir? If an advocate gives services to another advocate, exempt. Advocate is giving services to a individual, then also exempt. Advocate is giving services to a government, then it is exempt. Advocate is giving services to business entity, then aggregate turnover of business entity is more than or equal to the registration limit, it is taxable, and it is taxable under reverse charge. If the aggregate turnover of the business entity is less than the limit for taking registration under GST law, then it will be exempt. However, if senior advocate is giving services to another advocate, that also will be taxable. Senior advocate giving services to individual, exempt. Senior advocate giving services to government, that is also exempt. Senior advocate giving services to business entity. Aggregate turnover of business entity is more than the limit for taking registration under GST law, taxable under reverse charge, less than the limit, exempt. Entertainment related services, this is important services. Entertainment related services, services given by an artist by way of performing folk or classical forms of art relating to music, dance, or theater. So either folk or classical forms of art relating to any music, dance, or theater. If the consideration charged for such services is not more than 1,50,000 rupees. Condition is what, sir? The consideration for such performance should not be more than 1,50,000 rupees. Services by way of admission to. Now see, sometimes they'll give you the question that the consideration was less than 1.5 lakhs, but you are a brand ambassador. How will they frame the question is, let us say Dilip is a classical dancer. He is now a brand ambassador of this company for which he is charging 1.2 lakhs. Is it exempt, sir? No. When they say specifically for the performance, then only exemption will apply. Services by way of admission to museum, national park, wildlife sanctuary, tiger reserve, or zoo. Services by way of admission to protected monuments so declared under the Ancient Monument and Archaeological Site Remains Act. So if you are going admission to means what, sir? They are talking about entry ticket for protected monuments, museum, or wildlife sanctuary, etc. Services by way of right to admission to. If you are going to any circus, dance, theatrical performance, or award function, concert, pageant, or recognized sporting event, or non-recognized sporting event, or planetarium, and if the charges are not more than 500 rupees per person, then it will be exempt. Now, sir, if it is more than 500 rupees, if it is more than 1,50,000 rupees, how much is taxable, sir? Fully taxable. Similarly, any gift given by employee to the employer, if the value of the gift is not exceeding 50,000, in such cases, if it exceeds 50,000, full amount is taxable. Services given by services provided to recognized sports body by an individual as a player, referee, umpire, coach, or a team manager for participation in sporting event which is organized by a recognized sports body, or services given to recognized sports body by another recognized sports body, they are all exempt. Services given by an individual as a selector or a commentator or a caterer or technical expert, they are all taxable. Services given by a player to a franchisee which is not a recognized sports body is also taxable. Sponsorship services, okay. Construction services. Construction services, this is important services. What is the services telling? Services by way of renting of residential dwelling. Services by way of renting of residential dwelling for residential use, except where the residential dwelling is rented to a registered person. Services of renting of residential dwelling for residential use, except where it is rented to a registered person. Now, if you are renting a residential dwelling for residential use to a registered person who is using it for his own personal purpose, then also exemption will be applicable. Please note, if residential dwelling is rented to a registered person, normally it is taxable. But if that registered person has taken it for his own self personal use, etc., then exemption will apply. Okay, services given by unincorporated body or non-profit organization to its own members up to an amount of 7,500 rupees per month per member for sourcing of goods and services from third person for common use of its members of housing society or residential complex. So we have something called as this, what is this called as, sir? Unincorporated body or non-profit organization. We have this, we have apartments, we have apartment will form an association for themselves. The owners of apartment will come together and form an association. Now that association, the owners of the apartment, that association which is there, which will give the services to its own members, for which the association is going to charge something called as membership fee, maintenance charges they'll charge. If the maintenance charges is up to 7,500 per month per member, then it will be exempt. Then, this is also important, first point. Services given by way of extending deposits, loans, or advances insofar as the consideration is represented by way of interest or discount. Services by way of extending means giving. Services by way of extending deposits, loans, or advances insofar as the consideration is represented by way of interest or discount, or intersay sale and purchase of foreign currency among bank or among authorized dealers of foreign exchange or among banks and such dealers. Intersay means among themselves. See, extending interest income is written as what, sir? Services by way of extending deposits, loans, or advances insofar as the consideration is represented by way of interest or discount. However, interest under credit card services will always be taxable. Foreign exchange, intersay among themselves, sale and purchase of foreign currency by foreign exchange dealer or bank and such dealers is exempt. Services provided by banking company to basic saving bank deposit account holder under Pradhan Mantri Jan Dhan Yojana. Okay, so if you are opening an account under Pradhan Mantri Jan Dhan Yojana, and if the bank is giving services to those people who have opened the account under basic saving bank account deposit, then their services will be exempt. Services by following persons in respective capacity: business facilitator to banking company in rural area, or any agent of business facilitator to the business facilitator for banks in rural area, or business facilitator to an insurance company in rural area. Now, with respect to bank, there are few points which are very important because bank is normally tested in examination. If any service charge or processing fees or documentation charges or inspection charges, etc., are recovered in processing the loan or overdraft, then such amount is taxable. So if they take from you loan processing charges, etc., then it will be taxable. Then credit card issue charges, interest on delayed payment of credit card, all those things also will be taxable. Penal interest means interest on interest for delay in repayment of loan, that will not be taxable because interest on interest or penal interest is also treated as interest only, therefore it is not taxable. Forward contracts and future contracts, we have forward contracts and future contracts, which is nothing but securities, and securities are neither treated as goods or services, therefore no GST is applicable. Reverse and reverse repo rates, reverse repo rates are charged by RBI for loan given and loan taken. Because it is an interest, it is exempt. Transaction of sale transfer of debt, if the sale and transfer of debt or assignment of debt is falling under the category of actionable claims, then it is covered under negative list, therefore it is not subject to GST. Interest on finance lease is taxable under GST law. Interest on finance lease. Fee charged for card settlement ka fees will be taxable. Services provided by government, if services are provided by government, see wherever you see 243G, 243W, it is always exempt. Services provided by government, what services? Any services given by government. Government means central government, state government, union territory, local authority, excluding following services: excluding services given by Department of Post and Ministry of Indian Railway, meaning that will be taxable. Services given by Department of Post will be taxable. Services given by Ministry of Indian Railway will be taxable. Services in relation to aircraft and vessel will be taxable. Services of transportation of goods and transportation of persons is taxable. Any services other than the services covered under A to C, if it is given to business entity, any services other than Department of Post, Indian Railway, aircraft, vessel, transportation of good, transportation of person, If any services other than those services are given to a business entity, then they will always be taxable. Services provided by central government, state government, union territory to any business entity. See, normally services given to a business entity is taxable and taxable under reverse charge. But if the business entity's aggregate turnover is up to such amount in the preceding financial year, which makes it eligible for exemption, then it is not taxable. Meaning, if the business entity's turnover is less than 10 lakh, 20 lakhs, 40 lakhs, then the services given by government to business entity is not taxable under reverse charge. Services given by government to government, services provided by central government, state government, union territory, local authority, where the consideration for the services is not more than 5,000 rupees. If the consideration for these services are not more than 5,000 rupees, then also it will be exempt. Old age room. So if normally services given by Indian Railway is taxable, however, if Indian Railway gives services by way of sale of platform ticket, clock room services, facility of retiring room, or battery operated vehicles, etc., then they will all be exempt. Services provided to government. If you are giving services to government, if it is pure services given to government as per 243G, 243W, it will be exempt. And if 25% of the total value of services also goods ka value, then also it will be exempt. Anyways, that is not that important. Fair price shop. Fair price shop means ration shop services are exempt. Now this is important. There is an amendment over here. Enter number 72. Services provided to central government, state government, union territory under a training program where total 50% of the expenditure. Where what, sir? 50% of the expenditure is borne by central government, state government, union territory, local authority. Where what, sir? 50% of the expenditure is borne by central government, state government, union territory, local authority. Then that services will be exempt. Services provided to central government, state government, union territory, where 50% of the expenditure is borne by central government, state government. Services given by the specified bodies, insurance services, general insurance services, skill development services, other services. Services by way of transfer of going concern as a whole or independent part thereof. So if you're transferring a going concern business, if you're transferring what's a going concern business, then it will be exempt whether entire business is transferred or any part of business is transferred. Supply of services associated with transit cargo to Nepal and Bhutan will be exempt. Services by way of access to road and bridge on payment of toll charges will be exempt. Supply of accommodation services having value less than 20,000 rupees per person per month, where the accommodation is not more than 90 days. Transmission and distribution of electricity by electricity transmission and distribution utility exempt. Now there is a new point over here. Supply of services by way of providing metering equipment on rent, testing meters, transformers, releasing electricity connections, shifting of meter service lines, issuing duplicate bills which are incidental or ancillary to supply of transmission or distribution of electricity provided by electricity transmission and distribution utility to their consumer is exempt. Then services provided by an incubity on the bond and services by a grant access. Services provided by services of public library. Services of what, sir? Public library by way of lending of books, publications, or any other knowledge enhancing material. Services by organizer to any person in respect of business exhibition which is held outside India. Services given by foreign diplomatic mission, or services provided by a public services provided by way of public conveniences such as provision of facility of bathroom, washroom, laboratories, urinal, or toilets, etc. if you are importing, if RBI, so this is IGST ka services. There are 2-3 points which are important over here. Services received from a provider of services located outside India, meaning non-taxable territory, meaning you are importing the services. So who is importing the services? Services are imported by central government, state government, union territory, or any individual for any purpose other than commerce, industry, or any business purpose. It should not be for this purpose. Entity registered under Section 12W of Income Tax Act is importing services from outside India for charitable purpose. Services by way of online educational journal or periodicals to educational institution other than institution providing services by way of preschool education or education up to higher secondary school, or to a person located in non-taxable territory. Services provided by a tour operator or a foreign tourist for tour which is conducted outside India. So if you are a foreign tourist who is taking tour operator services for which the tour is also outside India, that services are exempt. These are exemption related points. Now ITC I'll discuss after break, because we'll solve questions on ITC. I'll discuss registration, all the chota topics first. Registration. Section 22 talks about the person who is liable for registration. Important section. Section 22(1) is important. Who is liable for registration? Supplier of goods or services or both shall be liable for registration. Where, sir? In that state or union territory from where he is making taxable supplies. When, sir? If his aggregate turnover exceeds 20 lakh rupees. So any person who is supplying goods or services, which goods and services? Those goods and services which are taxable. Any person who is supplying taxable goods and services should obtain registration in that state or union territory from where he is making taxable supplies. When, sir? If his aggregate turnover exceeds 20 lakh rupees. And this limit will be 10 lakh for 4 special category states. Which are those 4 special category states? Make my trip to Nagaland, Manipur, Mizoram, Tripura, and Nagaland. Now, please note, if you have a place of business in special category states, the limit of special category states will apply to whole of India. Like, for example, I have Priya sarees in Karnataka, Kerala, Tamil Nadu, and Andhra Pradesh. My aggregate turnover is 51 lakhs. Can I say it is more than 20 lakhs? Therefore, I should take registration. The question is, where should I take registration? Lawmaker says you should take registration in all the 4 states. I have Priya sarees in Karnataka and Priya X in Tamil Nadu. Exempt supply, and one place I'm making taxable supplies. Now the question is, should I take registration? Yes, I should take registration. Where should I take registration, sir? The place where I'm making taxable supply, which is Karnataka. Now, there is a notification called as notification number 10/2000. Notification number 10/2019. Notification number 10/2019 says, notification number 10/2019 says that if you are a person who is exclusively supplying goods, if you are supplying only goods, then for you, the aggregate turnover limit will be 40 lakh. You don't have to take registration if your turnover is up to 40 lakh rupees. So exemption from taking registration for certain suppliers. Any person who is exclusively engaged in supply of goods and whose aggregate turnover does not exceed 40 lakh rupees. And if your aggregate turnover does not exceed 40 lakh rupees, you will be exempted from taking registration. There are some conditions applicable over here. What are the conditions? The person who is required to, meaning in these cases, this notification shall not apply. See, normally, if I'm exclusively supplying goods and if my turnover is not more than 40 lakhs, I will be exempted from taking registration. If I'm exclusively supplying goods and my turnover is not more than 40 lakhs. If I'm exclusively supplying goods and my turnover is not more than 40 lakhs, then I will be exempted from taking registration. I will be exempted from taking registration. However, in following cases, this notification will not apply to me. When if I'm liable for compulsory registration under section 24, then I will have to compulsory take registration. If I am supplying notified goods, if I'm supplying pan masala, aerated water, tobacco products, ice cream, bricks, roofing tiles, etc. If I'm supplying in notified states, if I'm supplying which places, sir? If I'm supplying in num must time pass. Num must time pass means what, sir? Nagaland, Uttarakhand, Manipur, Meghalaya, Mizoram, Arunachal Pradesh, Sikkim, Tripura, Telangana, and Puducherry. Or if I have taken for voluntary registration, then you can keep your registration if you wish to keep. Then section 23 talks about persons who are not liable for registration. Who are the persons who are not liable for registration, sir? A person who is making only exempt supply, a person who is making only non-taxable supplies, an agriculturist who is supplying produce out of cultivation of land. And these are the other persons who are not liable for registration. The person who is making interstate taxable supply of services up to 10 lakh, 20 lakh exemption they can claim. Then the person who is making interstate taxable supply, a person who is making supply which are taxable under reverse charge. The person who is supplying those items which are taxable under reverse charge, he does not have to take registration. Person making supply of services through e-commerce operator under section 52. So if you are supplying through an e-commerce operator, what you are supplying through e-commerce operator, services you are supplying through e-commerce operator, then up to 10 lakh, 20 lakh limit is applicable to you. Please note, these are applicable only for services. Person making interstate supply of notified handicrafted goods up to 10 lakh, 20 lakh, you don't have to take registration. Now there is something called as compulsory registration. These people have to take registration registry law compulsorily. There is no limit applicable to them. A person who is making interstate taxable supply of goods. If you are supplying goods to another state, a person making a casual taxable person, non-resident taxable person, person who is liable to pay tax under reverse charge, and e-commerce operator who is liable to pay tax under section 9 subsection 5, and e-commerce operator who is required to collect taxes under 52. Any person who is supplying through an e-commerce operator who is collecting tax under section 52. Then input service distributor, a person who is required to deduct taxes under section 51. OIDAR service provider, every person who is an online, every person supplying online money gaming services from a place located outside India. Any person who is making taxable supplies on behalf of another person, that is agent. Procedure of registration, first point, very important. Section 25 subsection 1 says, if you are a person who is liable for registration, then you should apply for registration within 30 days of becoming liable. You should apply for registration when, sir? Within 30 days of becoming liable, you should apply for registration. But if you are a casual taxable person or a non-resident taxable person, you should apply for registration 5 days prior to commencement of your business. Normally, I will give you single registration for the entire state or union territory. One single registration will be given for entire state or union territory. But if you have place of business at multiple locations, then you can apply for multiple registration. And very important point is, where if you have a place of business in SEZ location, if you have a place of business in SEZ location, for that SEZ location, compulsory you should apply for separate registration. Then section 25 subsection 3 says, if you are a person who is not liable for registration, but still if you want to apply for registration, you can definitely apply for registration. A person can apply for registration on voluntary basis even though he is not liable for registration. 25.4 and 25.5 talks about deemed listing person, which we discussed in supply topic. 25(6) says for taking registration under GST law, one of the important document is your PAN. So PAN is required for taking registration. But if you want to take registration as a TDS or TCS person, then instead of PAN, you should give your TAN. TAN means tax deduction and collection account number. And Aadhaar authentication is also important. For non-resident taxable person, you have to you have to give some other document for taking registration. Suo motu registration by proper officer. If you don't apply for registration, and if you are liable for registration, officer will give the registration to you by himself, suo motu, and that registration will be temporary registration. You will have to tell him why you should not be granted the registration. A registered person gets GSTN upon registration. United Nation agencies, multilateral financial institutions, embassies, and consult, they will get UIN. So once I am registered, I will get something called as I will get something called as GSTN. But if you are an United Nation organization or a multilateral organization, you will get UIN instead of GSTN. Registration will be granted or rejected only after due verification, meaning they are going to do proper verification. Only after proper verification, they are going to either grant you the registration or they are going to give the registration. Procedure for registration is there. Then deemed registration, if you are registered under CGST Act, that means you are also registered under SGST Act or UTGST Act. Effective date of registration, very important. Many times they ask this question in the examination. Effective date of registration means what, sir? The date from which your from which your registration will be valid from. The date on which from which your registration will be valid from is called as effective date of registration. Now, I have applied for registration because I was liable for registration or because I wanted to apply it voluntarily. So that will tell you what is your effective date of registration. So effective date of registration, if you applied for registration because you were liable for registration under section 22 or section 24, because I was liable for registration. Now, when you are liable for registration, you should apply for registration within 30 days of liable. If you have applied for registration within 30 days of becoming liable, then effective date of registration shall be the date when you were liable for registration. If you applied for registration after 30 days of becoming liable, then your effective date of registration shall be the date when the registration is actually granted to you. Then if you have applied for voluntary registration, then for you also effective date of registration will be date of grant of registration. You know what is effective date of registration? The date from which your registration will be valid from. If you applied for registration because you were liable, and if you apply within 30 days, then the date when you were liable will be taken as effective date of registration. But no, sir, I applied for registration because I wanted to take registration by myself on voluntarily basis, then date of grant of registration. If I apply after 30 days, date of grant of registration. One more important point is furnishing bank account details. The taxpayer has an option to give bank account details after obtaining registration within. Now, please note, once I am registered under GST law, I have to submit bank account details, and that bank account details are required to be given by me within 30 days from the date of grant of registration or within the due date of furnishing the details of outward supply, whichever is earlier. Within 30 days of obtaining registration or within the date of furnishing your GSTR 1, meaning return of outward supply is nothing but GSTR 1, whichever is earlier. Then section 27 talks about special provisions which are applicable to a casual taxable person and a non-resident taxable person. A casual taxable person and a non-resident taxable person has to take registration under GST law compulsorily, and they should apply for registration 5 days prior to commencement of business, and their registration will be valid for a number of days they apply or 90 days, whichever is less or earlier. Now, they have an option for extending their registration. The registration can be extended only once, and that extension can also be applied either for number of days you want or 90 days, whichever is earlier. Now, casual taxable person and non-resident taxable person, they have to pay tax in advance. They have to pay tax in advance when they are applying for registration on the basis of their estimated turnover for the validity period. Whatever is their turnover for the validity period, based on that estimated turnover, we don't know, therefore you pay it on estimated basis. Now, in case of extension of registration, for that extended period also, I should pay the taxes in advance. Section 28 talks about amendment in registration. Amendment means what, sir? You are making a change. Any amendment made in the registration shall be intimated within 15 days of that change. So whatever change you want to make, you please tell me about the changes. Within how many days you should tell me about the changes? Within 15 days of that particular change. Now, amendments can be in core fields or amendments can be in non-core fields. If amendments is in core field means trade name, principal place of business, owner's details, then it should be approved by the proper officer, and that amendment will be made within 15 days. Amendment in non-core field means goods or services, authorized signatory changes, etc. Then there is no approval needed for this. That amendment will be applicable from the date when you make the changes. Cancellation of registration, one more important point. Cancellation of registration. Registration can be cancelled either by the proper officer himself or by the legal heirs of the registered person. When will the registration be cancelled by proper officer or legal heirs of registered person? If the business is discontinued, or there is a change in constitution of business, or where the taxable person is no longer liable for registration. Then registration will be cancelled by proper officer, that is GST officer, where the registration has been obtained by way of fraud, misstatement, suppression of facts, or registration the registered person has. Please note, in these cases, registration will be cancelled only by the GST officer, proper officer. When, sir? If registration is obtained by fraud, misstatement, suppression of facts, a registered person has contravened the provisions of the GST law. Person has obtained registration on voluntary basis and has not commenced the business within 6 months. You have taken registration on voluntary basis, but you have not yet started the business, or where returns are not filed by the registered person for a continuous period of 6 months or continuously for 2 quarters. Now, whenever you cancel your registration, you have to pay some taxes to government. Where at the time of cancellation of registration, if there is any inputs or capital goods available on which input tax credit has been availed by you. So at the time when you are cancelling registration, if you have any inputs or capital goods on which you have taken input tax credit, then at the time of cancellation, you should pay the taxes on that. Either you reverse the input tax credit if you have any on those inputs and capital goods, and or if you don't have input tax credit available with you, then you pay the taxes on those inputs and capital goods. Now on inputs, you have to pay on inputs, you should pay or reverse the ITC which is availed by you on them. On capital goods, you compute the ITC to be reversed or the tax to be paid as per section 18 subsection 6, which we'll see. Revocation of cancellation. Revocation of cancellation means what, sir? Officer has cancelled your registration. Now you are asking the officer to take back his cancellation order. If you ask the officer to take back his cancellation order, that means it is revocation of cancellation. Where registration has been cancelled by the proper officer, the taxpayer can apply for revocation. Revocation shall be done within 90 days from the date of cancellation order, which can be extended for a further period of 90 days, meaning total period should be 180 days. Now, theory question can come this point. What are the contraventions? Now, officer can cancel your registration if you don't follow the law. So what are those points, sir? Contravention which leads to cancellation of registration. If the registered person does not conduct the business from the place where is declared by him in the registration certificate. If he issues the invoice without supply of goods or services. If you violate the provisions relating to section 171. If you violate the provisions of Rule 10A, furnishing the bank account details. If you avail input tax credit in violation of section 16. If you furnish the details of outward supply in GSTR 1 under section 31 in excess of outward supply details declared in 3B, meaning whatever you showed in GSTR 1 and whatever you are showing in GSTR 3B is not matching. You have not filed your GSTR 3B for 6 months continuously. You have not filed your GSTR 3B if you are filing on quarterly basis for continuously 2 quarters. Suspension of registration. Now, registration can either be cancelled or suspended. When will it be suspended, sir? Suspension means what, sir? When you apply for cancellation, till the time it is approved by the officer, your registration is suspended. Where registered person has applied for cancellation and his registration has been suspended, then his registration will be suspended from the date of submission of application for cancellation till the date of completion of cancellation proceedings, or from the date from which cancellation is sought till the date of completion of cancellation proceedings, whichever is later. Now, once your registration is suspended, you cannot make any taxable supplies and you cannot file your returns. The next topic is tax invoice, debit note, credit note. Due date to issue invoice is already checked. Or now different types of documents which are there under GST law. We have tax invoice. Tax invoice is required to be issued by the supplier who is making taxable supplies. And number of copies of tax invoice to be issued is, in case of goods 3 copies, in case of services 2 copies, 3 copies supplier, recipient and transporter, 2 copies. One is for the supplier, one is for the recipient. Contents of tax invoice. Tax invoice should have name, address and GST number of the supplier, name, address, GST number of the recipient, then document number, that is invoice number, date of invoice, description of goods and services which you are dealing in, HSN code, quantity of the goods and services, unique quantity code, whether it is meters, pieces, kgs, liters, rate per unit, value of supply, breakup of the tax amount, total invoice value, signature, whether the tax is payable under reverse charge, and QR code details if it is an e-invoice. Now, invoice number is very important. Invoice number is a very important document. Invoice number should be unique for every financial year. It should be consecutively serially numbered, not exceeding 16 characteristics. It can contain, invoice number can contain what, sir? Invoice number can contain alphabets. It can be alphanumeric, but it should not contain any special characteristics except slash and dash, forward slash and hyphen or dash. Now, HSN code is one of the important content of invoice. What is HSN code point telling, sir? HSN means harmonized system of nomenclature. It is an 8-digit code used for classification of goods and services. HSN code in tax invoice. If your aggregate turnover is up to 5 crores, you should mention 4-digit HSN code for B2B supplies compulsorily, and for B2C supplies, it is optional. If you want to mention, you please mention. And if your aggregate turnover is more than 5 crores, whether it is B2B supply or B2C supply, compulsory 6-digit HSN code should be mentioned. No tax invoice is required to be given by you if the supply is made by you to an unregistered person, the value of the supply is less than 200, an unregistered person does not require any invoice. Instead of issuing separate tax invoice to above unregistered person, a single consolidated tax invoice can be issued for supplies made to all the above unregistered persons. No signature is required to be given if it is a computer generated invoice. These are 2 important points. Invoice in case of cessation of services. Cessation of services means the services which are getting provided are getting ceased, are getting stopped in between. If any contract of service is ceased or terminated before its completion, invoice should be issued at the time of cessation to the extent of service provided till cessation. You are supposed to issue the invoice to the extent of services which is provided till it was ceased. RCM invoice, and it should be issued at what time, sir? When the services are ceased. RCM invoice is required to be given by recipient within 30 days of receipt of goods or services. Where a registered person receives any goods or services which are taxable under section 9(3) or 9(4), from an unregistered person, then he shall issue an invoice within 30 days of receipt of such goods or services or both. E-invoicing. What is e-invoicing, sir? E-invoicing is a system. What type of system? E-invoicing is a system in which B2B invoices generated by a taxpayer are authenticated electronically by GSTN for further use on common portal. So whatever B2B invoices you are giving, they are required to be authenticated electronically on the GST by the GSTN. GSTN, this is INL, for further use of the common portal. What happens under invoicing? Under invoicing system, an identification number called as invoice reference number is will be issued against every invoice by the invoicing portal. So whatever invoice you register on the invoicing portal, they will give something called as invoice registration number, and this invoicing portal is managed by GSTN. E-invoice is required to be generated by a registered person. Who should generate? A registered person whose aggregate turnover in any of the financial year starting from financial year 17-18 exceeds 5 crore rupees. So if you are a registered person whose aggregate turnover exceeds 5 crore rupees, you should generate invoice in any of the year starting from 17-18. Now, who are exempt from e-invoicing, sir? No e-invoicing is required to be done by following people. Who are these? Government CPICs. Government CPICs means government department and local authority, cinema halls and multiplexes, then passenger transport service provider, insurance company, banking companies and financial institutions, then GTA transporting goods by road, SEZ units. For SEZ developer, e-invoicing provisions are applicable. Then we have a document called as revised tax invoice. Revised tax invoice means what, sir? Revised tax invoice. Name says I am a revised tax invoice. Revised tax invoice means whatever invoice is issued, you are revising that? No. Revised tax invoice means from the date when you are liable for registration till the date of grant of registration, whatever sales are made by you, for those sales you give a document called as revised tax invoice. Revised tax invoice is a document issued for supplies made from effective date of registration till the date of grant of registration. It is to be issued within 1 month from the date of grant of registration. Bill of supply. A revised tax invoice should be issued within 1 month from the date of grant of registration. Bill of supply. It is issued by a person who is making exempt supplies or a person who is paying tax under section 10, meaning a composition dealer has to issue this document called as revised tax invoice. Or who has to issue revised tax invoice? A person who is paying tax under section 10, composition dealer. Then where a registered person makes both taxable as well as exempt supply, he should issue a single document called as invoice cum bill of supply. Then we have a document called as receipt voucher. Receipt voucher, a registered person on receipt of goods or service, a registered person on receipt of any advance. If you receive any advance, you should give a document called as receipt voucher. And if you don't know the rate of GST at the time of receipt of advance, take the rate of GST to be equal to 18%. If you don't know the nature of supply at the time of receipt of advance, then assume that nature of supply to be equal to interstate supply. Then you have to give something called as refund voucher. Refund voucher, when will you give refund voucher? Where any goods, where advance which is received by you, you are giving it back. Where any advance is received for supply of goods or services or both, and subsequently no supply is made and no tax invoice has been issued, then the registered person shall issue a refund voucher to refund that money. Payment voucher. Registered person who receives supply taxable under reverse charge At the time when he is making the payment to the supplier, he shall issue a document called as payment voucher. Then you have something called as delivery challan. Important document, delivery challan. Now, delivery challan means if you are delivering the goods to someone for as a proof that the goods are moving, you will give a document called as delivery challan. When is delivery challan required to be given by you? When you are supplying liquid gas where the quantity at the time of removal is from the place of business is not known, or where you are transporting goods for the purpose of job work, or your transportation of goods for any reasons other than supply, or for such other supplies as may be notified by the government. Then a delivery challan is required to be issued. Whatever delivery challan you are issuing, they should be serially numbered. They should have they should be serially numbered, not exceeding 16 characteristics. They should be in one. They can be in one or multiple series, and they should be issued at the time of removal of the goods. It should be issued in triplicates, meaning in 3 copies you should issue. Tax invoice shall be issued after delivery of the goods if the goods are transported are for the purpose of supply. Goods transported. Now, this is important question. Goods transported in semi knockdown or completely knockdown conditions, or lots or batches. If the goods are transported by you in knockdown condition, completely knockdown condition, or in batch or lots, what is the process you have to follow? The supplier shall issue a complete invoice before dispatch of first consignment. So before the first consignment is getting dispatched, you have to issue the complete invoice, meaning you should generate the complete invoice. The supplier shall issue a delivery challan for each and subsequent consignment, giving reference to the invoice. Give a delivery challan for each and every subsequent consignment, and also give the reference to your delivery challan. The copies of corresponding delivery challan shall accompany with each and every consignment, along with duly certified copy of invoice. So every consignment which is going, along with that consignment, every consignment which is going, you should give the copy of delivery challan. Delivery challan should be there along with certified copy of original invoice, and the original invoice will go along with the last consignment. GTA shall for supply of services in respect of transportation of goods. Now GTA can issue a document called as what, sir? Consignment note. Now whatever consignment note you are issuing, it has some important points. So what are those important points which are required to be there? Contents of consignment note. Gross vehicle weight of consignment should be there. Name of the consignor and name of the consignee should be there. Registration number of the goods carried should be there. Details of goods carried should be there. Details of place of dispatch and place of origin should be there. GSTN of person who is liable to pay the taxes, whether GTA or the consignor or the consignee. Other information such as may prescribed in rule number 4. Credit note is required to be issued to reduce the value of invoice which is already issued by you. If you want to decrease the value of invoice already issued by you, then credit note is required to be issued. Now, secondary discount you cannot give credit note. Now this they have already asked in the previous attempt, so high chances of asking is this and delivery challan. Or this attempt you may expect MCQ questions from this chapter. Accounts and records, EVA bill, theory question can come. Okay, credit note. Credit note is required to be issued by you to decrease the value of invoice which is already issued. So if the taxable value declared in the invoice is more than the actual value, to reduce the value, now you give a credit note. Tax rate declared in the invoice is more than the actual tax rate, to reduce the tax rate, give a credit note. Quantity received is less than the quantity declared in the invoice, therefore give a, to reduce the quantity, give a credit note. Quality of the goods and services, whatever goods and services are supplied by you, the quality of those goods and services are deficient because the quality is not good, give a credit note. Where the goods and services are returned, where sales return is happening. Time limit for giving declaring the credit note. Credit note should be declared in the month in which that credit note is issued, but not later than. Maximum time limit you have is 30th November following the end of the financial year or date of filing annual return for that financial year, whichever is earlier. Debit note is required to be given by you to increase the value of invoice which is already issued by you. So where the taxable value declared in the invoice is less than the actual value, tax rate declared in the invoice is less than the actual tax rate, quantity received is more than the quantity declared in the invoice. Time limit to declare debit note. Whatever debit note is issued by you, that debit note is required to be declared in the same month in which the debit note was issued. Apart from that, two more theory questions which they can ask is QR code and dynamic QR code ka question. Now QR code, quick response code, dynamic QR code are two different things. QR code means what, sir? In the context of e-invoicing, QR code is a digitally signed document returned by invoice registration portal after the supplier successfully reports the invoice. So once you upload your invoice, the portal will give you a digitally signed document. That digitally signed document given by the portal, that document is called as what, sir? QR code. That document is called as QR code. Functionality, what is the use of QR code? It enables the quick review, validation, and access of invoice via handheld devices. So you will have devices in your hand, you can scan directly and get the invoice details. It is specifically designed to assist tax officers in verifying authenticity of tax invoice offline, such as during road checks where internet connectivity is very limited. What are the information which will be embedded in this what are the information which will be embedded in this QR code? QR code contains unique 64 characteristic invoice reference number hash. Other encoded parameters will include, what are the parameters over here? GST number of supplier and the recipient, invoice ka number and invoice ka date, total value of the invoice, taxable value as well as tax amount, number of line items and HSN codes of those goods, and date of IRN generation. Invoice date and IRN date may be two different dates. Dynamic QR code, that is used for payment. You would have seen if you order through Swiggy, Zomato, etc. When you scan, automatically you don't have to enter the amount directly. They'll only show the amount. You just have to click proceed. You go to DMart or you go to Reliance Fresh. You just have to scan and automatically amount will come. Normally, other shops where we go, these shops and all, we have to enter the amount. But some cases amounts is not coming. That is because they follow concept of dynamic QR code. Dynamic QR code is a distinct feature. Dynamic QR code is distinct from e-invoicing QR code. So these are both not same. Dynamic QR code is distinct from e-invoicing QR code and it applies only for B2C supplies made by very large taxpayers. Applicability, it is mandatory for registered persons whose aggregate turnover in any preceding financial year starting from 17-18 exceeds 500 crores. Purpose, the primary goal is to encourage digital payment. Unlike static QR code where customer must manually enter the payment amount, dynamic QR code automatically includes payment details, allowing customer to just scan and pay. Special scenarios, UIN holders, invoices issued to persons with unique identity number are treated as B2C invoices. Therefore, that invoice should include dynamic QR code. Exemption, who are not required to issue. See, exemption is same, government C picks. This requirement does not apply to insurance company, banking company, financial institutions, GTA, passenger transport service provider, and cinema halls and multiplexes. Export do not require dynamic QR code because they are treated as B2B supplies and are already covered by standard e-invoicing QR code. Mandatory parameters which are required to be there in dynamic QR code. To be valid and functional for digital payment, the code must capture the following information: supplier GST number, supplier UPI ID, then payee's bank account number, then IFSC code, invoice number, invoice date, total value of invoice, and GST cut details, including the breakup of GST. Other things we'll discuss after a short break. So we'll wait at what time, sir? Tell me, today, last day, so your charts. If fast, you should tell. Anyone has any question, by the way, before we go for a break? Yes, sir.
So if a company is in parts, then it also pays GST. So is it like it's only two the same offer?
No, e-invoicing is a separate mechanism only. And once you upload e-invoice, that e-invoice is only for B2B supplies. No, GSTR1, you will upload everything. B2B, B2C, everything will be uploaded. And whatever e-invoice you have done, all that information will automatically come in GSTR. It will go to GSTR1, but GSTR1 too you should file separately, because you may have B2C sales also. No? No, the dynamic QR code is only for payment purpose. This is not for filing purpose. This is only for making sure that you, instead of entering the amount, you just scan and pay. This is not at all related to return filing. This information will come in return. This will not go anywhere. It is only for you to pay the money. Yeah, but that option will not be enabled. You can, in the portal, it is not something which GST portal will give you. It is just your system. You have to make your systems like that, so that anyone can do. Okay, yeah. Let us meet at 2. Okay, we'll meet at 2 o'clock. Online students will meet at 2 o'clock. Welcome back, students. Welcome back, online students. I hope I am audible. Also, the screen is visible. Input tax credit. Section 16 to section 18 are the different sections which you are going to study in this chapter. Input tax credit. Input tax credit means what, sir? Very easy, simple definition. Input tax credit means credit of input tax. Credit of input tax means what, sir? Input tax credit. Input tax credit means credit of input tax, and input tax means the taxes which is paid by you on your inward supply or on your purchases. Whatever taxes you are paying on your inward supply or on your purchases, that is called as input tax. And it includes the taxes which is paid by you under reverse charge. It includes the taxes which is paid by you on import of goods under customs law, but it shall not include the taxes paid under section 10 composition scheme. Now, what are the sources of input tax? The different sources of input tax are: inward supply is normally the source of input tax. Inward supply means purchases is normally the source of input tax. Now, the purchases can be of goods or it can be of services. Now, purchase of goods is further divided into 2 categories: capital goods and inputs. And services is further divided into no category, which is input service only. A capital goods means those goods which are capitalized in the books of accounts. Now, please note, if you are doing business, whatever purchases you are making on your business, if it is for your business purpose and if it is not restricted, there are some cases, some purchases you cannot take input tax rate. Apart from those 2 categories, any other type of purchases you make, and if you are a registered person, you can claim input tax rate. Of course, there are some conditions. Now, purchases can be of goods or services. Many people have a question that, sir, can I take input tax credit on capital goods also? Of course, yes, there is no restriction as such under GST law that you cannot take input tax rate on capital goods. Input tax rate can be taken by you on capital goods as well. Input tax rate can be taken by you on capital goods. What are capital goods? Capital goods are those goods which are capitalized by in your books of accounts. Those goods which you are capitalizing in your books of accounts are called as capital goods. And inputs means what, sir? Inputs means any goods other than capital goods. And what are input services? Input services means the services which you are taking for your business purpose. Section 16 talks about eligibility and condition. Who is eligible to take input tax rate and what are the conditions for taking input tax rate? Section 16 subsection 1 says every registered person shall be eligible to avail input tax rate on goods or services or both which is used by him or intended to be used by him in the course of furtherance of business. So if you are a registered person, whatever goods or services, whether it is capital goods, normal goods, or input services, which you are using or you have an intention to use it in a future date for your business purpose, on those things you can claim input tax credit. So what is important over here is you being a registered person and those goods and services should be used or you should have an intention to use them in the course of furtherance of business. Section 16 subsection 2 talks about conditions. What are the conditions for claiming input tax rate? Section 16 subsection 2 says he should have the possession of tax invoice, debit note and other tax paying document. Meaning the person who wants to take input tax rate, he should actually have the possession. He should have the possession of what? He should have the possession of tax invoice, debit note and any other tax paying document. Whatever type of tax paying document you have, that tax paying document ka possession should be there with you. Meaning you should actually have that document with you. Then he should have actually received the goods or services. Meaning the person who wants to take input tax rate, that person should have actually received the goods or services. Meaning if I have not received the goods and services, in that case, just based on the invoice, can I take input tax rate? Answer is no. Except in bill to ship to cases, there is one exception. What is that exception telling? Where on the direction of registered person, if the goods are delivered to a recipient, then it shall be deemed that the registered person has received the goods once it is received by the recipient. Meaning, if on my direction, if I tell my supplier to send the goods to someone else, then it will be deemed that I have received the goods once that goods are received by that someone else. Supplier should have paid the taxes. Meaning, if I want to take input tax rate, I should make sure that the person from whom I'm purchasing the goods, he should have paid the taxes. And there are some rules with respect to that, which helps you identify whether he has paid the taxes or not. And he means a registered person who wants to take input tax rate, he should have filed the returns. If I want to take input tax rate, then I should make sure that I have filed my returns. I have filed my returns because how will government come to know that I made purchases? I'll have to tell them. How will I tell them? By filing of my returns. Then section 16 subsection 2. Registered person can avail input tax rate if the details of supply are furnished by the supplier in his GSTR1 and the same has been communicated to the registered person. If I want to claim input tax rate, I can claim input tax rate. When can I claim input tax rate? If the details of supply which is made by me is furnished by, if the details of supply which is made to me, not by me, the details of supply which is made to me is furnished by my supplier in his GSTR1 and the same is coming in my GSTR2B. And the details so communicated should not be restricted. Now this condition now becomes very important condition. What is the condition telling? See, we have two types of return. One is called as GSTR1 and one is called as GSTR3B. GSTR1 is the return for your outward supply or sales. GSTR3B is the return for your input tax credit and paying the taxes. Now GSTR1 is required to be filed by 11th of next month and GSTR3B is required to be filed by 20th of next month. Now, if I make a sale for seller, whatever sales a seller makes, with respect to those sales, I should file a return called as GSTR1. Whenever I make a sale, for that sale, I should file a return called as GSTR1. And the due date of filing that return is what, sir? 11th of next month. By next month, 11th, I should file. By next month, 11th, I should file. Now, once I file my GSTR1, that information will go to the recipient in his GSTR2A and GSTR2B. Now, sir, whether it will go in 2A or 2B, sir, it will go in both GSTR2A as well as 2B. GSTR2A will give the details of purchases made by you in that particular month. And GSTR2B will give the details of purchases made by you during the month for which the supplier has filed GSTR 1 within the due date. Please note, we have GSTR 2A and 2B. 2A gives the information of all the purchases made by me in a month. 2B gives that information of the purchases which is made by me during that particular month for which supplier has filed the return GST within the due date. Please note, I should file the return. I have sold the goods to you. I should file the return. Which return? GSTR 1. If I file GSTR 1 within the due date, then that information will come to you in your GSTR 2A as well as GSTR 2B. You can take ITC only when the information is coming in 2B. Now, there are two possibilities. GSTR 2A will give the details of all the purchases made by me in a particular month, and GSTR 2B will give the details of purchases made by me during a month for which the supplier has filed his GSTR 1 within the due date. Now, GSTR 1 for April 25. Let us say for April 25, I filed my GSTR 1 within the due date. The information will be reflected in GSTR 2A and GSTR 2B of April month. Please note, if I file within the due date, it will come to you in your GSTR 2A and GSTR 2B of April month only. If I file it after the due date, then it will come in GSTR 2A of April month, whereas GSTR 2B of the filing month, the month in which return is filed. ITC can be claimed only when the information is coming in GSTR 2B. That is very important. Now, there are some provisos. If the goods are received by me in lots or installment, if I receive the goods in installment, ITC can be claimed by me only when I receive the last installment, provided further that if the recipient, that is, if the registered person does not make the payment to the supplier within 180 days from the date of invoice. If I don't make the payment to the supplier within 180 days from the date of invoice, then ITC availed by such registered person should be reversed along with 18% interest per annum, provided also that ITC can be availed once the payment is made. Now please note, the calculation of interest is very important. I made a purchase on 1st of April and for which I claimed the input tax rate on 15th of March. While filing my GSTR 3B, I claimed the input tax rate. Now I should make the payment within 180 days, which is by 27th of September. But I did not make the payment on 27th of September. I made the payment on 20th of December, meaning after 180 days. Therefore, as per law, I should reverse the input tax rate. I reversed my input tax rate on 20th of October. Now, ITC should be reversed along with interest they say. Interest should be calculated from which date to which date? Interest should be calculated from the date of taking the credit till the date of reversal of credit. For this period which is there, I should pay interest. Interest shall be calculated from the date of taking ITC till the date of reversal of ITC. So 12,000 rupees into 18% is the rate of interest I have to pay into number of days. Number of days will be from the date of taking the credit till the date of reversal. People will make mistake over here. So from the date of taking the credit till the date of reversal of credit. Now, once I make the payment, after making the payment, I can avail the ITC again. Then, another important point to be noted over here is, if I make any part payment, then for that particular part, whatever is paid by me, for that I need not reversal the ITC. Why? Because part payment is already made. Only for that part for which payment is not made, ITC should be reversed. Now, normally I should make the payment within 180 days. If I don't make the payment within 180 days, whatever ITC is claimed by me, I should reverse. But this 180 days condition is not applicable in some cases. When if I take ITC based on the supply which are attracting reverse charge. On supply which are attracting reverse charge, ITC can be taken only when you pay the taxes to the government. Meaning, because the recipient has to pay the taxes under reverse charge, I will pay the taxes, I can claim the ITC. In case of deemed supply or negative list of deemed supply or supply without consideration. When it is a supply without consideration, what consideration, to whom will I pay that consideration? Okay, if it is a supply without consideration, deemed supply or supply without consideration as per section 71C, read with schedule number 1. expenses incurred by the recipient which the supplier had to incur, or there is some expenditure which is incurred by whom, sir? Which is incurred by the recipient, which who had to incur, which the supplier had to incur. So if there is any expenses which who had to incur, supplier had to incur, but which is incurred by recipient. Now why will I pay the recipient that amount, sir? So that amount need not be paid. Section 16 subsection 3, ITC on capital goods. ITC on capital goods is also important. Can I take input tax rate on capital goods? Of course, yes, I can take input tax rate on capital goods, provided I should have not claimed depreciation on the tax component of capital goods. I can claim ITC on capital goods provided I should have not claimed the depreciation on tax component of capital goods. Uh, Then the last date to claim input tax rate. Now, if there is any invoice for which I have missed to take claim input tax rate, on that invoice, can I claim the ITC now? Lawmaker says the last date to claim input tax rate. If you have forgotten to take input tax rate on any invoice, then the last date to claim input tax credit is 30th November of the next financial year, or the date of filing annual return for that financial year, whichever is earlier. You should claim the input tax rate maximum by what date, sir? 30th of November of next financial year, or the date of filing annual return for that financial year, whichever is earlier. 30th November of next financial year, or date of filing annual return for that financial year, whichever is earlier. Now, date of filing annual return and due date of filing annual return is two different things. They say that date of filing annual return or 30th November, whichever is earlier. Now, date of filing means the date on which the annual return is actually filed by you. Due date of filing annual return means what is the last date to file the annual return. The due date to file annual return is 31st of December. Now, there are other tax paying document based on which you can claim input tax rate. Which are those other tax paying document based on which you can claim input tax rate, sir? Tax invoice under section 31, RCM invoice under section 31 subsection 3, bill of entry in case of import of goods, debit note under section 34, or input service distributor ka invoice. Compulsory information on tax paying document to avail ITC. So if you want to avail ITC, what are those compulsory information based on which you can claim input tax rate? Name of the supplier, name of the recipient, meaning these things should be there in that document, only then you can claim input tax rate. What are those things, sir? Name of the supplier, name of the recipient, GST number of the supplier, GST number of the recipient, description of goods and services, details of taxes which is charged by you, place of supply details in case of interstate supply, total value of goods and breakup of tax which is charged. Now rule 180 days condition. Now there is one more new rule added which is called as rule number 37A. Now this rule number 37A, they have not yet asked any question on this rule, but it is one kind of weird rule which is there. Now what is this rule telling? Let us say I made some purchases from Karina. If I purchase from Karina, on that purchases I can claim input tax rate. I made a purchase of 10 lakh rupees, GST amount was 1,20,000. Now Karina has filed her GSTR 1. The GSTR1 is filed by Karina. On whatever GSTR1 Karina has filed, that information will come to me in GSTR2A and GSTR2B. I, as a Priya Saris, can take input tax rate if all the conditions are satisfied by me. Now, all the conditions are satisfied by me. Please note, she has filed her return, and that amount is also getting reflected in GSTR1 and GSTR2A and GSTR2B. And I have filed my income tax return. Whatever conditions were required to be satisfied by me, all those conditions are also satisfied. All those conditions are satisfied. Now, what Karina did, you know? Karina has filed her GSTR1, but Karina did not file her GSTR3B. What does this mean? Meaning, Karina filed her GSTR1 means Karina filed her GSTR1 means she has told that she has made the sales, but Karina did not pay the tax on that particular sale. Now, rule number 37A says if Karina does not make the payment to the government within 30th September of next financial year, then Priya Saris should reverse the ITC availed by it on the invoices from Karina. And this reversal should be done within the due date specified in section 16.4. What does this mean? If Karina does not pay the taxes to the government in her GSTR 3B, then me, who has taken input tax credit, even though all the conditions are satisfied, I will have to reverse the ITC. I will have to reverse the input tax credit. This is rule 37A. Rule 37A, if the supplier does not make the payment to the government within 30th September of next financial year, then the recipient, registered person, should reverse the ITC availed by it on the invoices from that supplier within the due date specified under section 16.4. Section 16.6. Section 16.6 is a newly added section which says, if your registration is cancelled by the officer by due to any reason and subsequently officer is only revoking your cancellation, then you can claim input tax credit on those invoices. What is this point telling, sir? Where the registration of the registered person has been cancelled by the proper officer and subsequently revoked by any order, and subsequently the proper officer is only revoking that by any order, then if there is any unavailed ITC for that period of suspension, then ITC on those invoices debit note issued before suspension period can be availed within the time limit under 16.4 or within 30 days from the date of revocation of cancellation, whichever is later. So if your registration was cancelled and subsequently the officer only revoked that registration, now you can claim input tax rate. Now you can claim input tax rate on what you can claim input tax rate. You can now claim input tax rate on whatever invoices on which you did not claim input tax rate. You can claim this ITC within 16.4 ka time limit. 16.4 is 30th November of date of filing annual return. But if this time limit has expired, then also no problem. You can still claim the ITC within what date, sir? Within 30 days from the date of order of revocation. Whatever revocation order he has given, no, within 30 days from that particular date. Section 17. Section 17 talks about apportionment of input tax credit and block credit. Apportionment means apportioning, distributing, apportionment of input tax credit and block credit. Section 17 subsection 1 says, if there is any goods or services or both, if there is any goods or services or both, which is used, which is partly used for business purpose and partly for any purpose other than business, then ITC shall be restricted to so much of input tax as attributable to business purpose. Meaning what, sir? If you have any goods or services or both, which is partly used by you for business purpose and partly for any purpose other than business, then ITC shall be restricted to so much of input tax as attributable to business purpose. You can take ITC, it will be restricted to how much, sir? That amount of input tax which is attributable to business purpose. Meaning, I have an iPad which I'm using 80% of the time for business purpose, 20% of the time I'm using it for personal purpose. Can I claim ITC on this iPad? Of course, yes, I can claim ITC on that iPad, but it will be restricted to that portion how much I am using for business purpose. Section 17(2) says, where any goods or services or both are partly used for making taxable supplies and partly for making exempt supplies, then ITC shall be restricted to so much of input tax as attributable to taxable supplies excluding zero rated supply. What is this point telling, sir? If you have any goods or services or both which is partly used by you for making taxable supplies and partly used by you for making zero rated supplies, for the purpose of GST, even zero rated supply are treated as taxable supplies and partly for exempt supply. If it is used for taxable supply and exempt supply, then you can take ITC proportionately only for so much of input tax which is attributable to taxable supplies. Section 17 subsection 3. Exempt supply under section 17(2) shall also include supply liable for reverse charge, sale of land, sale of building subject to para 5B of schedule 2 and transaction in securities. What is this point telling, sir? In this case, proportionate credit you have to calculate. You have to find the value of exempt supply. This value of exempt supply over here shall include supply which are attracting reverse charge, sale of land, sale of building subject to para 5B of schedule 2, and transaction in securities. 17.5 is an important section. 17.5 talks about blocked credit. The items on which you cannot claim input tax credit at all. The items on which the credit is blocked. You cannot claim input tax credit on motor vehicle. Motor vehicle which is used by you for transportation of goods and which has seating capacity not more than 13. Now please note, including driver car seat. Motor vehicle can be used for two purposes. Motor vehicle can be used for transportation of goods or it can be used for transportation of persons. Motor vehicle can be used for transportation of goods or can be used for transportation of person. If the motor vehicle is used for transportation of goods, ITC is allowed. If motor vehicle is used for transportation of persons, then I will check the seating capacity. Please note, motor vehicle used for transportation of goods, ITC is always allowed. Motor vehicle is used for transportation of persons, then I will see the seating capacity. If it is less than equal to 13, normally ITC is not allowed. If the seating capacity is more than 13, ITC is always allowed. Now the motor vehicle which has less than 13 whose seating capacity less than equal to 13, normally you will not get input tax credit on that. But you will get input tax credit on those motor vehicle if what, sir? You are using it for further supply of motor vehicle. If you are using it for further supply, meaning you are a dealer of that particular motor vehicle, or you are a person who is in the business of giving training in motor vehicle. You are a driving school, or you are a person who is in the business of transportation of persons, meaning you are Ola, SRS travels, or meaning you are in the business of transporting people. You are in the business of transportation of persons. Now, one clarification they have given, if there is any car dealer, and if you have a demo car, then on the demo car, can you claim input tax credit, sir? Yes, a dealer of car can claim input tax credit on demo cars. Then, so if motor vehicle used for transportation of goods, ITC is allowed. Transportation of persons, seating capacity more than 13, ITC allowed. Less than 13, ITC is normally not allowed. Vessels and aircraft. ITC cannot be availed on vessels and aircraft. You cannot take input tax credit on what, sir? Vessels and aircraft. You cannot claim input tax credit. However, ITC is allowed in following cases. For aeroplane, ship, yacht, etc., you cannot claim ITC. However, for aeroplane, ship, yacht, etc., you can claim ITC. However, you can claim ITC on these things when if it is used for further supply of vessels and aircraft, if it is used for training in vessels and aircraft, meaning if you are purchasing a aeroplane or a ship so that you can sell it to someone, meaning you are a dealer of that thing, or you are giving training in vessel in aircraft, or you are a person who is involved in the business of transportation of people, for example Indigo. If you are a person who is involved in the transportation of goods, Blue Dart, etc. Now, what we understood is you cannot claim input tax credit on motor vehicle, vessel, and aircraft. The question is, can I claim input tax credit on service cost, repairs cost, and maintenance cost incurred by me on motor vehicle, vessels, and aircraft? Lawmaker says you cannot claim ITC on services, service cost, repairs cost, and insurance cost for motor vehicle, vessels, and aircraft. However, ITC will be allowed by you on these items, service cost, repairs cost, and maintenance cost, if ITC was allowed to you at the time of purchase of motor vehicle, vessels, and aircraft. At the time when you purchase these items, if the ITC was given to you, then ITC will also be allowed on service cost, repairs cost, maintenance cost. Or if you are a person who is in the business of manufacturing motor vehicle, vessels, or aircraft, meaning I am a person who is making these things, or you are a general insurance company. Because for insurance company, they deal in these things on regular basis and they may incur this kind of expenditure. Then ITC is not allowed on important foods and beverages. You take food or beverages for any purpose, ITC will never be allowed to you. ITC is not allowed on foods and beverages. Beauty treatment, outdoor catering services, some function is there, etc. You want to order food, beauty treatment, or health services, plastic surgery, cosmetic surgery, leasing, renting, hiring of motor vehicle vessels and aircraft. When you purchase motor vehicle vessels, aircraft, you cannot take input tax rate. Now, when you give them on rent, lease, then also ITC is not allowed. Life insurance business or health insurance, meaning ITC is also not allowed on life insurance which you take and health insurance which you take. On all these things, ITC will never be allowed to you unless you are in the same line of business. Meaning, if one restaurant is taking services from another restaurant, then that means that they are in the same line of business. Then membership of club, health center, fitness center, etc. If you are taking membership of any health center or fitness center or club, then also ITC will not be given to you. Or your travel benefits extended to employees. If any travel benefit is given to employees by the employer, if any travel benefits is given means what, sir? Leave, travel concession, something like this, company will book the tickets for you. Then also on that also ITC cannot be claimed by you. ITC will be allowed on above items in point 1, 2 and 3 if it is statutory obligation on the employer to provide the same to the employee. If it is legally required for the employer to provide this thing to the employee, then only ITC will be allowed. Please note, this is important. Foods and beverages, ITC cannot be claimed. Health insurance, ITC cannot be claimed. Then beauty treatment, outdoor catering, leasing, renting, hiring motor vehicle, ITC cannot be claimed. But if it is a statutory obligation on the employer to provide this to employee, statutory obligation means what, sir? If there is a law which says that it is the duty of the employer to give food to the employees. Let us, the Factories Act is there, which says you should provide food to your employee. Now, can I say I have to give food to employees because there is a law which is telling me to do so? So, statutory obligation is there. Or health insurance I'm taking because my employees are working in mining industry, and mining law says if your employees are working in mining industries, it is your duty to take health insurance for them. In that case, because it is a statutory obligation, we can claim input tax rate. You cannot take input tax rate on works, contract services or goods or services which is used for construction of an immobile property other than plant and machinery. So if you're taking works contract services, or if you're purchasing any goods or services which will be used by you for construction of an immobile property, on that you cannot claim input tax rate, except where that immobile property is a plant and machinery. Meaning cement which you are purchasing, any services taken by you from someone for construction of an immobile property, you cannot claim ITC unless until that immobile property is a plant and machinery. Goods or services are both received by non-resident taxable person except the goods imported by him. So a non-resident taxable person, whenever he is in India, whatever goods or services he is taking for his business purpose when he is in India, on those things he cannot claim input tax rate. Except on what, sir? Those goods which he is importing. What? Except those goods which is imported by him. Meaning on the goods imported by him, on that goods he can take input tax rate. Goods or services or both on which tax is paid under section 10. So if you have any goods or services on which you have paid tax under composition scheme, normally composition dealer cannot charge taxes. But if that GUBE has charged taxes, can you take ITC? No. Goods or services or both which is used for personal consumption. So whatever you are using for your personal consumption, on that, so definitely you cannot claim ITC at all. Goods or services or both on which tax is paid under section 10, personal consumption. Goods or services or both which is used for activity relating to corporate social responsibility. So if there is any goods and services which is purchased by you for CSR purpose, on that also you cannot claim ITC. Goods which are lost, stolen, destroyed, written off, disposed of by way of gift or free samples. If there is any goods which is lost, stolen, destroyed, written off or given by as a free sample, then also ITC cannot be claimed by you. And those goods and services on which you have paid taxes and as per section 74 because you have done some fraud. On these items, ITC cannot be taken at all. If I say ITC cannot be taken at all, that means you can never take ITC even if it is used for business purpose, even if you satisfy all the conditions. Very important. Section 18, ITC in respect of special circumstances. In case of some special circumstances, so section 18 talks about some special circumstances. What will happen to your input tax rate in these special circumstances? Who is going to talk about, sir? Section 18 is going to talk about. Section 18 subsection 1 clause A. It says, if you are a person who is liable for registration and if you apply for registration within 30 days of becoming liable, if you are a person who is liable for registration and if you apply for registration within 30 days of becoming liable and if that registration has been granted to you, so you should be liable for registration, you should apply for registration within 30 days of becoming liable and that registration should be granted to you. If all these conditions are satisfied, then he can avail ITC on inputs. Inputs means raw material, work in progress, finished goods held in stock 1 day prior to the date of liable for registration. So if you are a person who is liable for registration and you apply for registration within 30 days of becoming liable, then you can take input tax rate on inputs held by you in stock 1 day prior to the date of liable for registration. Section 18 subsection 1 clause B, voluntary registration. Voluntary registration means what, sir? You are applying for registration on voluntary basis. Are you liable for registration? No, but still you are applying for registration. Where a person has applied for registration on voluntary basis and if such registration has been granted to him, then he can avail input tax rate on inputs held in stock 1 day prior to the date of grant of registration. Then you will be able to avail the input tax rate on whatever inputs is available with you 1 day prior to the date of grant of registration. 1 day prior to the date of grant of registration. Section 18 subsection 1 clause C. If you are a composition dealer who becomes a regular dealer, where a registered person under composition scheme converts himself into regular scheme. So if you are a registered person under composition scheme and if you convert yourself into regular scheme, then you will be entitled to take input tax rate on inputs held in stock as well as on capital goods which is held by you 1 day prior to the change. 1 day prior to the change means 1 day prior to the date you are converting your registration from composition scheme to regular scheme. Now here you can take ITC on inputs as well as capital goods. On capital goods, how much ITC can I claim, sir? Whatever ITC was there on capital goods multiplied by 5% per month or part thereof from the date of purchase to the date of sale. You should reduce the ITC by 5% per month or part thereof from the date of purchase till the date of change. Then 18(1)(d), registered persons exempt supplies become taxable supply. So if you are a person who is making exempt supply and if those exempt supply are now becoming taxable supply, then you can take ITC on whatever inputs is held by you as well as on capital goods held by you 1 day prior to the change. Meaning I was dealing in those products which were exempt, now they become taxable. Now I can take ITC on those products. ITC on capital goods shall be reduced by 5% per quarter or part thereof from the date of purchase till the date of change. Section 18(4). If C 18(1)(c) and 18(1)(d) spoke about composition dealer becoming regular dealer or exempt supply becoming taxable supply. If ulta of that is happening, ulta means what? If a regular dealer becomes composition dealer or if taxable supplies becomes exempt supply, then you have to reverse the input tax rate. Then reverse the input tax rate on inputs as well as capital goods. Calculation is exactly same as 18(1)(c) and 18(1)(d), meaning whatever calculation we have done over there we take ITC, but here we have to reverse that amount. 18.2. No ITC shall be allowed under section 18 subsection 1 for invoices which are older than 1 year. So if you have any invoices which is older than 1 year, on those invoices you cannot claim input tax credit under 18.1, meaning maximum you can go back is 1 year. Maximum 1 year old invoices you can claim. 18.3. Whenever there is a change in constitution of business. Change in constitution of business means what? If there is amalgamation, merger, demerger, etc., wherein a new company is getting formed. In case of change in constitution of business by way of sale, merger, amalgamation, demerger, death of sole proprietor, etc., with a specific provision for transfer of liability. If there is an amalgamation, merger, demerger, that is, there is a change in constitution of business. And this change is happening with a specific condition that old company ka liabilities also will be taken care by new company. Then whatever unutilized input tax credit was there with old company, that unutilized input tax credit can be taken by new company. 18.6 is an important section under 18 series. 18.6 is important. 18.6 talks about what's a supply of capital goods or plant and machinery. Now, normally I don't sell capital goods or plant and machinery. Normally, I may deal in different goods and services and I'll sell only those goods and services. For example, Priya Saris will sell saris. But if Priya Saris is selling any capital goods or a plant and machinery on which it has taken input tax rate, then this section is applicable. In case of supply of capital goods or plant and machinery on which ITC has been availed. In case of supply of capital goods or plant and machinery on which ITC has been availed, the tax to be paid or the input tax credit to be reversed shall be the tax calculated on the transaction value determined under section 15 of such capital goods or plant and machinery, or ITC on capital goods or plant and machinery shall be reduced by 5% per quarter or part thereof from the date of purchase till the date of sale, whichever is higher. What is this point telling, sir? This point says if you have any capital goods or plant and machinery on which you have claimed input tax credit, now when you sell it, you will have to either reverse the credit. If you have the credit, then only you can reverse, or you will have to pay a tax. How much tax I will have to pay or how much credit I will have to reverse? The tax calculated on transaction value. What is the price at which you have sold that asset? Take that price. That price into tax rate, or ITC on such capital goods or plant and machinery shall be reduced by 5% per quarter or part thereof from the date of purchase till the date of sale. From the date of purchase till the date of sale, how much is the number of quarters over? How many quarters? Now, please note, quarter is a period of 3 months starting from first day of January, first day of the calendar year. So, you should see how many quarters is over in that particular year. Reduce 5% per quarter or part thereof. Take tax on transaction value or this ITC amount, whichever is higher, that will be the what, sir? Tax which is required to be paid by you, or ITC which is required to be reversed by you. Now see this question carefully. Priya Saris purchased a motor vehicle for transportation of goods, and this motor vehicle was purchased on 2nd of September 2023 for 15 lakh rupees. And it paid GST at 18% on this vehicle. This vehicle was sold by Priya Saris on 31st August 2025 for how much, sir? 6 lakh rupees. Calculate the input tax rate to be reversed or tax to be paid under 18.6. Now, how many quarters are over? See, sale value 6 lakhs, 6 lakhs into 18% I should apply. This is point number 1. Or reduce ITC by 5% per quarter or part thereof. Now you should see 15 lakhs into 18%, 2,70,000 rupees ITC you would have claimed. Now this ITC I would have claimed, reduce it by 5% per quarter or part thereof. How many quarters are over from the date of purchase till the date of transfer? How many quarters are over? Now you purchased on 2nd of September 2023. So should I calculate from 2nd of September, sir? No. 2nd of September, that means it is September month, which falls in which quarter, sir? July, August, September. Hello. So in the year 2023, I have July, August, September quarter. Then October, November, December quarter. So can I say 2 quarters of 23? Then 2024, can I say it was used for all 4 quarters? 2025, January, February, March, April, May, June, July, August, September. So it was sold in August. That means July, August, September, 3 quarters. So 3 plus 4 plus 2 is 9 quarters are over. Now people, what they do is 2,70,000 minus 5%, minus 5%, minus 5%, minus 5%, minus 5%, 9 times they will do. Wrong answer. 5% into 9 quarters, 45%. 2,70,000 minus 45%. You should do it like this. Do you understand? Hello. Now, manner of utilization of input tax credit. So you will be knowing how to utilize input tax credit. How do I utilize the input tax credit, sir? IGST credit. Now there is a change amendment in this particular topic, but which will be applicable for those who are writing in September 2026 and onwards examination. It is not applicable for May students. Okay, but still I'll tell what is the amendment. Now IGST credit can be utilized for making, should be utilized for making the payment of IGST first, and then you can use it for CGST or SGST in any proportion. You can use it for paying CGST or SGST in any proportion. You want to give everything to CGST, everything to IGST, your wish. Then CGST, so once IGST is completely exhausted, completed, then I can use CGST credit. CGST credit will be used for paying CGST first, and then it will be used for paying IGST. It can never be used for paying SGST. SGST credit will be used for paying SGST first, and then it will be used for paying IGST, but it will never be used for paying CGST. Correct? This is what the provision is. Now, what is the logic over here? First, IGST used for IGST, CGST used for CGST, SGST used for SGST. Meaning, first you use your own credit for yourself. But CGST and SGST should be touched only when IGST credit is not available. Meaning, first make sure that IGST credit is completely exhausted. So whatever IGST credit I have, I will use it for making the payment of IGST. Then I will use it for making the payment of CGST or SGST in any proportion. Whatever proportion I want to pay, I will utilize. Once IGST is fully utilized, then CGST will be used for IGST. Then CGST will be used for, CGST will be used for CGST, and then CGST will be used for. So first condition is what, sir? IGST should be 0. Use IGST for IGST, then use IGST for CGST or SGST in any proportion. Once IGST is 0, then use CGST. Use CGST for CGST, CGST for IGST. CGST should never be used for SGST. Then SGST, use for SGST, then use it for IGST, but never for CGST. Correct now? Now, what is the present rule telling? You can use SGST for paying IGST only when CGST is not available to pay IGST. Meaning, only when CGST becomes 0, you can use IGST for paying. Only when CGST becomes 0, you can use SGST for paying IGST. But this rule is now removed for those who are writing in September. Meaning, CGST or SGST, anyone can be used for paying IGST in any order. Note, IGST credit can be utilized for making the payment of CGST or SGST in any proportion. CGST and SGST credit will be utilized only if there is no IGST credit available. CGST credit can never be utilized for paying SGST and vice versa. SGST credit will be utilized for paying IGST only if there is no CGST credit available for paying IGST. Now this rule has been removed. Now there was the theory questions will be asked with respect to these points. Both these points, theory questions can be asked. Commissioner restriction of utilization of input tax credit. Restriction on utilization of input tax credit. Restriction on utilization of input tax credit. Whatever input tax credit you have, on that they can put a restriction. Meaning you cannot use that ITC. The commissioner or officer authorized by him may impose restriction, stoppage on utilization of input tax credit in the following circumstances. What circumstances? ITC has been availed by registered person on the basis of document issued by non-existing registered person, meaning you have claimed input tax rate on the basis of those documents which are not there with you, or ITC has been availed by the registered person on the basis of document issued by supplier not conducting any business from the declared place. So you are claiming ITC based on those documents which are issued by a person who is not doing business from the place where he is supposed to do business or where he has taken registration. ITC is availed without actual receipt of goods or services. You have claimed input tax credit, but actually have you received the goods or services? No. ITC is availed on supply for which tax has not been paid to the government. You have claimed input tax rate on those goods and services on which the supplier has not paid me any tax at all. Registered person is availing registered person who is availing ITC has found to be not in existence. So the person who is claiming input tax rate is not there at all. ITC is availed on supply for which tax has not been paid to the government. Availing ITC found the registered person is not there at all. Registered person availing ITC does not possess valid invoice. The person who is taking input tax rate, he does not have any valid invoice for claiming ITC. He can put restriction that you cannot take input tax rate, and that restriction will be there only for maximum 1 year. Rule 86B. This puts a restriction on how much ITC can be utilized by you, that only 1% ITC. I think this question was asked in last attempt. Rule 86B restricts use of ITC for payment of output tax liability. Rule 86B is applicable to a registered person having taxable supplies excluding zero rated supply and exempt supplies. Rule 86B is applicable to a registered person who is making taxable supplies, and the total taxable supplies which is made by you is more than 50 lakh rupees in a month. So if you are making taxable supplies more than 50 lakh in a month, then this section or this particular rule is applicable to you. Rule 86B restricts the registered person to whom this rule is applicable to discharge the output tax liability in excess of 99% of such liability using ITC. Meaning, if you are liable to pay 100 rupees, only 99 rupees you can pay through ITC, balance 1% you should compulsorily pay in cash. Now, however, this rule is not applicable to few people. Who are those people? This rule shall not apply to a registered person who has paid income tax more than 1 lakh in last 2 years. A registered person who has received refund of unutilized input tax rate more than 1 lakh rupees. A registered person. It is not applicable to a registered person whose cumulative tax paid in the current year is more than 1% of total output tax liability. You have paid more than 1% of total output tax liability, or you are specified registered person, meaning you are government department or a public sector undertaking or a local authority or any other statutory body. Now, format for computation of the GST liability question, that format is very important. Now, see what is the format. Of course, questions, no, you see that questions, good amount of questions are solved on whatever is uploaded on YouTube. You just see that good amount of questions are solved on these things, and good questions, meaning not time pass question, good question, meaning wherein you'll understand, yeah, that yes, this is very good question. Computation of tax on outward supply. Intrastate taxable supplies. So how should I compute that GST liability question? The first question which will be there under GST. First thing I should do is what, sir? Compute the tax on outward supply. Then what is the total ITC available with you? Then calculate the net GST payable. First you should take what, sir? What is the tax on outward supply? How will you take? Whatever sales are taxable, you take that. whether it is intrastate supply or interstate supply. Based on that, you calculate what is the output tax. Okay, so intrastate supply will have CGST, SGST, interstate supply will have IGST. Then calculate the total ITC available with you. How will I calculate the total ITC available with me? Take your opening input tax rate. If it is given in the question, IGST, CGST, SGST separately, take the opening ITC. Whatever opening input tax rate is available, take that. Then add ITC on purchases. Now you take purchases. Which purchases? Only those purchases on which you can claim input tax rate. Only those purchases on which you can claim input tax rate. Take those purchases. Now that purchases can be within the states or different states. If it is blocked, then don't take ITC, etc. So take ITC on purchases. You will get some amount. This amount, can I say, is opening ITC plus ITC on purchases. To this, add tax which is paid by you under reverse charge, because whatever tax you are paying under reverse charge, that is an input tax rate for you. You can claim the input tax rate of that. So add that. That will give you the total ITC which is available with you for that particular month. Now I have to now pay the net GST. Net GST, how will I pay this net GST amount, sir? Very simple. What is the tax on outward supply? Take it as per step number 1. Whatever tax is there as per step number 1, copy paste and write it over here. Then from that subtract utilization of input tax credit, section 49(5). Whatever ITC is required to be utilized by you, meaning whatever ITC is there, you have to utilize it for making the payment. What should I utilize first? IGST. First use it for IGST. Then whatever is left over, use it for CGST and SGST. Once IGST is completely over, then I will use CGST. First CGST, I will use it for paying CGST. Then I'll use CGST for paying IGST. Then I have SGST. SGST, I'll use it for paying SGST first. Then I'll use it for paying IGST. Now, once you find this amount, to this add tax payable under reverse charge. Tax payable under reverse charge. Whatever tax is required to be paid by you under reverse charge, add that. That will give you the net amount which you have to pay. The net amount of GST which is required to be paid by you. The net GST payable will be given. Discuss the other chapters or else we will not have time. Now, payment of tax is a chapter which you have to actually study with input tax credit chapter. So whatever output tax liability you have, that can either be paid through utilization of input tax credit or you can pay it through cash. Now, please note, in examination or in the books, whenever you are studying, they will say that output tax liability is paid using electronic credit ledger or electronic cash ledger. When they say electronic cash ledger, that means they are referring to cash account. When they say electronic credit ledger, that means they are referring to credit. So we have totally how many ledgers? 3 ledgers: electronic cash ledger, credit ledger, and liability register. So what is cash ledger, sir? Cash ledger, whatever cash you deposit in your GST account, that will go and sit in your electronic cash ledger. Whatever cash you are going and depositing will go and sit in your electronic cash ledger. So every deposit of tax, interest, penalty, late fee, every deposit of tax, interest, penalty, late fee, or any other sum through net banking, IMPS, RTGS, NEFT, debit card, credit card, UPI will go and sit in your electronic cash ledger in form GST PMT 05. And such amount can be utilized by you for making the payment of tax, interest, penalty, and late fees. Now, how do I deposit the money, sir? Using a payment challan. The payment challan is from GST CMP, GST PMT 06, and it is used for depositing the money in electronic cash ledger. Then you can transfer the money from one ledger to another ledger. You can transfer the money from one ledger to another ledger using a form called as form GST PMT 09. Please note, 09, 06, there are important forms. MCQ, they can be tested upon. This can be used for transferring amount from one head to another head, or it can be used for transferring the amount from one head, one person registered in one state to the person registered in another state under the same PAN. So I have written that over here. Normally, if you want to deposit any money in electronic credit ledger, how can you deposit that money, sir? You can deposit that money using online modes only. You can deposit that money using online modes only, but you can go physically deposit the money over the counter up to how much, sir? 10,000 rupees. See, normally if I want to deposit the money under the GST account, what is the mode available? Online modes. But if I want to deposit physically, I can still do it. But maximum how much can I do it, sir? 10,000 rupees. But for that also payment challan should be generated by me online only. Transfer of amount from electronic cash ledger of a registered person to electronic cash ledger of another registered person under same PAN. If there are two registrations under same PAN, then you can transfer the money from one person's cash ledger to another person's cash ledger using form GST PMT 09. Any excess amount in electronic cash ledger can be claimed by you as refund. GST PMT 02 talks about electronic credit ledger, and electronic credit ledger can be used only for making the payment of taxes. Now, what is the liability a person can have? Electronic liability register. Electronic liability register form GST PMT 09. A registered person can avail following can have following liabilities. You can have liability of tax dues or other dues. Now, whatever tax you have to pay, that tax you can pay either through utilization of input tax credit or through cash. And all the other dues you can, such as interest, penalty, late fee, that is required to be paid by you compulsorily by what, sir? Cash. Tax dues, credit or cash, no problem. Other dues only by cash. Now, this is a question asked in the examination. What are those amounts which are required to be paid by you only in cash? Following liabilities are paid only in cash. What are those? Other dues such as interest, penalty, late fee. If you see September examination question, first MCQ which was asked is this point only with respect to 2 marks. Following liabilities can be paid only through cash, which is other dues. Other dues such as interest, penalty, late fee, tax payable under section 10 by composition dealer, TDS under section 51, TCS under section 52, and tax payable under reverse charge. Whatever tax you have to pay under reverse charge, you should pay in cash. Now, again, one more question. I think this was asked in the previous attempt. Order of discharge of liability. How will you discharge the liability? Whatever liability you have, how will you discharge it? First, you will have to pay self-assessed tax and other dues related to previous tax period. Self-assessed tax and other dues related to previous tax period. Then you can use it for making the payment of self-assessed tax and other dues related to current tax period. Then any other amount payable under this act or rules made thereunder, including the demand under 73 and 74. Meaning whatever amount is there with you, whatever liabilities are there, no, the order of discharging that liability, first you should pay the money for previous tax returns, then you should use the money for paying the current tax returns, then you can use it for paying any other dues which are there. First, file your returns. If you file previous month ka return, then only you can file current month return. Electronic liability register of a person shall be debited by. This is also some theory question they ask. Your liability, what are the different liabilities a person can have? Electronic liability register shall be debited by amount payable towards tax, interest, late fee or any other sum as per the return furnished by the said person. So as per the return which is filed by me, how much am I telling that this is the tax which I have to pay, etc. So what is the tax payable to amount payable towards tax, interest, late fee or any other sum as per the return furnished by the said person? Amount payable towards the tax, interest, late fee or any other sum as determined by the proper officer. What is the amount of tax, interest which I have to pay as per the officer? Whatever first point says, whatever I am telling that I am liable to pay, whatever officer is telling that I am liable to pay. amount of tax and interest payable as a result of section 50. Whatever interest I have to pay because of section 50 or any other interest that may accrue from time to time. Interest calculation is also important. Interest for delay in payment of tax. When will I have an interest for delay in payment of tax? I will have interest for delay in payment of tax if there is an delay in filing of returns. Interest at 18% per annum. Interest for delay in payment of tax. So interest for delay in payment of tax. If I do any delay in payment of tax, then I have to pay interest at 18% per annum. From which date? From the date following the due date. So whenever is the due date, normally the due date of paying tax is 20th of next month. So the date following the due date, the date immediately after due date till the actual date of payment of tax, interest is payable on net GST payable in cash. Interest should be paid on what, sir? Net GST amount which you have to pay in cash, meaning after utilization of input tax rate, what is the GST amount left over? On that amount you have to pay interest. Now see, my output tax liability is 1 lakh, but ITC is 0. So what is the net GST payable in cash, sir? 1 lakh. So I'll have to pay interest on entire 1 lakh. Second case, 1 lakh is my output tax liability, whereas my ITC available is how much, sir? ITC available is 85,000. So what is the net I have to pay? 15,000. Only on 15,000 I have to pay interest. Now, if you see over here, 50,000 output tax is there. RCM I have 20,000. 75,000 credit is there. Now, this is the total tax which I have to pay 70,000. 70,000. 75,000 credit is there. So eventually I should not pay any interest. But RCM liability is something which I have to pay compulsorily in cash. Now, because RCM liability is required to be paid by me in cash, I have to pay interest on that amount. Now, if you take excess input tax credit, if you take input tax credit over and above what you are supposed to take, then whatever excess ITC is claimed by you on that excess ITC, also you will have to pay the, on that excess ITC also you'll have to pay the interest. How much interest you'll have to pay on the excess ITC, sir? At 18% per annum from the date of taking that excess ITC till the date of reversal of that credit. Now, if there is a delay in payment of tax, then this is also an important point. If there is any delay in payment of tax, then you see why is the delay there. If there is what, sir? If there is any delay in payment of tax, check why there is a delay in payment of tax. Is there a delay in payment of tax because you have filed the return late? Yes, sir, the delay is due to filing of return late, belated filing of returns. If the delay is because of late filing of return, lawmaker says pay interest only on net GST amount which is payable by you in cash. But if the delay is because you have not considered some amount in your return, or that or you have paid the taxes because a notice has been sent to you, in such cases you have to pay tax on full GST liability which is payable by you, whether it is paid in cash or through utilization of input tax credit. What is important over here? Why is the delay you have? Whatever delay is there, why is the delay there? Is the delay because of late filing of return, or is the delay because of late filing of return, or is the delay because of not paying the taxes at all? Meaning late filing of returns, I filed the returns. I have filed the returns, but I have filed the returns late. That I understand. Lawmaker says that too I understand because you are filing the return late. But if the delay is because you have not considered the amount, sales was 10 lakh rupees. I showed the sales of 8 lakh rupees because I did not have money to pay the taxes. Lawmaker says you are doing cheating, Dilip. You are doing cheating. Now in this case, you will have to pay tax on net GST payable by you, whether you are paying it on cash or you are paying through ITC. Important question. This is exam. They have asked this point. Then we have some theory. Accounts and records we have. Accounts and records. Who has to maintain books of accounts, sir? Every registered person has to maintain books of accounts. Where should he maintain books of accounts, sir? At his principal place of business. What should he maintain, sir? True and correct account of production or manufacture of goods, inward and outward supply of goods or services, stock of goods, input tax rate which is availed by you, output tax payable or paid by you, and such other particulars as may be prescribed. So you should maintain true and correct details of these things. True and correct. Income tax uses the word, audit uses the word true and fair, but here they use the word true and correct. What should he maintain? You should maintain true and correct details of production and manufacture, inward, outward supply, stock in trade, input tax rate which is availed by you, output tax which is payable by you, such other particulars as may be prescribed. If you are owner of a warehouse or a godown, or every transporter shall compulsorily maintain records of the consignor, records of the consignee, and other relevant details. Records of consignor, consignee, and other relevant details. Then commissioner may also notify a few class of taxable person who shall maintain additional accounts and documents. And that document, what are those documents? You will see that accounts in can be maintained in any form other than in any other format. However, prior permission should be taken by the commissioner. Where the registered person fails to account details of any goods or services or both, the proper officer shall determine the tax payable in such cases. Officer will determine your tax liability. Now, additional records to be maintained by the registered person. So what are those additional records which you as a registered person have to maintain? As a registered person, you will have to maintain additional records of what, sir? As a registered person, you will have to maintain additional records of goods or services which are imported by you or exported by you. Then you will have to maintain details of supplies attracting reverse charge along with relevant documents. You have to maintain details of what, sir? Goods or services imported by you or exported by you, supplies attracting reverse charge, details of advance received, advance paid, advance adjusted, then details of stock received, stock supplied by you, opening balance, stolen, written off, taxes collected and remitted, and ITC which is there with you, name and complete address of the persons to whom goods or services are supplied by you, complete address of premises where goods are stored by you, goods which are there in transit, etc. Records to be maintained by agent. If you are an agent, what books of account, what records you should maintain? Particulars of authorization received by him from every principal. Important question. They ask this question in examination normally. If you are an agent, what are those things which you have to maintain as an agent, sir? As an agent, you will have to maintain the particulars of what is the authorization which is received by you from different principals, because you are acting as an agent for some principal. Then particulars including description, value, and quantity of goods received on behalf of principal. So what is the value of those goods which is received by you on behalf of every principal? Particulars including description, value, and quantity of goods or services supplied on behalf of principal. See authorization letter. What is the goods which is received by you on behalf of principal? What is the goods which is supplied by you on behalf of principal? Accounts, details of accounts furnished to every principal. What is that accounts which is furnished by you or given to you by to every principal? Details of accounts furnished to every principal, and taxes paid on behalf of principal on receipt or supply of goods or services. Records to be maintained by manufacturer. Agent is important, works contract is important. Monthly production account showing quantitative details of raw material and services used for manufacturing, quantitative details of goods which are manufactured by you, including wastage and byproduct. Then records to be maintained by service provider. As a service provider, you should maintain quantitative details of goods used in production of services and details of input services utilized, the services supplied by you. Records to be maintained by executor of works contract. So works contract executor should maintain what's the name and complete address of the person on whose behalf the work is executed. This is important. Works contract. Name and so if you're a works contractor, you should maintain the details of name and address of the person on whose behalf you are executing the work, description and value of the goods or services received or utilized for execution of the work, details of payment received in respect of each work contract, name and address of the address from whom the goods and services are received by you. Now, what are the other points which are applicable? Other points on accounts and records. Electronic records, can I maintain records in electronic form? Yes. Electronic devices and records so maintained should be authenticated by digital signature. Proper electronic backup of records should be maintained and preserved. Entries in register, account and documents shall not be erased, effaced, overwritten. All incorrect entries otherwise than those of clerical nature shall be scored out under attestation and thereafter correct entries shall be recorded. So this is only for electronic documents. Where registers and documents are maintained electronically, log of every entry which is edited and deleted should be maintained. Separate log you should maintain for that. Then each volume of books of accounts maintained manually by the registered person shall be serially numbered. Whatever manual books you are maintaining, they should be serially numbered. This is important. How long should I maintain my books of accounts, sir? The books of accounts which are there, they should be maintained for a period of 72 months. Equal to how many years, sir? 6 years or 5 years? 72 months means 6 years. Accounts and records shall be retained until the expiry of 72 months from the due date of furnishing the annual return of the financial year to which those accounts and records belong. You should maintain for how many years? 72. You should maintain for 72 months from calculated from the due date of the annual return. Meaning, let us say for the previous year, 25-26, annual return should be filed by 31st of December 2026. So this book should be maintained till 31st of December 2032. You should maintain by till 2032. Further, where registered person is party to any appeal or revision or any other proceedings before appellate authority, revision authority, appellate tribunal, court, or he is under investigation of any offense, meaning your books were subject to some audit or revision, etc., meaning officer has taken your books. In such cases, then accounts and records pertaining to such proceedings shall be retained for a period of 1 year after disposal of such appeal. Then the books related to those things shall be retained for 1 more year. Ajay is there in life. Now, e-way bill, who should maintain e-way bill, sir? What is e-way bill? E-way bill is an complaints mechanism wherein by way of digital interface, a person who is causing movement of goods uploads relevant information prior to the commencement of movement. What are the benefits of e-way bill? Physical interface, which will pave away the digital interface. It will facilitate in faster movement of goods, and it will improve the turnaround time of trucks. When is e-way bill required to be generated? E-way bill is required to be generated if the consignment value is exceeding 50,000 rupees. E-way bill is required to be generated when, sir? When the consignment value is more than 50,000 rupees. When there is a movement of goods of consignment value exceeding 50,000. Now that movement can be because of any reason in relation to supply or for reasons other than supply or due to inward supply from an unregistered person. And the registered person who is causing such movement of goods shall furnish the information relating to the said goods by specified such goods as specified in part A of GST WB01. So you should generate e-way bill whenever your consignment value is more than 50,000 rupees, and you should generate it using which form, sir? Form GST EWB01, and you should give all the details of that invoice in part A of GST EWB01. Now, who causes the movement of goods? If the supplier is a registered person and he says that I will deliver the goods to you, then the movement is caused by the supplier. If the recipient is a registered person and he arranges for the movement, then movement is caused by the recipient. And if the goods are supplied by unregistered supplier to a registered known recipient, then the movement will be caused by such recipient. What do you mean by consignment value? Consignment value means the value declared, the value of such goods as determined under section 15, meaning value of those goods as per section 15. As per section 15, value is value of supply, whatever is declared by you in the invoice or bill of supply, delivery challan, as the case may be, meaning whatever is the value as per section 15. And it will also include CGST, SGST, UTGST, IGST, GST compensation, cess, value of supply, add taxes under GST, but it shall not include value of exempt supply where the goods are where the goods value of exempt supply of goods where the invoice issued is with respect to exempt supply as well as taxable supplies. So consignment note means what, sir? Value of supply plus taxes under GST without value of exempt supplies. Then compulsory generation of e-way bill. Two times you should, in two cases, you should generate e-way bill compulsorily whenever you are, even if the value is less than 50,000, whenever there is a transfer of goods from one state to another state for job work, or whenever there is interstate transfer of handicrafted goods by a person who is exempted from taking registration. Now, in case of bill to ship to model, e-way bill should be generated only once, like Karina telling Priya to supply goods to Nayantara. Either Karina can generate or Priya can generate. Now, what information will I give in e-way bill? An e-way bill in form GST EW01 will contain two parts. Part A, which will give the details of the invoice, and part B, which will give the details of the transporter. Part A comprises of details of GST number of supplier, GST number of recipient, place of dispatch of goods, place of delivery of the goods, document number and document date, value of the goods, HSN code, and reasons for transportation of the goods. And part B will contain transporter ka document number and vehicle number. However, information in part A may be furnished by the transporter on authorization received from such registered person or by the e-commerce operator or the courier agency if authorization is given to that courier agency or e-commerce operator. Now, part B, vehicle number ka details is not mandatory if you are sending the goods from your location to the transporter location and the distance is within 50 kilometers, or the goods are coming from transporter location to your location and the distance is within 50 kilometers. This is important. Transfer of goods from one conveyance to another conveyance. Where the goods are transferred from one conveyance to another conveyance, consigner or the recipient, or who has consigner, or where the goods are transferred from one conveyance to another conveyance, consigner or the recipient who has provided the information in part A, or the transporter shall before such transfer and further movement of goods, update the details of conveyance in Part B of e-way bill on the common portal. They should upload the details of Part B in the common portal. They may assign the e-way bill number to another registered transporter for updating the information in Part B for further movement of consignment. So what is happening over here? Sometimes what happens, the goods which the vehicle in which the goods are sent, that vehicle met with an accident. So now you are going to transfer the goods from that vehicle to another vehicle. So you should change the vehicle number in e-way bill. So that who should do, sir? Either the consigner or the consignee can do. However, they may assign they can also assign this e-way bill number to another transporter. So if that same transporter vehicle is not going, then you can assign it to another transporter. However, once the details of the conveyance is updated by the transporter in Part B, the consignor recipient, as the case may be, who has furnished the information in Part A, shall not be allowed to assign the e-way bill number to another transporter. So if it is already uploaded by the transporter, then you will not be able to assign that e-way bill to someone else. Cancellation of e-way bill. E-way bill can be cancelled within 24 hours of its generation. Now, consolidated e-way bill means what, sir? If in same vehicle, different people are sending the goods, then the person in charge shall, instead of carrying different e-way bills, can carry one single e-way bill called as consolidated e-way bill. Now, what is the validity? E-way bill will have a validity. The validity will be if it is an over dimension cargo. If it is an over dimension cargo, validity is for every 20 kilometers or part thereof, it is 1 day. And if it is other than over dimension cargo, meaning normal trucks, a over dimension cargo means that big trucks, normal truck. For over dimension cargo, it is 20 kilometer or part thereof 1 day. For normal trucks, 200 kilometers or part thereof, it is 1 day. Extension of validity can be extended by you for any reason, either 8 hours before its expiry or within 8 hours after its expiry. Acceptance of e-way bill. So once an e-way bill is generated, the recipient has to accept it, and he has a time limit of within 72 hours. He should accept it. If you don't accept it within 72 hours, it is deemed that it is accepted by you. Other points of e-way bill. Now, normally the person in charge of conveyance should carry the e-way bill. If only then it will be treated as valid transportation. However, if the goods are transported by rail, then there is no requirement of carrying the e-way bill along with the goods. E-way bill can be generated even if the value is not exceeding 50,000. So if you want to generate e-way bill, even though the value is not exceeding 50,000, you can still generate the e-way bill. Other points on e-way bill: where the goods are transported by railway, there is no requirement to carry e-way bill along with goods. However, e-way bill is required to be produced at the time. Okay, e-way bill generated in one state will be valid for another state also. E-way bill is not valid for movement unless until vehicle number is mentioned. Once e-way bill is generated, it cannot be edited for any mistake. It can be cancelled within 24 hours. You cannot edit e-way bill. Then e-way bill can be updated with the vehicle number any number of times. So you can change the vehicle number if you want to change any number of times. What is important is next point. You will be blocked from generating e-way bill. Blocking of e-way bill generation facility. E-way bill cannot be generated in following cases. In the following cases, e-way bill cannot be generated at all. When, sir? If you are a composition dealer and has not paid taxes for 2 consecutive quarters. If you are a composition dealer and continuously for 2 quarters you have not paid the taxes. If you are a regular registered person and you have not filed return for 2 consecutive tax period, if you have not filed your GSTR 3B for 2 quarters or 2 months continuously, a regular registered person has not filed his GSTR 1 for 2 consecutive months or 2 consecutive quarters, or a person whose registration has been suspended as per rule number 27A. Now, the person in charge of the conveyance should have some documents with him. The person in charge of conveyance shall carry invoice, bill of supply, delivery challan, and a copy of e-way bill either in physical form or in electronic form mapped to radio frequency identification devices. Now, there are some cases where you don't have to generate e-way bill at all. What are the situation when e-way bill is not required to be generated by you? E-way bill is not required to be generated by you in following cases. If you are transporting LPG for household purpose, if kerosene is getting transported under PDS system, if postal bags are getting transported by Department of Post, if natural or cultured pearls or precious and semi-precious stones are getting transported, jewelry of goldsmith and silversmith are getting transported, used personal or household effects are getting transported, then coral, including unworked or worked coral, is getting transported, or you are transporting the goods in a non-motorized vehicle, or where the goods being transported are from customs port or customs airport to inland container depot, or you're transporting alcoholic liquor for human consumption, HP man, etc., or you're transporting those things which are not yet as supply as per schedule number 3, or it is getting transported in transit cargo for Nepal and Bhutan. If Ministry of Defense is transporting anything, central government, state government is transporting anything, empty containers are getting transported, or you're sending the goods up to 20 kilometers for checking the weight of those goods. Then the next topic, last but one topic, talks about what, sir? Returns under GST. So there are two types of questions which can come from this topic. One is, what is the type of return, who has to file it? Then what is the late filing fees, and what are the contents? A regular dealer Okay, a regular dealer or a normal registered person, a regular dealer or a normal registered person has to file a return called as GSTR1. A regular dealer or a normal registered person has to file a return called as what, sir? GSTR1 for his outward supply, and GSTR3B, which is a summary return which is used for making payment of taxes and availing input tax credit. Who has to file, sir? All the registered person has to file them, excluding non-resident taxable person, input service distributor, TDS, TCS person, OIDR service provider, and a composition dealer. Contents of GSTR1, it will have some basic details like supplier ka GST number, month, financial year, due date, trade name, legal name, B2B supplies, B2C, L supplies, B2C supplies, debit note, credit note, B2B debit note, credit note, B2CL, exempt supply, meaning all the outward supply related details will be there. Your document number, HSN code, amendments which you have made, advance received by you, everything will be there over here. Now, what is the due date? If you're filing it on monthly basis, then 11th of next month. If you're filing it on quarterly basis, then 13th of next month following the quarter. Now, GSTR 3B is a summary return which is used for making the payment of taxes and availing input tax rate. Contents, basic details, basic contents are same. Other details are like outward supply details, consolidated values you should give, interstate supply to unregistered person, inward supply of nil rated, exempted, etc., interest, penalty, late fee if you're liable to pay. Due date of filing GSTR 3B, If you are filing on monthly basis, then it is 20th of next month. On quarterly basis, either 22nd or 24th. If nothing is given the question, always you should take the date as 20th of next month for interest calculation, etc. Now for quarterly people, there is a scheme called as QRMP scheme, which is applicable. Quarterly return, monthly payment. Uh, Quarterly return means what, sir? GSTR1 and GSTR3B is required to be filed by you on quarterly basis by 13th of next month following the quarter and 22nd or 24th of next month following the quarter. And payment is required to be made by you every month, and the due date to pay the taxes will be 25th of next month for first 2 months, and for the last month it is required to be paid by you along with GSTR 3B. How should I pay the taxes? If I opt for QRMP scheme, I have to pay the taxes on every month, but file the returns once in 3 months. Sir, how should I pay the taxes? You should pay the taxes by these methods, either self-assessment basis or fixed sum basis. Self-assessment basis means what, sir? Every month you determine what is your tax liability. How will I determine that? Tax on your outward supply less input tax rate which you have, that is the tax which you have to pay. Or fixed sum, whatever you paid in the previous quarter, pay 35% of that in the first 2 quarters of this first 2 months of this quarter. Now those who have opted for QRMP scheme, they have an option of invoice furnishing facility, meaning if invoice furnishing facility is not a return, it is a facility which is given to you. It is just a facility given to quarterly filers to upload the details of B2B supplies made by them to on monthly basis. The due date of this is 13th of next month. For April, it is 13th of next month. So what is this, sir? A facility wherein whatever B2B supplies are made by you, that can be uploaded so that the opposite person can take the credit every month instead of quarterly basis. All the invoices, debit note and credit note, the details of which is uploaded in IFF will be imported by the GST portal in GSTR1, and for that particular tax period, meaning for that quarter, automatically it will be imported. When can I opt for QRMP scheme? You can opt for QRMP scheme from first day of second month of last quarter till the last day of the first month of this quarter, meaning for July to September. If I want to opt for QRMP scheme, लास्ट क्वार्टर का सेकेंड मंथ इज मे मंथ का फर्स्ट डे, दिस क्वार्टर का फर्स्ट मंथ इज जुलाई 31st July. I have time limit till this time to opt for QRMP scheme. Whatever amendment and rectification if you want to make, then you have to do that amendment and rectification through your GSTR1 only. Whatever return is filed by you, that cannot be revised. So amendment is required to be done by you in the next month ka return using this table number 9, 10, 11 of GSTR 9, and supplier has to give the details of original invoices. The supplier will have to give the details of original invoice number and invoice month. Automatically that details will appear and you can make whatever changes you want to make. However, if the supplier altogether forgets to enter invoice, if you forget to enter invoice, then you have to enter it as a new invoice. You cannot make any amendment. Rectification of errors. If any error or omission is discovered by the supplier, he shall rectify the same in the tax period during which such error is detected and pay the taxes along with interest while filing GSTR 3B for that month in which rectification was made. And what is the last date for making rectification? 30th November of next financial year or date of filing annual return, whichever is earlier. Now, if you don't file the return within the time limit, you will have to pay penalty. What is that penalty which you have to pay, sir? Late fees which you have to pay. If it is a nil return, rupees 20 per day, maximum rupees 500. 20 rupees means CGST 10 rupees, SGST 10 rupees. 500 rupees maximum means 250 CGST, 250 SGST. And for all other cases, the aggregate, it depends on aggregate turnover. If your aggregate turnover is up to 1.5 crores, rupees 50 per day is the minimum, and maximum is 2000 rupees. 50 per day means 25 CGST, 25 SGST. 2000 maximum means 1000 CGST, 1000 SGST. If your aggregate turnover is more than 1.5 crores up to 5 crores, 50 rupees is same, maximum is 5000. If your turnover is more than 5 crores, 50 rupees per day is same, maximum is 10,000. Other returns which you have is a composition dealer has to file a return called as GSTR4. Due date is 30th June following the end of financial year, 30th June of next year. And composition dealer has to pay taxes on quarterly basis through form GST CMP 08 by 18th of next month following the quarter. A non-resident taxable person has to file a return called as GSTR 5. When, sir? Due date of filing is 20th of next month or within 7 days after the last day of validity of registration, whichever is earlier. Either 20th of next month, once the validity is over, within 7 days. Input service distributor has to file a return called as GSTR 6. The due date is 13th of next month. Returns for TDS per person. If you are a TDS person under section 51, you have to file a return called as GSTR 7. Due date is 10th of next month. Return for e-commerce operator required to collect taxes under section 52. GSTR 8 is the return which you are required to file. Due date is 10th of next month. Annual return is required to file. GSTR 9 is required to be filed by every registered person to whom GSTR 1 and GSTR 3B is applicable. Due date is 31st December of next financial year. No annual return. This is an amendment. No annual return. No GSTR 9 or annual return is required to be filed if your aggregate turnover is up to 2 crore rupees. If your aggregate turnover is up to 2 crore rupees, you don't have to file any annual return. GSTR 9B, annual return for SEZ, so annual return for e-commerce operator under section 52, they should also file it by 31st of December. 9C is a reconciliation statement which you have to file along with your annual return, which will reconcile the turnover between your financial statements and your GST ka annual return. Final return, important return. GSTR 10 is a final return which is required to be filed by registered person whose registration was cancelled, and the due date of filing this is within 3 months from the date of cancellation of registration or date of cancellation order, whichever is later. First return is also an important return. This is required to be filed by a first return is a return which is required to be filed by a taxpayer who is liable for registration and he has applied for registration within 30 days. So if you are liable for registration, if you apply for registration within 30 days and that registration is granted, for that period you give something called as revised tax invoice. For those sales, you have to file a return called as first return. It is required to be filed for supplies made by you from the date of liable for registration till the date of grant of registration, to be filed within 30 days of grant of registration. And the last topic which is left over is what, sir? TDS and TCS under GST. Section 51 talks about TDS under GST. Now TDS is very simple. There are list of some deductors. Okay. So if you supply any goods or services to those deductors, and if the contract value of that supply is more than 5 lakh rupees, then TDS is applicable. Contract value should be more than 5 lakh rupees. So if the contract value is more than, sorry, not 5 lakh rupees, if the contract value is more than 2.5 lakhs and you are supplying to any deductor, then that person who is paying the money to you, that person at the time when he's paying the money to you, he will deduct the TDS. Please note, TDS is applicable when, sir? TDS is applicable if you supply any goods or services to a deductor and the contract value of that supply is more than 2.5 lakhs, then this person shall, at the time when he's making the payment to you, deduct TDS. What contract value shall not include the taxes under GST and value of exempt supply. So it will include only taxable supplies and it will not include tax amount. No TDS is required to be deducted if the supply of goods or services are both is by one deductor to another deductor. So one deductor is supplying to another deductor, no TDS is applicable. Where location of supplier and place of supply is different from location of recipient, then also no TDS is applicable. Now, who is that person who is liable to deduct TDS, sir? Central government or state government department, local authority, government agencies, and notified persons. Notified persons are authority or board which is set up by act of parliament or state legislature with at least 51% or more equity or control by central government or state government, society established by central government, state government, or any public sector undertaking. Deductor has to apply for compulsory registration under section 24. Deducted TDS should be paid to government within 10 days. Amount deposited as TDS will be reflected in electronic cash ledger, and no TDS shall be deducted if the supply is not taxable or it is a Schedule 3 supply. TCS. When is TCS applicable, sir? Whenever you make a supply to an e-commerce operator and the payment is also coming to you through e-commerce operator, then that e-commerce operator, when he pays the money to you, he should collect taxes at under section 52 at the rate of 0.5%, which is 2.5% CGST, 2.5% SGST. So every e-commerce operator shall collect taxes at 0.5% on net value of taxable supplies. Net value of taxable supplies means whatever sales are made by me through Flipkart and whatever sales return is there, net amount I should take. If the consideration collected by such e-commerce operator on behalf of supplier, when is it applicable? When he only collects the consideration also. Net value of taxable supplies means aggregate value or total value of taxable supplies made by you through e-commerce operator less supplies through 9(5) e-commerce operator, because in case of 9(5), 95% has to pay the taxes, less value of supplies returned. That is the value, net value. Other points, e-commerce operator required to collect tax under 52 should take compulsory registration. There is no threshold limit. TDS, there is a limit of 2.5 lakhs. TCS, there is no limit. Even 1 rupee sale you make, TCS is applicable. Net value of taxable supply shall not include exempt supply and taxes under GST. No TCS for supply attracting reverse charge. Amount which is collected as TCS should be deposited within 10 days from the end of the month in which TCS is collected. Amount deposited will be reflected in electronic cash ledger. That is all about this beautiful topic called as marathon for taxation. Oh, you got tired, huh? Maza is there. Nice, no problem. You have very less time, but whatever time you have is more than sufficient for you to clear your examination. If you're writing one group, it is too much, meaning you have excess time. You can donate the time for some people if you want to donate. But now your studies should be little high, meaning because you have only 1 month, the preparation should be next level. See, for example, if you start tomorrow, you have how many days for examination? If I take only this month, around 24 days you have. So 24 days, if you are studying for 8 hours a day on an average, then you will have 24 days only, correct? Study for 16 hours a day. You will not have 24 days, you will now have 48 days. You just imagine, same time, same number of days will increase if my study time has increased. See, normally and on average, if you're studying for 5 hours, if you study for 10 hours, what will happen? The number of days will double. Meaning for you, the number of days for examination will double. Now, preparation you should do in such a way that your brain is not drained. Now, you would have seen while from last 3-4 days we are doing this, and when we are discussing, after some point in time, our brain is getting drained. Not only you, even me. When I am discussing or when I'm reading the provision, I myself I am getting confused what I'm reading, and I read again 2-3 times. I'm reading the same point I would have already read and explained, because that is how our brain is. Because our brain sometimes, no, you're just doing it, and our brain is not able to concentrate. So you should prepare in such a way that if there is a theory subject, to compensate that, there should be practical. If there is a practical, to compensate that, there should be something. Okay. And now you have very less time. Make sure you avoid all the social media which you have in life. Not required, because nothing is going to happen. See, in Iran, lot of people are dying. Is anything getting affected for you guys? No, right? So nothing will affect you. If anyone dies also, nothing will affect you. Correct? No. So you have to just concentrate on your examination, because this is the most important thing as of now for you. Once you write your examination, you have time.
I found this on the web.
Thank you. Yeah. Once you write your examination, once you clear your examination, good amount of time you have. 2 years articleship you will do. What you will do in that? Do time pass. Do whatever nonsense you want to do. And that time you will earn some money also. 5,000 rupees only, but still it is your money. No, no one will ask you what you are going to do with that money. Correct? No. So at that time you enjoy how much ever you want to enjoy. And again, then after 2 years of articleship, study again. Once you become CA, maja is there in life. Seriously, I'm telling. Full maja is there. The maja which you get after becoming chartered accountant, no, must 1 lakh rupees monthly you will be getting. Now just imagine, now you are you are taking pocket money, 10,000 rupees, 15,000 rupees, you are asking, and you are sacrificing a lot of things in your life. You want to buy something, you want to go to this movie, you want to go watch cricket, IPL, you want to watch, but because it is not your own money, you are worrying. But once it is your own money, our faculties know they are taking classes somewhere else, they are coming. Seriously, yesterday, Rashid sir is there, no? He's taking class in Coimbatore. From there, he came to Bangalore just to watch match because he's a CA. He can do anything now. That is the power of you becoming a chartered accountant. Once you become a chartered accountant, you will get that liberty. That time will be yours. You are earning money. What will you do with that money? Just make rocket and throw once. Nothing will happen. Yeah, correct. Now 500 rupees which you are earning, you are worrying. Your 500 rupees will go. Once you earn 500 rupees, you make one rocket. See where it goes and let us see how many people fights for that 500 rupees. Correct. Now that is only when you become CA. So becoming CA is very important. Your main goal now should be to study, 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 study. Come what may. You should not know what is the person sitting next to you doing. Whoever is sitting next to you also, you should not be knowing what is he doing, whether he's eating, even if he's dying, let him die. For you, this is important now. So that should be your concentration when you are studying. That see, if you have not written examination, then that is a different case. But if you have already written the examination, then in that examination, that 3 hours, the way you sit and write, no, that level of concentration you should do it right now when you are studying. Because at that 3 hours, no, you are not bothered about anything. Those who have written, you will be knowing that you are not bothered about anyone who is sitting next to you. You are not bothered whether that even yourself also. You are not bothered whether your hairs are proper or not. You are not bothered whether you are looking nice or not. You are not least bothered about all those things. For you, at that moment is only 3 hours. I should effectively write and complete the paper. Same thing should happen now for the last 30 days which you have or 25 days which you have. Study so effectively that there should be no chance that examiner should cut any marks from whatever you have written. Okay. Thank you for being such a great audience. Will we get this material? If you don't have the material, I don't know, or I'll just upload it. You should be having material. If you have a group, I could have shared the material. The material, whoever needs, know wherever it is. It is available. Ask any student of ArivuPro, they'll share it. Okay. And anyone has my material, share it. Anyone who has my number, you ask me for the material, I'll share it. For those who have asked, I'll share them. Okay. And I'll ask them to upload this on YouTube. Okay, to upload the material on YouTube. If they upload, very good. If they don't upload, I'll ask some student to upload. Some student you upload. Okay, nothing will happen. Some Google Drive you create, you upload. In Kormangla branch, they have shared everything. Kormangla branch, everyone has it. Group, you'll have to share it. Okay, I'll share one material. I'll share all the materials to you. You share everything over there. Okay, let us meet after your results in Vijayam or Jayam, wherever I'm going to meet you. Till then, Tada, bye bye, take care, enjoy. Bye bye. Study well, all the best, bye.